Hello, it's Forex Focus on Thursday. Look at us. We're back together again. Guys, I'm bringing in the B team. Bridget could not do today's show, so.
The B team?
No.
Does the B team wear 100% alpaca sweater?
You know, again, we've been talking about this alpaca sweater forever, but we
How
finally
does it look
seen
on the can? It looks pretty good. Okay. Looks nice.
I don't know. Give them the whole feature thing.
What? I can't. What am I supposed to do?
I don't know. But
Side shot. Well, so I
Yeah.
can wear it down like this, but I don't like the way that looks.
No,
as
you
much as-
wear it up,
much as this.
and again, it comes with matching gloves, which people don't
I
know.
forgot the gloves.
That you actually don't use as gloves, but you drape around your neck and tie them together
So we have our
for the completely bougie look.
holiday party tonight as Tasty FX. You're looking at me.
You guys
like
are going
it's
to a
not tonight.
holiday party?
You're going. Okay, I'm not losing my mind. Okay, we have a holiday party tonight, and so everybody's talking about like, oh, I'm gonna wear, my Christmas sweater. I'm gonna wear this. Great. I don't really have that. I have a lot of clothes that are a single color, but I saw that
Think the desert.
it's gonna be less than 10 degrees
Yeah, it was-
with wind today.
It's brutal.
And this morning it was brutal.
Yeah.
And so once I combined those two facts in my mind yesterday, and the fact that you haven't seen the alpaca sweater, I was like, the alpaca's coming out.
Oh, we've heard about the alpaca for months, and to see the reveal finally, and it's sharp. I got to give it to you. It's sharp.
You want
Now,
to joke about it, but you
No,
said
I
before
mean,
we went in, I think I have to get myself one
I
of
love
those
my
sweaters.
quarter zip. I go to Costco once a year, and I get like 8 of them, and they take me through the year. I can't. I'm not in a position to get alpaca. It's too exotic
This
for me.
is the sweater.
I think I would be intimidated. What I'd actually really be intimidated about is, so we're for our holiday party, we're going out for some drinks, but also our wonderful head of marketing wanted it to be holiday themed. So we're building or creating, decorating ornaments.
Oh, I didn't know that. I'm not doing that. Decorating an ornament?
Again, there's battles you fight and battles you don't. She was on a mission to make it holiday themed.
Okay.
I'm
That's
like,
nice. I'll do it.
Okay. Again, anytime staying out past 5 o'clock
I
at
know.
night.
You and I don't even want to go.
It's late night for me. So she says, I promise you'll be in by 5, out by 7. I said, fantastic. So it's ornament building.
That's actually, it's nice to have an activity to focus on.
It is, but
Yeah,
I'm
okay.
just thinking white alpaca, a lot of glue, a lot of glitter, a lot of liquor.
I'm going to end up, what is the movie where the guy wears like a nice jacket and like he keeps talking about how his jacket's so nice, and then by the end of it, like everybody else at the party has like stuck everything on the back of his jacket.
That could be kind of, I don't think anyone will intentionally do it, but it's, again, for me, I would not wear something like that out to.
I'll probably take it off after this show and not wear it for the rest of the day.
Well, no, you should wear it, but just be mindful that you don't want to get stuff on it.
I don't want the other
Again,
the
or-
olds coming
well, then-
by and getting their grubby fingers on it and wanted to touch it.
No,
and
because
everything.
they've got like like preparation H on their hands and stuff.
Bengay on them. or
Bengay, that's what it was. I couldn't think of what it was. Bengay, the olds. Listen to you.
I'm sorry. I love them.
Yeah, really. You're so with your little bougie alpaca.
I'm acting like a jerk.
And do you think about that? There's these poor
Poor
large animals that are getting sheared to feed.
They like it.
Feed and satiate your need to be bougie.
It's like a massage for
Oh,
the
yeah,
alpaca.
right. Okay. I'm going to take you into the barber, have him shave your head, and then ask you, was that a good scalp massage?
Do alpaca like being, is it called sheared?
Yes.
Does an alpaca get sheared? No, alpacas don't like being sheared, but it's necessary for their health.
Okay.
Okay?
So when I shave your head, it will be definitely a medical
can you
experience.
please shave my head? I wear a hat half the time because this hair is awful. I'm getting it cut on Thursday.
Well, they know it's not real hair.
Next Thursday.
I mean, the good thing is when you have a haircut, you just FedEx it over. They trim it up and
That's
send it
still
back.
one of my favorite stories is my high school teacher, but he never was my teacher, Senor Kennedy. I didn't take Spanish, I took Latin. But every time he would see me in the halls, he would come up and pull my hair and then call me Ronnie because he thought that I was wearing like a Ronald McDonald wig.
All the benefits of a parochial education paying dividends again. That wasn't troubling.
Is that in 2024? Do you get away with that as a teacher? Do you think?
I would probably say that would be.
It was funny. We had a great time. I was very popular in high school.
When weren't you popular? I heard in grade school you were popular, and in high school you were popular. Now,
No, in grade school I was conscientious.
in Michigan,
That's
you
what the teacher
again,
said.
you got your math degree in Michigan and your minor in small animal husbandry, which was an interesting. But in Michigan, I guess you always do that.
It's a prereq.
Yeah, and I mean, you were in the club that worked on the planning of kidnapping the governor, which was interesting.
I hadn't been in Michigan.
A full
When
militia
did they
member.
kidnap? When did they kidnap the
Now,
governor?
they never did, but they were planning to like 2 years ago. Now, Michigan math degree, does that include using fingers and toes, or do you have to go to toes is when you go into the master's program?
Yeah, we're wearing a lot of sandals.
Oh, so you're using toes for your math?
Yeah.
Look at you guys. That's really amazing. I'm really proud of you guys.
Such a jerk.
And look at that. All that education paying off, so now you can basically annoy a large animal and steal his fur.
Here's a question for you. Christmas is coming up, right? You're my boss.
Yes.
You obviously make 5 to 6
here we
times
go.
more money than I make. Okay? Maybe even more. Maybe it's 10 times. No one really knows. Why don't you tell everybody how much you make, actually?
I have been promised that if I deliver success through the end of this year, they'll start paying me in
That's nice.
January. So right now I'm working on a kind of a demonstration basis.
If I bought you the alpaca sweater, would you be A, happy and like, oh, what a nice gift? B, like, oh, this is super inappropriate? Or C, like worried about me and my finances?
No, a D. I honestly expect you to buy me the alpaca sweater with the knucklehead gloves that you don't actually wear on your hands but wear around your neck. And I expect that to arrive by Christmas Day.
This is the sweater that broke the camel's back. When this arrived, and my girlfriend
Don't
saw
tell
it,
me the missus gave you a hard time about this one.
she doesn't give me a hard time because I mean it's my money. I spend it, how I want.
Oh, here we go. Wow, look at that. Now, it's amazing you can still stand with no vertebrae.
But
She
this
has done a wonderful job, and you have a wonderful girlfriend.
This was the thing that I bought, the item that broke the budget's back. I don't know if that makes sense. I am now on a budget, and I'm not allowed to spend more than.
Well, come with me to Costco, and I can get you a whole year's wardrobe for like $300.
That's not gonna work for me.
No?
I need at least Lululemon. I need at least.
God, again, at some point, you're 30 years old. You're going to have to wear a pants with
Almost 32.
Yeah, zippers, a button, and a belt. Okay.
I don't think I have to.
Yes, these string pants have got to go.
The guy who started this company wears a goddamn beret every day.
Right, and he wears regular pants. He doesn't wear string pants. You got to stop with the frickin' string pants. Do you know the self-control it takes for me not to pull the string out of the pants every day?
You do it anyways.
I would.
It's very inappropriate.
But I've never pulled them all the way out because I know it's a pain in the ass to get them back in. But the personal strength it takes not to take your
If
little
you did that, I would be very mad.
I know you would be. You'd have that little face. And for 8 years now, I've lived with that little face.
I'm gonna blame it on Tom, because that was
Of course you do.
my first job. Well, my first job was at the Board of Trading Nights. That was awful.
Right.
My second job,
First job, regular pants.
regular pants.
Merrill Lynch, when you worked there, regular pants.
Merrill Lynch internship, regular pants. Tom Sosnoff, anybody does whatever the hell they want. The weirder that you're dressed, in his mind, the smarter that you are. Remember when we had that dev, one of the first devs, I think, at Tastyworks, and he wore shorts and sandals no matter what the temperature was outside? And I'm pretty sure Tom and Scott were like, this has got to be the smartest dev of all time because he's so oddly dressed all the time. You don't remember? He like brought in.
Is that like the Zuckerberg thing?
This was like 6 or 7 years ago, and I remember he brought in like a VR version of like the Tastyworks platform. Which was pretty nuts at the time. But yeah, I think I could do the string pants. It does feel weird wearing a $1,500 sweater and $70 string. Yeah, no
string
button,
pants.
no zipper pants.
Frickin' you know what? String pants are great when you have an infant and you're changing diapers. At some point, you grow out of the string pants.
Not yet.
Yeah.
Not yet.
Yeah, we're going to get you out of the string pants at some point.
Well, let's talk about the European central banks. Not
Swiss
only
coming.
the ECB.
Yeah,
but-
look at this. Swiss. Now we have an ECB announcement coming out in 30
minutes.
Where are we? 30 minutes. Thank you. And a press conference afterwards. Swiss surprised. They were supposed to cut 25 basis points. They cut 50 basis points. You're getting a little bit of a sense. Am I right? They cut 50 or?
Yeah, no, you're
Yeah.
right. So in the last several months they've cut from they only got as high as 180.
Remember, during the heart of the financial crisis, Swiss short-term rates were negative 2%.
Well, but I want to say, did they not get up to 3% at some point in like 21 or 22, and then cut and hike? Maybe they only got up to 180. This is obviously only the last year's worth of data. Either way, they didn't get as high.
Nowhere near as high as the U.S. rates. But remember, they were coming, as weird as it was, and none of us thought this could happen until it did, but they were running negative interest rates to basically use it as a tool to keep their currency in check.
Mm-hmm. And so while they didn't get up to 4%, like the ECB
Right.
or Bank of Canada or whatever, or 5% like the Bank
US,
of
right.
England or the U.S., they were hiking, and now it's not only been cuts, Pete, but so they were expected to get down to 75 bips,
Right.
which would be under 1%. They were already at 1%, under 1% for a major economy, really the first to go that low. And they cut all the way down to 50 bips. I mean, at this rate, they might be at zero or negative first quarter of next year. Like this is a pretty aggressive line. And you have dollar rallying against the Swiss franc, obviously rallying here on the news, came back a little bit, but continuing that rally now. And I'll bring up the daily chart because I don't think this dollar is yet at highs versus this Swiss franc, which, I mean, we're going to get into the euro in a second. And you were telling me a little bit before we got on. Man, it feels like it's one of those times, and maybe this is the time to go against what I'm about to say. I can't think of a bullish story or reason or anything for these European currencies. I can't think of anything.
Nor do I think their central banks think the same thing. And all this talk of tariffs and stress, the quickest way to get around that is just mark your currency down.
Mm-hmm.
You're going to put a tax on our goods. We're just going to make them cheaper. So we're gonna mark the currency. Now, what prevents everybody from marking their currency down as cheap as possible? And that's basically going into a price war with currency. Marking your currency down to a certain point will have an effect on inflation in your local economy. So you're mindful that if you depreciate your currency too much, you will end up stoking inflation. So there is a trade-off to be had. But in the short run, it seems, they're willing to take an aggressive stance to keep their economic engine moving. And one of the tools, again, what tools do they have? They can change rates. And by changing rates, they can have an impact on the currency. We talk about that. Rates impact the currency. 1-to-1, every single time the same way? No. But there is an impact. And as much as the rates themselves, the trajectory of the rates. What is the trajectory? And I didn't read the SNB, Swiss National Bank, press release afterwards, but I've got to imagine that it is that I'm guessing without saying it, is that this was an aggressive cut that was needed and more may be on the way. So, sometimes when they look at, they expected 2 25-point cuts in the next 2 meetings. Well, they got all 50 right away. Sometimes that's like, okay, they're done. But if the talk was that, we moved a little bit more aggressively and we'll reevaluate and move again if needed, that says the trajectory is probably still lower, and you'll see a tough time for that currency to rally. If that currency falls, that means the dollar rallies against it, which is what we're seeing play through right now.
In a scenario like this, where you have the potential to create another dollar yen type of trade here with this dollar Swiss.
And remember, Swiss rates are now under yen rates.
Wow, is that
Yeah,
right?
yeah.
Wow, that's crazy. Maybe we'll look at yen Swissy in a second.
Yeah.
Or, anyways,
Which is great because those are traditionally, doesn't always hold, but those are the safe haven currencies. So it's an interesting byplay between the two of them.
so when you say stuff like everything that you just went through, where it's like the central banks and the economists and everybody in charge in Switzerland, or in the euro area, which we'll get to in a second, because they have a rate decision coming up where they're likely to cut. They're not necessarily worried about their currency being devalued. Devalued currency sounds like a bad thing to me.
Sure.
It sounds like, when you hear about everything that's gone on in Japan the last couple of years, it sounds like a bad thing. But is it right that the smart people, I don't want to say smart, but the people that have done well in Japan on the ground the last few years with such low interest rates have been invested in the Nikkei or hard assets like gold or whatever, because their yen has been devalued on the ground there in Japan. And so is it a negative thing necessarily, or is it just a thing and a part of doing business in the potential Trump US bigger tariffs landscape?
Right.
Because it sounds like a bad thing, and it's one of those things that I think people read online, like the headlines will be, Switzerland devalues its currency, and that sounds really bad. Like it sounds like their economy is crashing and they're screwed. But is it more nuanced?
Now,
than
did
that?
they devalue their currency? No. They changed their interest rates. It had a knock-on effect to the currency. Now, usually when they talk about devalued currency, it's a peg currency. And are there still peg currencies? Yeah, the Chinese onshore renminbi is a managed currency. CNY that's traded offshore is what floats. So there is a knock-on effect to changing your interest rates that plays through your currency. So you could say their lowered rates have triggered a lower currency environment. Now, the Japanese it's a unique circumstance. The Japanese have had these low rates for 25 years, and they've argued that the low rates they've got a unique set of challenges. They've got their population isn't growing. Their population demographics are aging very quickly. And those aging people are savers, not spenders. And so they're having a difficult way stimulating consumption. So they're trying to get their goods to be consumed by the globe. So it's different dynamics at different places.
Sure.
Central bank has a different set of circumstances. Each one of them has a different set of circumstances they're dealing with. So looking at is a negative currency or is a lower currency a bad thing? It depends. Again, cheaper currency, if you think about it, if you were in Japan and the yen was, at 100 to 1, we know it's 150 to 1. At 150 to 1, everything you want to buy that isn't made in Japan, whether it's something from the U.S. or everything, is 50% more expensive.
Yeah.
That's a lot. So what is your likely behavior? You're going to buy domestic goods that aren't necessarily priced as expensive as foreign goods. So does it stimulate? Is it an attempt for these savers to stimulate them to go and spend? Well, what they've done is, you're right, they've invested in. They haven't spent the money. They've just moved out of yield-bearing assets
0%
to equities and
equities,
and ETFs. Absolutely.
And so the only reason I raised that point is because it seems like there's a lot more room that stuff like this could run in the dollar's favor and against some of these other currencies, because I don't want to make it seem like, Switzerland dropped its rates more than the SMB cut rates more than expected, but other parts of Switzerland, other people that are part of the Swiss government or make regulations or whatever are going to try to pick this franc up and do stuff to spur it on, because it's not competitive like that. They're not necessarily looking at this and being like, oh man, we need to get the dollar franc back under 85 cents because like it's a competition like the equity market,
Right.
and it's not like that. And the reason I raised these points is because we are going into this ECB meeting. Eurodollar is right there at 105, and you made this remark to me before we went in. You're looking at parity, and you might think, oh, the European central bankers don't want anything to do with parity. But in this new environment of higher tariffs, is it something that maybe they not necessarily want, but would be fine with?
Is Canada getting 25% tariffs? Is Mexico getting 25% tariffs? I don't know. Is this part of a very large negotiation? And is changing your interest rates a response? Is a parry back in that negotiation with the implicit delivery of, yeah, you can put a tariff and we'll mark down our currency and negate the value of that tariff in terms of our competitiveness to export goods. This is part of the back and forth. Countries just don't have to take it. There are things they can do and I think these aggressive rate cuts are part of that response to this negotiation back and forth. Are they saying that we did this to respond to you? No, but smart people can read between the lines. So you're absolutely, I think let's take it back to what this means for traders and get away from the macro part of it. What it means is that currency now will be a tool of negotiation, which means for us, that's good as traders. It means we'll get a little bit more volatility. There'll be a little bit more interest and uncertainty. As traders, we want volatility, we want uncertainty because that gives us range, and range gives us opportunity to get in and out. Whether I think, again, in 30 days, we'll be able to clearly say that 105 was really cheap or really rich. Now, do I know which one it is? No, but I have opinions, and everybody else does too. If you look at it, it was 112 30 days ago. This is really cheap. That's a 6.5% markdown in 30 days. That's a 70% devaluation on a yearly basis. That's a lot of markdown in currency. But again, if they're aggressive and the tone out of them is it's a race to the bottom now in terms of yields, par comes into question really quickly. Yeah. I'm not saying we're going there, but what I'm saying is, as a trader, I want the opportunity to be able to trade both sides of the market. And this lets me, I'm not always a contrarian. I'm not always looking at things that are cheap. I'm looking at things that give me elasticity to trade. And this is a perfect example of it.
Exactly.
So
right.
This will be an interesting, especially watched meeting in 20 minutes. And as much the conversation afterwards from Christine Lagarde, I think 45 minutes after that. Am I right?
Yes, the meeting is in about 20 minutes, and the press conference is
half an hour
30
afterwards.
minutes after that.
Okay, so we should definitely get some good moves out of that. Then we've got, in between those two timeframes, we got PPI coming out in the U.S., which will be some follow-on inflation numbers, which, again, there was a case the inflation numbers came out exactly as expected. Mm-hmm. Market didn't do much. Actually, the dollar got a little bit, which tells you, like, okay, you get numbers that don't mean anything, although yields did steepen in the U.S. We saw 10-year and 30-year yields, especially trade higher. Bonds and notes trade lower on it.
In the short term, not so much, yeah.
Right. And did that have a little probably lift to the dollar? Sure. So keep an eye on notes and bonds, see what yields do. That will also have a knock-on effect. We know this is all interest rates. They're not changing their currency. The euro announcement in 20 minutes is not about changing their currency. It's changing what their overnight deposit rate is. So they don't control what their 10-year bond is.
But you're seeing a lot more volatility in their currency based on on what they're doing.
Absolutely. And that's what we want as traders. So stay focused on what we can do as traders for takeaways. And again, we'll take a look at, yen Swiss. Tomorrow, we're running out of time today. But those two fly top haven quality currencies that are now yielding at their short-term rates are at 1%. That'll be an interesting pair to look at. And what's great about FX is go try to build that anywhere else. There's no stock, there's no ETF that you can trade that pair on. Can you build them with futures? It's expensive in terms of you got to margin both sides, and you never build the pair you want. So this is where spot FX, you want the right product to do the job, and this is where you can find it. So, guys, we're running late. We got to turn it over to Tom, Tony, and Vanetta. Thanks for tuning in. We'll see you back here tomorrow on Forex Focus.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
I'm surprised you're talking to us because we're commoners.
Yes.
I've never dined at Alinea.
Yes, Tom's never been to Alinea.
Yes, no. We are peons.
No, That's been to Alinea.
He brought in his menu today. He's all puppet.
Yes. Would you like to see the menu?
Yes, actually, I would.
Sure. Go right ahead. Good, because you can pronounce these things. I couldn't pronounce them.
Okay. Communal fire, walnut, salsify, fig, smoked mushroom.
Ooh, I like that.
Game. Well, so the here are the headings for everything. Okay. Communal fire.
Like it.
Socarat apple cider.
Not sure what that is.
Ostera.
Yeah, Osetra caviar.
Osetra, okay.
Caviar. That was one of Vinny's favorite, by the way.
Oh, I like that.
Yes, with a little cream cheese bottom. It was wonderful.
I like a little caviar.
This is merely just called explosion. Hopefully
it's not what you think it is, Vanessa.
Hopefully he tapped on your head, gave you a warning. For the black truffle and the romaine and the parmesan. And then one thing just called hot potato, cold potato. I don't understand rich people.
It was, Alinea is the name of the restaurant. It's been around for a long time.
Hot potato, cold potato sounds pretty good.
It was charred. Awesome. because there's a
Char.
little Arctic char.
Yeah, oh, the
No,
Arctic
it is
char was
called
great.
chard. Don't make me come over here.
Char.
No, but the subheading is called chard.
Oh, the subheading. Got it.
Yes.
You
yes.
better take two
char.
steps
Arctic
back,
char.
homie.
It was
you
very
know?
good, by the way. That was one of Vinny's favorite. It was a fish.
A little
Very
Arctic
good.
char. You sure? What's the next one?
Blanc mange.
I don't know what that is.
It was like a white
Blanc.
piece of chicken with like white. I don't know. It was amazing.
Yes, it does say poulet, almond, vernet,
Pigeon.
and then a bunch of stuff I cannot. What is a scallop shelf?
Oh, that's a bunch of scallops.
Oh, it's unbelievable. It was really an experience, and I got to tell you something. It was.
Did they have any meat?
Wagyu was the next course.
Oh, a little wagyu. How was that?
Excellent.
Vinny loves the wagyu, and then
Yeah.
squashed, which is just a bunch of
See, I'm glad you're reading it because Tom's
Squash.
making fun of me right now if I was
with
reading it.
Iberico. It's got
Oh,
butternut.
like a little Iberico.
I love you. You love your Mon Iberico.
Yeah.
Dutch baby.
A Dutch baby with white truffle. Lucky for us, it was white truffle season. So for an extra charge, you were able to get that.
There's a lot of truffle
You
in
could
this
have just
menu.
had the Dutch baby.
No, the Dutch baby came with the white truffle. That was it. It was an extra. Yes, that is correct. Luckily for
got
us, we were able to get the white truffle on there too.
You could
We
get
had
whatever,
the black
you
truffle.
get whatever
on
you
it.
want.
Yeah.
And then Italian ice. That sounds good.
Well, that was excellent. They used nitrogen.
Oh,
It was
sure,
a- it
yeah.
was a- it was
oh,
a-
to
it
make
was
it
a-
rapidly like cold.
Yes,
So that,
yeah, they
Tell
yes.
them that you were Italian.
It's not cool to be Italian right now with Luigi around. We'll have to wait a little while.
It's a rough week for the Italians. And then something that's just called gold, and it's just
Oh, the
tonka
gold funnel cake.
and saffron.
It was a gold funnel
Oh.
cake. It's crazy. It's a show. It's an experience. It's a show. It was 2.5 hours, about 2.5 to 3 hours. Everything is very small plates. You are so full when you are done.
Are
Like
you?
it's disgusting.
Okay, so you did
Everything's
get
so
full.
rich. It's so decadent.
Yeah,
It's
That
so
makes
rich.
sense.
So full, those
She's
things.
so full. My wife, there was a little time there when I looked at her and I could tell she was just like pushing stuff around on the plate a little bit. And I just gave her a little tap on the table. She went like this. Like she was tapping out. She was done. About halfway. She was
You can't let the food go to waste. You have to eat it.
Yes, you do. And Vinny ate everything. I mean, he ate everything. He enjoyed everything. The smile on his face was amazing. It was not worth the money, but it was amazing to see. On his
So,
face.
but this says paint. Is that where they paint on the table?
Yes,
and then,
they painted.
So
They
it says
took the
sesame,
they
apple,
took the ceiling
cream.
panels off. They took the ceiling panels off, and they put them on your table, and that's what they used.
So you're just
as-
licking asbestos? Like what? Because the ceiling panels in our old office are full of black mold.
We were at a big long table to begin with about 16 people with a fire pit in the middle. And
Cool.
it was very cool. And then they made us get up, and we had a 10-15 minute time frame in like the kitchen. And had a little kitchen experience. And when
Oh,
we came,
so they bring you all into the kitchen. Okay.
and when we came back into our room, that table was completely gone. Now, it was a table for 16 people. There was only one stairway to go up. There must have been a wall or something.
Oh,
that
they Siegfried and Royed it.
Yes, and now that's right. Yeah, exactly. And then all of a sudden there was a 747 in the room. There was just 6 tables that you were eating at by yourself, and some people were gone. Like there wasn't 16 people in the room anymore.
Did they murder them because
Those
they
are
were
the people
poor?
whose credit cards did not.
Yeah, I know. Oh my God.
Which was.
I'm sorry, you only
And I
had.
tried to move the table that I was at, like I was pushing it up, and it was.
Your debit card only has $2,500 a day, and we need more than that.
Yes.
Well, this is what. And then at the end it says here you got the balloon,
Yeah, so they give you a helium balloon at the end.
and you eat it.
Yes, and you eat the balloon and you suck the helium out. You talk funny. It was a wonderful experience. I'm glad I did it. If I died before I did it, I would be fine too. But it was an amazing experience.
Well, you're good. You and your wife are good parents to make that experience happen for your kid. He'll never forget it.
Thank you. It was the same. It was the same price as the car I bought my son Nick. That was like 20 years old for his
Yeah,
first car.
probably.
Well, I'm not lying. I'm telling you the truth. But anyway,
bad
it was
parent.
fun. Yeah.
Yeah, well, we already knew that, honey.
It was a wonderful experience. Got right downtown. It was very cool. It was good.
You didn't get killed.
Sadov,
coming
you
to the
should
city?
try it sometime.
You didn't get killed coming to the city.
No, they had valet, thankfully. I
Did
didn't
you
have to walk the
see?
streets.
Did you see Grant Was he there?
He was not there that
Okay.
I noticed. He
Oh,
jumped out of the table if he
then
was.
they should like give you a
Discount,
discount when like the
20%
understudy
discount or
comes in.
something.
Right?
Yeah, right,
Like
right.
you're paying to see like this
Yes,
celebrity
yes, I agree.
chef.
Yeah.
Then
Don't get him. Gotta get a discount.
Yeah, that's bullshit.
It was excellent. It was excellent.
Well,
I have been burping truffle since about 8 p.m.
just burping it up. Yeah, it's tasty. Well, I also had a culinary experience, the finest of the Panda Expresse. The finest of the Kung Pao. Yeah, I had panda last night for dinner.
Did you get the blanco rice?
Did you upgrade?
Rice, yes.
Or
Yes,
did
I
you
did.
get the,
I did have the spring roll balloon. They blew up the bag and then they put it in my bag. Like, here you go. Get out of here. Get out of here. You broad, hit the bricks. No. No, that's actually very cool. And
It was.
I hear great things about it. And it's, I mean, if you have the means, obviously, come
It's
to
a
Chicago.
3-star restaurant.
Yeah,
I mean,
yeah.
Saz, have you ever been to a Michelin 3-star restaurant?
I have been.
I don't think you have. I think you're lying. I think you're lying. I think you're lying. Like
I've been
I think you're lying.
to, well, in Chicago, we have two. Smith and Alinea.
Yes.
And I've been to Smith, but I've never been to Alinea.
All right.
But I've been to, what's the one we always joke about in New York?
Le Bernardine.
Le Bernardine.
Le Bernardine.
Le
And didn't you go to Thomas Keller's place when you were in California?
No.
Oh, you didn't go to French Laundry?
No, I've never been there.
Oh.
We were at
I've been.
Why are you such a basic?
couldn't get in.
You're
couldn't
so
get in.
basic.
But I have been to.
I didn't let your kind in there, the French Laundry.
Yeah, but I've been to another 3-star restaurant. Maybe I haven't.
Okay.
I thought I had, but maybe I haven't.
No, in Denmark.
But I don't know if it was 2. I think it was 2 stars.
Oh, okay.
Didn't
I don't.
make it to, what's the place called? Noma?
I believe so.
I didn't make it.
I believe so.
Can't get in that place.
Well, what'd you do last night? What'd you get up to?
Oh, I had Trader Joe's frozen food.
And how was that?
Gross.
Gross?
Yeah. I was busy, but no, I didn't get to go out to Alinea.
Right?
You should have. It was a wonderful experience. It really was. I didn't
get the
know what to
nod.
expect. It was great.
Yeah, so shenanigans all around. Hey, funny anecdote. It's just I saw United Airlines is adding flight capacity because of the Notre Dame Indiana game. I've never seen a sadder sentence than direct from Newark to South Bend. I was like, oh my
Why?
God, why?
Am I going to prison?
Yeah, I know. So United adding flights from Newark to South Bend and from
What's the weather supposed to be like
and
Saturday
from
night?
Chicago to South. It's not the game's not till December 20th. So it's
the game's not this weekend.
right. No, it's December 20th. But what's funny is I've become weirdly popular because people in the kitchen are like, hey, V. And I'm like, I don't even know who this person is. They're like, I heard you got a place in South Bend. I was like, again, I do not have a place. My parents live in South Bend. So people are asking me if they can come over. I'm really popular. There's not enough hotels.
In a weird way, I kind of want to go to the game.
Everyone wants to go to the game. So the buy-in
Me too.
of all of the playoff games, this Notre Dame
I heard they have
game-
rooms at the casino.
What?
They had rooms at the casino.
For how much, though?
Who cares?
That casino's really nice.
It's not really nice, but
It is really nice. I've
they're
been to
expensive,
events
I'm
there.
sure. But
I've been to events there. It's nice.
what's the casino? It's like
It's the Four Winds.
4 wins. Yeah.
Yeah. Because there's one in New Buffalo, and then there's
New
one in
Buffalo,
South Bend. Yeah.
Yeah. I mean,
But the ticket, would you pay $2,000 to sit in freezing temperatures?
Yeah, at least I was comfortable, Saz.
yeah, I probably would go. I mean, if I go to the game, yeah, it'd be fun.
Do you want to stay in my childhood bedroom?
I thought you'd never ask for that. I thought you'd never ask. He's been waiting for you to ask that. Saz, your dream comes true. 12 years later, 14 years later, you finally get to sleep in her bedroom.
It's actually, it doesn't even look like it looks really like what all parents do when they're empty nesters. It just looks
I turned my room into a game room.
No, it just looks, I wanted it to be a
My kid's
shrine to me and my
What do they put in there? Like exercise equipment?
No, it's just like a really nice guest room. Like it looks like your finest of Hampton Inns.
I think it'd actually be fun to go to the game. I mean, I don't know why you just can't drive. It's 90 minutes. Who cares?
Because it'll be so late and dark coming back. It's just
you know how you drive in the dark now.
You're thinking that traffic's going to be quick, and as someone who sat on that toll road, you're just going to sit there. Like, it's not going to be quick. Yeah.
That's 2 hours freaking deal.
No, just because of the volume of traffic just at that time of everyone going to one place. Well, everyone coming back to.
What sucks about Notre Dame is, from what I remember going to a game there, is just parking.
Yeah. Yeah. Well, people get creative with, like around Wrigley, you could park in someone's yard for $50.
Yeah.
Yeah. It's going to be so cold. You're not going to sit outside.
You don't know how cold it's going to be. It's 2 weeks away.
As a kid who grew up in South Bend, I have a fair amount of reason about how cold
I kind of want to go to that game, and I kind of want to go to the Winter Classic, too.
Oh, New Year's Eve here, which is hockey.
Yeah.
Yeah.
Kind of want to go to Wrigley for the Winter Classic.
It's going to be cold.
But they have suites at Wrigley, right? Like.
I don't have a suite.
No, I don't think they do for this. Maybe,
I didn't know. You would think
No, if you have a suite at Wrigley, you get the suite. It's yours.
But it's so far away. I think it's out in the outfield.
Because they reconfigured the field. Oh, that makes sense.
So I don't think you would want the suite. I don't think you'd be able to see from the suite, because I looked at it because I wanted to take my son, but now I'm broke because of Alinea. But it looks like the best seats are kind of like the bleachers from the outfield. At least that's the way I looked at it. I looked at it quickly. Don't quote me on that. I don't know.
Yeah, it's a 4:00 game, so it'll be cold.
Yeah.
Yeah, no sun. Because if you could sit in the sun at least.
Yeah, no sun.
That would be nice, but. All right, well, this is riveting. Hey, we got a great show for you today on this thrilling Thursday here on Tasty Live. We're not all burping up truffle, but we got a great show for you at the top of the 8 o'clock hour.
I can't believe I'm that guy.
You are that guy. We're going to bring you trades from the research team. That's right, the world's greatest financial think tank presents their trade ideas to Tom and Bat. Then we got Victor Jones in the house. Hold on to your butts for that, for Hear Me Out. Do you know what you're talking about with Victor today?
I do not.
Okay.
But I never know.
Yeah, you do. You never know. But it'll be something. And then 9 o'clock, we got a market measures streaks in zero DTE success, part of our zero DTE series. What's the longest streak you've ever put together? Do you remember? Like, I don't know what.
She's not talking about without making a complisalt. She's talking about something else.
I don't know if it was like golf, or if it was like good trades, or if it was like bets, or if it was like
golf.
I don't know.
The biggest streak?
Yeah, the biggest streak you ever.
Longest streak?
The longest streak, yeah.
Once I won like 14 hands in a row at Baccarat.
Okay, see, that's a streak.
Yeah.
Okay.
Yeah, seriously, I won like 14 hands in a row at Bally's back in the day. Once, like 14 hands in Baccarat in a row is a lot.
That is a lot.
Yeah.
See, that's a good streak.
Yeah. That's by far my record. Nothing's ever come close.
All right, and for green lights, right?
Oh, that's the best streak ever.
Okay, there it is.
110 blocks in New York City.
There it is.
Yeah, without stopping.
Uh-huh.
That's a record that'll never be broken.
Have you alerted the mayor?
I told all my friends over the years, but I never actually got a real certificate for that.
Good. That's good.
Yeah, that's when all the lights were, when they had everything synchronized.
Yes.
Yeah. So, yeah, I made it from
You wanted to get out and dance, right? Because it was so synchronized?
I made it from I want to say like right around 10th Street all the way up to like 110th Street. It was crazy.
He went from 10th Street to 14th Street. I'm telling you right now, this story just got bolder and bigger.
No. It was 90 or 100 blocks. It was unbelievable.
Sure. Legendary.
How
about for you? Longest
Never
streak?
before seen or done since. Mm-hmm.
What's your streak?
My streak?
Yeah.
God, honestly?
Yeah.
44 years. I've gotten a lot more than I deserve in life. 44 years the day I left Brooklyn. 44 years. Been on a streak.
Aw.
True.
Oh, that's so nice.
Oh, that's so nice. Hey, then we got live from the trade desk. We got big boy Scott Sheridan cutting down all the top trending tickers over at Tasty Trade. And then my personal favorite after him, Liz and Jenny. They were on the floor of the SIBO yesterday, but you can catch them live from their studios. Today, that is our run of show. Whew, I'm tired. Tomorrow is hashtag Fan Friday, so we need your trade ideas. If you have a trade idea, we would love to hear from you. You can submit it at the top of our page. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire. Our leading story, top story, just in. In today's headlines, this just in. Breaking news.
All right, everybody. Today is a thrilling Thursday. It's December the 12th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Sure. Earnings for today, Mr. Bat.
Costco AVGO. Do you want to talk about Adobe yet?
No, I got it. I got it in here.
Beautiful. We'll wait.
Talk about its shenanigans later.
Got it.
Hey, tame U.S. inflation number boosted the S&P 500, and the Nasdaq rallied above 20,000. What are we doing? Wall Street's benchmark S&P rose Wednesday, and a rally in tech stocks lifted the Nasdaq above the 20,000 point milestone for the first time. What was the Nasdaq when you guys were on the floor? 5?
It didn't exist.
Didn't exist in the very
You
beginning.
guys are older than the Nasdaq.
We are older than the Nasdaq. That is correct. That is correct. There. Now we said it.
Well, that's
Can we move on?
wild. Wait, what?
There wasn't a NASDAQ. There literally wasn't a NASDAQ. They didn't have NASDAQ futures. They didn't have NASDAQ index or anything.
That's wild.
If I remember correctly, the Qs weren't even...
They were one single Q.
When the Qs first came out, there was
That's
4
good,
Qs.
yeah.
There were 4 Qs. It was Q, 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 Q. 4 Qs.
Yes, I know.
And
I'm just making a joke.
I want to say it was late 90s, maybe 90...
Bless you.
Gesundheit.
Thanks. Maybe 98 or something like that. They came out with the Qs and nobody really traded them. And there was no NASDAQ index. In 2000, when the NASDAQ topped out, they were doing the composite. So it was like the NASD AQ.
Right.
And it was slightly different index. It wasn't the NASDAQ 100.
Right.
It was a full NASDAQ, but it topped out around 5,000, but nobody traded it because it didn't trade.
It didn't trade.
And then there were NASDAQ. Then they introduced NASDAQ futures. I don't remember what year they introduced NASDAQ futures, but we didn't start trading the NASDAQ until we probably built Thinkorswim.
That's wild. What are you doing with your indexes relative to each other at these new highs?
I mean, we're long Russell. We're short S&Ps.
Okay.
That doesn't answer a question. We have some NASDAQ stocks that are giving us a little bit of fits.
Oh, I'm sure. I'll get into that. Hey, you guys answered this in Confirm and Send, but we could talk about it a little bit more. Wednesday's inflation report came as a relief to a market that did not want surprises interrupting this year-end Santa rally. Transportation and shelter were the largest contributors to CPI, but shelter costs did show a slight downtick. Now that big CPI, that big matzo ball, now that that's out there, what do you say about this Santa rally? Legit?
Uncle. I'd like to say uncle.
Because people have been writing you. They're like, what is it? How much longer is
Well,
it?
I wouldn't say this is a Santa rally. This has been
Not the
rallying for
Santa rally. This is the Trump pump. You think he's going to let this market be lower?
This is the market's been rallying for a while. This is the final Biden goodbye.
Everyone, someone pick an ideology.
Yeah.
Excuse me, this is actually the Taylor Swift effect.
It could be. Could be. We'll take anything right now.
I'm going to insert my ideology.
Anything but what I
this
said.
is all due to Taylor Swift and the impact of her Eras tour. So that just wraps there. So I do want to talk about bonds and what you are doing post CPI.
Well, they're killing the bonds. They were traded up to 20.5 about 3 days ago. Now they're 17.
17.5.
Yeah, so we're buying bonds here. We bought some this morning. We sold
selling some puts.
Yeah, we sold some puts in the bonds this morning. We've been selling some puts every single day, just nibbling.
It's rinse and repeating. Finally learning how to do two sides of the trade. Beautiful. I like it.
Hey, this is crazy. ETFs crossed $1 trillion of inflows in 2024, extending a record year. The growth of ETFs seems to be a reflection of both the confidence of U.S. investors in financial markets and the dwindling popularity of mutual funds. What do you think of this Rubicon being crossed? $1 trillion in ETFs.
I mean, I think mutual funds are dead and right, I agree with that. Mutual funds are dead. It's all ETFs now.
Okay.
My Taiwanese sources say sound off the OEX was the first index product. The very first index product.
It was the first index product.
Yeah, no, we didn't mention it. We should have said it. That was the way we traded.
Yep.
Yeah.
I was
My OEX,
just for the record, I was there
my
in there on day one.
Were you in there on day one? Because I was not in there on day one.
was
Were
in
you
there
on the
day one.
old floor next to the window?
Yep.
Yeah, I never traded. So you must have traded maybe 6 months or a year before me, because shortly right after the OEX was created, we moved to the new building.
I want to say about a year later, probably. But
Right.
I was in there on the old floor. Yeah. And
Because I remember Jules being there on the old floor.
I was just sitting next to Jules.
Well, he was such a large figure, figuratively and literally, that I couldn't see you. So
Jules on one side and this other kid named, his acronym was RAG, R-A-G.
R-A-G, Rag?
RAG.
Was he a Greek kid?
Russian kid.
Yeah, I remember it was something ethnic.
He used to pick me off every day. Hated that kid.
That's funny.
He was better than me at the time. Like I didn't know. I was like just trying to figure out what's going on because I was
want to do
new.
a show? Maybe he
I
wants
know.
to do
Can
a
I
show.
get him on my podcast?
I mean, I just
Rag,
Where's
if you're
this guy?
listening, call me.
I just started. I was new, and he was like, he used to play me.
I like it.
U.S. ETFs now have more than 10 trillion in assets overall. That's bonkers.
My Taiwanese sources say they do not remember you in that pit on opening day. He does.
Oh, I was there on opening day.
I do not remember Tommy in the OEX on the day it opened.
Yeah, you're Tommy.
You gotta think about
Calls
he
you
had
Tommy,
a bowl
so he knows
cut.
you for a long
no,
time.
he had a bowl cut. They're probably thinking of the flowing lettuce, but that was bowl cut, like peak bowl cut era size for that. Hey, China, the yuan was under pressure against the dollar yesterday, giving up some initial gains as market digest reports that China is considering allowing a weaker yuan to weather tariff risks. Let's talk currencies. Start with China, go with the yen, then to euro. Let's go.
We're just short.
Yen's up small.
Yeah, and I'm just staying short the.
Euro's down small. It's kind of a mixed bag of tricks.
Yeah,
Really
I'm
going
staying short the dollar. That's all.
Okay, what about Chinese stocks?
We're long them.
Okay, how are they doing?
Today they're up small.
Oh, nice.
Think. Let's see. They were.
You don't know. You're just talking.
No, they're unchanged now. They're down small. They were up small earlier. Now they're down small.
ECB cut interest rates by 1/4 point in the 4th trim of the year. That news just coming across the wire. So, anything in the euro?
Yeah, we're short it. Oh, we're long the euro, short dollar.
Okay.
Euro's basically unchained, down a tick.
Hey, let's talk to crypto. Crypto rallied with Bitcoin retaking that $100,000 level following November inflation data. The crypto market jumped following 2 days of digestion. Let's talk Bitcoin, Coinbase, MSTR, whatever.
Bitcoin's over 100,000, 100,001 and change. Coin is also higher. It's 316. Let's call it 317, up around $3 or so.
Okay.
Off its highs of 350, where Bitcoin is, just a skosh off of its trading highs, where it trades highs 104,000. So I think Bitcoin, the physical, is doing better than Coin, the stock.
What are you doing in
Last
Coinbase? Because I'm sure some adjustments for its moves this week.
We're flat it.
Say
Am
again?
I disturbing you? Are you do something else that you would rather do?
You
Because I can leave.
there's something we
I
need
can
to
leave.
do.
I got a
You
breakfast
said-
sandwich waiting for me. I'm gonna microwave that yawn, and then I'm gonna get on with my day.
You said, what are you doing Coinbase? I said, we're flat it.
All right. Well,
What do you want? A detail?
I got a 1x2
I
call
would
ratio
like a
spread. I'm taking advantage of
conversation.
that. High,
I'm talking to the top of your head.
Okay.
All
Our
right.
position in Coinbase doesn't change day after day. We had the same position on for the last month.
Well, the only reason I was positing the question was that it had more accelerated moves this week than it I know you normally don't adjust it day to day, but it's just had some decent swings this week.
We're short
That's
premium
all.
in Coinbase. We're staying short premium in Coinbase. It's one of the richest plays out there.
Okay. Hey, let's get into the earnings from last night, and that's Adobe. Adobe stock dropped after a tepid outlook. Stokes AI disruption fears. They underscored the anxieties that the creative software company may lose business to emerging AI startups. Revenue, Adobe reported, will be around $23.4 billion in the fiscal year ending in November 2025. What did you do in Adobe?
Nothing. We didn't make a trade.
Oh, okay. So all that for nothing.
We tried. We were working
It'll be
orders.
down around 60-ish and change or
We
something.
were working orders.
They
We
don't
did
like
not get filled. And lucky thing we didn't get filled because we were trying to sell Strangle, and they stock's about 1.5 times the expected move.
Oh, you would have got blown out.
No, we would have lost a little bit, but we
Okay.
didn't get filled. And you know what? They dropped Strangle by almost 30 cents in the last 20 minutes. So they were expecting nothing.
Okay. A company called Service Titan said Wednesday that they'd priced 8.8 million shares at $71 a piece for its IPO. Tech IPOs have been rare in recent years, but investors are looking for signs of life headed into 2025. Service Titan will trade on the NASDAQ, will debut today. The ticker TTAN. They previously raised their price range. It was $65 to $67. At this current level, they're worth $6.3 billion. And they do, I don't know, cloud something, TTAN. They'll start trading today.
Right.
It's not trading yet.
Yeah.
Yeah.
Nope, never heard of them.
I just like this photo. They're like, yeah, hey guys, we're just gonna do a casual photo. This lamp, yeah, bring that in there.
It looks like a hair salon.
Yeah, it looks good. Like, yeah, you're just like casual bros, just hanging out. Like, who did this?
They can put those red tips you want in for you.
I know.
These guys can do it for you for sure, no doubt.
Anyway,
100%.
these are the founders of Service Titan, and I shouldn't.
Guy at the bottom looks like a young Pascal.
I shouldn't roast them because they're about to be super rich today. So good job.
Yep.
Hey, Google hit a new all-time high yesterday on its quantum computing news, and they also announced yesterday Gemini 2.0 with image and audio support. The new AI model will be able to have agents that could search the web and do tasks for you. What? It has improved reasoning, longer context windows, and the ability, unlike Tom, to understand complex instructions. I am Team Gemini. But Google did hit all-time highs yesterday, so.
Good for Google.
Good for Google. Google 195 and change, just sitting right there. Google.
Google. You guys don't have a position in Google? Or?
I do not.
Okay. Tesla shares also closed at a record high yesterday, boosted by the 69% pop. Nice. Since Trump election victory, the stock at one point actually was 420.69, and your son and Mike Butler just were giggling. And I'm like, what is happening?
They really are giggling. I mean, it's like a prophecy, but now it's 426. It's up $2.
Yeah, so shares were up 6% yesterday, lifting the EV maker's stock past its prior high reached in 2021. What do we do at these levels?
I'm shorted.
Does that hurt?
Yeah.
I keep rolling up puts. I mean, every time it goes up, I'm getting.
It was my biggest loser yesterday, but it's up 70% since.
No, it's up 69.
It's up 70% since Thursday of last week.
I mean,
Basically.
It's just stupid, but whatever. I mean, eventually it'll crash and burn, but I'm gonna wait. I'm not gonna get giant shorted. I'm just shorted.
Okay. Well, you need something to do because today's Thursday.
Option trades today, every Tuesday and Thursday. Lucky for you, today's Thursday. Maybe I got something for you.
The U.S. Supreme Court dismissed on Wednesday an appeal by AI chipmaker NVIDIA seeking to avoid a securities fraud lawsuit by shareholders who accused the company of misleading investors about how much of its sales depended on the volatile cryptocurrency market. A lower court led the suit by the Swedish firm Proceed, but the Supreme Court dismissed the bid to avoid it. The justices did hear arguments, and the Supreme Court, in determining that it should not have granted the appeal, left the lower court's decision in place.
Yeah, I don't think that impact the stock was up huge yesterday.
Yes, I know.
Stock was up huge yesterday. NVIDIA's trading 139 and change this morning, up around 50, 60 cents. We got an unchanged market, maybe a slightly lower.
Okay. Apple is teaming up with Broadcom, which has earnings after the bell today, to develop its own AI chips. And Apple is also launching Siri with ChatGPT. The chip will be codenamed Baltra, and is expected to be ready for mass production in 2026. Again, Apple's teaming up with Broadcom. What are you doing in Broadcom? Because they're going to have earnings.
We are short a strangle right now, and we will. We're short a strangle, and
AVGO trading at 181 and change, down about $1.50.
So we're short a strangle in there, but it's pretty wide.
How are the markets in there?
They're fair. Give it like 2.5, 2 3/4 stars
for liquidity.
Yeah.
What are you doing in Apple?
Nothing.
Okay.
Apple, I had a really low IB rank. I'm not trading it.
I believe Apple had a doji there, Sadnov, yesterday, trading 246.5. Yes, yeah.
Like having a baby? What does that mean? I had a doji.
A doji star?
Abandoned baby there.
I don't think so. Don't read people's emails and go, oh my God.
There's a gravestone doji right there.
Where's it at Death Cross?
I don't think
That's my favorite, Death Cross.
I don't think so.
Hey, Microsoft plans to take an $800 million charge after General Motors announced yesterday that it was shutting down its autonomous taxi initiative, Cruise. GM said it would no longer fund the operation. Microsoft had a minority investment in Cruise that they initiated in January of 2021. So now it's a write down. They just get to write it down.
It's a write down.
It's a write down.
Free money.
Free money. Microsoft.
I love these write downs. It's so good, right? I mean,
Yeah.
you don't really lose money. It's just a write down. Microsoft 446.
Sounds better to say it's a write down than it's a bad trade.
Yes,
does.
447 and change. Look like down $1.50, maybe.
Oh, all right. Let's get in there.
All right.
Tom, I'm going to be very gentle when I tell you this next story.
Oh, please.
The Department of Justice last night asked a U.S. appeals court to reject an emergency bid by TikTok to temporarily block a law that would require the divestment of it from ByteDance. Basically, the DOJ was like, look, they can't just delay this, because they were like, TikTok was like, hey, just block this, just delay this while we figure everything out. And the Department of Justice is like, nah, fam, you got to go. And so that ruling came in last night. I'm just up to, I don't want you to be taken by surprise.
I'm not going to be taken by surprise.
To an end.
No way are they
Are
blocked.
you going to be able to live?
And you're not ready.
without
Well, it's not looking good. You know, because this is a law. This isn't just a whim of one administration. Like, this is a law that was passed.
You do know how many times like you go, oh my God, they're not gonna pass a budget. We're all gonna die. Okay, don't worry. TikTok will be fine.
Okie dokie, artichoke. But on this, Meta continues to hit new highs because it's basically the elimination of their largest player. Meta down a lot yesterday. Like, the site was down a lot, not the stock. Like Instagram and Facebook.
No, stock's doing just fine, making all-time highs, although it is slightly off of that this morning by about $3.5, $4.
Macy's says the former employee who allegedly hid $150 million in expenses, causing it to delay the reporting of its own earnings, had no major impact. Oh, Macy's, make it make sense. A Macy's employee is being accused of hiding $151 million in delivery expenses. They thought they were helping over a nearly 3-year period. But despite this, the retailer says that they avoided any serious impact on its financial performance because they were already in the toilet. No.
Macy's trading around $16 a change. Looks like it's unchanged. It's had a nice rally from 14 and change to 16 and changes recently.
Or Macy's. That's
been the story for Macy's for the last
kind
decade.
of a funny
or so
story,
for
though.
Macy's.
What?
But that's been the story for Macy's stock for the last decade at least. Poor Macy's.
YouTube, this is interesting, dominates living room viewing with people watching 1 billion daily hours of YouTube. 1 billion
That's
daily
more than people
hours.
watch of Tasty.
On TV screens. YouTube has cemented its position as a living room entertainment powerhouse, with users now streaming a staggering 1 billion hours of content daily on TV. A major propulsion factor in this is podcasts. People like to watch podcasts on their big screens in their living rooms. I watch YouTube on my big TV. I don't know if you watch YouTube in your house on your big screen.
Can
TV.
you watch it, Saz, with your setup that you have? I don't think you really know how to do that.
He doesn't know his password, or he doesn't know what
I
YouTube
can
is.
watch it if I.
Because if you could, you'd be able to watch option trades today every Tuesday and Thursday. That's right, Saz. I don't know if you can watch it on the big screen on YouTube.
That's how my parents watch the show, actually.
Oh, see that? Okay, never mind.
What? Okay. YouTube owned by Google. We've been over this. Hey, Nike is renewed its contract with the NFL after the league briefly courted other bidders. The Nike will continue to be the exclusive uniform provider of the National Football League through 2038. Did you put on a trade in Nike? I know Nikki had brought you that as a Johnny trade.
It has earnings December 19th.
I'm already long Nike.
Okay.
It would make it's near its 52-week lows, by the way. NKE.
Yeah.
It's up small this morning, unchanged up small.
Yeah, we have a pretty small position on there.
Okay, well, because of your sassy attitude, the news is gonna finish like 10 minutes earlier today. So you guys are gonna be on your I'm out of story. I'm just I put all the stories. You look, dude. You Trump don't want to help. Trump don't get to help. Hey, congratulations, as Bill Belichick is officially the new head coach of the University of North Carolina. The Tar Heels football dynasty has begun. His girlfriend is almost old enough to start classes there. It's wonderful.
Oh, no.
Yeah, I went there. I don't know why he wanted this job so badly, but they wanted him.
I think he just wanted the coach again.
And boy,
I
did
think
they
he's looking
get him.
for another girlfriend.
The six-time Super Bowl winning head coach had finalized the deal. He is going back to school where his father served as an assistant coach in the 1950s.
You make a deal where his son gets to take over the job as head coach when he's done?
I don't have that information.
I don't know.
I think that was part of the deal, that he gets to turn it over to his son when he wants to retire. And
talk about nepotism there, right, Vanetta? Get going.
So Belichick
Good on them.
he won 6 Super Bowls, but he also won 2 as assistant coach, didn't he?
Again, I am not
I think
his
8
biographer. I don't.
Yeah,
I think so.
I think 8 total, but
He did hand over a 400-page organizational Bible with structure, payment plans, staffing choices, and more.
all I'll say about college football today is that since the transfer portal, you can go anywhere basically. And if you're UNC, when was the last time you ever won anything?
Yeah, sure, right.
Never,
right.
right?
Well, yeah, they're a basketball school.
Yeah, they're a basketball
Yeah.
school.
Right.
So they've never
Same with Indiana. We were just we're fine. If we're good at basketball, that's fine.
Right.
But I guess for Belichick, this automatically puts UNC in the football, because players are going to want to go there.
Yeah, right.
And
wasn't a horse race until he signed up for UNC.
Yeah.
But do kids that are only 17, do they know who Bill Belichick is? I'm just asking.
If you're a football player and that magnitude.
Their parents do.
I'm just asking.
Their parents do.
Yeah, you do.
Yeah, they do. There's certain things in sports they kind of do, and it'll be easier for him to turn around this program. That's for sure.
Yeah,
it's kind of a weird choice for me. I think it's kind of a weird choice, but I don't think any of the professional teams were going to hire him. That's why he took it.
makes sense. Yeah, nothing could be finer. Go to Carolina. Hey, in other NFL news, the NFL has approved the sale of a minority stake in the Philadelphia Eagles. Fly, Eagles, fly. Valuing the franchise at $8.3 billion. They approved the sale to 2 family investment groups. The deal is for an 8% stake in the team. Again, franchise valued at $8.3 billion.
Crazy valuation. Did you see Brady and Gronk get interviewed about Belichick hire for this? Do you see that? It's really funny. Brady goes, what do you think about Belichick taking the job at North Carolina? He goes, I can only imagine him recruiting at some kid's house and walking in and going, listen, we'll take your kid, but we don't really want your kid.
Oh, no.
Brady's like,
why are you looking at my kid?
Yeah.
I think you know why.
Listen, we got better kids than him. Brady was like, we got way better kids than him, but if he wants to go there, we'll take him. It was great. It was really funny.
That's brutal.
And those guys are like, no, we cannot see him recruiting for college.
Hey, finally today for my viral video of the day, I got a little chuckle out of this. If you've ever ordered lunch, one of the hallmarks of Jimmy John's is sub so good you'll freak and freaky fast.
So fast.
Sub so fast you'll freak and freaky fast delivery. Well, these construction workers really did find out how freaky and fast a Jimmy John's delivery is. This is a pretty ingenious setup and system. It's just mildly amusing. Watch this. He's got the bag out there, right?
You throw it in there?
But it hits him in the junk.
That's pretty good. That's pretty good.
But I was like, he's like, okay, we're at mile marker 3454. I was like, okay.
I'm the guy in the yellow vest.
Yeah, and he just whips it at you, but he's going like 55 miles an hour. Anyway.
I think I'm the only one that likes Jimmy John's here.
I hate Jimmy John's.
I like.
I don't hate it. It's edible.
I think it's good.
I think it's not edible. Do you got to try their pickle sandwich though?
I don't like pickles sandwiches. Concept.
I want to be a cowboy.
Like you haven't had a pickle sandwich a couple of 2-3 times. You build 1,000 bridges. We're gonna take a quick 90-second break and come back. My pickle eating sandwich boy over here and my pickle eating sandwich girl over here.
Sandwich sounds gross. It just sounds gross.
I'm gonna get you.
I would eat a lettuce sandwich before I eat the pickle.
Matt, you love pickles, don't you?
Love.
Beth does love
Easy.
pickles.
I walked into that.
We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Oz? That's right. Confirm and send. We'll be back in 90 seconds with Tasty Live. At 14 years, still doesn't remember.
Pickle loving sandwich.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
If you missed the live show, here's our cherry on top weekly recap.
When I was in Krakow a month ago, I was introduced to this is cherry vodka. It's not like vodka you get in the States. It's like 80 or 90 proof. We should get a sponsorship of some sort involved with these guys, or at least a co-marketing effort.
It seems a little risque. I'm gonna be honest. I mean, she's got 2 cherries that are kind of
easy.
Yeah, you're you're uncomfortable considering
the show doesn't have a lot of sex appeal. The network.
You're
in
50% right.
But here's the thing that I don't get about TP. He's got to stop doing the show from a lazy boy. He goes
Usually you can
lower
see right up
and
his
lower.
nostrils.
Like you,
I want him to go even lower, so it's just all you see is just like
Like he's in an iron lung. Okay, we want him to be in an iron lung.
it's like it's a bubble boy.
Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like what has
Wasn't
changed? I don't think so. Nothing's changed. The only thing they did, I think, was they had the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
When I got
And I got it. We didn't. Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. We since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me, baby.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, we are back, my friend. And you know what that means. Time for a little bit more Tasty Live. Let's confirm and sense. Before we do, let's take a look at the market. Even the S&Ps are red. So I don't know if red by 15. I don't think that's, I know it hasn't been seen this week. Well, not that I can remember. NASDAQ down 104. Russell down 14. Russell's the weakest of the group with the NASDAQ and the Dow down 47. But it's a small move lower after making all-time highs in many of these indices. Volatility in by 3 cents on off. Not putting any weight to this down move so far with volatility being lower. Bonds down 9 ticks. They are about 20 ticks higher than the last time I quoted them. 117. I'm sorry, about 8 ticks higher than where I quoted 117.28 right now. Bitcoin hanging out at 101.7. Sosnoff just a skosh off of its highs of 104 and change, all-time highs of trading, just off its closing highs. Oil unchanged, down 3 cents. Gold down $23. Finding a little move lower in gold. Gold's been on a little bit of a tear really since about the beginning of the year. Gold trading 27.33. Silver, which has been a little bit weaker by 1% today. Gold down 33 cents or so. Nat gas down almost 2.5 cents, 0.27. Sadnov, that's all I have for right now. Earnings, we didn't do anything. In Adobe's down $60-ish. Got Costco and AVGO Broadcom today after the close.
All right.
We got trades to the research team. Let's go moving. Come on. Got to keep you on track.
Confirm and send. These are emails that came into us overnight. It's Thursday and December 12th. How long is too long for holding stock? Even with aggressive cost basis reduction by selling calls, how long is too long to hold your stock?
If it's going higher, there's never too long. And if it's going lower, yesterday is too long. I mean, really, that's the key. I mean, if the position's working, you're still bullish on it, then hold it as long as you have to. You're reducing your cost basis. You're doing everything right.
You know, it's this is not a question we get often. How long is too long?
Right. Unless it's something they don't like anymore, you know, like it's going against them and you're saying.
First of all, as long as your assumptions, just like Tony said, as long as your assumption's still bullish, there's no such thing as too long. You know, if your assumption's bullish, great. So there's no such thing as too long. But for me, you know, I mean, I just get bored with positions after a while. But if the IV rank's staying high and you still like the stock and you're reducing your cost basis by selling covered calls, I mean, I don't know. You can go on. I mean, we've held stuff for years. I don't know. Yeah. I don't think there's really a time. I think it's just a personal thing. Mm-hmm. So let's go to the next slide.
Next slide we go.
You said you have 100 or so positions on and you're aiming for returns that are a multiple of risk-free premium. Let's say risk-free is 5%. So your target's 15, 20%, could be 25%, who knows? How do your positions achieve that broadly?
I mean, look, we're taking a lot more risk than you would expect to make 5%. So you have to expect to make more of this. Remember, options are, you know, basically 10 times leverage. I mean, they're 10 times the size of stock in many instances. So 15 to 20%, all you have to do is look at your extrinsic value and extrapolate out. You know, over time, you should be able to keep 25% of that extrinsic value. Figure out how much is in your account and go from there.
There is this is something like, first of all, you're not going to have 100 positions on until you feel pretty comfortable that you have the ability to manage those positions. Then you kind of know what you're doing. So at some point, to get to 100 positions, you've kind of proved concept along the way. I think if the risk-free rate's 5% and you're targeting 15 to 20%, that is totally reasonable. Like, I mean, you got to get paid for taking risk.
Yeah, sure.
And I don't think 1.5 times or 2 times is getting paid enough for it. So if your target's 15 to 25 or 15 to 30%, that's totally reasonable target. How do your positions achieve that broadly? Well, each person does a little bit different. We like to stay small, and we like to spread the wealth, both, number of positions, number of underlyings, different strategies, all the above. Some people like to be way more concentrated, like to take more. I mean, how you get there is really up to you. All that we do at Tasty is to try to is optimize the stories, optimize the mechanics about how to do that. And then it's really for you to figure out which one, which approach you want to take. I don't think
you get to keep 25% of your extrinsic value, right?
I don't think that there's a single approach. Right. You could keep 20, you could figure it out as keeping, maybe you want to keep 25% of your extrinsic value. Maybe you figure it out differently. Maybe you say, maybe I have expectations for the stock market to go to have a long bias, stock market to go higher. So I'm playing that way. Maybe there's lots of different ways you could potentially play it. We play it as a percent of the premium that we collect.
Yep.
That's all. Let's go next slide. So I was looking at an iron fly in an underlying that collects about $2,500, but only requires $1,500 in buying power. In other words, the risk is smaller than the potential reward. Is this too good to be true?
Iron fly on that collects around 25. Yeah, no, it's not too good to be true. You're basically short. Let's just say what iron fly is. You're short the at the money straddle, and you bought some wings. Now, the flip side to that is it's probably, about a 50-50 shot or 45.
Probably lower than that.
Yeah, it's probably 45-55 or 40-60 against you on that trade. So, it makes perfectly good sense. Yeah.
Yeah, the difference.
As a matter of fact, I'm sorry to interrupt you. Matter of fact, if both your legs are outside the expected move, you're going to get that type of risk versus reward all the time because the expected move is so much further than your strategy. Means that there's a much higher than 50-50 shot that is going to end outside of your short strike. So that's the reason why.
If you are if you're doing an iron fly, which is you sell a straddle by the wings, and you're risking a lot less than you can make, then just think about it. Why would somebody do the other side to that? And the answer is because you have a lower probability of success.
Yep.
So if you were collecting 1,500 and risking 2,500, you'd have about a 60 or 65% probability of profit. But since it's the other way around, you have the inverse of that. So whatever you want to say, 35, 40% probability of profit. So the answer is this too good to be true? No, it's exactly right.
And as a matter of fact, the volatility contracts and the stock doesn't move. This will be profitable pretty quickly inside that scenario. So you can always take it off. Remember, just because it has a 30% or 40% probability of profit when you put it on doesn't mean intra time frame of when you have it on that you can take a profit. You can certainly take a profit.
Just when you're risking less than you can make, you have a lower than 50-50 probability profit. That's all you have to know. Because it's a defined risk trade. When you're risking more than you can make, you have a greater than 50-50 probability profit. And you just have to kind of interpolate the numbers, just approximate. Let's go next slide. What do you think is driving this market? I know you don't believe in seasonality, but what's behind the push?
FOMO. I do. I think there's a lot of FOMO out there. I think it's the end of the year. I think there's some catch up in some funds, and I think there's lower taxes possibly for next year on capital gains. Not much of a supply of sales. That's my opinion.
I think that markets. People like to see positive trends in the market. Most people are not necessarily by design, but just by the nature of investing, they have a long bias. And when markets go up, it draws in other capital. And I think that it's been a long time since anybody's seen anything really negative in the markets. So at this point, people have kind of pushed all in. I don't think it's a seasonality thing at all. I don't think this is like a Santa Claus rally or whatever it is. But there has been a perception that, that the next couple of years are going to be as good as the last couple of years. I don't know if that's going to be the case, but that's the perception. And so we'll see. But that's the push. It's just an emotional push. That's it.
So if it's emotional, would you say it's FOMO?
Could be. Let's go next slide.
Fair enough.
tastylive emphasizes regularly the importance of trading often, trading small. At the same time, tastylive cautions against allocating too much capital to scalping, actually recommending using a minimum amount for it. I'm a little confused by that. Isn't scalping the epitome of trade small, trade often?
Maybe if you're using micro futures, you could say that is trading small, trading often, trading small, trading often. But you got to remember something. With futures, it's a 50-50 shot, and that's not what we're looking to highlight here. What we're looking to highlight here is something well over a 50-50 shot, something that 60-40, 70-30 your way probability of success. And for doing that, we need you to trade small in each underlying that you have on and have a number of occurrences so that the math plays out. So, trading micros might be small for futures, not minis. I'm not talking about the E-mini S&Ps or anything. I'm talking about the micros. But that's not what we're talking about. We want you to be strategic.
This is a very fair question. And I wrote back to this person and said, you know what? The whole idea of scalping for us, and the reason we talk about it is it's really, I don't do things.
You grew up with it? I mean,
I don't do things strictly for engagement. But what scalping does is I feel like it keeps me sharp and it keeps me totally watching the markets and all the time engaged in what's happening because I do like the aspect of the junky aspect to it. So what scalping does for some people is an engagement tool. I'm one of those people. So I think it keeps me sharp. It keeps me make a lot of decisions, especially on a day when you're not making any money. Like yesterday for me, I had bad positions on, but so I scalped all day and had some fun with it. It worked out. It's really more of an engagement tool. Just keep watching everything. I don't think it has anything to do with the capital that we use. It definitely doesn't. It's not. We don't allocate capital to scalping per se. That's not a big part of our portfolio allocation. It's really just an engagement tool.
Very good.
Let's go next slide. So this person writes, what is gamma risk? And how should I protect against it? Please use very basic terms.
Well, I mean, a gamma in options is just, it measures how quickly an option's delta changes. So delta equals shares. So if you put on an option where you sell something with a 30 delta, you have the equivalent of 30 shares. Gamma, when volatility goes higher, might actually change without any movement in the stock, might change that delta from 30 to 32, or I'll use an extreme, make it 30 to 35, where you picked up more delta on a position even without the stock moving. And the stock and the option price can move also. So gamma risk is just volatility risk, and it's the rate of change of an option's delta.
It's the speed at which your position kind of changes. Mm-hmm. And
higher gamma is going to make more.
Yeah, we don't talk about it a lot on this network because for retail investors, it doesn't come into play that much of the time.
But if you had 30 short deltas, now you have 32 short deltas. You had 30 long deltas, 32 long deltas. Are they really going to change your opinion on anything? No, probably not.
The way you protect yourself against gamma risk is you just kind of keep your positions at a very manageable size. As long as your positions are sized correctly, you're not going to have to worry about gamma risk as a retail investor. The way people get in trouble with gamma risk is they'll say, oh, I can sell a bunch of straddles because there's no delta here. And then you end up with a lot of gamma or something like that. Or you sell something that's very near term. But if you stick to kind of like a decent duration or mix up the durations and you just keep your position size small, you're fine.
Awesome.
You're not going to have a lot of gamma risk.
Right at the top of the hour, Sadnoff. And you know what that means? It's time for a little bit of trades from the research team. Next, we'll be back in 90 seconds. Let's take the live. So good, Sadnoff. You're so good.
Dear Braden, big thanks to you and the nerds for the wonderful tech support. Of course I back everything up to cloud, because I'm 60 years old and I know what a cloud is. Yours truly, Larry.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
No, your office is right near a different. You're like closer to the.
Near what?
Whatever.
This is English. You should watch him read.
From the smart mouths at tastylive.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
That's right, Tomas. That bell means only one thing. We've got these guys in the house for trades of the research team. Who is our first researcher? Ooh, shooting from strength.
Baby shark, baby shark, baby shark,
Sahil in the house. How are you, my friend?
I'm doing good. How are you, Tony?
Thank you very much for the gift that you sent me from the. Is it considered the Far East?
The Far East? No, yeah.
Okay.
I guess so.
Thank you, man. Appreciate it. Very nice. Very nice.
Southeast Asia.
Sosnoff, thank you for his gift. This would be an opportunity for him to do that right now, wouldn't it be?
I sold it.
You sold it.
Sold it on eBay. It's
Tell
great.
me how much you got for it.
Didn't exactly say the words "thank you." I can see it. Okay.
You can see it though. You can see it. All right, that's fair enough.
It was implied.
Yeah, it was implied for sure. It's all about implied stuff, implied volatility, implied thank you. He's all about that. All about the implied. Well, what do you got for us?
A man of few words.
Yes, man of few words. What do you got for us? Ooh,
Well,
Tesla.
everyone's
Oh,
talking
you're going
about
to be in trouble now.
Yeah. Everyone's shorting this. I see. So,
You're going to do an Iron Condor?
It's like $3 down pre-market right now, so I don't know. But yeah, Iron Condor premium.
It's like, it's down $2, whatever.
Yeah. So $20 wide, 345, 365 on the puts, and 525, 545 on the calls.
Sadnaf, do you add a position here?
No, because I think the stock is going to be 280 by like February.
Yeah. See, he shorted it. Yeah, I think I've seen like three different people shorted on the follow page right now. So.
Yeah.
All right.
It's a popular trade. All right. Well, then I'm going to have to let Sahil go.
I don't hate the trade because the IV rank's super high, and that's exactly what we preach.
Some nice premium.
Yeah, so I'll just piggyback your trade here for a moment. So I've gotten emails from people like, I have a Tesla position, it's a strangle, it's been going against me. When do you kick it to the side and say, when do you get out? And then, right now with IV rank at 78, up from 65 to 78, I got to keep the position on. I know it stinks, but I got to keep the IV rank. If IV rank is high, I stay in the position. So time for a new trade if you're looking for something to do. Good job, Sahil. What's the next one? Next researcher. That's right. Smooth, silky cat. How are you, my friend?
I'm good. How are you?
I'm doing great. Thank you for asking.
How are you, Tom?
I'm good, Gad. How are you?
I'm super good, super healthy, and grateful.
See that's the attitude you should start bringing in this room. Okay?
Grateful. Yeah, that's the attitude I have every single day. I am grateful.
To be with Tony?
No, that's what I'm sad about. Come in, you're sad, you're here with him, but I'm grateful to be here.
Yeah, if you wake up and you say you're grateful, you're happy.
That's
the
right.
Day will be
That's
good.
right. That's
Every
right.
day.
It's half full, Sadnaf, not half empty. It's half full.
Every day.
Yeah, every day.
Yep.
Even in the weekends. So
I hear you.
Yeah.
All right, what you got for us today?
So once Tom said, so we're gonna start quoting Tom, right? Once Tom said, when we have noise, where there is noise, there is a lot of opportunities, right?
That's what I say.
Yeah.
Where there's noise, there's opportunity.
Exactly. So,
and you find some noise in UNH. I have not.
Yep.
Let me just see. I don't think we've traded UNH.
No, it has earnings coming June 10th, but it does have a great high IV rank, as you said. Markets aren't bad for a $500 stock. They could be.
You're right. We have not traded this. I like this. What are you doing in there? Let's see. Jan?
Yeah, Jan 17.
Okay, so you're doing the 90.80. What's the stock doing this morning? Down $3.
That is correct.
490.
Yeah,
It's been going lower. Just about a week or so ago, it was up in the 600 handle. Now it's 533.
490, 480 for put side, 580, 590 for call side.
This should trade around, what do you think? Would you put
335.
I think it's going to be higher than that. Hold it. Let's just make sure I got the rating. 580, 590. 490, 480.
Yeah.
I mean, it's a $10 wide iron condor. How much more over $3 can it be with a 70% pop?
We'll see.
Okay. Good.
I think maybe trades around 360. I don't know. Let's see. I don't know how wide these markets are.
Okay, good.
But I like it if we can get filled on it.
Good. Thank you.
That would make sense. You like any trade you put in, you want to get filled in, right?
Oh, sometimes I cancel up close.
Who's our next researcher? My man Kai in the house. Kai, how are you, brother?
I'm doing great.
Good, see? Are you grateful to be with Mr. Tom Sadnoff, the great one?
Every day.
Every single day.
Every single day. Good job out of you, too. Good job out of you, too. All right, what do you got for us, then?
All right, so another calendar. So AMD calendar. I want to long AMD. Implied volatility is low, and I think that's poor man's cover call. So I think it's a right play here.
Implied volatility in AMD is very low, and the stock is pretty much on its butt, isn't it?
Yep. I think all the AI chip related stocks got depressed lately, but compared to the other stocks, I think AMD is actually sitting at the low.
It sure is compared to everything else. No question about it. So let's take a look here. AMD, what do you want to buy?
So I actually still want to go in the March Jan, so I can give myself 1 month's kind of room. I sell 145 in Jan, 36 day, and by March 120. So the debit is $16, 16.3. I try February. February is you only get $2 less. So I can pay $2 for one more month.
So you're buying the 120 and selling the 145. And what price you want to pay for this?
16.3, I think, this morning. Yesterday it was 16.
I'm going to change the strikes
to
125 in March and 135.
135?
Yeah, what difference does it make? It's out of the money.
That's only $5 on the.
Oh, it's $10 wide.
All right. How much is it?
It's going to be around, well, it closed at around 1065.
Okay.
But the stock looks like it's down about $0.50 this morning, so maybe it opens around $10.
Cool. So
Beautiful.
So yours is more conservative.
Yeah. Yep.
Beautiful.
He's a conservative guy, you know that.
But I like to trade, actually.
Oh.
Yeah.
Oh, you get to live.
You get to
Who
live.
comes up next? Who's our next researcher? Mr. Cherry Picks himself.
Hello, hello, hello.
Hello, Mr. Data. How are you?
I'm doing well, thank you very much. How much
How's it going?
Good.
Nice to have you on the show.
Well, thank you, Matt. It's nice to feel welcomed.
You're welcome. Well, what do you got for us?
Okay, so today I got silver, SLV.
Oof.
Yeah, this is stock I like. I usually like trading, but I don't have a single position in this right now, which is unlike me. Here
I got positions on in there, and I guess I don't want to say I don't know if they're up or down.
So here I'm doing two. I'm calling this an unequal strangle. This is somewhat bullish. So I'm doing 2 of the puts to 1 call. So 2 to 1, or 3 to 1 maybe even. 2 of the 28s, 1 of the 30s. Selling 2 of the 28 puts, selling 1 of the 30 calls. Of course, there's call skew on this, so you're going to get paid considerably more for the call than you would the puts. But you know that's the metals. You got the call skew on it.
God, they have crappy premium in here.
No, not for the price of the stock though. I mean, it's a $30 stock. You know, dollar for dollar. I mean, you get paid quite a bit. The implied volatility is quite high.
Sounds enough. What say you?
Less than $1,000 for the buying power.
I have trouble.
$176.
I have trouble making money in SLV.
I have trouble making money in GLD, so I feel for you.
I have trouble making money in GLD too.
GLD, I do too.
GLD and SLV, I have trouble making money in both of those. I much prefer silver and gold trading the actual futures options.
Really? Okay.
So these two are just troublesome for me.
Well, silver, you know, SI, that's a big product.
It is. But the markets have gotten better. The option markets have gotten better. I've been adjusting every day, and they're pretty much one tick wide.
Are you trading the options?
Yeah,
on that?
That's all I trade.
The options, okay.
SLV, I just have trouble because the premiums are so cheap.
Yeah.
I don't seem to collect anything.
Well, they do have the micro silver, but I don't think we have options in the micros.
We don't. Nope, not in micro silver. I don't think they trade. So
Dokie.
Okay.
Good job. Good job out of you. Who's our next researcher? That's right, my friend. It's Jajun, owner of the Jajun trade. How are you, Jajun?
How are you? Doing good.
Ah, good. Good to see you, my friend.
What's up, Jajun?
I see you're still in your Pulp Fiction phase. I like that.
Okay. Looking good today, I am.
Oh, my God, you are.
Yes.
You're like
new camera.
You're like a biscuit. What do you got for us, Jajun?
So today we have a Uber. Getting a little bullish on Uber. We sell the 60, we buy the 55, we do it 43-day. The IV rank is 31%. And I think this stock was sold very heavily yesterday, and it may be a good time to buy some at discount.
You are exactly right, but it's up $2 pre-market.
I know.
I mean, we sold some puts in there 2 days ago. We sold the 60 puts for $1.33. They closed at $2.17. I wanted to do more yesterday, but I forgot about it. And the stock's up $2 this morning.
Yeah, there may be still some rooms to go. So we might consider.
I don't like selling put spreads when the stock's up $2, but I don't doubt that there's room to go. I mean, I love Uber here. Love. Yeah, Uber is a company that has the ability to reinvent itself. It is just a special company.
Yes, I agree.
I agree too, but Uber has not been doing too well as of late, right?
No.
Uber trading around $63, so it's off of its highs in the 80s.
Yeah, but it's off its lows yesterday. So
true.
All right, Jejun, that's good stuff, man.
Good job out of you. Very, very nice. Who is our bye for now? Who is our last researcher?
Like squirrel.
Awesome. Ping pong poom. Julia, what's up?
Ping pong poom. I'm doing great. How are you?
I'm doing great. What you got for us today?
Fine morning.
Fine morning.
Today,
Cold fine morning.
I know it's a little brisk outside. And today I wanted to look at an ETF. There's a couple different ETFs with elevated IVs. This one's not the highest, but I think still tradable. So today I'm looking at XOP. This is a nice little baby trade for Jan. 36 days out. I got the 129, 150 short strikes going $5 wide. Collects about $1 in credit. Might tighten this up a little bit, but it's under $400 and buying power. So signature little baby trade.
What do you think about this little baby trade?
Julia,
Tom's gonna hate it.
Yeah, I kind of hate it.
Of course, he always hates the baby trades.
Because he's a big dog.
He's a big dog.
Yeah, what is
He's
this?
a real big dog.
I mean, it's a
Adult trades for
$15
this
wide.
person.
What are you doing? It's hold it. You have the
$15 wide
on the call side and $4 wide on the put side.
Yes.
Oh no! That's not right. I'm sorry about that. It should be $155. There we go. Yeah, it should be $5 wide. Oh yeah, no, it should be $5 wide. My bad.
Okay, that's what I was saying. It looked a little weird. And $4 on the put side.
So it's 150.55. Is that correct? 150, 155.
150, 155, and then 129, 125. Yeah.
Right. So it's 5x4 strike width. Right.
5x4. Yes.
Okay. I thought that looked a little weird.
Mm-hmm. Look at Sadnov. Can't get anything past you.
I'm a little bit.
We had the
nervous.
holiday party last night when we were putting this in, so it might have been a little bit.
It's not like you to make a math mistake on that. I mean,
I know, yeah.
Don't look good.
Oh, the building holiday party was out of control.
Oh, was it? Sadnov, did you have a good time?
Oh yeah. What were those things? I had a bacon covered date and a.
That's good. That's why
bacon dates were pretty good. I'm not gonna lie.
I was wondering why you're a little slow today. I can figure it out now.
Yeah, just a tiny bit. I'm sorry about that.
Yeah, I can see that now.
All right, XOP. So let's see what you got here because I got to. All right, Miss Spina. It is a little bit of a baby trade though.
A little
bit
baby
cheapy
trade
for me. I got to figure out how to make this thing a little more. Got a little more. I need a little more juice.
Let's see. So pulling it in on the put side a little bit would kind of make sense, right? Or going wider, yeah. Doing like the 130, 124s. Looks $1.33 in credit for 467.
I just got to
a little bit less of a.
I got to move the strikes a little closer. Underlying index is 138. I can go inside of 150. All right, Julia, I'm working it. I think 145, 149.
Hey, can I offer you some of this?
145. Hold on, 145, 149, and oh boy, 195.
Take off your shoes.
I'm just gonna change the strikes.
Julia, what did you put in his drink?
I think the same thing that I had.
Okay, 131, 126, 131, 127, 149, 145.
149.
$4 wide. $4 wide. 160. Give it a shot, Tom.
There you go.
Okay.
That was easy.
Now I got the one I like.
Easy peasy.
That was easy. We're gonna take a quick 90-second break.
$4 wide. $4 wide. 160 in credit. And
so is it $4 wide? 160 in credit? I only said it 8 times. I'm just curious.
I'm telling Julia.
Oh, okay. All right. Go ahead. Tell it one more time.
It's an educational moment.
We're going to take a quick 90-second break and come back. I'm going to get Saz some water. Opening bell is next. It's Tasty Live.
Thank you.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Oh yeah. Tasty Nation, good morning.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with, you The opening bell stopped off in about 4.5 minutes. So since we have a little bit of time, let's take a quick look at the market. Guess what? Even the S&Ps are down. The same 15 handles I quoted them about a half an hour ago. NASDAQ down 105. That's leaving the clubhouse to the downside. Russell's only down 8. It's rallied ever so slightly. And the Dow is down 65. All 4 indices are down. We've been having usually a mixed bag of tricks. Even the S&P, NASDAQ following each other, and the Russell and the Dow following each other. Today, they're all following each other, sad enough, slightly lower. Volatility down only 4 cents. Not really getting out of its own way here, even though we have a little bit of a down opening here. Not putting any weight to this downside, but we'll see what happens. Bonds down 14 ticks, 117.23. They're about 5 ticks off of their lows, 117.23. They've had 4 or 5 days of some down movement in the bonds. Bonds go lower, rates go higher. We'll see. Bitcoin trading 102 and change, so a little bit higher than the last time I quoted it. Oil down 38 cents to 69.49. Gold, that's the big mover to the downside, down $46 or $47, down twice as much as the last time I quoted it. That's almost a 2% move. Silver has over a 2% move, down 76 cents. Nat gas, small move to the upside. I guess a decent to small move to the upside. It was red earlier, so it too has had a little bit of a reversal. Sadnoff. That's all I've got for right this moment. We've got about 2.5 minutes before the market opens. What are you thinking about today, Sadnoff? Day one?
Are you speeding this morning?
Am I what?
Nothing.
Speeding?
Yeah, you're talking very fast.
Oh.
He always talks like that.
Maybe you're just in the twilight zone and you're very slow.
I don't think so.
Uh-huh.
Anyway, this is, let me just see my gold position.
You're doing great, Tony.
You're doing great, Tony. Your boss said you're doing great.
Talking, Tom.
All right. Wow, why is this so loud? Let's get this thing a little shut down a little bit. Okay. I'm ready for this opening today. I think today is going to be a good day.
Can't just don't make it like yesterday. Today will be a good day. Yeah, I had 30 positions on. I had 2 positions wipe out my day and take some profits away from me too. So I don't want that kind of day. I hate it when the majority of your trades are profitable, but you've got outlier moves and a couple of things like Tesla and gold, which are reversing today, which is pretty nice to hurt your overall position. You're trading right now. You're trading futures options.
I am. I'm only trading gold and silver, and I'm just rolling down calls because I didn't realize gold was down $46 and silver was down 77 cents.
Until the bat mentioned it to you, right?
No, I had already rolled down gold and silver this morning once, but I didn't realize how much more they had dropped. When I woke up this morning, gold was only down 16. Now it's down 40.
I quoted it was down 25 and then 43 and now 47. You are right, Sadnoff.
Been dropping all morning.
Maybe your ears are just lower than normal. Maybe.
Sold some Tesla last night. Actually, I was sitting at home and I was bored and I saw the stock trading at 429. So I sold some.
Nice. I see bought back at 26 or something.
I don't know, 25.
25. Good job out of you.
But now I need to buy some more back at 417. So can you make that happen?
I need to buy some back at 380.
I need 382.
That's where I needed.
First stop I need is 417, and then I need 380.
Understood. Well, it's 424 unchanged this morning. Seems like a gift that it's unchanged.
Other than that,
5, we could stop there and hang out there for about 2 months. Would be great.
Trying to look and see if we have any other positions on with big movers pre-market, and MSTR is up $2, so the answer would be no. Coinbase is up 4 or 5. The answer there would be no. And I don't see anything else with huge moves pre-market unless I'm missing something.
Well, there's your bell, Sosnoff. You know what that means. Your P&L is going to start moving. Well, it's already moved on some of the futures products, but now it's going to move from everything else that you have.
We'll see. We're working XOP, trades the research team, XOP, AMD, UNH.
No dings.
No dings yet this morning. Let's take a look at these different trades. XOP, Julia Guglia's trade. We're pretty close. It's about 5 cents off. AMD, that was Kai's trade. Oh, AMD's actually up. We thought.
I can't wait to see where you get filled. Where you think you're gonna get filled on this UNH trade? If you think a $10 wide iron condor is gonna trade $3.75, that's what I want to see.
We're gonna see because right now it's trading for 280 as mid price.
Okay, thank you very much, Bat. You're right. You're right, Bat.
And
see, I'm so fast I can see things in the future. I'm in the Matrix. I've got the Matrix from my son Nick.
Well, it's a little bit of a bullish. The position had a couple long deltas. No, actually, it's flat now. Yeah, I'm probably gonna move the UNH down to 335. That's what's low.
335. You ain't ever getting filled.
Filled.
335. You did get filled. Good job out of you.
335. You ain't ever
I would
getting
have thought it'd be
filled.
closer to 315.
Well, got filled. 335.
Good job. That's why you cancel, replace, and move it lower.
That's exactly why you cancel.
Good job, man. Good job.
I don't know if it's a good job. Maybe it's worth more. That the hard part about stocks like UNH is you just don't know
because the markets are so wide.
Markets are wide. You're doing price discovery. You don't know.
Mm-hmm. Boeing continues its rally up $1.80. Coin up $6 and change with Bitcoin basically unchanged now, but over 102. That's to be expected. Goldman Sachs a little bit lower. You know what, Instead of quoting those stocks, let's see what's going on with the overall market. To the downside, Netflix down 6, AVGO down around 4, Meta down around 3.5, Lulu down 3 and change, GLD, that's gold, down $3.14. Let's see what's going to the upside. Coin's your big leader, up just about $6. Reddit up 2 and change, and Microsoft up $2.50. Uber rallying a little bit, up $1.56.
Yeah, we have a good position. Well, I shouldn't say good position. We have an Uber position, which is going to be good today.
Close all watertight doors. Tesla down 63 cents. Sadnov.
I need Tesla at 417. If you hear a ding go off, that's a good trade.
That means you're buying some Tesla back at 417.
That means I'm buying some Tesla back at 417. Yes, but that's kind of what I need. Let's see. Spoos down 16 is good for the good kids. Let's see.
Consider this crashing.
I would not consider this a crash, but yesterday we sold off $8 on the close on the curb, kind of. So the market was up 50 for most of the afternoon. They closed them up only up 42, and they're down 17 right now. So when you think about it, that's kind of a decent.
That's the biggest move we had to the downside was the last couple of minutes.
Yeah, the last couple of minutes. Right. Exactly. Yep. Exactly. Let's see today, winners and losers. Boy, XOP, not the best stock to trade.
Mm-hmm.
So don't know if we're going to get filled in there, but surprisingly, we got filled in UNH, so who the hell knows?
Okie dokie.
Let's take a look and see if there's any big wild moves out here today so far. Riot. This stock, why did it take off all of a sudden?
Riot?
Yeah. Stock hasn't moved in like forever.
Mm-hmm.
I mean, I watched some of these. I just watch a couple of the kind of mining stocks. Don't trade too much of them.
I don't trade them too much either. They have not been the market movers with Bitcoin that you might expect, right? I mean, these are miner platforms, meaning they mined Bitcoin trading at $13. If you go further out here, I mean, Riot was a $25, $50, $80 stock when Bitcoin was significantly lower. So that play, if you were thinking to buy the miners as a cheap way to get involved in Bitcoin, really didn't pay off at all.
It would be an understatement. It did not work whatsoever. Any ARB that people tried to do with the miners and cash, like people write to me all the time and they say, is it possible to trade this certain ETF or triple leveraged ETF against MSTR and all this stuff? I'm like, you can try, but
they seem to be independent of each other.
I go, you can try. Like people also write to us all the time. They go, I don't understand how Bitcoin is down and MSTR is up, or how MSTR is down when Bitcoin's up. Mm-hmm. And the answer is, MSTR trades at a 220% premium to Bitcoin's their net asset value. It doesn't have to trade tick for tick or anywhere close to it.
That's correct. That is correct.
Yeah. So just be super careful. AMD, I really kind of want to fill this trade that Kai suggested. The poor man's covered call on AMD. Need AMD down about $1 to get filled in there at good prices. Let's see.
Tesla volatility coming in a little bit by about 6 handles. You notice the IV rank was 78 yesterday. It's 72 and change right now.
Yeah, Tesla this morning is our biggest winner.
Tesla $3.
Yeah, it's our biggest winner because vol's coming in a little bit, and it never comes in there. I'm good, dude.
All right, let's take a quick 90-second break and come back. We got more Tasty Live, Sadnaf, right after these messages from our sponsors. We've got Hear Me Out with Victor Jones next. We'll be back in 90 seconds. Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Guys, no one can do it like we do it, like we do it, like we do it. 'Cause no one can do it like we do it, like we do it, like we do it.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88. So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. You know, and Tasty Live in particular because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. You know, that education piece is highly important. I found that Tasty offered that.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Tesla just traded 417. I saw you bought your stock back. Good job out of you.
I did get my stock back at 417.
But all that means absolutely nothing because we've got this man. That's right. Victor Jones is in the house. Hear me out. What's up, Vic?
Oh, yeah. Tom, Tony, Tasty Nation. How you doing? What do you mean? What's going on over there? You shorted Tesla early this morning? You already bought it back?
No, I shorted it yesterday.
And he got it back. It's typical sod.
It wasn't. I sold it yesterday morning or yesterday some point. I don't remember. And then also, no, it must have been yesterday afternoon.
You sold it a couple times and bought it back. You traded from the short side.
I sold it yesterday afternoon, and then I sold it again last night after hours. Then I bought it back this morning both times. Now I'm just flat. You know, bunch.
I don't get it. On the long side, they say if you loved them at 400. If you liked them at 400, you're gonna love them at 480. As a short seller, if you loved them at 400, why don't you love them at 420?
Yeah,
you do. But I have other shorts on. I don't need to be short the stock. Right. I have other short positions. I'm still short deltas, and there are a lot of them.
Oh, it's reasonable for Tesla to go hit 420.69. Where he said he had funding secured or whatever.
Right.
I mean, that's the most likely scenario. Gentlemen, PPI came out this morning. It was super hot, 3% versus 2.6% year over year expected. They moved them around a little bit. Bonds didn't really budge. Equities moved more than bonds. I am curious, gentlemen. I know the answer to that anyway. I'm not even going to ask that setup question so Tom could just torpedo it. My question is, what's likely going to happen is you can't raise rates. I mean, you can't keep cutting rates, can you, Tom? Can you keep cutting rates when you've got inflation? PPI
Not here.
At 3%? What do you mean?
Not with bonds at 417. You can't.
Exactly. They're telling you.
I'm sorry. Not with bonds at 117. No, you can't.
117.
Yeah.
Yeah. The 2 years barely moved because September came around when they did these cuts. The 2 year was at 3.5%. It was saying, yeah, we're going to cut. We're going to get the short-term rates down to 3.5. With the 2 year at 4.11, it's basically telling the Fed you're not going to do much next year. You're maybe going to get off one or two cuts, or you might pause after this December meeting. So, gentlemen, I'm curious. Do you think they even cut in 2025? What would you assign the probabilities that they don't even cut all of next year?
0.
You think they will?
Yeah, they will because they've already committed to it.
With a new Fed, a new everything,
They're not going to have a new Fed. I don't think they're going to touch the Fed at all. I don't think they're going to do one thing. I think they're going to. I think everybody's going to stay in their place. I don't think they're going to have. I just think that they've committed to it. I think they continue they have one cut in December and maybe one cut next year. But I don't think bonds are doing anything. I think this bond market, the story's over. I think they're going to trade between 115 and 125 for the whole year, 2025.
Yeah, you have said that in the past.
I don't think they're doing anything. I think they're a dead instrument. I think you got to buy them in every dip and sell them in every rally.
I'll give you one reason they shouldn't be cutting rates, and that's Fartcoin. Did you talk about this morning or yesterday yet?
Talk about what?
Good. That was the reaction I was hoping for.
No, I didn't hear
Fartcoin.
what you said.
Yeah, Fartcoin. It's a meme coin out there. It now has a market cap of $560 million, which is greater than 38% of all publicly traded companies in America. That's one reason why we likely shouldn't be adding more liquidity to this system, Tom. Do you have any allocations to Fartcoin right now?
Spell it, please. I can't hear what he's saying. Is it
Fartcoin?
Fart.
No, I'm saying what you think I'm saying.
Oh, Fartcoin. F-A-R-T.
Yeah. It's like a new version of a Dogecoin.
Yeah,
just
yeah,
a
yeah,
silly
sure.
joke of a coin.
Yeah,
which
sure.
now has a market cap greater than 1 out of every 3 publicly traded companies, Tom.
Yeah,
That's how much excess
that
liquidity
should not raise a red flag for anybody.
They always say they never ring a bell at the top, Tom. Perhaps
I know they never ring a bell. That's what
one
I'm
of those
saying.
coins.
It should not phase you. They should not ring a bell. Yes. I understand that.
All right. Speaking of cryptocurrency, BlackRock put out a report that recommended a 1 to 2% allocation towards their Bitcoin ETF. Surprise, surprise, that once they put out their ETF, that they now are recommending a specific dollar amount.
Yeah,
1
they're
to
3 years
2%.
behind. They're 3 years behind Tasty. But yes, 3 years ago, we said everybody should have 1% in Bitcoin or in any kind of digital asset.
That is true.
And the reason they did this is because they said they were getting the question nonstop. How much? How much? How much? How much? So I'm curious. I know a couple of years ago when we talked about this.
That's a stupid reason. If the reason they gave is because we were getting the question, that is a stupid ass reason, and that person should be fired. The real reason that you do it is because it's statistically viable. It actually makes sense based on the implied volatility of digital currencies. Putting 1% of your portfolio into digital assets, given the implied volatility, you want to call it alpha, call it whatever you want, but what it's done is it has added to portfolios, and there's virtually no downside from it, at least for the last, whatever you want to say, 12 years. So it makes sense as a asset class to add it to your portfolio. That's what they should have said as the answer.
Would you say 1 to 2%, like as a flat number, or is your number higher than that, Tom and Tony? Is your number higher than 1 to 2%?
No,
and
my
do
number is.
Do you think age matters?
Yes, 100%.
So you think a younger person should have more? I'm sorry, Vic.
I don't. It's not that I think; it's that they think. Like I was talking to my son last night because he's in Chicago, and I said to him, he said, "Dad, have you sold any of your Bitcoin or ETH?" And I go, "Not really, but I don't have that much. It's a small percentage." And I said, "What about you?" And he goes, "Not selling a one lot, not selling a single dollar's worth." And I would say he's probably. I'm guessing. I'm just guessing.
Does he have the altcoins that really haven't gone anywhere?
No, he's mostly got Bitcoin and ETH, but he has a couple of he has some Cardano and Solana.
I have some of that crap.
Yeah,
too.
but he said to me, he's 80% of his investments.
Oh boy,
he's 80%.
Yeah, but that might be $1,500.
No,
I know he's a sad move. What am I thinking?
But he's got he's 30. He's 30.
He got that FU money. I forgot.
He's got his own money. He's 31. Say he's 31. I don't know how old he is. 32. He's 32.
Don't know how old he is?
He's 32. So at 32.
And I'm the parent. I'm the bad parent.
So at 32, Vic, he's telling me that he's got 80% of his stuff in digital assets. I
had 80% when I was that age in the product that I loved, which was my business.
Well, your business is different.
Well, I get it, but that's what he loves. That's what he's doing.
I'm not. I didn't argue with him. I said, fine, do whatever. I mean, but he asked me. He said, "Is there a difference in age?" And I'm like, "Yeah, I have less than 1%, and he's got 80%."
Yeah.
So the answer to that question is, I think that's
notional value is the same. You would do that trade 1-to-1.
I think that's
two traders.
I think that's pretty normal now. I think younger people do.
I'm between 5 and 10. And I don't mess with the meme coins at all. Bitcoin, straight Bitcoin, not even ETH.
I trade
ETH.
That's a good number for you.
That's about it. But I'm between 5 and 10.
That's
and
a big
I'm 38
number.
years old for reference.
Now, I'll be honest with you. I have it in a separate account here at Tasty Trade. And if I had access to the account like I do every day here, I probably would have been out already. So there you go. There
That's
goes
probably
that.
a good thing. to lose
Now
the
I just-
password.
I
That's
don't
probably
even
the
look
right
at
thing
it.
to do.
I just don't look at it. It's in my account. I just don't look at it.
Yeah.
All right. Speaking of rising global liquidity, that's the theme here today. It's liquidity, but I'm bouncing all over the place with this theme. The Chinese Politburo met the other day and came out with a statement of dangling the fiscal easing fiscal policy or fiscal stimulus without any real details. Stocks pumped for a day, spent the last couple of days coming off their highs. Nobody's really talked about China, I think, since September when they had this first announcement. The likelihood that they're going to keep stringing everybody along until next March. In March is when they'll actually give details to what the actual stimulus plans will be. For now, they just keep putting out these headlines that seem to get the market excited. You get a one-day pop followed by, a fade. I'm curious, Tom, is there any interest here in continuing to play China, or do you think the trade is over for you?
No, I'm in. I mean, I'm not.
You're in.
It's not it's not all in type thing, but I'm in. So I'm definitely long China. I'm long Baba, long Baidu. I have something else too. I don't know, but long Baba and Baidu, and I'm not even considering getting out.
The valuation of the U.S. markets has never been higher relative to the rest of the world.
That's right.
By a few different metrics.
Yep.
So everyone is talking about the TINA trade, which is a short-term acronym or an acronym for there is no alternative. It's the reasons why you should pile your money into U.S. equities, in particular U.S. technology. I don't know.
It's actually
call me crazy.
It's actually the exact opposite. In my world, it's the exact opposite because I'm a contrarian. So if everybody thinks that there is no alternative, that's absolutely idiotic. The reality is, Dylan and I talked about this yesterday. We talked about it. We talked about a concept called American exceptionalism, and that's basically, what you just said is a very American thing to say, because that's what we believe. There is no alternative, but I don't think the rest of the world believes that.
I agree with that. I set this up as a contrarian discussion.
Yeah,
so
and I think it's a good discussion topic. I said Dylan and I, that was our truth or skepticism yesterday, was on American exceptionalism, and I think that Americans, and rightfully so because we have the numbers to back it up, but we believe that. I just think it's also an incredible red flag.
I couldn't agree with you more. And
wow.
So what I want to do is
Tom and Victor agree.
No, I just think it's so obvious that when an instrument becomes rich, that you go looking for value. I just think that's the obvious. Unless you're a momentum trader and you're just trying to chase the moving averages, which I don't do. That's not my game. Some people are good at it. That's not my thing. I would rather go buy the thing nobody wants today and wait for them to want it tomorrow.
Yeah, I agree.
And I think in my personal opinion, there's a few instruments I wanted to throw at you guys and either have you accept it or reject it. The first one was China.
But hold on, Vic.
Go ahead.
I just want to say one thing first about that, because I think it's important. It's not just about that it's not just about that you're going somewhere else because you think it's better value. It's the reason that I think it's a red flag is because at some point you have to look at things from a risk reward perspective. And I think that the risk of, given where we are right now, I'm not sure that the rewards are going to be there. I think it's too difficult to squeeze at these levels. Meaning, if you think that you have some multiple of risk relative to the reward, that's the reason you can't do it. It has nothing to do with that there's a bigger macro picture or there's something else, or it's nothing to do with that you might think something else out there is actually cheaper. I don't really think that's it. I just think that there's certain times when, the reward's not worth it. The example, you have a gallon of ice cream in front of you, right? And you really love ice cream. But the reward of eating the whole gallon of ice cream, it's not worth it.
You look like Tony when you get older.
It's just not worth it. Like the risk, it's not worth it. And I think that's where the market is right now. So
I agree with that.
Okay.
But I also think that's the easiest way to say it. I could overly complicate it and say we've pulled a lot of future returns into the present. Therefore, you got to get some crazy innovations in the future in order to get the market excited and have the same level of returns that justify the prices you're paying. I could get overly complicated, but it's just a pot odds play, and I don't like the pot odds of the U.S. tech here. But in fairness, I didn't like NVIDIA at 900, which would have been the equivalent of 90 here. So, the risk is opportunity cost. You're not on the NVIDIA from 90 to 140, but I can live with that. I can live with that.
Understood. And that is, that's the other side of the argument.
Right. But I don't believe what BlackRock put out that, and this is a verbatim quote, we have argued since 2020 that we are not in a business cycle. Historical trends are being permanently broken in real time as mega forces like the rise of AI transform economies. The ongoing outsized response of long-term assets to short-term news shows how unusual the environment is. We stay risk on as we look to transform beneficiaries, as we look for transformation beneficiaries and go further overweight U.S. stocks as the AI theme broadens out.
I mean, you also have to realize who the author is. They have no choice. That is their business. I mean, correct. They do not have another side to their business.
Once I grew up, I put the big boy pants on. I realized that this was marketing material more than it was actual market research. That's when I started reading this through what is likely the appropriate or proper lens.
My point, that is exactly what that is. That's a PR. That's a press release.
Yes, it's a press release for U.S. equities. That's exactly what it is.
Yeah.
So we already talked about China, which you said you're still in. You're not abandoning. And I think we'll continue to see vol. You're going to get these catalysts. September, the Politburo talked about this. That was unexpected. December, them talking about it, the announcement we just got in the last couple of days, that was expected. Usually it happens in November, December. They pushed it back till after the election so they could see what was going on in the U.S. before they made their statement. And now there's going to be another one in March. Expect an additional catalyst, up or down, I don't know. But you're seeing an additional catalyst once you get the details in March. The second one is South Korea. You're going to burn me on this because of the crappy and illiquid options market. But it was absolutely insane what happened over there over the last week with the existing leader trying to declare martial law and avoid impeachment and just trying to basically usurp power in South Korea. But all of that volatility created a short-term discount a further discount in equities. So I wanted to come and talk to you and say, would Tom Sosnoff touch this with my money? Would you touch the South Korean ETF EWY? Would you go near it, given the discount that's in price?
Honestly, I don't even know that I've ever. If you had asked me what the South Korean ETF is, I don't even know if I could have just told you it was EW. I mean, I don't think I've even traded it. Maybe in a cut.
Once you look at the spreads and the at the monies, you're gonna realize why you've never traded it.
Yeah, the markets are way too.
Well, the stock is only a penny wide.
Yeah, if you want to trade the stock, you trade
the stock is pretty decent. That's probably what we're talking about here, not an option position.
I mean, the stock is a penny wide. The options are there. Yeah, I mean, they don't even trade. Yeah, I mean, if you would ask me, I think we've traded South Korea once or twice, but I mean, it looks, if you were to argue, I'd argue it looks cheap relative to something.
I would say this one's a trade, not an investment. I'm leaning a little long here. And
you bought this South Korea?
Oh yeah, but I bought the equity. I did the thing that you don't do.
I'm gonna nibble on the long side. All right, I just bought some EWY.
Worst thing that could happen, because if this takes him down, Tony.
No, it's not going
to. So good.
55.88. I just bought some stock at 55.88. It's right at the offer right now. It's no big deal.
Well, welcome, my friend. You're a brand new holder of a bunch of South Korean ADRs, which are.
I mean, he typically curses at you, Victor. Now he just got a new reason to curse at you. This is good. I thought you were going to go with the.
I really don't trade South Korea much, and I don't know much about. I mean, I only know what I read.
Yeah. All right, EWW is the second one. That one was just a fun short. Maybe we get a pop. EWW is likely, in my personal opinion, more interesting longer-term play. This is the ETF that tracks Mexico.
Okay.
Mexico, I think, is in a unique position given all of the onshoring and nearshoring that is happening and will continue to happen in an America First policy stance. I think people are beating this thing up because they think U.S.-Mexico relations will go back to something similar to the first Trump administration. I don't think that's going to be the case. I think they're going to be good working partners. I think this is an opportunity, and this has a much more liquid option market, more interesting.
Yeah, this one's more interesting to me. So I'm going to buy a little. Right now. I just bought some. Okay?
Oh no! Oh no! No!
He bought twice. He bought twice as much as that EWY piece of crap.
Well, I like Mexico.
This garbage. EWW.
I'm incredibly bullish. If I was to pick one country that I think has the most upside, not
Mexico.
necessarily the markets, but like the one place that I think has, only because we're picking up so many traders from Mexico and so much.
Oh, Mexico. Yeah, I thought you were going to say China. I was like,
no.
China hasn't participated.
No. I'm going to say Mexico. If there's one place that I'd like to bet on, it's Mexico.
I agree with you there.
I think so too.
I mean, I can't even. My experiences dealing with finance in Mexico are so positive.
Yeah, they're innovators. They're looking to move forward. They're
looking to move forward. I wouldn't call them innovators.
Yeah,
in
I get it,
but
they embrace change, and they're willing to.
Well, they embrace technology for sure, and I think that there's incredible upside in Mexico. So yeah, I would be a buyer of Mexico.
All right, my last one here is not necessarily, it's not going to be a country here, but it's related to liquidity, is gold. What do you guys think about gold? It's at a high, which means at a price extreme, you guys are probably taking a more contrarian position, which is fading it, if anything. Is that what you guys are doing?
No,
or no position?
No, I have positions, but we are just a short premium. And so far it's been quite a challenge, to be fair. It's been quite a challenge. We have not done well, in generally speaking.
Yep.
All right. Well, I'm gonna give you a trade idea, and the people a trade idea here real quick before I get out. Love it or hate it. So gold is at or near all-time highs after the last 3 days of rallying. Today it's a little bit weak, but we're nearing all-time highs again. But what hasn't caught back up to the all-time highs is all of the miners. So in particular, Newmont Mining, NEM, which was trading around $58, $59 last time gold is at or near its highs. It's now at $42. It's taking a big hit. Some fundamental reasons for that. My point is trading the price divergence between the underlying metals have rallied, copper's off of its lows, silver's rallied a little bit here and towards the mid 30s. Gold's at its all-time high, but the miners really haven't gotten back up off the mat. So this would be a long in the miners. My preferred miner is NEM. How do I play this? Vol's not expensive, so vol sellers can't really come in here and sell vol, but it is super cheap. So if you're somebody who wants to come in here and perhaps do a call spread or some type of stock replacement, vol's super cheap on this one.
Zebra trade in NEM. Zebra trade. Bingo. That's what you do. 100%. Bingo. I'm with you there.
My experience in NEM is that it's an extremely difficult stock to make money in. That's my experience. I mean,
there should be a Sosnoff rank, not for liquidity, not for like options market, just ease of making money. How easy is this stock to make money?
It is an extremely hard stock to grind some money out of. And I have found that to be the case with a lot of miners.
Yeah, they have low volatility.
All the time. Really challenging. Just to give you the.
All right. You're going to leave the money for me then. More money for me. Sosnoff's not in this one.
More money
for the one that works.
More money for the Jones.
More money for us, Vic. I'm going to join you on this, I think. I like
Watch this. South Korea and Mexico are going to tank because he followed on those ones, and Newmont's going to be trading at all-time highs next week. That's how that works.
I didn't buy enough that I will be mad at you. I bought enough that I can watch it. I didn't buy enough that I could get mad.
Fair enough. Gentlemen, that's my story. I'm sticking to it.
Awesome.
Ciao, man.
Good job out of you. We're going to take a quick 90-second break. We're going to come back. Give me the S&P down 19, not really moving too much. Volatility up 7 cents. Newmont Mining just uptick 2 cents. It's still down 6 cents on your...
Great call, Vic. Great call.
I'll take it.
You're welcome. You're welcome. You should take it. We're going to come back. We got a market measure next. Good job.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
reach your goals of becoming a full-time trader?
I think the best way to do it is he has to start thinking in terms of what's a fair objective return-wise. You know, if you're actively trading and you're going for some number and you have $200,000, I mean, saying that, hey, I'm going to make $35,000 on this, which is an 18% return, is not an insane number. It's not ridiculous. It's 2 or 3 times a passive return, and it's 4 times a risk-free return. It's completely normal. So that's where I'd start, and then you try to build off from there.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We are ready to build. This is make or break for this team.
It's down to the last 2 minutes, and it's time to rock and roll, baby.
That's all I got is 2 minutes, and that's on a good night.
I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime.
I think we're going to overtime. Here it comes. Shalaka.
Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof!
Hey, baby. I like the looks.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500. Specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with a little bit of weakness here in the market. Even the S&P down 22, so I don't know if after being up 42 yesterday. I know they were up a little bit more, almost 52, 60 at one point, even the S&P, but they sold off going into that. Now they're only up 20 after 2 previous days of sell-off. Volatility still 16.25, unchanged. Seems to be much to do about nothing right now, but finger on the pulse, finger on the pulse.
I'm ready.
Market Measure, sponsored by the SIBO. Sosnoff, the SIBO.
It is, but don't forget this Saturday coming up, we have our last digital collectible, and we are all excited about it because it's our last one of the year, and we have a bunch coming up January, February, and March that you're really going to like. And we love this process because it gets out to a lot of people all over the world. Tasty has customers, and I think we can accept customers from 70 countries now. Is that right?
I will take a look.
I'm not 100% sure, but I think it's around 70. We have viewers in 180 something countries. It's crazy. Almost every country in the world. Someday we'll show you the statistics. It's nuts where people watch us from. And I shouldn't say it's nuts, but there are a lot of places I've never been before, and which I guess is pretty cool. Actually, when I say there's 180 countries, how many countries do you think you've been to?
How many countries have I been to?
Yeah, and just
probably
think.
more than I think, but I don't have a clue.
Well, if there was 180, there's 190 countries.
15%. I mean, I don't think.
So you think you've been to 30?
Maybe.
Beth, how many countries do you think you've been to?
Oh, not a lot. Handful.
What do you mean, a handful?
I was going to say 10%, but probably 30%.
That I've been to?
How many countries do you think you've been to?
Yeah, I said a handful, like under 10.
Under 10?
Yeah.
Don't you ever get out?
Not really.
You think you've been to 30?
I mean, yeah. I mean, I went to 4 or 5 on one trip to Europe. I mean, I don't know. I mean, that's why I say I would probably be like with Beth, like under 10. But when you go through it, you probably went to a lot more than 10. Maybe it's 20.
I think 30 is good.
Yeah, I mean, I don't know.
I think 30 is good.
And I used to be a mover and a shaker before I got under your thumb and you had to depress me.
Listen.
We don't all have one time in Russia.
I used to go away every
stories.
3 months.
Yeah, I know, but just going to Acapulco with a different professional is not exactly going away. Okay.
Never import them. I mean, come on, Saslav. That's cardinal rule number 1.
Oh my God, that's not.
You always stay local, dude.
That's not exactly like
100%.
Genius. Wow.
They don't have they have a list of how many countries. 1, 2, 3, 4, 5, 6, 15, 30.
I'm going to say about 70.
I think it's actually more than that.
Could be more now.
It looks like there's 15 per line.
The reason I bring this up is because we have viewers all over the world in places, parts unknown. I mean, the far reaches of Siberia, Alaska.
Alaska's not a country.
Tony's best
part of the U.S., but go ahead.
Tony's best customers are part of. They live in Antarctica. I don't even think you can live there. No, but we have people. We have had people.
I mean, we go.
No, I know. We've had satellite from that, like on the way to Antarctica, which is crazy.
Even Greece.
Even Greece.
That's right. Denmark.
Lots of Greece. Lots of great customers. Anyway, my point is
Brazil, as you like to call it.
My point is that these digital collectibles, anybody can watch them anywhere, so it's great, and that's why we do them.
So even the places that we can't take accounts from presently, correct?
Even places we can't take accounts.
That's right, and it's completely free. So sign on. I want to see you, Albania.
Are you proud of your performance on this one, Tom?
I'm trying. I can't really focus with the annoyance here. Let's go to
is this because you don't have heat in your house? Listen, don't make not having heat in your house.
But I have
being in the teens. Do you?
Oh yeah, I have full heat, full on heat. I just can't adjust it, but I have heat. That's like 72. It's 74. It's hot. Let's go to the market measure.
What do you live in? Like a tent or something?
Steam.
You just have heat on? Like, what is it? Like just, you fill the coal and it just stays on? I mean.
Yeah. I got new big heaters now. Oof. My whole house is hot.
Sweet.
But I can't adjust it because I have no thermostats. They're trying to put those in today, tomorrow, this weekend.
Poor SOB, you. Unbelievable.
It's a very complex system, okay?
Oh, I understand.
What I would suggest to people
I believe it's 3 wires to a thermostat. 3.
What I would suggest to people in the future is don't buy the complex software that runs your house. Because I have a smart house, which is not that smart. Anyway, the market measures are sponsored by SIBO. We are.
My Taiwanese sources are writing and saying we all can't play the one time I was in Russia card when you ask how many countries we've been to.
Twice.
Twice. Oh, that's right. The multiple times I was in Russia.
Twice. Okay.
Multiple.
There you go. But only counts for one. Streaks in 0 DTE success. We don't trade a ton of 0 DTE. Where's the 1 DTE today? Let me just check. The 1-day VIX.
You want to do a VIX 1 day?
VIX 1 day today. Oh my God,
Down
$5.89.
$1.74 to $5.89.
Why is the VIX 1 day $5.89 today?
Volatility hasn't moved, so I don't know if even on the down move.
Somebody asked me yesterday, they wrote me an email. They said, why does the VIX 1 day in the mornings, it trades really low?
It's a great email because I pushed them on it and they told me, and
I'll tell you what I said. What'd you say?
So I said it might have to do with the calculation that I'm not 100% sure.
That was not my answer.
Okay, how they calculate it. But then I will say, look at what volatility has been doing over the past year. And volatility really hasn't gone anywhere.
So that was not my answer either.
What did you say?
My answer was that in the morning, when the market opens, all the overnight risk is out, so that 1 day just drops down to some crazy low number.
Good answer.
But in the afternoon, everybody starts to panic about what's going to happen the next day.
Yeah, but to take it a step further, the option pricing, they're almost like all out of the money options that you trade now.
No, I know,
but they're lower price. I know, but they're lower priced. So the volatility is going to have to be higher on them.
So at the end of the day, because people go to hedge their positions, they hedge the overnight risk, and everything else, the out of the money options get bid up. So that's why every morning it's lower and every afternoon it's higher.
It's a good answer. That's why you wear the freaking beret. You thought about that and you took it to another level, Sazdov. That's the best freaking answer you've given on an email to date. Because normally I have to correct all
You
your
don't read my
emails.
answers. But
okay? That was an excellent answer. And I got to tell you something. You weren't at your best yesterday. You're certainly not at your best today. But you really weren't at your best yesterday. And to come up with an answer like that, you deserve a cookie. Beth, bring in a cookie, please. Can I get a cookie for Sazdov?
I brought you a cookie, Tom.
Thank you.
Oh, he decayed your cookie from today.
He
That's
actually,
true.
threw a tantrum.
Streaks, the reason I mention that is because we don't
Tesla's unchanged, you SOB.
We don't trade a lot of, quote, zero DT, so I don't have enough data of my own to say what kind of streaks that we have. But what we asked the research team to do was to look at different streaks in zero DT trades. And
I actually put that question in our research.
Then let's take a look. Let's go, Beth. Let's take a look.
Nice. Good for them.
So the efficient market hypothesis says that information from recent market action should already be incorporated into current market prices. We believe that. Despite this, we recently observed that following losing 45 DT premium positions, short premium positions, with a long premium position could improve performance over long periods, just to mess everything up. Does this hold up when looking at some of the most efficient and liquid assets out there, like the zero DT SPX options? Let's go next slide. So we did a study, and this time we're going to 20 months of zero DT option data. We examined the 20 delta strangles, that's short strangles, at the market open, with winners closed at 25% of the initial price and losers left alone. We examined the results from 4 approaches: always selling strangles, okay? Always buying strangles.
Okay.
Following a winning short strangle with another one, but following a losing short with a long strangle. So we called that...
You're flipping the cards.
No.
Oh.
We're calling that what worked yesterday.
Oh, okay. All right. That's fair enough.
Whatever worked yesterday, you do it next
again
day.
today. Okay.
And then the opposite is reversing that, just being contrarian.
Okay.
So
I bet there's going to be some big swings in this. I haven't seen it.
Let's just go through these one more time so everybody knows what we're looking at.
This is fun.
Oh, no, Beth, go back.
Oh, Beth, you ruined everything.
Now you just ruined all. It's like
everything.
You showed us what cup the ball was under. Always selling
Where's
strangles.
John when you need him? Go ahead.
Always selling strangles. Always buying strangles. Following, we're calling this what worked yesterday. Following short strangles, winning short strangles with another one, or following losing short strangles with a long strangle, so flipping it over, or reversing that and following winning short strangles with a long strangle and losing long strangles with a short strangle. Okay, so just the complete opposite. And then all trades, it got out. No, there are no wings on this trade. If you want to do wings, subtract a little money. Let's go next slide and see where we ended up. Okay. 20 delta short strangles. If all you did was sell strangles, 93% winners. And we haven't done the streaks yet. If all the strangles were bought, 66% winners. How could that be? The answer is because remember, we're only taking profits at 25%.
That's true.
So you can take a 25% profit on the short strangle, and you can also make money on the long strangle potentially later on the day, whatever, at 25%.
So they're doing this intraday?
These are zero DTs. These are all zero DTs.
I no, but I mean, they're not flipping the cards, doing whatever happened yesterday. They're waiting till the day to close and then doing it, right? The next day. So.
No, they're closing at 25%. It's not waiting to the end of the day. It's whatever. If you close at 25%, then you just do.
Gotcha.
So the next one is what worked yesterday. It's actually just what worked. Okay. And that came out at 90%. If you did the opposite, it came out at 66%, 69%. Here's the crazy thing. Everything got paid.
I know, but I don't want to put that message out there. That's a strong message.
You know what this message is. The message is you got to manage at 25%.
That is the message.
It almost doesn't matter what you do if you manage at 25%, because short strangles, long strangles, flipping over, doing whatever worked yesterday and doing the opposite of what worked yesterday, everything worked. Crazy. That's
we
what
need to start trading more 0 days, which I've told you in the past.
Okay. Let's go to the next slide. So here now we get into a little bit different. Choosing high probability trades means mostly seeing winners with a few losers sprinkled in. But how frequently do we get a winner every day of the week? More importantly, how often do losers follow losers? So next we're going to look at how frequently our short and long positions with managed winners accrued 1, 2, or 3 or more consecutive winning days. Okay, that's kind of a weird way to look at it, but let's.
Yeah, short and long positions with managed winners occurred 1, 2, 3.
Yeah. How often do losers follow? How often do losers follow losers follow losers? And
so we're doing what worked yesterday, and it's another.
How often do winners follow? Because this is streaks. Okay. So we're going to look at these and accruing them consecutive days. Let's go to the next slide, Beth. Okay. So this slide here, because it's
the hell am I looking at here?
Okay, it's hard to look at. But the top says short strangles, right, Beth?
Yes, Tom.
Okay, and in the left hand, because I can't read it from where I'm sitting.
It says frequency
left
percentage.
Side says frequency, and the bottom
consecutive winners.
Okay, so the left side says frequency, and the bottom axis says
consistent winners, maybe?
Consecutive winners.
Oh, consecutive. I couldn't see it. Thank you.
That's pretty impressive in the short strangle. You definitely take more risk. Oh, I got it. It's on my screen now. Perfect. So short strangles, the frequency, and then the consecutive winners. Yeah, that's a very interesting way to look at this. And you take more risk because you're short the strangles. And so you get this pretty impressive reward. Let's go to the next slide. Now, this one is long strangles. Very different, but it's still positive. Okay? And you can see the frequency and you can see the consecutive winners. Basically, what this is saying is that regardless of the strategy you select, as long as you manage early, because these are all managed early.
You're going to be in the fight.
You're going to be in the fight.
Yep.
Exactly.
Yep. You're going to be in the fight.
Beth, if you go to the next slide. For nearly the past 2 years, let's see if they come up with the same thing that we came up with. Zero DT strangles traded at the market opening have been profitable for retail traders. Short strangles were more frequently profitable, with nearly 50% of 2-week periods being 10 out of 10 winners. Let's go back 2 slides for a second, Beth. These are short strangles, and you can see frequency. Let's see, where's 50%? Yeah, you can see that's kind of like right at the mid-axis. And these are like 10 out of 10 winners. You can see that. And so go back to the last slide, 7 out of 7. So for short strangles, they're more frequently profitable, with nearly 50% of the 2-week periods being 10 out of 10 winners. Long strangles, on the other hand, that's that one. Perfect. Go back to the last slide. Long strangles, on the other hand, rarely went a week without a loss, but had far gentler
bad losses as measured by CVAR. So whichever side you took, as long as you're willing to capture profits rapidly, net profits were surprisingly close. That's exactly that was our same observation. As long as you're willing to capture profits. So it looks like everything falls apart if you hold everything too long.
When genius fails.
Yes.
When think something's going to happen, it's going to reverse, it's going to do this.
When you try to squeeze everything. Yes.
Very good. Nice study. Very well done. Give the gentlemen and ladies a little prop.
It's a tough one. Yep.
Very good. Let's take a quick 90-second break and come back. Even the S&Ps have rallied a little, about 10 handles start off. They're down 11. We'll be back in 90 seconds. We've got more Tasty Live after this. What we got coming up next? Oh, joy! Your friend and mine, ever popular, Mr. Scott Sheridan from Tasty Trade World Headquarters. Back.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all freaking losers. There's no skill.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
We're going to play an interactive game, but are you open?
Yeah, sure.
Okay. In order for this game to work properly, you need to go to your front door right now.
Wow. What? Gotta go to your front door. Oh, Elijah left you a present. Go ahead.
You really want me to go to my front door?
And while Tom is getting his gift,
So these will be available starting today on a win-only basis, right?
Don't trade hangry. It is strongly recommended that trading hangry may cause the following results: trouble walking, long-winded storytelling, mispronunciation of words, inability to feel empathy, forgetfulness, and trouble uttering words like "thank you" and "you're right."
Oh my God, keep your shirt on.
No, right there, please. It's sweep week.
Like this?
Please.
Oh my God, Tom, take that. Oh no,
let me
take
see
that
those
shirt off.
peanut-sized nipples. Oh, please, go, yes. Oh, happy chauffeur. Look, he feels like he's part of the club now.
Come on, that's a quality shirt.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Tomas, you want to share with the audience what you just got? You got a big smile on your face. You want to share with the audience what you just got?
No, I got no. I'm reading something else.
Okay. Then you know what? Without further ado, that's right, your friend and mine. Let me see what I got here. Did I get him? I think I have him. I can't hear him, but I have him. Your friend of mine, Mr. Scott Sheridan from the Tasty Trade World headquarters. Mr. Sheridan, how are you,
Come in here for 5 minutes a day, and you're woofing. I'm just saying, you woof. You're like
just the menu. Oh, let me hear about. See, we got to change. I don't care about you. Okay,
Yeah,
you do not matter right now. So just sit in the corner.
This might be what got him on tilt. But I went to a Michelin 3-star restaurant that he's never been to.
How good the restaurant was?
The experience was phenomenal.
So
and listen.
How many courses?
100.
No, like 20, isn't it?
Yes. Yeah, like
Was
20.
it 3 hours?
2.5 to 3
Oh, 2.5 is good.
Yeah.
Okay, so a little tasting.
Yes, small
Nice.
portions of everything. You're so full. It's so rich.
Service
Everything
was
excellent.
amazing.
Service is amazing. Everything you can't find a mistake. I mean, like it's.
Well, and
impressive.
being able to do that, it's like Tom, being able to do it for
The
4
place
decades.
is a $1 billion gold mine. They got people walking in there. They're full every day, every moment. Every.
I know, but I don't know. I'm not saying they don't make money, but it costs a lot to put.
I'm sure it does.
Put that production.
I'm sure it does. And there's as many people as there are wait staff.
How are the wine pairings?
Excellent.
So horrible, Scott. They're horrible.
With 20
3 Michelin stars, horrible.
With 20 courses,
how can they serve that garbage?
Is it?
Sometimes you get 2 or 3 courses
Right,
in
with one glass, but
Yeah.
not even a full glass.
Well, you're right. Like one thing we had was this char piece of fish. It was wonderful.
Arctic char.
Yeah, it was absolutely outstanding. It's the size of your finger. I mean, it's nothing. And then they said, well, the next course is already on your table, and you flip the cup over, and it had some caviar underneath there and like a little bit of a gel, and then you ate it. It was very cool.
Nice.
It was very nice. It was
And
good.
Vinny-
and the best thing about it was
Vinny loved it.
Vinny absolutely said it was
he
the best
cook?
night of his life. I go, son, you're 14 years old. You haven't experienced everything in life yet. There's going to be one thing you're going to do, and you're going to say to yourself, I'm going to do that a couple of 100,000 more times, okay? I am going to do that until I'm in my 80s.
Did your wife smack you?
As the true Batista says, right?
It was excellent.
We don't need to say what that one thing is. Anyway.
Yes, sir.
Does he cook?
Was Grant there?
No, does he? Does
Oh,
Vinny?
yeah. Oh,
So
Vinny,
at
yeah.
home-
He got a cookbook. He bought the cookbook from them.
Okay, but I don't know.
He likes to cook. Yes,
Good.
he likes to
That's
cook.
great.
He's a hockey player who likes to cook. I think
That's
that
great.
comes from his mother's side. Although she's never found a kitchen in the last 15 freaking years. In the beginning, she found the kitchen. In the beginning, she used to do stuff.
Well, but you make stories up.
Called
She
marketing.
makes you breakfast.
Called marketing.
Right, it
It's
is
called marketing. She's a marketing genius, by the
Called
way.
marketing.
That's right. She had a 5-year plan. It paid dividends, man. She's good.
See, that's gonna
Shout
take,
out to you, Chrissy.
That's going to take him a long way.
She had some other things too. I mean, she did some other things.
Because like when he has a date and he brings her over and he makes a nice meal.
Yeah,
That's
yeah.
impressive.
Oh, his
That's-
father used to do that too.
You think he's bringing a date back to their house?
Well, not
with
now.
him in the other room? You got to be out of your freaking mind.
There's risk to that.
Oh my God. Poor
He has a hard enough time bringing him out to the pool, I'm not going to lie.
He's smart enough to know he's not going there.
Well, I'm happy to hear that
Yeah, it was worked out well.
20 years plus, it's still going strong.
Lucky, you'll really like this. They were able to separate some more of my money with the meal. Not only was they had truffles that night, but they had the rare white truffle.
Oh, don't get the Sheridans going on the white truffles.
I'm actually going for truffle dinner tonight.
Are you going for truffle dinner? I've been burping
I
truffles
really am. No, I swear, I really am.
Are you?
Yes.
You bougie SOB, you.
No.
Seriously. What is wrong with you?
No, my daughter's coming in town.
Of course you are.
If she can get here, because she's already 2.5 hours late coming in from New York, because, it's the LaGuardia just back and forth.
Yeah.
They got to be de-icing the planes because it's so cold here. So everything's getting delayed. So her flight's already 2.5 hours late. Levi's flight isn't until tonight. I said, you better get on an earlier flight. You're not going to get out.
I didn't think private jets really had that problem, but they have that in this weather.
Where are you getting white truffles?
Well, I don't know if I'm having white truffles. I'm definitely having black truffles.
It's the season. They're going to have a white truffle. They're going to stick it to you so
right,
good with
because
the
the white truffle is a 6X on the cost of a black truffle.
Yeah.
Because they're just rare.
Saz, have you ever had a white truffle? Probably
So,
not, right?
anyway, so there's two restaurants. It was actually funny because Steve Dolinsky, you guys know.
Sure,
the
sure. The Hungry
Hound.
Hound. He's been on a show.
Okay, so he did a show the other day talking about truffles because it's truffle season.
Yeah.
So he said there are two restaurants in Chicago. See if you can get them. Tom's going to say scoop of vanilla, scoop of chocolate. He's going to nail both of them. There's two restaurants in Chicago that just have truffles like on the menu. Others, they'll be like, you got to go. You've been to both. One I'm going to tonight, one of my favorite restaurants. So that's the clue for one.
I have no idea.
Ricardo's.
I would have never guessed.
Yes, you would. What's the other one? It used to be by your office. Well, it is still there. It used to be where your office was.
Where our office was? Which office?
I'm not talking to you. I'll go to you. Okay, so
Monteverde?
Yes, your office. I didn't say my office. I said your office. How many of those could it have been? Monteverde.
So Monteverde. I got it. That's pretty good.
Monteverde.
And
what's her name? Greenspan, the woman, the chef, whatever. So Monteverde and Ricardo. So Lila loves truffle. So
Sure, she does. Just like
save
her
a lot of
mother.
money going to Ricardo's.
Her mother had the same marketing agreement,
right? Yeah. So anyways, we're having a truffle dinner tonight. Well, I don't know.
Very nice.
Yeah.
Very nice.
Yeah, I'll report back.
Will you go if the children unfortunately are delayed and don't make it till tomorrow?
Okay, we got a real problem tomorrow because the 6 walks tomorrow in her graduation. That's part of the reason that they're coming in.
Got it. Congratulations.
Yeah, so she walks tomorrow. So
early?
Can I tell you about what to get in?
This doesn't care about people's.
So I told Levi, I texted him because you can't tell Levi anything.
Yeah.
I said, you might want to consider getting on an earlier flight because Lila's already 2.5 hours late. Her flight that was
And he
supposed
said that GFY.
No, he said thanks.
Oh,
which is GFY.
It's a
Right?
It's all right.
Go ahead. What were you going to say? I'm coming back to you again.
Ricardo's.
Yeah, here it comes.
Surprisingly, I'd probably go pork chop.
From out of nowhere.
But you say you get pasta everywhere. Like if there's a key, you always say get the pasta.
Yeah.
You didn't answer my question. Do you go to dinner tonight if the kids don't make it, unfortunately?
No. Just
you
me.
won't? You
No.
cancel?
No. So
Oh, you and
actually,
the wife, I thought.
So here's the thing. So I had a 5 because the
Actually,
only
Tom's
reservation they
available
had
too,
was
so am I.
5:30 or 5:45. So
5:30 on a
5
Thursday? You're going to dinner? That's what you said to me yesterday.
Tonight they'll be empty.
No. So what happened was Max is flying in tonight. He's coming in too. He doesn't get to until 7. I said we can't go there, so we were going to go to Little Bad Wolf. Now that happens to be, I think, the best burger in the city.
Great burger in the city. Yeah, probably.
I think it's the best.
I agree with you.
Yeah. So we were going to go there, and then the 6 is like, wait a minute, I'll take care of this. So she calls, says I need to move my 5:30 to 7 o'clock for 3. They said she's not coming, and they said, yeah, no problem. I said, how'd you just do that?
Does she want to do a show?
Right.
He's a mover and a shaker. That
Right.
one.
So she got us in at 7 o'clock. You want to come? We can make it.
Sounds enough. What is your success rate?
You can
when
come
you
to
say,
dinner
I
with
like-
2 of my kids. That would be a nice thing for you to do.
Yeah, why don't you do that? You don't
Why
go to
don't
his
you do it?
freaking house.
A table for 3 is a table for 4.
Yeah, exactly. Then what are they gonna have, like a 3-top? Like it's gonna shape like an L? No. There's room for you.
I would go to Little Bad Wolf, but I don't feel like going to
Monteverde.
Ricardo's.
Ricardo's for the pork
You
chop.
can get your pork chop.
Cold. I'm gonna watch.
He's going for a pork chop tomorrow night.
I'll pick you up.
Thursday night football.
I'll pick you up.
Happy. Oh no, I can't.
What? Oh, you have your dinner tonight.
Yeah, I got things. I forgot. I got things.
Don't you have your dinner?
What dinner? Is this the inaugural dinner?
Oh,
for
wait a
the-
minute.
for the month of...
Wait a minute. Does he? know about?
I don't know about the dinner. What dinner is this?
Ooh, I'm sorry.
What dinner is this?
No, my son's in town. I got people in town. I forgot.
No, that's not the dinner that I'm talking about.
No, that dinner's Friday night.
It's
for
Friday
the
night.
birthday, the 70th?
Oh, that's tomorrow night.
That's tomorrow night. I got the nod to that. I can't go.
Neither.
I got to clean my fishbowl.
Oh, that's tomorrow night.
You know what the amazing thing about the birthday boy?
Yes.
If he doesn't...
A lot.
Yeah. He doesn't listen to this, does he?
No.
Okay.
He didn't listen when he worked here.
Because if he doesn't get exactly what he wants, he doesn't talk to you.
I know.
Right?
I know.
Can you play cards with her? No, sorry, I have plans. Not like enjoy, have fun.
Right.
I just don't speak to you anymore.
I know. It's the same thing. I don't know if the camera can catch it. Maybe it can. But if you look over your left shoulder there, Scott, on the wall, right at waist high, you see there's a green X.
Yes.
You see what it says? But it said Jules Rules.
Yes.
Right?
Yes.
And there was no green X. So I had the team. You know, Jules left the
nest.
company. He retired.
He's finally going off on his own.
From his Italian patronage job that he had. And I said, look at what we put on the wall for you, so you'll be here
You know what?
forever.
I have to applaud you. That was very Tom-esque.
Thank you. So
you
it
got
says
the criticism in with...
Right, so it says Jules Rules, and I spelt it with a Z. And his answer to me was, he goes, you spelt it wrong.
And spelt is S-P-E-L.
Right. He goes, you spelt it wrong. He didn't say thank you. He didn't say, oh, that's really nice. Oh, I appreciate that. You know, it'd be there forever. He said, I spelt it wrong, so I put an X through it.
That's his English major background.
I guess so. Tom told me he was an excellent speller. I would see his emails. I would just shake my head every day.
It's a really good speller.
Really good speller.
He is really a good speller.
I got it.
Yeah, tell him it's a good speller, right?
You know what he's good at?
He's the best.
You know what he really is good at? Spotting celebrities.
Yes, he can.
Right?
You're right. You're right.
Great at it.
He's great.
You're
He
right.
really is.
Because every time he would see Tom, he'd go, local celebrity, local celebrity.
He's great at spotting celebrities and spelling.
He's not a good speller.
He is a good speller.
When have you ever had a, like, what have you
Well,
named
he just
Jules?
say that because he was a screenplay writer.
No, you just ask him random things.
I forgot about that. He was.
You know, Beth's a good speller.
I know.
Beth's
I
a
told
good
you.
speller? I'm a terrible speller.
Yeah, right. So I gotta consider myself a good speller. Beth,
Did I tell you that this is an old story, but Tom hasn't heard it in a while. Probably forgotten it already.
God.
Right after he left for LA,
The birthday boy?
the birthday boy, he came back
We'll
about
call
a year
him
later.
Z.
What's that?
We'll call him Z.
Yeah, Mr. Z.
Mr. Z.
Yeah, he came back from LA, and I'm on
When
Lakeshore
was
Drive.
this? Is late 90s, wasn't
Late 90s. I'm on Lakeshore Drive. Of course, I'm driving a convertible Mercedes. But anyway,
of course, you're
I'm on-
driving a convertible Mercedes.
I'm on Lakeshore Drive. I got the man formerly known as Bri Daddy, my ex-brother-in-law, in the front seat with me because, of course, it was only a two-seater.
The two of you losers couldn't be separated.
And that's exactly what he said. He pulls up to us, and we go, Mundo, what are you doing in town? You know, we're like, I'm sorry, Mr. Z, what are you doing in town? We're so happy to see you. We thought you were in LA writing screenplays. What's your screenplay about? He goes, yeah, it's about two losers who have to go home to their wives at 3:30, and then he zooms away.
That's good.
It's a good line.
That is a good line.
He was right. He was right.
Oof.
Did you get him?
Now, if he
a
would have
gift?
written a screenplay about that, he would have still been out in LA. He could have made something of himself.
Hey, Tom.
It would have been good.
Yeah.
Did you get him a gift?
What's that?
The gift is Tom's present. His presence is the present.
Yes. The gift is he can have whatever he wants.
Are you going to take him to the Spite store first?
Oh, where's dinner?
Can't tell you because you're not going. Because I don't want you guys. I don't want.
You better not be going to my place where I'm going to dinner.
He goes to my place.
I don't want
When
the
he
Sheridan
wants to
family
go for the best
crashing.
dinner he
Yeah,
can get,
because
he goes
we're
to
going
my
to
place.
dinner to celebrate.
He
So
goes to
you
my
better not
place.
be going to my restaurants.
He's going to my place, EJ's.
If your place is over like $29 a person, we're not going there.
I think he's going to want a gift.
I think he's gonna want a gift too. Beth, I agree with you. See, that's the girl math. You need it. Doesn't
Yep.
matter that you're
Yep.
taking him to dinner. You still need to get him a little something.
Yep.
Just a nice gesture. Like get him a plaque.
I got Christy all over it.
Do you?
Yeah.
Nice.
Christy will bring something.
She's driving from wherever she lives, Oak Park River, whatever that is.
Yeah.
She's coming. No chance.
Yeah.
No.
1/100?
What time? Dinner must not be till 7:30 or 8.
1/20?
Dinner 8:30.
1/20? We got 20?
No.
I'd
8:30.
go to dinner at 8:30.
She told them to come at 8:30. Dinner's at 6:30. They should be done by then. Though she will walk in, grab the present, they can walk out.
Fair enough.
That's how Sosnoff rolls.
Yeah, there we go. Yeah, at 8:30 will be a little late.
Is Christy coming? Because she's always was his protector. I mean, is she coming to protect him? Yeah, I like it. Yeah, I like it. Nobody said
he still needs muscle.
Oh yeah.
Oh yeah.
Oh yeah.
Not bad.
Oh, many a day I got called into that office. Oh my God. I mean, nobody wanted to be. It was like
you can't say this, Tony.
Yes, that's exactly what
you
you
can't act like this.
That's exactly what you would say to me.
How many times do we have to have this conversation?
I know.
All right, should we get to some business?
Sure.
All right, top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Tom, for you, number 15, GLD at a 58. For everybody else, Tesla to 75, NVIDIA.
By the way, you see what they're doing to gold?
They're killing it.
Yeah, they're killing it.
Down 59. It's about freaking time.
$60.
Yeah, that's okay. It's been up $150 in the last 4 days.
I know. I'm just saying, man. They're killing it.
Oh, thank you, Mr. Obvious. It's now back to where it was on the 9th. It's the 12th. I know you were talking. But you're in the Scott Sheridan Studios, so at least you have a studio named after you. I visit the Scott Sheridan Studios every day. I'm sorry, where were you? Why don't you start from the top?
No, I'm not starting from the top because I can remember. I have a good train of thought. I got this, okay? Adobe at a 7, AMD at a 21, MSTR at a 45, PLTR at a 61, Microsoft at an 8, UNH at a 72, Coin at a 49, Apple at an 8, AVGO at a 52, Riot at a 51, Google with an L at a 28, Amazon at an 18, and number 15 for Tom, GLD at a 58. Rounding out the next 10, SMCI at a 37, Intel at a 49, CADL at a 35, and Uber at a 31. And talking about gold selling off 60, if I hear any more conversation about Bitcoin, how there's no pullbacks, there's just buying opportunities, and how when the Fed has to buy like half of whatever they have in Bitcoin and it's going to be trading for $1 million, I'm going to throw up. Okay, because Bitcoin has a better chance of going back to 50,000 than it does of going to 110,000.
And it's 102. So you're giving almost
Yes. I'm sorry. It's
I'll
getting
that.
to the
I'll take
point.
that for 20. I would like that for 20.
For 20? Do I get odds?
No, I get odds. 50 versus 110, straight up.
How? But that's not a fair.
You said it. I didn't say it.
I said
you
that.
sound like Sosnoff. You said it has a better chance.
You give me 75 versus 110.
No, you said your perceived value is 50.
No, I don't even think it's.
If I actually gave you odds, I'd give you odds on top of odds.
I don't think
you made the market.
I don't think that it has a value of 50. I think that's where it's going. I think the value. Who knows?
You made the market. You sound like Sosnoff now.
You want a tradable market?
God, you guys are slick, man. That's why I can bring you guys coffee in the morning. I like this. I like this a lot. I do. I do.
You see what Adobe's doing?
No.
It's getting killed, isn't it?
Yeah.
Yeah. ADB.
You're saying that with
down 72.
Down $72.
They didn't like their earnings.
That is correct.
Weak to quite weak.
Yeah. Did you do anything in there? Today's the only day you can get stuff on.
Did they have earnings last? They didn't have earnings last. Oh, they did last night.
Yeah.
What was the expected move? Not 72.
No.
40.
40 something, I think.
Okay.
Sosnoff?
Tom, if you change your mind about dinner.
Where's dinner? Oh, you're talking about tonight.
Yeah, you didn't. I'm not going to EJ's. Don't worry about that. I'm not crashing your EJ's.
I'm not going out there
All right,
with you guys. I have plans. Very important plans. Yeah. I'm not going.
No, thank you.
You are so full of it.
Very secretive. Very secretive.
No, I do.
You know what? If you haven't realized, all Sosnoffs, very secretive. It's part of the Sosnoff code.
Don't you need a buffer for
It is
you people?
part of the Sosnoff code. Do not say a word to anybody. Anybody.
It is.
Ever.
Right.
Ever.
Right.
And especially don't say anything to each other, because I say things like to some of them, they're like, I didn't know that. I'm like, it's your family. How did you not know that?
Right.
Right?
We don't talk.
No, you don't.
No.
No, it's the code. You guys
It's only a secret if two Sosnoffs know it and one doesn't talk to the other one.
That's right. It's you guys could all work for the CIA, the FBI, the mafia. Pick whatever group you want to work with.
Wonderful defendants too. Like
Right.
if you committed a crime and you need somebody, amazing.
Amazing.
Yeah, I told my daughter yesterday that my son was in town. She goes, "Oh, it'd be nice if I knew."
Right. Exactly to my point. Right. Yeah.
One lives in the witness protection program.
For sure.
For sure.
There could be another Sosnoff we don't know about. Right? There
Well, it
actually
happens to
there could be another one that's in the witness protection program. It's entirely possible. Oof. All right.
Good job out of you, Scott, from the Scott Sheridan Studios. We're going to take a quick 90-second break. We're going to come back. We got more Tasty Live after this. Who comes up next? I
have no idea.
That's right. Liz and Jenny. We'll be back in 90 seconds with Tasty Live.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you'd like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
Hold on. She's wrong. I'm right.
High school party, high school kind of.
Yeah, because it wasn't in school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together. Yep.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Hello, everybody, and welcome to the Liz and Jenny Show. I'm Jenny. That beautiful blonde is Liz. Happy Red Shirt Thursday, everybody.
Happy Red Shirt Thursday to you too as well, Andrews. How are you today?
I'm great. You know what? You always say, put a red shirt on. It puts a smile on your face. Try putting on In TP We Trust. It really puts a smile on your face.
That is from the archives, Jenny Andrews. I love it. I love it. I love it. I love it. That's something that we made. Somebody made this for us. Daria made it for us for the live show in Canada, Toronto. Do you remember this?
Do you think so? Is that what it was from?
Yes.
Are you surprised you still have it?
I'm surprised. I still have mine. It's over there. I could probably go grab it.
That's all right. You don't have to change. That's okay. That's all right.
I'm not going to change because that's a different program. But the
that's your grandma's program.
It's my grandma's program. That's right.
Why don't you tell? Well, can you? Because only people on the road at our road shows have heard that story. Can you tell that story?
Okay, so my grandma, rest her soul, love her, was fabulous. My grandma was absolutely fabulous. And every day until the day she died in her nursing home, she was dressed to the nines. I'm talking full makeup on. Sometimes it didn't make it on the face, but full makeup, heels, the whole kit and caboodle, the necklace.
The necklaces. She was amazing. She was fabulous.
She was absolutely fabulous, and she died at 94. Well, long story short, when Jenny and I started the show, she had no idea what we were really talking about, but she kept asking me every day what I was wearing on the show because she was very excited about it. And there was one computer in the basement of her nursing home, one computer, and my uncle had set it up where she could go down there during the show and just on an icon, just click it and then watch our live show. And then every day I would talk to her about what I was wearing. She had no idea what we were talking about. So one day she brought a bunch of her friends down to go see her beautiful blonde girlfriend and her beautiful blonde granddaughter and her gorgeous brunette friend who do a live show on the internet. Well, she gets down there. The icon is missing when she's got like 10 old women with her and she's promoting how what we look like. And so she went to the search bar and typed in tastygirls.com. The pop-ups that came out, she couldn't click out of them fast enough. So nonetheless, that is what my grandma did. But
rest her soul. Love that lady.
And okay, so on the road one day, Tony was being very, very, very like dramatic and sincere. And Tom was like, God, how do we stop this? And he pushed me out on stage and he goes, just say something funny. And I was like, okay, I'll just give that story.
And that story came to your mind and it has lived on the road. People loved it. So I'm glad you told it because we're done with our road shows for now, right? Yeah. So I'm glad you told it.
Well, Dr. Jim, every single time we are on stage, he's like, you're going to tell the grandma story, right? And I was like, no, I'm not.
I haven't heard it in a while, but I'm glad you brought it back. Speaking of shows, we just finished our Phoenix show. Now we have coming this weekend if you can show my screen, we've got 6 option strategies every trader should know. All you have to do is go to Tasty Live, click on events. This pops up, hit sign up. It's free. You'll get the digital collectible. And it was a fun show to do. Lots of information.
It was super fun. It was great to be on the road. Everybody is so freaking smart. I mean, you've got Julia, Dr. Jim, the smart ones. And you got Jenny, me, and Tom, the fun ones.
I'm talking about the jade lizard. Liz is talking about the zebra. Tony's talking about, is he talking about ratio spreads?
Broken butterflies. And then Tom is the ratio spread.
Okay. So definitely sign up for this. Get your free digital collectible. Then you can watch it anytime from anywhere.
Yes, true story. True story. Jenny, what do you think about this market today?
You know, I was so preoccupied today because did you listen to Victor today?
I did not. What? Give me a brief synopsis.
Okay, so he was talking about Fartcoin. Have you heard of it?
No.
Okay. So me neither, right? And Tom hadn't, and Tony hadn't. But he was talking about how this new Fartcoin was going up and up and up. So what do? I'm like, I'm gonna go buy some because I'm like the Joe Public, right? So they're making fun of all these people running out and buying it, but I thought I'm gonna go buy some. So I went to try to buy some, but I couldn't buy it. You know, you can't buy all these coins everywhere.
No, you can't.
I couldn't. in the platform I was using, I couldn't buy it in on that. I found it, I saw it, but I couldn't buy it there.
It's crazy. Well, I'm actually glad you don't have that in your account.
You know me, I'm a sucker for buying anything that's 40 cents. I think it was about 40 cents.
Oh, okay, gotcha.
Yeah, it wasn't. I'll give you the details later. But Victor was talking about how it was the hot new coin.
That is crazy. I sort of feel like, remember before when everybody was coming up with coins and it was like coin this, coin that, coin this. I feel like we're back in that era again.
We're totally back. We're totally back because I have all my money at use in various coins, and so I would have had to like sell one coin to buy that to free up some cash, so that I like PayPal'd over more money in to buy Fartcoin, and then to learn I couldn't buy it, but I could see it on there.
Stop saying that. I hate that word.
I know, but that's what it's called. And there are so many different coins, just like the old days.
Just like the old days when there were coins everywhere.
Okay. Today, I wore this shirt. Shirt because I wrote down everything that TP wrote about this week, and I thought we could look at all of those symbols that he wrote about this week and see if there's anything we want to trade.
That sounds great because it's true. In TP we trust.
In TP we trust, and maybe it should be something we do at the end of the week, Thursday or Friday, where we just have kind of look at the symbols from the cherry bomb, not necessarily his trade idea, just look at the symbols and see if we can come up with something.
Yeah, I'm in. I like it.
I got a list for Monday, Tuesday. No, not Monday, because Monday Tom writes it.
Yeah, I don't think he puts any symbols in. Tom just gives you some. Tom just recaps his weekend for you on Mondays. Tom's cherry bombs are actually really good too.
Oh yeah. So Spoo's. We'll go to the platform. Let's jump in the platform. Spoo's only down 7. And I saw them as low as down 19, I think. Let's take a look at.
They were down lower. My SPX trade this morning, so I put it on right at the open, the put spread that I usually do. And that one, it caused me a little bit of pain for a while, but I just walked away. And I'm filled and I'm out. I think it took me an hour and 15 minutes.
I did not do my opening trade because I had a Tesla position on that I was trying to get out of on the open. Because I got a little panicked. Like I saw Tesla start going down and I had a bullish position on and I thought, I'm going to take this off before Tesla goes down too much. But now it's popped back. Okay, so let's see. How low did we get today in SPY? Low 605.13.
Yeah.
Yeah.
Okay, Jenny, this is totally fine because we are doing a live show. There seems to be like a white bar over. There you go. You got rid of it.
Yeah, it moved, but it was,
so now I can see. I was like, it's fine. You can just read me what the highs and lows were.
I saw it on my screen, and I didn't. I think it was for a Teams bar.
Oh, well, it's gone now, so we cannot. Now you're sharing with the class. We can all see where SPY is. Otherwise, you could have just read it to us. But
okay. Well, so I think, what did I say? 605.13 was its low today.
Yeah.
And I mentioned Tesla was down earlier, and I think it popped back. Now it's up.
Oh, I guess I didn't. Cornelius.
Did we put anything on? And honestly, that was yesterday's cherry bomb. TP talked about Tesla. So we do have a trade. What do we have on? Oh gosh, all we have is this.
No, this is great. It's fine.
But this I don't consider this a trade. I look at this and I think we don't have a Tesla trade on.
No, I agree. This is something we locked in because it's a butterfly. We left it. It's fine. It's going to stay. Now you could put something on in Tesla if you wanted to. It's got a 76 rank.
I know. So 76 rank, and this I don't consider a position anymore. There's no risk in that trade. I thought maybe we should put something on in Tesla, and I'll get back into Tesla, but I closed my trade this morning because it did scare me a little bit as it started to fall, because I thought, well, if this starts falling, it could really go. But who knows?
It's so funny. I got a text from my son this morning, be like, Tesla's over 420. I was like, it is.
And today got as low as 416, opened at 424. Yes. Opened at 424 and then started falling pretty quickly.
Yeah.
Went down. Yeah. So it's been a mover and a shaker today. Yes, but with the 76 rank, what do you think?
Well, since we've had success, you know what we did, Jenny? We had both sides, upside and downside, broken wing butterflies in it. Took one side off for a profit and butterflied off the other. You want to try it again?
Yeah, sure. That's not a bad idea.
Yeah, let's try that again.
Jan,
Okay, so my
No.
question to you, Jenny, it's 10:10. Before we get into Tesla, do you want to do Jajun? 10:10.
Oh, 10:10. Yes. Where's the bell? Ding, ding, ding. Where's the
Ding,
buzzer?
ding, 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 ding. Yes. You know what? I'm going to put a 10:10 alarm on my phone.
Okay, here we go. $2.95. Buy one, sell one, $2.95, and ship it.
Perfect.
Now, quickly,
Love it.
I will quickly put in a GTC. Here we go. We bought it at $2.95. I'm going to sell it for $3.45.
Beautiful. Beautiful. Pushed out.
Okay. Oh, nice work. You are Johnny on the spot with the follow.
I'm hot on the trigger today, Jenny Andrews.
All right, that's in. Back to Tesla. Yeah, we could take a look at 2 broken wing butterflies, upside and downside.
Yeah, let's do it.
Now, expected move brings us down to 360. Do you want to start there?
Yes, let's do that. I mean, honestly, let's take very little risk. You know what I mean? So what are you collecting here? You're collecting 6%. Yeah.
So if we do both sides,
you have to do them
where
separately.
do we want?
You
do
always
we
have
want
to be okay with both sides. I'm okay with this. I'm okay with both sides.
But since it's on actual expiration, do we want the center strike to be like 350? Do we want more of a, where might this end at expiration?
Yeah, 350 is good. I like round numbers. That's good.
I think TP, was it TP or who would say, like, look where there's the most open interest?
It was TP.
Yeah.
Because our whole show is dedicated to you today, TP. In TP we trust.
In TP we trust. We're going to go with where there's the most open interest. So right here at that 350 line.
Yeah.
58 cents on this side. Okay. And then on the top, clearly the 500, right?
Yeah.
495, 500, 510. And we're getting 70 cents on the upside.
Beautiful. So we got 50 cents and 70 cents. We got $1 something. Our ultimate goal is to try to butterfly these off. I like it.
Okay, so they're both working. And I know you said like one could stand without the other, but I kind of like both because 73 plus 55, we've got more credit to work with than if we just
I do like them both, but when you're legging into an order, you have to be okay. If something happens, the wheels fall off scenario, it's not as if we have that much risk in one side or the other.
Right. So I've got both of them working.
I mean, Jenny, the other way to do it, if you wanted to, would be to buy the wings and then put the other 2 in together if you wanted to.
No, this is fine.
Okay.
No, this is fine. I think I might have to lower this 50. Well,
I mean, you're taking it credit. Take them down. I don't care if it's 50 cents and 50 cents.
You think so?
I don't care. I mean, it doesn't really matter.
Well, this we're trying to sell for 72 cents and it's working in that range. This one, we'll let them work for a little bit, see if we
And then you'll take down the other one. Whatever you get filled in, we'll take down the other one. Okay.
Right. Got it. Okay, so that is working. As far as things going on today, okay, we're filled on the call side, which we got 70 cents on. So let me
take down the put side.
$0.52. There we go. Okay. So if I go to the analysis page, this is going to be so wide.
It will.
Here we go. Here it is. Look at that.
Yeah, that looks great. I mean, that is a big fat bat head.
Yes. That doesn't look bad. Doesn't look bad.
Doesn't.
And our risk is $5 minus what we took in. So what are we? 75 plus 50. We took in like maybe $1.25, about $1.25. So our risk is $375. $375. And if it stays in here, we can make 125. If it goes to one of those peaks, we could make more. But that's at expiration.
It's at expiration, right? Okay.
Oh, perfect. Speaking of at expiration, did we? Oh no, we didn't end it, Mikey. I know Mikey had that center strike. We were rooting for him, but we didn't. We didn't end there yesterday.
No, we did not.
No, because where did SPX end yesterday? Or maybe it did close 60.84. I think he was 16.
He was 60.85. He was 60.85.
Maybe he was. Let me see.
He's 65.
If he was, I'm going to look. Where is it? What was Mikey's strike? No, 60-55.
Oh, sorry, Mikey. Wah, wah.
Yeah, 60-55.
It was 60-85, 60-85. Oh my God. Well, hold on. Can you go to a tweet that I posted today?
Sure.
Because you actually inspired me because I was talking on the phone with you yesterday and wait, it's me. So I think it's under Bob. Yeah, there you go. Press play. I hope you can hear this.
All right, this is.
Oh.
I'm not on Instagram here.
You can't see it? Nope, you can't press play with this? Darn it, Jenny.
See, why don't you just reenact it for us, Liz?
Okay, so I will. You know the scene from somebody
that you from A Few Good Men.
From A Few Good Men. So you were inspiring me yesterday because your dogs were barking, and you don't know how to stop them. Like, so you're like, stop it. You're super nice. And then like, but your dogs bark. My dog sounds like he's going to kill you. Will Ferrell, when the Amazon guy comes, has this deep bark, and he can see right through the window at you. You know what I mean? So it's the whole scene from A Few Good Men, where he's like, I would suggest you say thank you in the manner that I protect this house. It is hysterical because it is totally my dog.
Oh my God.
I can't believe you can't press play. Somebody else tweet this, please, because I would like Jenny to see it. But she's not on Instagram.
Well, I'll watch it later. I am on Instagram on my phone, just not on this computer.
I think if you blew by it, we could have gotten to it. But John, please. Give me this.
No, it said log in. I don't even know my I don't know my login for Instagram.
Because they would have been amazing TV with your login on Instagram on the live show.
I had to get rid of my old save $$.
Because everybody now knows it. That was her Instagram login.
Well, because it didn't make me money. It's got I lost money, and there's no hope because it's gone now. It's out of my account.
Okay, but nonetheless, this is exactly what my dog is on Christmas when the Amazon guy comes, and it's pretty freaking funny. So I suggest all of you out there who are not Jenny, press play because you're ruining my mojo here.
We'll all watch it. We'll all watch it later. I'll watch it as soon as the show's over.
Okay, let's go forward then.
All right, let's see what we have going on. Earnings today, AVGO, Costco, and Restoration Hardware. I do love the Restoration Hardware restaurant. We went there. Remember, we went there not that long ago.
Yes, I remember. What I like?
I mean, did you not like it?
You're treating me like I'm like. Do you remember? Yes, I remember.
So let's take a look again at yesterday's Adobe, because is it still down? It was last I looked, it was like down $68 or something.
Yeah, well, the expected move was big.
Oh yeah, down 67.
I think the expected move was 57. So this
50,
is a big
it
move.
was like 50 something.
Yeah, this is a big move, but it's not a 2 standard deviation move, although it does look like it on that chart.
I know. It's a big move. It's a big move in Adobe, right?
Yeah, that is a big move in Adobe.
12.21%, Liz, to be exact.
It's a big move, really big move.
All right, so today, AVGO, Costco, Restoration Hardware. We'll take a look at all those. We have a lot to do. We'll look at those. I want to look at some other trades from Cherry Picks. And Mikey coming in. Happy Red Shirt Thursday. Jenny, according to the silver market, you left the money tree on the back porch last night. Bring that thing back into the house. Mikey, that is no lie. I had to move the money tree because I have a plumber coming today to install a new faucet in my kitchen. So I had to take the money tree out of its spot in the sunlight, and it's just like in a shady corner in the house.
The market's going to fall out of bed, ladies and gentlemen. Buckle up. The money tree's in a corner.
Okay, I told you not to get greedy.
3 days before you left some money on the table there with that one. Okay,
let's take it to the tape. Let's take it to the tape.
Yeah, Mikey made like $400 after you told him not to get greedy.
No, look at this.
Yeah, you told him. You told him after these 2 bars.
I told him here. I think I told him on December 10th, don't get greedy. Then he missed this, but you know what I saved him from? This.
I don't think he listens to you, nor should he, because No one should be listening to what Jenny says her money tree says. Just a little, this is a little, by my public service announcement is, this is not factual information.
It had nothing to do with the money tree. After this bar, you know me, I'd be out.
I know.
And then I would have missed this, but I wouldn't have been in it for that.
Yeah, I'm a silver bull. I'm actually doing okay in my silver positions for these. So Mikey, I'm with you on this. I actually look at this as an opportunity. You got some real potential there, kid.
Hey, how much is it? How much is this?
It's bigger than we want.
Well, like, what if we just tried to scalp a little bit of money out of it during the show?
I don't think it's popping up today. Do you? I mean, when you're scalping something, you have to think, where it's, you're trying to scalp in and out of something, right? That's what scalp is. But when I look at this, I'll look at silver and I might sell some puts on a day like today because the rank is decent. You've got the down move. I actually like to overlay a complex option strategy on top of it because silver is hard to scalp because I think.
No, but that's what Mikey does. Mikey will get in and he does scalp this SIL.
He does. Yeah. Right. He does.
It doesn't have options. There aren't options here. So he does.
But SLV does have options and you can use that as well.
And I don't know if you listen to trades from the research team. We have something in silver already. You can see we've got a bullish trade on. But in trades from the research team, Dr. Data was doing an SLV trade and I liked it. I liked it. He was selling, 3 puts for 1 call. So sell 1 call, sell 3 puts.
Oh, that's not bad.
No, not bad. No, I didn't mind it at all.
That's not bad. And this is a cheap way to play it too.
Yeah. So he was doing that. Speaking of when things are down, sell something. I sold a put spread in ZB. We've got bonds down. We don't have a ZB position.
Yeah, you sold it yesterday or 2 days ago, right?
I sold it yesterday. So we've got a continuation. And today I did add on a TLT position. So I have both.
I don't think we have TLT or ZB. We could put those on.
No, we don't have TLT and we don't have ZB. I like ZB. If I'm going to start, I'll start with ZB. And then if I'm going to add to it, I can add in a smaller scale and then I'll add to it with TLT. But here, let's see, this 117, 116 put spread, $280 using 718.
That's not bad.
That's not bad. No,
you're in the 22 day. Would you ever think about going to a little farther out?
We could go further out. Then you're in the 43 day. Which, it's so look, here we go, 115, 116, 117. In the 22 day, you have the halves.
Yeah. I mean, I'm fine with either.
Which is fine. Let's see. Let's compare, okay? The 117, 116 in the 22 day was $281, okay? And in the December, or in the Jan 43 day, the 117, 116 is $359, $375.
So, let's just stay in the nearer term. If we need to, we can roll it out.
That's my thought process. I'm in the 22 day and I figure I'll roll it when I have to.
It is hard though. $200 on a $10 wide is a little, but that's not the way we're looking at it. I'd rather it, get the pop in the nearer term.
Now we do have, the interest rate announcement, and then who knows what they'll say about 2025. So there is that risk in this position for sure.
Well, the CME Fed tool is pricing in a 95% chance that it's going to be a 25 basis point cut.
So
that's the CME Fed Watch tool.
Right. So I don't mind. I'm in it. I don't mind. The question is 22 day or 43 day. And I think 22 day. Otherwise, you could get in with TLT. The problem in TLT, there's not a ton of premium.
It's the same thing as ZB. You were right underneath it, so you'd be selling the 91.5. Do you see what I'm saying? In ZB, you're not afraid to get right underneath where it's trading right now.
Right. So there we were getting $280. Here, you're getting 120, you can 329, you could just double it.
Yeah.
Similar trade. Similar. Similar risk reward.
Yeah.
I don't know.
I don't mind either. I mean, ZB's got a higher rank, I think, doesn't it? And let's just put it in. Let's put a bond trade in and move on. It doesn't require this much thought. It shouldn't. They're the same.
All right, 117, 116.
Perfect. Chip it.
$281, risking 718.
Lock, load, ship.
And send. And
Beautiful.
fill. I'm going to put a DTC in for this.
Please do that.
50% and make it a GTC. Review and send. Okay, so that's done. Now we don't really have to do anything with it until we get close to expiration.
Beautiful. Beautiful.
What else do we have going on?
I don't know that we need to manage anything else. We do have some good tweets coming in, so we should maybe go over there. I'm trying to look and see if there's anything that needs to be managed. Boeing is up again for the first time in a long time.
I know we changed our position from the diagonal to short puts, and we collected more. We collected 295. The puts are up 18% in 2 days, which, you know, you could think like, oh, maybe I'll take them off and keep an eye on it and get back in, or we could leave them. But I actually took mine off.
You took your Boeing puts off? Take them off. I mean, we're up $50.
We're up, right. I mean, when you look at we're up 20%, right? 20% in 2 days. So according to the old reel, or what, do you remember that chart?
Oh yeah, 20% in 2 days, that'd be gone. It was like 10% in 1 day.
Right, 20% in 2 days, and that gave us $2,000 back.
Yeah, that did. That was pretty good.
So that, yeah, not bad at all. Okay, so that's gone. SPX, we're still working the Jajun trade.
It's we put it on when we were down 6. I watched us bounce around a little bit right there, so we've got the whole hour.
Right. So that I don't see any other big movers today. You all finally down. You all down $1, which our short call spread is running out of time.
Oh, we have 8 days left. We needed this isn't a scratch yet.
No, it's not a scratch yet, and it would.
You could roll this out in time. It's a call spread. It's in the middle.
Let me take a look. I'm going to cancel this working order and look at rolling this U-all spread out in time, because with 8 days to go, time is not on our side.
Yeah.
So it's the 95-100. That's not that good. What do you think? I don't like to pay a debit to roll it out.
No, I was just looking because a lot of times we know this. When it's smack dab in the middle, you can roll it out for even. You're paying 14 cents. We can leave this. I'm okay with it.
Okay, we'll just leave it. We have 8 days to go with our U-all call spread.
Or I mean, that's you're either going to win or you're going to lose, because you don't have time on your side with 8 days left.
I know.
But so this is very similar to the Jajun trade. We're trying to scalp it right now. When it becomes wrapped around the at-the-moneys, we're saying that U-all is going to pop down a little bit. We don't have a lot of bearish positions in here, so I don't mind having this.
I don't mind putting an order in to, well, I don't know. We can keep an eye on it. But I don't like to roll for a debit. If we were rolling for a little credit, I would have done it, but I don't like to roll for a debit.
No, leave it then. It's fine.
Okay. Intel finally getting a boost today. Look at that, up 44 cents.
Intel for the win.
Finally, things are going in the right direction for little Intel.
Yeah, the train that couldn't. This thing has been a runaway train to the downside.
I mean, I can't believe the move that had.
I can't either. It's bonkers.
It was ugly. From 27 to 20.
Yeah, that's crazy. That's a big move. It's a very big move.
Yeah.
It's a very big move.
I don't know. We just we didn't have anything during this whole rundown. We just added this put yesterday. That's all.
Yeah. Okay, do me a favor. Let's go to Twitter, and then we're going to go to TP. Go top down, because we got a lot of things coming in on Twitter that are pretty funny. Thank you very much. We appreciate all of you guys. Go top down.
Okay, Fazia coming in, taking advantage of this big down move to sell a Jan put broken wing butterfly in Adobe. Buy one 480, sell two 470, buy one 420, all for $400. So I know Fazia does like to get in with those broken wing butterflies where she collects a decent credit. So $400 is a big credit. Let's take a look.
This is going to have a bit of risk because she's $50 wide on where she's buying it. That's why she's collecting so much. I've got the strikes pulled up, Jenny. So go to Adobe. Let's see. I think she's in, it doesn't say which side. I'm going to assume regular January. So it's the 480, 470, 420.
So she's only giving up $1, and it's $450.
You're using $3,000.
$500 in risk, which is too much for us. So
I like it though. I'm glad we looked at it. She's pretty smart. I mean, honestly, $2,000 is a lot in Adobe.
So we would have to make it less risk, right, for us. Like, here's something that would be more like on scale for us, which kind of stinks. We're only taking it $1, but we don't want $3,500 in risk and one underlying. So again, for every gimme, there's a gotcha. We're not going to get $400 because we're not taking $3,500 in risk. We can get only about $1.20.
Right, that is true. For every gimme, there's a gotcha. I like it.
So, but I mean, Fazia has a bigger account than we're trading with here, and she's got a lot of great trades, and anyone can follow her on the follow page. And Fazia, I actually met so many people in Phoenix, so many women in Phoenix that I told to check out the Facebook page, the Women of Tasty Trade that you run, and told them what an amazing resource it is. So thank you. We all appreciate it.
We do appreciate it, and we do the same thing every time we're out there. Okay, keep going forward. You have to. There's lots of tweets, and then we're gonna get to what TP. In TP we trust.
Okay, Mikey, the Polish Warrior. When you find out the money tree was moved to a shady spot after you put on the long silver.
I know, I love it.
Oh, Mikey, I'm sorry. I should have let you know. I should have sent you a message. Sweet Bobby, good to see you, Sweet Bobby. Nobody puts the money tree in the corner.
So I'm saying these tweets are great. They're coming in. This is pretty funny.
Jack JT, do you remember when we went to lunch at that one place? Yes, Liz, that was
yes, I remember. Yes, I remember. Pretty funny. Keep going. There are lots of
I'm laughing because this reminds me of, okay, so that actually could be me in the jeans with that hair, because my hair could look like that for sure. And Liz, that I was thinking when I first saw this maybe was a post about your grandma in the nursing home.
Oh no, there are posts about my grandma going down this way, but you were like, do you remember? You're the lady in the walker. I was like, yes, I remember.
This made me think, the other day I saw a woman at the grocery store who was probably 95, and she looked exactly at what I'm going to look like when I'm 95. So I took a picture of her in the grocery store and sent it to Liz.
It was fantastic. It was wonderful.
All right, Jack JT, you channeled my spirit before you even got 2 tweets for Tesla.
Yep, that's true. Tesla's pretty interesting these days, right?
Yeah, definitely. It's a hot topic. Okay, this is from Liz and Jenny Forever. Look at that guy jumping off the cliff.
Extremely bearish on MSTR. Highest IVR on SP 500, twice that of Bitcoin. Okay, let's take a look. Michael Saylor has lost $1.5 billion so far, issued $3 billion in convertible bonds, and doubled shares to buy Bitcoin. Company has never produced income. In fact, is a negative cash flow. Oof.
Okay, we will go look at this, but before we do, this is no lie and no joke. Liz does this. She jumps off of cliffs.
I do.
Yeah, she does. I'm not making that up.
Not this high, but yeah, we jump off cliffs in Wisconsin. We love them. I love jumping off cliffs. Actually,
Jumps off cliffs.
It is scary. It is scary as it is scary stuff, to be honest with you. I mean, I used to a lot more in my youth. Now I just watch my psycho children dive off cliffs, which is terrifying to watch.
Right into Lake Superior.
Into Lake Superior, yeah. Yeah.
You're brave, Liz. You're brave. MSTR. Do you want to? This is as brave as I get, putting on a trade in MSTR.
So extremely bearish.
Extremely bearish.
Let's do. Okay, this is how weenie we are. Let's do a reverse big lizard.
Yeah, but we'll collect enough. We'll try to collect enough. I mean,
yeah, no, a reverse big lizard with a fat tail, clearly, because we're not going to put a naked call in MSTR.
I want to see if I sold this naked call for $5,000. I'm going to see how much buying power it uses. Whoa, 28,000.
Yep. Do it. I'm just kidding.
All right. We are looking at a reverse big lizard. Can I make it $50 wide? Yes.
Yes, you can.
Okay. $4,796 in risk.
No, I mean, you have to. No.
I know.
No. Just get realistic, Jenny Andrews.
I know. Then what do I have to make it? Like $30 wide?
Even if it's low. Yeah, okay, $30 wide. You can go farther. Yeah, there you go. How much risk is that?
1,700.
That's still a lot. Let's just sell a call spread.
We just have to sell a call spread.
Yeah, that's still a lot. Let's just sell a call spread.
Let's get it close though. 450, 480. That's too expensive. 450, 470. How about this? We're risking 1,500 to make 500.
It's a little tight for my $1,500 is real risk. I was thinking the 500, 510.
500, 510. Okay. I was just trying to make some money. I'm channeling.
Because everybody else is just trying to lose. You're right. I mean, boy, that's great. That's great advice.
I'm just channeling Terry. I'm trying to collect more, make more.
I mean, I was thinking you can put your $10 wide anywhere you want, but I don't want $1,500 in risk.
But it's a 10. Okay, so this is a $10 wide. We should be collecting 333. We should be collecting a third of the width.
That's fine, but just don't make it wider. This is MSTR. We've not been in it this far, and we're going to risk $1,500 to the upside.
Okay, so 333, on a $10 wide.
What did you do with my certified badass card?
What do you?
This is what you're getting for this. I wouldn't touch this with a 10-foot pole. So here you go.
If we're collecting a third of the width, it's not that big of risk.
There you go. Do it. Like I said,
I'm in it. I'm getting in it, and I have to keep on going. I have to keep on going to get 330.
Yep.
I can go right on top.
Keep going.
Let me just move it.
Keep going.
There we go. There we go. 323. A third of the width. He's extremely bearish. Extremely bearish.
Okay, go for it.
323. Extremely bearish.
Only because it's Liz and Jenny forever that I'll let you press that button.
Yeah. We're in it now. We're in it.
Well, we're not filled yet. Thank the Lord.
Liz and Jenny forever. We just sold a $10 rate call spread for a little over $3, about a third of the width. Following the mechanics, Liz. Following the mechanics.
I mean, if you were extremely bearish, you could have just went $5 wide and did at the money put spread.
There isn't a $5 wide.
I mean,
and they're not.
Wide.
I mean, no, that's what we did. I mean, that's what we did. You see, we're almost there. They're not $5.
I know. Oh wow. What about the put side? It's just because there's wide markets.
See, it's trading. They're not trading. It's not trading.
It's trading 201. It's because it's trading. I'm sorry, 401. It's because it's trading 401. $10 is a big difference. But it is wide markets.
Okay, but we're in it, Liz and Jenny forever.
Okay. And keep going down. We want to get to Bob's list first. Okay.
All right, Maureen Kelly sounds like my grandma, always dressed to the nines until the end, which was also 94. Aww. She was in Chicago. She even had a ladies' accessory shop back in the day. Oh, how nice!
They would have gotten along fabulously, Maureen. They would have. They totally would.
And Maureen, welcome, because I think you're a new tweeter.
Love it.
That's awesome. I wish I knew what accessory store. We were the queens of going to the accessory stores. Don't you remember when our friends had that purse business?
Oh yeah, I totally remember.
We would go to this weird place in the Chicago area where all the little shops would buy their items.
And we had to have a tax ID number to go in.
Yeah.
It was pretty cool though. I did like that place. That was when big necklaces were in. Well, my grandma always had something on, and I got all of her costume jewelry.
Are you telling me they're not in anymore?
Do you remember the Flavor Flav clock that my grandma had the one time? So one time she comes in with this necklace on with a clock that was this big. I was like, oh man, is that fantastic?
You're like, put that for me. Like you got that in the will, I think. The big clock.
It did. It's pretty funny.
All right, Jack JT. Monster rip yesterday in Tesla. What are your thoughts? Okay, so we put on the, double Brookwing butterfly. And I think he mentioned that we were thinking already in his head when the show started.
Well, the only reason, Jack JT, we were talking about it yesterday when we were on the road this last weekend in Phoenix. We ran into a man. His name was Cornelius. His beautiful wife, Pam, were fantastic traders. And Cornelius and I were talking, and we were just talking about Tesla. And he says if it goes to 420, it's going to go to 600. Once again, these are just nothing is a trade recommendation. We were just talking about Cornelius yesterday. So that's where
there's someone on. We meet lots of people on the road who tell us, their market predictions, and that was Cornelius's.
Yep, loved it. And then Jack JT comes in, Mikey, the Polish warrior, comes in. Happy Right Trade Thursday, lady. Jenny, according to the SIL market, you left money tree on the. Oh, yeah, there we go.
We did see that. We did see that. I wanted to take a look at something, though. Since Cornelius said if Tesla hits 420, it's going to 600, I'm just curious.
No, there is no time frame. It's not like it's going to go to 600 today.
I went out far, 126 days. I was just curious to see what that 600 call was 126 days out.
$24.
Now, 600. You're only getting 380 for the 36 day.
Yeah, you're like 600 days out and you're looking for 36 days. Sounds about right.
I want to see. I was trying to get a cheap 600 calendar.
I don't think you're going to get a cheap 600 calendar.
No way. No way. Okay, let's take a look at some earnings. I know what was on the list today. Restoration Hardware, AVGO, and what else?
Yes.
Okay, Broadcom.
And Costco.
And Costco. Oh, sorry. What do you think of AVGO?
So I'm in AVGO. I've been in AVGO for a while, and I have had diagonals in it. I've actually had some pretty good success in AVGO.
Well, it's up. You're usually, if you've got diagonals, it has been.
So when this split, this was one of those where I did. Remember how this was $1,000 and then it split? I wound up buying all the split products just because I wanted to see how they would react in their account, and it's been pretty good. Oh, great! We're filled in MSTR.
I'm going to put in a GTC right now for 50% on MSTR. Okay.
Yep.
50% GTC. There we go.
Perfect.
Okay. So back to AVGO. What to do on earnings? How expensive would a diagonal be?
They're not cheap, but they're not that crazy because it's only $177 product.
So 178, 190, $12 wide for $5. Not bad. I could even make it a little cheaper if I made it.
Well, would you want to do a crab here? Because you can see you can get quite a bit for that 190.
Okay, so the crab would be 2 190s. Let me sell 2 190s by 1 195.
So you're getting a dollar more. So this is what I was going to say. Sometimes I don't do the crab if it's like 30 cents more, because then if it gaps up, you don't make it. But here you're getting an extra $1.
So it would be 4 something instead of 5. And you could make it even cheaper by going to the 180.
Press it. Let's see what it got.
Look at this, only 350. So you've got the 180 to the 190. So you'd make 650. You'd make 650 on that if it goes up. And then from the 190 to the 195, you'd lose $5. So even if it goes through everything, you still make money.
It's interesting though, because this seems, $3, AVGO has to go in your right direction.
It has to go up.
Yeah. So if you're going to risk, $3.50 in case it goes up, would you ever want to do just a put spread?
We can. You'll see, we can sell a put spread for $1.50 and risk $3.50.
Yeah.
And we know, but then we make $1. Then you make $1.50 instead of.
Right. But I don't know. Not that anybody knows what direction anything's going, but sometimes it's hard. I've been in AVGO and I've been writing it up. So I'm not going to lie to you. I do have the diagonal on, but part of me is like, well, wait a minute. That seems to be a lot.
See, you have to get if you go to the expected move.
But once again, that's way better than ours, because if it goes down, you're going to lose. You're not going to lose that full amount right away, but you will lose.
It's funny because sometimes you like diagonals and sometimes you don't. It's just like, in I guess your opinion on the product.
So I don't like crab. So I think my problem is it's a crab. So if this goes up, we're gonna make $100. If it goes outside of its expected,
Well, if it goes outside,
I know it's me that said the price of the crab. I'm well aware, but that I think as soon as we look at it, I'm always like wah wah, because if AVGO gaps up outside its expected move, we don't make anything. We make like $1
we don't make
for all the rest. Yeah.
And if I did the 180, 190, $10 wide diagonal, 440.
It's expensive.
It's expensive. It's expensive.
It's expensive.
Yeah, it's expensive. I don't know what to think about Geo.
That Jajun trade is getting away from us because we put it on when they were down 6. Now we're down 14. Whoa, what's our loss on it?
It's probably down $60. Let me see.
Oh, it's down.
Oh no, it's down 130.
130. Now we gotta leave. Now you almost gotta leave it. And that's part of the problem.
I think what time is it? 10:46.
We got 14 minutes. Anything's possible, Jenny Andrews.
Well, we'll see. We'll see. Jajun.
Yeah.
All right. I did want to take a look at some of the TP's cherry bombs. This week, we've got Tesla. Do we have Coin? Coin was one of them. And I know you're in Coin.
It's got a lot of premium in that coin. A lot of premium.
So we're both in Coin. I feel like we should get something on in Coin. 47 rank.
Coin has my number, Jenny. Coin has my number. I mean, don't get me wrong. If you look at my year-to-date P&L, you'll be like, I don't think it has your number because you're up a lot in it. But it's got my number, meaning that I think I fear trade this more than regular trade it. Meaning that when it starts to go against me, I will close something because I do fear trade Coin.
But I will say, like, I know you're up on the year in Coin. I'm up on the year in Coin, and it's kind of surprising because I'm never taking that much risk in Coin. I'm never taking that much risk in Coin.
Oh, I have. I've swung for the fences in Coin, and it's come to fruition. And I think because of that, I'm fearful of it.
See, this is what I've been doing in Coin, and it just adds up. Like, it just adds up. So let's say, this is exactly what I do. I buy my little 250 I call spread, sell a put spread to pay for most of it, pay a small debit, and do it weekly, and it just has added up. And
this is something I like. There's 250 white strikes. It's a very small nugget. You can participate in the coin to the upside.
Participate if it keeps going up. If it goes down, you're only out 250. And Coin's a big product. So, because if you're looking at the diagonals, they're very expensive.
No, they're crazy expensive. I know.
They're over $1,000. But here I can keep participating in the up move. If it goes up, if it drops down, I'm not risking too much. And honestly, the way this works, it's like you win one, you make 250. Like I'm closing this week. So this week's I'm closing. My call spread is in the money, slightly in the money, not crazy in the money, slightly in the money. And it's expiring tomorrow, and it's still not a full profit. I think I'm trying to close it for like 230. So not a full 250, 230 instead of 250, even though it's in the money, thinking, I'll give up that 20 cents just in case Coin falls tomorrow. So it doesn't hit full profit until Friday.
Well, that's why I don't like these with duration.
I don't like these with duration. With duration. And what I'm talking about is, if I've got a call spread here that I'm trying to sell that's this far in the money, that's only trading for, because we're 8 days. But mine's 1 day, and you're still, like, I think, let's say it's here, and that's only 185. And this has got 1 day to go.
Yeah, it should be worth 250. But it's not.
But it won't be until the end of the week.
Until the end of the day tomorrow on Friday.
Yeah. So, but for me, it's a cheap way to get in the coin game.
I don't mind it. I don't, because the diagonals are too expensive. And I mean, just selling the put spread is fine too if you wanted to. Like if you took off that call spread and you want to just make little bits of money, how much is just the call spread?
80 cents.
83 cents. That's not bad. That's not bad.
Mm-mm. Right, because your risk is only 160.
Mm-hmm. Yeah.
Now, typically our rule should be, well, then go further on time. You can get farther, and you can collect more.
If you're willing to do the weekly, I don't mind these.
Yeah, you're not risking that much.
You're about to get $1 here. You're risking $1.50.
Yeah, let's do it. Let's do it. We're out of the money. Very low risk. We're getting $1 and a 250 wide.
Yeah, that's not bad.
No. Okay, so that's working. That is working. So that's. Let me see what else is on his list that he did this week. Oxy. Accidental petroleum.
Oxy?
Yeah, he did. I know we were looking at it, right? We were looking at it earlier this week.
I mean, this has been all over the news.
Really?
Yeah. That's why I was like, he put in Oxy? Because it's been a topic.
Huh. What are they saying about it?
I don't know. All I know is that symbol's been everywhere. That in the news stories that I've been reading, the symbol's been everywhere. So if you take a look at Oxy, it's down, 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 down. Now wait a minute. This isn't tracking oil, is it? Oxy, accidental petroleum? Would it be?
I mean, you would think it would be, but it's not. So here's crude oil. You would think it would be, and it's not. And maybe that's why there's like extra premium and a super high rank. I don't know, but it was in his cherry bomb.
Yeah. Okay. Well, let's take a look at it. I don't mind.
36-day. Oh, there's not. I was hoping for more premium. There's not really. 47.5 put, only $1.30.
Yeah.
It doesn't look great.
Yeah.
I'm surprised.
Yeah, but TP is a churn and burn, meaning like he doesn't think about it. He's just like, oh, well, because he'll look at this and be like, okay, if I'm selling that put, if you hit that put, I'm getting $1.30 in, whatever it is, $1.30, putting up $900 in 36 days. He just thinks about things so methodically that wouldn't bother him at all. Like, to your point, I kind of expected there'd be more premium, but that would not bother him.
I expected more premium too. Okay, I totally forgot. If you didn't listen to Victor, right? You didn't listen to Victor?
No.
So he is bullish on, I figured you would like this. We're always looking for new things. No, he's bullish on, he's bullish on Newmont Mining. And I thought, great, I'll put in a bullish trade in Newmont Mining. I'm all in.
I'm writing that down right now. Just kidding.
I knew you would like this. And Tom didn't want it. He didn't do it.
Hey, that's perfect. That's great for us. Put a bullish trade in. When I look at this, you've got a 10 rank. I'm thinking diagonal, but you can look at Newmont Mining. I was going to say GDX too. I haven't looked at GDX in a long time.
Well, he was talking about how the miners haven't gone up as much as, gold and silver. But, Newmont Mining, look at that chart. That doesn't look good at all.
No, that looks terrible. Look at that one giant, massive bar. What day was that? Is that?
October 24th.
Whew. That hurt.
But Newmont Mining, we could probably, okay, so when you said diagonal, you're getting 53 cents for the 45 call in the 36 day. So that's not bad. And in Feb, I almost think we buy the 40.
So what's interesting here is if you're January, Feb, you're going to pay a lot for it, Jenny. You know this, I know this. You're going to pay more than 50% the width of strikes when you get that much time on a diagonal.
You're not going to make that much. It's $5 wide and we're paying $3.12. I don't love that. I almost think.
No, if you're going that far out, you're going to pay more than 50%. If you're going to do a Jan Feb diagonal, it's going to be expensive.
I'm just looking at a zebra. $4 for a zebra.
But you would just go out. Why wouldn't you just go buy the 37? You're not going to buy a zebra here.
Well, I kind of glanced and there is still extrinsic value there and it's more. So it costs more and there's still 25 to 30 cents. I don't know. It didn't look super cheap. I just thought when Victor said he was bullish, I thought I'm getting in. I'm getting into Newmont Mining.
Take a look at GDX. I want to see if GDX looks like this. Please. GDX was the bell of my ball one year, and if it's down like that, it's down. You got a 35 rank. You're going to get a little bit more premium than you will Newmont Mining. This is a miner. This is the miner ETF.
So here you've got 77 cents on the 36 put. Not bad. Only uses $567.
Yeah, that's not bad.
That's not bad. 35 rank. You could bring it all the way up to the 37.
Yeah,
that's
sure.
Not bad. 37 put in GDX.
I don't mind it. I have no problem with Newmont mining either, but Newmont has a 10 rank, so it's hard to sell premium.
You know, after Victor's recommendation on CCJ, I just thought, he's got a good track record. I'm gonna get in.
You could also do a Jade Lizard here real easily because you're collecting 80 cents, then you can go to the 40-41.
Yeah, there you go.
You got $1.
I'll ship a Jade Lizard, and we haven't done a Jade Lizard in GDX in a long time.
No, and then you're going to put a GTC in for, I wouldn't even wait 50%. I would put it in for 30.
Okay, so that Jade Lizard in GDX is working. I do want to put something in Newmont mining just so we watch it, even if it's let's see, even if it's more of a baby trade, like we can do. Oh, I don't know. It's hard to do a diagonal here. There's just no.
You'd have to go nearer term. You'd have to do like buy the 40 in the 36 day and sell something in the 23 day. That's how you make it cheaper. So buy the 40 in the 36 day and then sell the 22 day, the 20 or the 22 day.
So,
and you got to sell the 44.
Yeah, 226. That's not terrible.
Not bad.
It's not terrible. Yeah, it's not bad. We can make a little bit of money, but that way we'll keep it. It's a small trade, and this way we'll keep an eye on it.
Yeah, I do thoroughly enjoy having things in so you can keep an eye on it.
Right. Otherwise, we forget about it.
Yeah, otherwise we do.
I still do that before. Sometimes if I want to keep an eye on something and I am out of my position, I will buy one share. I'll just buy one share, and that way I have it in my platform, and I'm just keeping an eye on it.
Yeah, that's not a bad. It's so funny because other people write notes. I mean, but I do the same thing. I like to have something small in just to keep an eye on it.
Yeah. All right, I'm going to make sure we got to everybody on Twitter. And then I wanted to show you something on the SIBO Most Active. Okay, this came in, Frank Walsh. Got this from Jajun. It seems like it works best for days that are bullish to begin with. So that's coming right from the sage himself.
Hopefully we're going to get him on. But temporary profit taking lead to sell off in first hour, and then buyer step in when selling pressure relaxes after first hour, half just because of the volume. Thank you, Jajun.
Okay, that comes in from Jajun. So seems to work best on days that are bullish to begin with. So maybe that's something to keep in mind.
Well, this was pretty bullish. We were down and then we were up. So we kind of
but on days that are bullish to begin with, we were down this morning. We started down 10. We were down 19. Like it wasn't a bullish morning.
No, it wasn't a bullish morning.
It wasn't a bullish morning.
Okay, now show me what you want to do in open in the active.
First time we've ever seen this. Intel.
Shut up.
Mm-hmm. Yeah, 50,000. December 20th, 50,000.
So it's the 20 and a half strike. Let's take a look at it. That's a combo. Yeah. Buying one, selling the other, or selling and buying the other. You're either long or you're short. That's a combo.
That's what I think. They're doing the combo. So
and fun fact, do you remember this, Leo? When I was talking to you, the young trader, he asked me what's the difference between a combo and a zebra.
8 days. They think this is an 8-day move. Here's the combo.
So let's talk through this. The combo is synthetic long or short stock. You can buy a call, sell a put. That's your long stock version. No matter what you do, it's going to be cheaper than buying that stock because buying that stock could be about 1,000. Here it's about 50%. The zebra is even cheaper.
Okay, unless someone has stock, unless this is a very large concentrated stock position and they're just selling the straddle over their stock. Could be too. But do you want to throw this combo in to get in with the open interest?
Yeah.
Get in with the SIBO Most Active. Let's throw this in for fun.
I do. You're right. They could be selling the straddle around it. They could be buying the straddle because they think it's going to be a big move.
Yeah, they could be doing either. But we saw that and we both thought combo.
I thought combo, but there's lots of other possibilities. To your point, Jenny.
But we're going to throw it in just for that is for Leo. We're throwing a combo in for Leo.
Leo, we're not going to say you took us out, but you are the one who asked me what's the difference between a synthetic stock position, meaning a combo, and the zebra.
Replace order. 5-cent credit. 5-cent credit. Now we've got is this our first combo ever on the Liz and Jenny show?
I haven't traded a combo in 37 years.
Yeah, first combo. Congratulations.
Have not traded a combo in 37 years.
8 days, December 20th. We'll see.
Yep. Since you and I were 10. Since you and I were 10, that's when we traded our last combo.
It is 11. Time is up.
Time is up, Jenny. Fast hour of the day, done and dusted. Today's the day where we're going to leave our Jejun trade. Well, fingers crossed it, but there's not too much left to lose, unfortunately. But that's okay.
Well, the GTC is in. If we get a little pop, maybe it'll come off.
For sure. All right, Jenny, have a wonderful afternoon. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you all tomorrow.
See you tomorrow, everybody.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man, Mikey Butler, and of course, my favorite, Katie McGurgle, in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos, because that helps us immensely. But more importantly, just come chat with us live, because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my two buddies, my besties for life.
Yeah,
9 years for me. 11? You're past 10. You're 10.
Yeah.
10, 11.
I'm 11 as a full-time employee, but 12 and a half as an unofficial full-time employee. Intern. Does that make sense?
Yeah, it was slave labor.
at that time.
Yeah.
Was it
Oh,
like
yeah, I
under
was-
the table,
Yeah,
like cash
just
pay?
let it be fully transparent that I was an unpaid intern at Tasty
Yes.
when I first started here.
It was the kitchen's on fire. Can you do something about this?
Yeah.
Your payment was to be in the presence
Yeah.
of such innovative business people, greatness,
It's
just
true.
really true greatness.
It's true, but yeah, we've been together for a long time.
We really
Think about
have.
the fact that kids are born and then they grow over 10 and 11 years, and now they're like in school talking to other humans.
Yeah.
Yeah.
In the
That's
time
my
that
little
we've
brother.
all worked here.
Yeah, and the time we've
Yeah.
just been putting in the hours.
Yeah. So we've gone. Katie hired Mike.
I didn't. I mean,
Kinda.
I welcomed you with open arms.
Ryan, is Ryan? Is he the most senior from
One of
our like bracket?
He's one of them. But yeah, Ryan hired me. Well, Ryan got me in the door, and then what's his name hired me. He's not here anymore.
Oh, David.
Yeah.
Yeah, David. Yeah.
But yeah, Ryan got me in. My brother obviously like connected the dots, but
Yeah.
Ryan was my first interview, I guess we'll say.
Yeah.
I love that.
I had a great show with Ryan yesterday.
Very
we talked
nice.
about meme coins.
Farcoin.
Yeah, well, he
he's-
rotated out, right?
He is a paper-handed little. The fact that he got out of.
I mean, now it's like mooning.
He got out of the next great investment opportunity called Farcoin.
I know.
What was his thought process there? Did he have some FOMO?
I'm sure he did.
It's
didn't.
up 300% in the last week.
Just crazy. Yeah. No, but we learned about meme coins. I'm excited
Yes.
to eventually join the bag battles with
Hell yeah.
all of you.
Yeah.
But other than that, just speaking of other random frivolous things that we are pursuing, I joined my first parlay with you
Oh, yeah.
all
Terrible.
this weekend.
It'll be one of the last parlays you'll ever get from me.
Mike has had.
I'm off sports
Cold
betting in
streak?
2024.
He's had
2025.
multiple. I'm not talking him off the ledge because he's fine, but I've had texts from him that say, "I cannot win a bet."
Mm-hmm.
At
Save
the
his
end,
life.
yeah.
I can't tell you how many parlays I've lost by like one item or like 2 yards, where it's like a 5-legger that's gonna pay out big, and then it just misses by one little thing.
I
that's
mean,
like
well, that
insane.
one just completely crapped the bed.
Oh,
there
yeah,
was
yeah.
not a single one.
Not a single leg. Hey, he's been very cold, but here's how the gambling gods get you. This is how they get you. Mike is going to hit one in the next like week or two.
It's got to be because I'm literally.
And it's going to change everything.
Oh, yeah.
Oh my God, I'm so hot. We're going to be
It's
gambling
going
all
to be
year
the
next
sports
year.
version of the Santa Claus rally.
Yes.
The Sporty Claus rally.
Yes.
Okay. All right.
And you never know; it might happen tonight. Rams, San Francisco.
Okay.
Playoff football.
Yeah.
Playoff football for fantasy, not for real football, but
I might.
there are implications.
Yes. Well, it was fun. I learned a lot. Not really. It took me like a million years to figure out exactly what you guys were setting up, but I did enjoy having a little skin in the game, so to speak. So
What you
I'm
learned
trickling
is-
into the dark side.
Yeah.
I don't know how
Well,
I feel
it's
about
crazy
it.
that your first bet was an under. That was alarming to me.
That was
my first. Yeah, I followed
was
my
so
dad into that.
I was amazed.
But
I was amazed
yeah.
by that.
You actually got a taste because you fat fingered the wrong rushing yards.
I
and
know.
You would have won if you did the right rushing yards.
I know.
So-
I would have won like $4 whole. Woo!
Yeah. But it would have offset some of the other legs. But yeah,
It's not.
what
It's
you're
not the
learning-
dollar amount. It's the glory.
Yeah.
It's the beating the book.
Yeah.
Okay. That's the power.
But what you're learning is it's no different than the market. You can have an assumption, and you can build the narrative, but then you can just get the rug pulled out from under you. Like
Totally.
my narratives for all those legs were amazing.
Sound. Yeah.
But didn't pan out.
Yeah.
Yeah. Well, something I do hope that pans out. Your bowling game tonight.
Thank you. Thank you.
You've
Thank
got like the jet black shirt.
Yeah, yeah.
Got the chest hair and the Italian horn.
I know that it's making me a little self-conscious. I didn't realize how open this V is.
It's
but
good.
I did whip out the chains. I don't know if you missed it yesterday, but my dad showed a throwback Club Med picture.
Wow.
Of him.
Club Med.
Oh.
Club Med of
do you
him.
know- do you know-
of him with a hat over
Yeah.
his privates.
Little
and he
in
had
flagrante.
Yes, he had his chain out as well. So I whipped out my chains.
Club Med
in
is,
solidarity.
you know Club Med, right?
Yeah, I was like,
Oh yeah.
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 yeah. Slimmy had a residency
Oh, I
at
bet
Club
he did.
Med.
I bet he
I'm
did.
sure.
Yeah. For sure. Yeah. Well, it's also funny because speaking of other images of your dad, Shelly on the Tasty Crypto team has been messing about, as you both know, with all sorts of AI imagery. So we got
Mike
some
Butter.
Mike Butter. Yeah, we
It's
got
been-
some great like Thanksgiving stuff. So now she's starting to cook up
Christmas.
And she sent a couple to your dad. I think he shared one of them
Oh,
on
yeah.
X today, where he looked like
He looks great.
hot Zaddy from a Hallmark movie.
Yeah.
Chiseled jaw, the whole 9 yards.
Yeah, and then I saw some Sosnoff ones, and again, he just looks like Mama Fratelli from the Goonies. But you know, we're workshopping it, so I'm sure there will be some more fun Christmas tasty AI generated images coming soon.
Oh, so good.
Love to see it.
Yeah. Well, we are officially all done with live events in
Yes.
2024. There is one more digital event that people can sign up for, tastylive.com/events. I believe that is rolling out this coming weekend, Saturday. So you should like really sign up like today.
Yeah.
Just to make sure that you can get that digital collectible. 6 strategies every trader needs to know, like he said, or like we have on the screen, I should say. Thank you, John. tastylive.com/events. Sign up. And then I saw a little sneak peek in there about something else that we're going to have cooking up from 2025, just like we do in 2024. You want to tee it up? You're the one that kind of leads the charge on this little contest.
Well, we have Guess the Market that is coming soon. I think that opens on the 16th is
Okay.
when we're going to do it, but we'll send out a bunch more. There you go.
There will be banners all over Tasty Live.
Yes.
Starting on the 16th, yes. So you can click the banner or just go to tastylive.com/guests and it'll bring you up to the guessing the market.
And we have our fourth quarter winner coming at the end of
Yes.
this month.
Oh, and we also, I guess we're going to plug the Rising Stars. So there have been a couple of recent Rising Star interviews. But if you are a viewer out there who's, had some success after discovering, the Tasty Live trading approach, or not, it can just be, successful trading in general, and you want to be on the show, Rising Stars at tastylive.com. Always taking potential applicants. You get to come to the studio, you get to talk to Tom, get to eat our lunch.
Yeah.
It's a good day.
Roost today, it's solid. I had a couple bites before I got on here.
I have not. I have like a little bit of a hunger headache right now, but
Rough.
we'll survive. I'm not hangry, but there's just a little bit of a drone right in here.
A drone like the Jersey drones?
Not like the Jersey drones. But yeah, what a time.
Literally.
Honestly,
What a
like
time.
what a time, what a timeline.
It's this timeline.
It's insane.
My thought is that the Google quantum computer
Yeah.
transported us into a different dimension.
Oh, I see.
And so we're now in a different timeline.
Yeah.
We've got drones hovering over New Jersey, and nobody knows where they're from. Tesla hit 420.69 at its high yesterday, and shorts came in and shorted it so that it's stayed at 420.69 for quite some time.
We've got an
What else?
assassin
Yeah.
that the internet is obsessed with.
It's really
We've got
incredible.
Fartcoin up 300%.
Fartcoin is
Fartcoin.
it's the world's greatest investment.
Luigi coin was popping off for the same reason. It's just really insane that
MAGA
this is
coin
the
up
world.
12%.
Oh yeah, because
Oh, yeah, that's your bag?
Just saying.
That's your inaugural bag.
Just saying. Yeah.
That was a 200 IQ play right there.
I know. I try to bring alpha to the peeps. Yeah. That's what I do every
I
day.
respect it. Well, I'm
Try.
still sitting in that SPX Iron Condor with you.
Ooh.
I've been trying to peel off like the puts and then, even just cover it for a scratch because I don't know if we're going to float here till the end of the year in 19 days.
50 points out of the money. Are you in the same one as me? Or did
20
below mine?
or 61.25, 61.50,
Yeah.
56.50, 56.25.
Yes.
Yeah.
I closed out the puts for 70 cents.
I tried to close them out for about 30 cents or so a couple days ago. I have not looked at them today. The put spread is currently trading at 25.
Yeah.
I should try to do it.
It's no rush. You're 500 points out of the money, a near impossibility based on what the markets have been doing recently, which is up only.
I just peeled off the put spread, so now I've just got the short call spread.
I think it's a prudent move. Take that downside risk off the table in case the impossible
The
happens.
Santa Claus sell-off comes
The
to town.
The
not even
the Grinch.
The
The Grinch move.
5950s for December 31st are trading for $1,500. They should be trading for 10 cents.
Zero.
Why
even
zero
bid them?
chance? But no, I also have the Iron Condor, the 5950 short, 6200 short, 10 points wide. That's up $110. I have plenty of room on either side, so I'm just going to hold on to it. But I will be closing it if it comes in another 30, 40 cents, because that'll be 50% profit. 19 days left.
Beautiful.
Word. Should we get to some trade ideas, or do you want to cover some other stuff? You want to do a little market recap?
Yeah, let me give you a little market recap. E-mini's down 8 right now. We are near the higher end of where we've been trading, a little bit of weakness overnight. We've had a 20-point intraday range today, so it's been a very, very tight range. You're seeing that in volatility basically unchanged here as well. NASDAQ down 70. It's been a little bit of a two-sided action, and underneath the surface you have obviously Tesla, moving to highs here. Amazon has been super strong. You had a little bit of a catch up in Google over the last 2 or 3 days. Apple new highs, almost 250 here, and then on the other side you got like your Nvidia, which has been kind of stuck in the mud. Some of the smaller tech names, some of the ones that have like moved a ton. Not that APP is part of the S&P 500. It is not, but stocks that have moved like this, kind of given it up a little bit, and a little rotation into some of the bigger names is kind of what it's felt like. Yeah. Dow down 67. You got the Russell down 18. The Russell, the weakest of the group. Oil has been at the higher end of where it's been trading, up 10 cents now. It's almost 70 here. It's had a big couple days here in terms of range, $2 or $3 each day. You got volatility futures basically unchanged here, 1620. We did have that roll, which is why they're higher now than what we talked about a couple days ago. The VIX is basically unchanged as well. Bonds down 18 ticks, rates going up a little bit, and maybe a hot PPI today. Who knows? Gold and silver both giving it up a little bit. Gold down $47, giving up 2 days or so of price action. Silver down $1.18, and Bitcoin has stayed above the 100,000 mark for 2 days now. It's sitting at 101.8 on the spot futures at 102.3.
Beautifully said.
PPI did come in a little hot.
It did.
0.4% relative
Yes.
to 0.2%.
Yes.
Yeah.
Yep.
What a world.
That's it.
Yeah.
What are we doing?
Let's do a couple
trade
trade
ideas?
trades.
Beautiful.
Why don't we? How about we do it? Let's do it now. All right. Let's kick it off here. I did an earnings preview on Adobe.
Nice.
And I posted that to the News and Insights tab. I've got one for Costco today as well if you want to check that out. But
Are you Costco members?
I'm not, but I've been getting that
well, now
thought in
you're
my
close.
mind.
You're closer to one. There's one on Ashland.
Are you a member?
Indirectly, but we could become members
I was
together.
gonna
Can you adopt me and you're a
Splitsies.
membership?
Because apparently
Are
the
you a
gas is
Costco?
much cheaper.
Gas is cheaper.
Yeah, gas.
But I like to go to
I don't
Lake
drive
County.
that much.
I like to go to Lake County to get my gas.
You can do that.
You're golfing?
Yeah, when you go out there, yes.
Yeah, anywho, sorry to distract. Okay, so Adobe write-up, Costco write-up, and then your Adobe trade.
Yeah, so Adobe had earnings yesterday after the close, and one of the pain points for Adobe, according to the stuff that I found on the interwebs, was that they're having a hard time differentiating where their AI revenue is going to come from, with competitors like Meta and other companies doing better. I actually didn't read the report, but clearly the market is saying, no, we're not investing in this thing. It's down 70 points today, down 12%.
Over 2 times the expected move.
Over 2 times the expected move, easy. So fortunately, I did not participate in this earnings announcement. I'm not sure that I would have played it to the upside anyways, because it was kind of really a murky, like nobody really knows what's happening here. And even in the previous report, they didn't really have any signs of like positivity from the people that were talking. But either way, luckily avoided this one, but now this move is a little a little large. It's obviously a massive move. So I'm going in and I am placing a slight upside trade here. And I'm just fading this huge move. I'm just looking for like a 10, 15 point reversal here over the next couple of weeks. So I went and I bought the 500 call calendar. So I bought February 500 call for $1,600, sold the Jan 500 call for $900. So picking up a ton of premium relative to the time associated with February. And I got in at 742. So this risk graph is pushed all the way to the January expiration cycle. Not planning on holding it that long at all. But if we get a reversal of 10 or 15 points, this will likely be up $100 or $150. So that's the goal here, is just placing this slight upside trade, reducing cost basis aggressively on the long option with the sale of the short, and looking for a slight reversal here, closing it for a $100, $150 winner.
Beautiful.
Interesting.
It is interesting, isn't it?
Yeah. Yeah.
Interesting.
I feel like this is a company that, not that it's, I mean, it's cheaper now, obviously, very much cheaper. So I don't like the contrarian play, but it's like there's so many ways to, even we were just talking about Shelly generating those.
Right.
It's like there's a lot more competition for Adobe than there used to be.
Yeah.
Oh, yeah.
Like just a couple months ago. So it's one that's, I think, is in the crosshairs.
For sure.
Yeah.
I like it. Short term.
Short term.
I like it.
Yeah.
Dig it. Dig it, dig it.
Beautiful.
So we shall see.
All right. What is on your radar, Mr. B?
I did this kind of quick, in and out of little meetings and stuff, but I was thinking if you've looked at the market, it's at all-time highs. But there's a sector that is not participating in such movements, and it's the semiconductors. You have NVIDIA. It's trading near the lower end of where it's been trading over the past 2 or 3 months. It is kind of fallen out of favor to the Tesla move in terms of like the call buying bonanza that it seems to rotate between those two names. You have AVGO earnings after the close today. Broadcom, which is is one of the biggest chip makers, just behind NVIDIA. It's 8% of SMH, NVIDIA being 22%, TSM at 13%. So those three stocks make up about 50%, or a little bit over 50% of the SMH ETF. And they've all kind of been chopping around sideways. I know AVGO had a big rally yesterday. It's kind of giving it up today. I'm basically neutral delta in AVGO, but I'll pick up long delta tomorrow because I have crab trade into earnings. I'm long delta in NVIDIA, and then I'm putting on some long delta in SMH. So I'm all in on the chip space. I think maybe if you get sideways / up move in AVGO tomorrow, you maybe get a catch up in NVIDIA, which is kind of at lows. Like I'm thinking big picture. If you're bullish the market and you think the market's going to go up, I think these stocks have a little bit of a catch up after the last couple weeks that we've seen of the other big names that have gotten back to highs. So I think this is an opportunity. Long-winded way of saying I'm getting some long delta. I'm doing a call diagonal spread here. Stock or the ETF trading at 242. I'm looking at the February 250 call, buying that one. I'm selling the January 260 call against it. You got about $7.35 debit on this trade. It's $10 wide, so you got about $200-$300 in probably target profit is what I would look for here. It's a $735 debit, which is equal to the buying power used here. Gives you that 20-ish long deltas with a little bit of positive gamma. I don't know. I think it's the move. You got low volatility in the space. NVIDIA Ivy rank is 17 right now. I could see there being an upside catch up, assuming AVGO earnings in sympathy are sideways to up, which would also be good for my positions.
Fair enough. All right. Again, sound logic.
Thank you.
Nice.
I like it.
I like it.
Jan.
Yeah, it's like I don't know. It's hard to find stuff to get long that isn't at highs. And when you look at this, it got up to 190 4 or 5 months ago when we're trading at, I'm sorry, I'm looking at a different stock. We got up, to about 280, 290. We're at 240 right now. So I don't know.
All right. Ain't nothing wrong with that.
Thank you.
All right. Well, alongside doing the show with Ryan yesterday, I also did the show with Chris Vecchio.
What were your thoughts?
So it was interesting because I was saying to him, he's kind of our New York satellite office representee, and we hadn't seen him since we did the New York show back in April. So it was a really fun learning experience for me because even though we are both content creators, my day-to-day interactions with him are pretty limited. So it was kind of fun to discover what his approach is and his method and all of the different types of tools that he uses. Our setups are just so different, right? Because I was indoctrinated by Tom and Tony.
Yes.
And he just comes from a different world. And that said, we were walking through all the different asset classes, and one thing that he kind of said that resonated with me was that he actually thinks that there's still some more upside to be had in metals.
Okay.
And I made the joke of okay, well, this whole year I've been completely wrong on metals, particularly gold. But in this instance, I'm kind of trying to take that same logic and apply it to silver using the silver ETF SLV. So you guys have seen this from me before, but it's just the classic zebra stock substitution style trade. So I am actually long 2 of the January 27 calls, short 1 of the January 29 calls. I got filled right here at $300 in terms of debit. So that's of course what you can lose. And so it's just kind of a small way for me to participate in his reasoning to me yesterday in a way that doesn't break the bank. So that's what I'm doing. And I mean, frankly, today silver is down almost 4%. So if I am going to do a bullish trade, it's a decent day to get into it. Silver historically has been a little bit more volatile than gold. So hopefully, if I am correct on this trade, I will see it relatively soon. But 36 days to be right.
I like it.
I'm in a similar position, but I don't have a gold position. I closed out of that, I think, middle of last week. So I put on a gold position as well on the upside.
Okay.
So I'm with you.
Yeah.
I'm with you on silver, but also nibbling on some gold.
Yeah, sure. And yeah, gold down almost 2% today.
Big move.
The difference between, my approach in SLV is that in the gold futures options, they're slightly more liquid than the silver futures options.
Mm-hmm.
We've all traded the silver major futures options before, but they're just not as tight. So that's why I just tried to downsize it into something a little more digestible to me, particularly over, the next 4 weeks. It's really busy around here at Tasty, even though it feels like things kind of slow down. It's actually a very chaotic time for marketing and, content, of course. So it's an easy way for me to kind of just participate without having to do a whole bunch of management and oversight.
Well said.
I like it. I'm also in it.
Nice.
And speaking of gold and silver, yesterday we talked about turning my 250 call calendar in gold into a diagonal. And it was in the money. It was at 251-ish, 251.50. So the roll to go from 250 to 255 to the end of the month was like $1.20 debit. I just made that same roll for 40-cent debit.
Cool.
So I'm now in a 250, 255 call diagonal for less than $5, 422. So I'm now long silver, long everything else, long the world, long everything.
Long the world. Here come the aliens. Here the drones are
the
coming.
drones could be aliens. Who knows?
Listen, I've been long aliens for years.
I'm actually shocked that Victor didn't bring that up during his segment today with Tom and Tony.
Oh, he didn't?
I was because Victor is
alien guy.
Well, he's just a bunker guy. Like he's
bunker guy.
He's just ready to
for the grid to go down.
Yeah, exactly. To like Last of Us type thing. Like he is prepared for like the zombie outbreak. He's got like guns and food and like all that stuff in his bunker. Provisions. He's ready for that. So I was surprised he didn't have any conspiracies on the drones.
I won't make it.
You won't make it?
No. As soon as something's coming. I'm not trying to.
Don't worry, Katie.
You'll protect me.
I've got so many little bags of ramen. You can come eat those with me before you go.
The way he eats ramen, though, it's like 1 week's worth.
Yeah.
So
well, we'll have to ration ourselves.
That is true.
All right, well, a couple two-tree trades.
What a world. Yes, 1, 2, 3 trades. So yeah, just to recap, We're long silver with a silver call zebra in January. I'm slightly long to neutral Adobe after the earnings move with a 500 strike call calendar, long February, short January. And then we're long SMH, long the 250 Feb, short the 260 Jan. So
Nice.
long.
Long. All right.
Beautiful.
Speaking of longs, I also followed Chris into a long Russell out of the money call spread. You like how I breadcrumbed that?
Okay. I'm okay with that.
His approach is that as we go into the new year and as we change administrations and as, we don't necessarily think, obviously we have a Fed announcement, next Wednesday? But his thinking is that I think there's still a little bit more upside to be had in equities, even though they are at all-time highs. And so I was like, well, how do you feel about the small caps? Do you feel any differently about those as opposed to, the tech names and all the things that we talk about day in and day out? So he has on this small out of the money call spread that I think he's already taking heat on, but I thought it was an interesting way to kind of participate in a very teeny tiny way. I paid $400 for it to potentially make like $2,000.
Okay.
So I
in
have
the Russell futures.
in the Russell futures options.
Oh.
I've got the 50-day, so we're going to the end of January.
Okay.
25.75, 26.25 long call spread.
Okay.
So had those deltas. I think I bought them when 25.75 was probably like a 20 or a 30 delta. Now, of course, we're taking a little bit of pain today, so I'm down on the position. But yeah, I just kind of wanted to follow him into something and show solidarity for my new futures buddy.
That's an interesting trade.
Yeah.
I don't mind the little shot trade.
Yeah. If you literally think about it, it's $100 more than the put zebra I just put on, right?
Yes.
In just a different type of directional strategy.
Yes.
And
But
if
lower
Santi-
probability. So
Lower
you need
probability.
there's not the zebra, you have a little bit more wiggle room to take profits and it's going to be a slower move. And this one, you got to, this one's a shot trade, which I like. And I
Exactly.
think that's I think it's cool that you put that out.
Yeah. 50-50 probability for the zebra as opposed to something that was probably like 30% probability when I put it on yesterday. And now it's 20%.
Yeah.
But you got time.
Yeah, if you get a rally in there, this thing can multiply easily.
Yeah, so we'll see. Haven't done the Russell futures options in ages either, so.
How is the liquidity? They look pretty tight here,
So
but
they're
there's not a
pretty-
ton of open interest, but
Yeah, they're pretty good. So I think 50 cents between bid and ask is like $25. So, and then you kind of can apply that same logic to the rest of these. Of course, as you add more legs, that's where the slippage really starts to sneak into the trade, right? So just be thoughtful and particular about your entry price. I wouldn't chase it too much, but liquid enough that I didn't feel deterred.
okay. There
you go.
Very nice.
So that was my logic for Wandara, who asked me.
Yes. I like Katie. Katie make me sad.
But so sad.
It's 50 days out, though. Plenty of time.
Yeah.
That's well within the Santa Claus rally.
Yeah, we'll see.
This is a world we live in.
We're
It's
gonna.
just so stupid.
January is gonna be a very transformational time.
Yes.
So who knows?
YouTube TV is increasing their fees by $10 a month.
Oh, what
Really?
the heck?
Ooh.
A lot of backlash on the Twitters.
What the heck?
Well, I saw. Aren't they increasing the sports package too? I think there's something
Yeah,
that they're
and they
doing
don't. They're just don't have as much exposure, but they're increasing the price.
Yeah.
It's not ideal.
there. Yeah.
Everybody's increasing their price.
Yeah. Inflation, baby.
Money printer go burr. Yes.
True.
Yes.
All right, who's next?
Yes. Continuing on with the YouTube chat, if you want to join us there, just go to Tasty Live, streaming live. I got the Cherry Picks link for your newsletter at the top of the YouTube chat. You can get that for free. Comes out every Tuesday. But let's kick it off with Thomas. Question on rolling iron condors when IV has dropped. Roll is then for a debit. Just hold the iron condor or sell the 20% remaining extrinsic value. If you have an iron condor and it's in the money, we do nothing. There's nothing to really do because we're not paying a debit to roll out in time.
Adobe
To still need a directional move, increase our max loss, reduce our max profit. If you still have time left, like if you're in like December or January or February, there's plenty of time for reversal. If you're in the weekly, this is kind of what you sign up for. If you're selling weekly defined risk credit spreads, there's nothing to do if it's completely in the money. So hopefully it's in January or February, in which case we would just hold on to it.
Yeah. Or you close
the call side.
You close out the call side, or you could close out of the entire position and take that risk off the table. But there's no like management really you can do once you get at, it sounds like he's at like a straddle. So he probably has some sort of iron fly, whether it's 25 points wide, like I pulled up here, or 10 or 5 or whatever. It's trading at $22. You have $2.50 left of risk. I mean, that's how you should look at the position, is like, do I want to risk that $250 or do I want to take that off the table, and use that capital elsewhere? That's, a subjective thing for you.
Yeah.
On a move like this, though, we talk about like the risk reward moving forward and the asymmetry of what you can make back versus what you can lose. Like over the next 3 weeks, if the stock stays below 500, you probably lose 50 or 60 more dollars on this 25 point wide iron fly. If you get a 20 or 30 point rally, you probably make back, $3, $4, $5. Yeah. So your risk reward moving forward now with the risk on the table, which is booked already, is much less than what you can make back.
Right.
So that's why we say, we typically hold them, because you can only lose so much going forward.
Yeah.
The loss is already baked into the position.
Yeah, for sure. All right, from Chuck. Is that my dad?
Could be.
Could be. I don't think so. I don't think he understands what leveraged funds are.
Oh,
Lovingly.
No. Yeah. I think he was in one of them.
Well, I mean.
Wasn't he in SMCI?
Yeah.
Well, yeah, but I thought he was like I thought he did TQQQ.
I don't think so.
Okay.
Anyhow, sorry.
All right.
I know this is not Chuck, my dad, but how would you emulate a leveraged fund like TQQQ using options? Would a 70 delta leap call on the Qs work? Sorry, I'm not trading futures yet. No need to apologize.
Yeah, you can't. The leverage on these, you can't really replicate that on a non-leveraged product.
Mm-hmm. That's the 3. Is that the 3x?
I think they've all moved to 2x.
Yeah, I mean, the Qs from the bottom, I'm just reading from the bottom of August to the top. The Qs are up 20%, a little over 20%. TQQQ is up 80%-ish.
That's if you time the bottom.
Exactly.
If you bought it before the bottom.
I'm just looking at relative returns. Like, Qs are up 20%. This is up 80%. So yeah, you're looking for leverage in the form of long options. Mm-hmm. It's just a matter of figuring out how many and for how long. But yeah, you can figure out a way to potentially get similar returns to the upside if you're correct. So like, I guess one way to look at it would be like looking at a January leap, like a 2026 leap, and see what options are up 80% on the move from the bottom to the top.
Yeah.
It's tough. It's definitely tough. But yes, if you're, instead of getting long a leverage product, you can certainly buy calls in the Qs to get leverage instead.
Yeah.
Yeah.
I would probably do it out of the money.
Yeah.
Because then you get the gamma. Because the position will get bigger. I think you got to be careful with this stuff, because I know we talked about it from the bottom. But if you bought the before the downside move, you're compared to the Qs, you went from 85 down to 45. We'll call it a 50%, down, pain. Mm-hmm. And now you'd be up 5%. When you look at the Qs, you go down 20% from 500 to 450-ish or 440-ish. So you're down, 20%, and now you're up 10%.
Yep.
So the volatility of the movements in a leveraged product is to the downside. And you need this sort of move, like basically a straight shot to new all-time highs to get back to flat.
Yeah.
If we had grinded if we had stayed down there for 2 or 3 months, you would be nowhere near back to a scratch on this sort of move.
Yeah.
So you got to be careful with those not long-term trade.
Yeah. But like looking at in the Qs, the 450, 400 day, the Jan 2026 450 calls, it's a very similar chart to the TQQQ chart. Like these calls, we're trading for 10 grand, they got down to 5 grand, and now they're trading for 11 grand. TQQQ was trading at 85 before the crash, got down to 50, now it's trading at 88. So it's very similar. Like you can use leaps to replicate leverage in TQQQ.
Yeah.
It's just like you got to figure out what your risk is. But obviously, if you're just buying a leap, you get what you pay for. The further out in time you go, the less volatile it would be against you. But still, it's very volatile.
Yeah.
Did you close your micro Canadian dollar trade?
Yes, I did. I capitulated. I'm waving the Canadian flag. I got out on Tuesday.
But what if we make them the 52nd state? that would moon their
It's actually
currency.
alarming how it seems like that's very pretty serious.
Possibility.
It's not a possibility.
Yeah. So just to
insane.
recap for those people out there that maybe were in that with me or followed me. So I was long the Canadian dollar a couple times because the buying power is relatively affordable. Like one micro Canadian dollar is $110 in buying power. So I think a couple of us had been, adding a few of those contracts to our position. My argument during the show was that, basically what I'm paying should be what I'm also willing to lose. And I let that run for more than I should have, as we all do. Well, if I liked it here, I've got to like it down here. Long story long, I think I covered on Tuesday for between two contracts, like a $300 and something loser. So kind of in line with the rest of my portfolio positions. But I'm just, trying to cover some stuff and look for re-entry. But it just has not been able to pop its head back out of bed.
I wish I would have followed you in that close because I have stayed stubborn. Smart.
Yeah, but I mean, so to answer like the second part of the question, if you do want to roll it out, you certainly can. They are starting to showcase the March contracts as the active contracts for the futures. So if you type in /MCD now, you will get the H5, which is the March 2025 contract.
I'm in the G.
Are you in the Z4s? You're probably in the Z4s. Yeah. So still, obviously, there's more volume in the front month right now. There's, 2,300 contracts versus like 700 in the back. But that volume will start to shift as those become the active traded contracts. But yeah, didn't work out just yet for the, what do they call it? The loonie?
I believe so.
Is that the Canadian dollar slang term?
I believe so.
The loonie?
Yes.
Yeah. Yep. All right.
In time.
Looking at Brett next. Last week you talked about an SPX short put strategy. Would you theoretically, that you would theoretically run if you had a much larger account? I remember this now. Is there a version that could be played in the XSP?
Sure.
Yeah.
XSP is 1/10 the size, not 1/20th.
Yes. Same size as SPY,
Yeah.
but cash secured.
Cash secured. Yeah, so there's no stock associated with XSP, so it's very similar to SPX. But yeah, totally.
Yeah.
The whole concept is just like making sure that if you're comfortable with the risk of the upside in XSP, you can get paid month to month to take the risk there, and you can manipulate it if it goes down. Like if you sold the 600 strike in January, and let's say you get tested there, you can buy it back in January, roll it to February, and move it to the 590 or something like that, and you still pick up a credit. So like you can manipulate where your intrinsic value risk lies. Eventually, if you're doing that and there's a big market sell-off, you're going to have to like plant your flag at a certain level. But yeah, you can manipulate your risk. You can get paid month to month as long as you're if you're comfortable with that risk. Whether that payment and premium is profitable or not depends on where the market is. But if you believe the market's going to grind higher or at least recover in time, then you just keep that premium eventually that you've collected. So yeah, XSP, totally fine.
Same thing.
Harsha, ARM giving me a bit of a hard time. I'm in the 125, 150 strangle. I don't have an expiration. Still inside my strikes, but call side is getting tested. Big up move the last 2 days.
Mm-hmm. Yeah, I think if you're in January, I'd probably roll it up. You roll to the 135-ish, 140 if you wanted to. Cut your delta a little bit. I guess volatility is not that high. It's a tough call. I mean, you're right at the money on the call. So if you're trying to reduce some delta, you got to roll up the put.
Yep.
And yeah, being in Jan, you could roll it to Feb and manipulate it quite aggressively.
And that would soften your deltas, like you're saying.
Give
yourself a little more time.
Yes.
Speaking of big up moves, really quickly, have you seen my Lifeblood stock today?
No.
Up 15%.
Wow.
Yeah.
What's the news?
They are talking about like separating and revamping their structure. So like separating like the studios from like the cable channels and all that kind of stuff.
I gotta say, I am very pleased with the casting that's going on with the Harry Potter series. I think a lot of the characters they're casting are very spot on.
Yeah.
Like, they're exactly who they should be.
Yeah. Well, I know some of the internet's never going to be satisfied is like the short answer.
No, absolutely not.
But yeah, I'm excited. And I was saying to Chris, my fiance, like, because, you know, he only knows Harry Potter because of me. Like, he was never, like, that wasn't his thing. He was more, I'm going to embarrass him, but like, you know, like Lord of the Rings and Dragon Ball Z and like Cowboy Bebop and like those types of things. And I was just explaining to him how excited I was that they were going to like finally share plot lines that were never in the movies. So yeah, should be good.
Like it.
I look forward to it. But yeah, up 15% today.
It's a big move.
Oh, by the way, the new Dune series is but The Penguin is the best show you need to watch in 2024.
I haven't seen it.
They're gonna win so many awards with that show. But the new Dune series
is very good.
Very good.
Okay.
Very good. You just love it
How
when
many
you like
episodes
watch
are out right now?
3, I think.
Dune Prophecy?
Yes. Yeah.
Okay.
Very good.
Would I get it if I haven't stayed awake to see both of the Dune movies?
Yeah, it's 10,000 years before Dune.
Okay.
Yeah.
So it actually
it's a
might help
prequel.
me.
Yes.
Okay.
Yep.
There's also been some movement in the Star Wars front, right? Isn't one of our boys like joining Star Wars?
Huh?
Like in the Disney shows?
I don't know. They did release a spin-off series. It's called The Scraps or something. I forget. But it's like the Goonies for Star Wars. It's actually pretty good.
Okay.
I put it on thinking it was going to be like hardcore, and then it turned into a children's show, and I was like, this is not what I was expecting. But then it was like, oh, this is like the Goonies, and now I'm going to watch this.
Nice.
Yeah,
I think like Jude Law is going to be in a Star Wars show.
Yeah, that's what I'm talking about.
Oh.
He's in it.
Okay.
Yeah.
Nice.
So it's worth a watch.
Yeah. Well, you know the girlies go crazy for Jude Law during the holiday season.
Of course. Of course. Closed my Unity 40 call in January today for 50% profit, just 2 days in. Love to see it.
Nice.
Vol expanded for no reason, and the contraction worked out well.
Yeah, I've still got that diagonal spread. 130 in January. And I got this 35 strike that's at like 30 cents here.
Mm-hmm.
What can I do here? Maybe,
Stonk giving me grief. I'm sorry.
I think I'm
Sorry that great minds think alike.
For what?
Stonk is just riding me about silver.
Ah.
But now we're all in it.
Yeah,
so.
we're all in it. I'm in it too. I'm going to roll this to a ratio spread, a call ratio spread. Volatility is still relatively high here.
I didn't know induced bankruptcy was a spell you could cast. It is. How do I adjust a coin straddle at 280 for December? Or should I just close it?
Coin. For December?
Yeah. 280 December.
Naked short? Do we know?
Straddle.
Yeah?
Yeah. Well,
you got to do, you've been waiting to do something.
yeah. I mean, you got the sell off luckily from the 340-ish range.
Mm-hmm.
But coin still has high IV, so you can move it to January. You could go inverted. So like even just buying back the straddle at 280 and rolling to a 280 310 inversion.
Yeah.
You pick up $3,500. You create a 30-point wide inversion. You remove a lot of your directional risk, and you would absolutely have well over $3,000 of credit because you're picking up $3,500 just for that move. So you can do literally whatever you want.
I thought it was in December.
They are in December.
December 280?
280. December 20th expiry. So.
Ah.
But yeah, you can roll to January and just manipulate it however you want. Because there's so much premium in January.
I think you got your numbers flipped. $5. $5 credit. You got the 280 straddle, you rolled to the 280, 310. Oh, you're saying 310 inversion. I guess it's the same thing.
Same thing.
Okay. Yes.
But yeah.
Okay. Yeah.
Yes, $5 credit. But yeah, you can move, you can do whatever you want in here. And if you go to February, you can definitely do whatever you want because you're picking up way more premium. But yeah, I think you got to move out of the 8-day because the 8-day is just going to move with the stock price. There's no extrinsic value helping you there.
Agreed.
Let's see, what do we got here? What do we think of yield max ETFs, CONY, for example? They pay monthly premiums, but I don't know the risks.
That is not my wheelhouse.
Yeah, you'd have to look up the fund. Oh, this is a coin option income ETF. So they're probably using short puts or covered calls. You can look up the.
Yeah, it's hard to do it live.
I'll do it.
But I would guess it's a covered call because they do these with like Tesla too. I think it's TSLL maybe, TSLY maybe. Yeah, I believe these are covered calls. And with anything else, obviously it's cheaper to just buy these than to own 100 shares of Tesla stock or Coinbase stock, but you'll be much more efficient and more flexible doing it yourself. I mean, these products are not special. They just come out because the layman investor can just buy them.
Yeah.
They understand what a covered call is. And they say, okay, I want that. Trades at $16. I can buy 5 shares of this or 10 shares of this or 50 shares of this. And I can't even buy, 10 shares of Tesla.
Right.
So that's, I would say, if you have the capital to just do it outright, that would be better.
Right.
You won't pay any management fees. Your flexibility with the position, you can choose what call you want to sell. I don't know what these funds do.
It's a covered call ETF.
Do they sell like
For
a 20
Coinbase.
delta call or something?
It doesn't say specifically, but they have
30
these for
day.
they have one for Tesla, Apple, Nvidia, Amazon, Meta. Like you can just do it yourself.
Yes. You won't pay any fees. You could sell shorter term calls. You could sell longer term calls. You can adjust the calls. You can have all the flexibility that we as traders have.
What about just buying like a fraction of a share of Coinbase?
Yeah, I think the added benefit of this is that it's a more accessible covered call.
Yeah.
Because Coinbase, you need the 30 grand to buy the shares.
Totally. And then, yeah.
If you have $1,000, then I see the merit of buying these.
But like honestly, this stock is down on the year
Because it pays out a dividend. So it pays out the whatever the premium is.
Oh yeah. Okay, yeah.
So like I said, if you have the capital, just do the covered call. You'll have way more flexibility, and you can do whatever you want with it.
Mm-hmm.
If you don't have the capital, sure. Just an interesting, thing.
All right. Who we got?
Dronin. CRM bearish. Call spread. 380, 385 short call spread for $1.30. Or a downside diagonal.
380.
380, 385.
Only see 380, 390.
Maybe in February? Nope. December? Nope.
Not seeing
Jan
any-
31?
Yeah.
Yep. Jan 31. 380, 385 for $1.30. Yeah, I think it's just fine.
So owes me some money. Spanked me on earnings. It's up like
yes.
3 times the expected move to the upside or something like that.
Yes.
330
Look
to
at that little slingshot.
370. I don't know. I'm gonna abstain.
But yeah, just be careful with those weird expirations.
Yeah.
They're not liquid. That 380, 385, the bid-ask spreads are $2 wide. I would just go to February and do a 10-point wide. If you can, if that's the risk you're willing to take.
Mm-hmm.
What would you do if you had an MU strangle December monthly 100 put 115 call?
Well, you took the shot. Been holding this for a while.
100, 115. So there's still premium in the 115 because they have earnings next week.
Mm-hmm.
If this did not have earnings, there'd be nothing in that 115 call. So if you're fine leaning long, I don't mind this. If you're trying to kind of neutralize this delta, you probably have to go to January, but then you push yourself out of the IV crush. You can see there's 100% IV associated with the 8-day relative to premium time compared to 59% in January. Expected move for next week is 11 points. Expected move for January is 13 points. So a lot of the premium is in the 8-day cycle. So if you're comfortable leaning long, I probably wouldn't do too much. But if you want to adjust it, you can go to January. You can manipulate the strikes.
Moves a little bit of the risk of earnings.
Yeah.
You collected $2.50 credit. You're still leaning long. You know, if you get a big move in either direction, you're a little bit less exposed. But either way.
All right, time for one or two more.
Rapid fire, go.
Who's next? Let's see. IWM. Oh, just kidding. That's not a trade idea. That's just saying that I am wrong. We will find out. That is.
It's what makes a market, Katie.
Exactly. I've been wrong before and I'll be wrong again.
Yeah.
So.
We could go with Thomas here, kick it off or round it out. What's the tasty way to trade earnings in AVGO tonight? Brian says we like diagonals and calendars. Yep, that is true because it keeps risk defined. You take advantage of the IV in the near term cycle. You kind of inventory premium in the longer term cycle. But it's still $180 stock with a 12-point expected move. So you got to be comfortable with whatever risk you take. But what did you did the call diagonal, right?
I have a crab trade.
Okay.
But I'm right at the money. So I'm long the 75, short 2 of the 85s, long 1 of the 200. So I have a little bit extra risk to the upside. It's basically a scratch right now. I was actually just looking at it. And the premium on the upside here, is very juicy. You could definitely put on a diagonal spread here, now, because my position hasn't moved, but it's $5 in the money now. that tells you the premium is getting bid here.
Right.
You could do something like the, 180 right at the money and do the 195 or 190, for a relatively cheap exposure to the upside to get 20, 30 deltas here. I was thinking for my position, maybe I just move where my risk is and take this and even go to move it 5 more points out of the money, go right at the expected move. Something like this is going to cost you $2 and change. Still not a huge amount because this value goes to 0 on tomorrow.
Mhm.
So, you get an inside move.
Right.
These move a little bit faster. I make way more than that on just the long options move. I don't know. Something to think about. But yeah, diagonals, crabs, calendars, something like that. No calendar. Boo calendar.
Boo calendar.
Boo calendar.
All right. Well, that takes us to noon.
Noon o'clock.
Noon o'clock? Chicken o'clock?
Chicken o'clock.
That wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie, Mike at Trader Mikey B, Nick at Trader Nicky Bat, also getting on Blue Sky. So go head there if you want to start to see some action as well. In the meantime, good luck, good trading, go football, go parlays. Peace.
Go football. No parlays. Never again.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Are you tired of one-size-fits-all financial services? Tasty Trade is a bespoke brokerage that tailors to the unique needs of your trading style and account size. You can trade stocks, options, futures options, and crypto all on the same platform. Find stocks that fit your criteria and analyze them with studies and drawings on our charts, or keep up on a company's events and performance with our in-platform newsfeed and fundamental data. No matter where you are, you can trade with confidence on Tasty Trade. Place trades and keep track of the markets with ease on our desktop, web browser, mobile, and tablet platforms. Having any trouble? Don't worry. We have the tools and resources to help. Check out the Tasty Trade Help Center to learn about our platform, trading concepts, strategies, and more. Forget the one-size-fits-all financial services and go with the bespoke broker that can help you grow. Learn more at tastytrade.com.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm. Okay, I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right.
I know it's on there. I know it's on there.
It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Do you
want to be KFC's power?
3.7. I gotta be real. 3.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it.
Pretty good.
Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983.
Yes.
It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
First, tastylive united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other tastylive traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We are back. It is Thursday, December 12th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, welcome back.
Good to be back, my friend. How you doing?
Doing all right. You know, it's another day that ends in Y. Stocks are a little bit lower, which doesn't make me too happy, but that's okay. Yesterday was a pretty good day for the NASDAQ, so we'll call this week a win so far.
Yeah, I mean, you know, these are kind of the days we're going to get towards the end of the year, right? Now, unfortunately, every day won't be like yesterday, but, you know, you would imagine there's going to be a little bit of pullback after yesterday's big move.
You were talking about an environment where we kind of scratch and claw higher here, looking at those calendar call spreads earlier, and it still seems that may be fitting for this environment. We'll talk about that when we make our way over to the equity section. But Jamal, let's have a little bit of fun here at the start of the show. We can go to the slides right now. Something unique happened this morning. The president-elect literally rang the bell for the New York Stock Exchange. You may say ringing the bell could be also a sign of the top. So I had to ask the question, have other presidents rang the NYSE opening bell? And if they have, what's happened to the market thereafter? And the answer is one has, Ronald Reagan, on March 28th, 1985. Now, we talk about small sample sizes, Jamal. This is a sample size of n equals 1. So we would take this with a very large grain of salt. But a week later, after Ronald Reagan rang the bell, the S&P 500 was lower by 0.22%. A month later, it was higher by 2.23%. And 3 months later, it was higher by 4.07%. Of course, the market rallied basically all through 1986. And for much of 1987, up until, I don't know, about October that year. And then something may have happened. But the point is that the president of the United States, or president-elect, ringing the NYSE bell, it is a unique thing that's happened. It's newsworthy. I don't know if we have enough data to say that we have a strong course of action hereafter, but the numbers are looking pretty good if we want to use this as any sort of indicator.
It's staggering to look at just SPX opens 179.53, right? Like, that's wild, first of all. Second of all, I absolutely dare you to bring this to Let Me Explain to Tom and Tony. I dare you. I really do. I can't. I would love it. I would just love to see the looks on their faces if you bring this to them.
I'm really bumming because today's a half day for me. I'm driving up to Boston for a wedding after the show, right? And I would have loved to have brought this up on last call today. So we'll have to wait until Let Me Explain.
Oh, God. I mean, it would just be so good. I mean, Tom would absolutely lose it. He really would have. He really would have.
You couldn't have a smaller sample size, to be clear, right? So opening up at once, you can't even draw like a line between two dots here and say there's, a linear relationship. There's no line to exist. But,
that's fun,
179.53. Yeah, sometimes you got to have fun with these things. But it was an interesting thought that popped in my head. And we can talk about Fed cut odds and inflation expectations hereafter as we wind into next week's FOMC meeting. But in any event, Jamal, 179.53. That was the number that stuck out. Instead of just noting the date, I think I'd point out how much lower the market was. And granted, it was nearly 40 years ago, but how far we've come.
I know. I mean, I honestly forget at times, where I really don't have a recollection of exactly where it was trading when I first started. Or, the only thing that really kind of sticks out is 2009, right? The bottom happened at 666s, right? Like, that's the kind of thing you remember. But outside of that, you really kind of forget. Exactly where stocks are, where S&P 500 is trading at times. And if you go a few days or 5 days or so and don't look at markets, you kind of forget too. It's kind of funny.
Jamal, let's get out of the fun and start talking about some of this price action today, which I suppose it's fun if you're a bear. Not for me, though. Yesterday, Jamal, we took the liberty of rolling the S&P and NASDAQ call spreads out. In NQH5, we tagged 22K on the long call side of the call spread strike, and with 20 days to expiration, it made sense to get some more time on that. So now that's been pushed up by another 1,000 points, long 23,000, short 23,500, 70 odd or 51 days to expiration as of yesterday. Same thing for the S&P, rolling it up further here because this is a market in an uptrend. And quite frankly, I just see a bull flag continuing to form this week above a former swing high. So unless we get below 60.38, 60.35, got to stay bullish, at least from the S&P 500 perspective.
Yeah, you know how I feel. Like I said, I mean, the calendar calls are my way of doing it. I think we are just kind of continually grinding. For the most part, the direction is grinding higher. And so I think it's an easy way to play using those calendar call spreads as opposed to having some heavier exposure on. I just don't think this is the environment for any heavy exposure in anything, honestly. So, I'm fully prepared that if there were a deeper pullback, sort of like what we walked into earlier in the week, if they were a little bit lower, heading towards that 5,900 level we've discussed previously, I would be willing and have the capital to be able to add and do something maybe a little heavier. But until we get that, I'm trying to keep it light.
Yeah, there's really, I suppose the only adjustment to the position is that instead of leaving the strikes 200 points wide, which I did last time in the ESH5 contract, long 6K, short 6,200, this time I tightened it up a little bit. It's only because it's not that I feel that the market is overcooked at these valuations, even though that is a compelling argument. I want to take down my overall risk exposure. So the risk overall in the position is a little bit smaller. The max loss would be smaller than if I had gone 200 points wide again. And it's because I think the first quarter has the potential to be, quite frankly, maybe not so great to start things off. It's a month where volatility typically rises, at least in January and then going into February. And so if we can find ourselves chopping through the early part of the year, I'd rather have some limited high convexity exposure than something that's like, let me put my chips in because I feel really confident that we're going to keep going up right now. One thing that stuck out to me, though, throughout this rally is that as we've set new record highs in stocks this week and throughout the month of December, breadth in the market has been flagging and not in a good direction. We've had more stocks declining than advancing for 8 days in a row. The last time that we've had that occur was December 2018 at the absolute lows of the market, Jamal. So I'm having trouble squaring these two things. My own concerns versus the fact that we've seen a market that basically has been as bearish can be internally, and yet we have not been dislodged from the highs. So then I guess we're going to keep going up. So stay long, at least in the short term.
Yeah, it's a little strange, right? The thing that I always use to look at that is the number of stocks in the S&P 500 above their 50-day moving average. I like looking at that metric. Usually if it's, and again, we have that one on the platform, that SPX A50R. So I look at that all the time. And I've been thrown off by it. And it's really happened since the beginning of this month. We've really dropped off kind of meaningfully. I mean, we were usually if that metric is upwards of 70%, we have pretty good breadth, and right now it's around 50%, and it's kind of strange, like you said, when we're at all-time highs, and you see that happening. So last time we saw it, like that was before the election actually. So it's kind of strange. I can't put my finger on it neither. I haven't really looked to see like what names are weak and what industries are weak right now. But I'm sure if we did, it would be a fairly easy exercise to go through and just look at, like which industries are down in that way. And I'm sure that has something to do with it. It's probably related to what's going on with interest rates and expectations for next year or something like that. It could be utilities. I'm not even sure, but I'm positive that's what it's related to, and that's why we're seeing some names weaker than others. So I don't know what changes it. I mean, maybe again, this is just something that kind of flips itself once we get to January, but it is kind of strange right now to see that.
At the end of November 29th, 82.1% of their stocks in the S&P 500 were trading above their 20-day moving average, their 1 month moving average. We're now at 36.77% coming into today. Outside of a handful of occurrences in recent years, and I say recent years, since the start of 2023, when the bull market is picking up, you don't see many instances where the number of stocks below the 20-day moving average dips below 30%. And so we're unless there is a market crash coming, points this year, at least in the past year and a half, the only other times you get this metric below that would be really around the moves that we had in April, and then at the lows last October. Otherwise, you start to get into that 30% stocks below the 20-day moving average. People see the market as a discount. And what I find remarkable about this is the market is actually higher now than where it was at the end of November. Even if it's been a lot of chop, it has been a chop to the upside. So we've digested a little bit here. There has been profit taking, and instead of it being a correction in price, it's really just shaping up to be a correction in time. Just we're moving some money around into different corners of the market. But overall, the money isn't leaving the stock market. It's just shifting back to the big guys right now. Which, we can have a conversation about whether or not market concentration is an issue. But this isn't necessarily a problem here in the short term. If anything, it looks like we could be looking at a swing to the upside sooner than later.
That's actually what I was just about to say. Oddly enough, that is the thing. Like if for whatever reason you do have a turnaround in this metric, I think you're going to see markets. That's what's going to push markets to new highs, right? Like if you all of a sudden get participation from those who are weaker than the rest right now, that's when you're going to get swings to the new highs. So that's something to keep an eye on too.
Jamal, how do you make of this NASDAQ push? It's been leading the way here in recent sessions, obviously taking a step back today. But, that's a really nice little rebound here. We kiss that 1 week moving average right on the cheek and then bounce away. This is a nice looking little hammer candle that's coming into play here. Yes, it's an inside day after yesterday's push to all-time highs. But I don't see anything wrong with this chart whatsoever that tells me that we're still not going to the upside.
Neither do I. It doesn't look too overextended. I mean, it's just kind of in the midst of a breakout here. And you remember when we were talking about this months ago and whether or not we needed NASDAQ to push higher to get markets to new highs? I don't know if we needed it, but it certainly did its part in helping us get to new highs. So
doesn't hurt.
Yeah, it doesn't hurt. It certainly doesn't hurt. And again, I mean, I think this looks really good. Honestly, you're having a pullback after a big day. I think that's always kind of a good thing. And it's not even for any given reason. It's just like, okay, let's take a little breather here. And even if that's followed by some tomorrow, but it looks good towards the end of the year, honestly. And I think that's exactly what you want to see.
It is. It's a 4.4 IVR, right? As we came into the month of December, when we started to break out of the symmetrical triangle and push into ultimately ascending triangle resistance, the three tenets remain. Volatility was low. There was positive technical drift and momentum, and we were seeing low trading volumes. The scratch and claw market melt up kind of environment. And I think that view's been vindicated. And there's really been nothing that's come along to suggest one of those three, legs on that stool of market melt up has been kicked out yet. The IVR is still 4.4. Momentum is still positive, right? We have stochastics here hovering in overbought territory. It's been a hallmark throughout this entire rally, not just this year, but the past 2 years. Long periods of time when stochastics are overbought are typically during melt up conditions in the market when volumes are low and volatility are low. And we have that here. So there's a little bit of agreement across the board right now on the characteristics that remind me a lot of what was happening in Q4 last year and Q1 last year. Obviously, April presents a different issue for Q2, but then you go into Q3 again, Q4 so far, it's been spikes in volatility get sold, volatility gets pushed lower, volume gets sucked out of the market, technical momentum gets positive, and there's really, you don't want to fight that market on someone who would want to be operating on, say, the short delta side. So stay clear if you're a bear. Still, it's a difficult environment to operate in right now. You're just arbitrarily picking a top.
I totally agree. I mean, I don't think there's any reason to, just because we're at all-time highs doesn't necessarily mean it's a reason to short. Matter of fact, when you have this environment where there really is no real wall of worry, you got volatility is fairly low, and markets have ascended to all-time highs in a very sort of simple fashion and such that they didn't get crazy and carried away with this just complete blistering rally. I think it's a time to either remain long, or I can understand if you want to remain on the sidelines too. But again, I like the way that I like the way that I'm doing it, and such that sort of playing the covered call way, and it makes it a lot easier for you. It's not very taxing. It's not very capital consuming. So I kind of like doing it that way.
I'm trying to remember if it was Chris Peruna or Ryan Detrick on Twitter recently. They put out a chart showing what the forward returns were a year later for investors who purchased the market at various intervals relative to the proximity to 52-week highs. So it's like if I were to buy stocks and hold them from a year when we're 20% from 52-week highs, what's my 1 year return? What about 10% below all-time highs? What if I purchased the day that the market produced a new 52-week high or a new all-time high? What would my forward return be? And in every single case, buying the market at all-time highs produces the highest 52-week forward return. It's better than buying the market 20% cheaper. For whatever reason, this is just how history has worked out. When the market's at highs, it typically begets new highs. So as a momentum trader, as a trend trader, this ain't anything. Tell me the trend's over.
That's a hard thing for a lot of people to do, and I get it. I mean, I can understand that. It's certainly often I feel like we're waiting on the big pullback after market hits all-time highs and it continues to push higher. That's why I say again, I mean, I think a lot of people you're better off sort of doing it in a very less capital intensive way, sort of like that calendar call, if you will. And again, you can do multiples of those. You don't have to do one. I mean, actually, I look at it from a premium standpoint. How much premium am I putting into it? So you can do it like that way, or you can just sort of, you can wait for the pullback, but who knows exactly when that comes. And at what point do you jump in? I think that's what most people try to do. But
what strikes are we working with here? What strikes are we working with here on your calendar call?
So, I mean, well, I'm actually doing it in SPY. I'm not doing it in any one of these. But let's just say you do it in ES or SPY. Or what I'm actually doing is, and I put these on a couple of days ago, bear in mind. But so I did it wrapped around 610, right? 6100. I did the short December, regular December expiration. And again, it looks, one way now, but or you pick your expiration. It doesn't really matter. But
okay.
Yeah, you can do end of the year. That's fine. Short 61, 610. Yep. And long, whatever. Let's say January. You could do January in this case, obviously. That's only 2 weeks, but works. Right? 382 as of right now. You could do, obviously, if that's rich for you, you could do 615 strike. You could do the 620 strike. Maybe you get to a point where they're under $2. Maybe you get to a point where they're
Yeah, you probably have to go 618, 620 to get to under, under $300 buying power. But even so, right? Like you're thinking about the structure of the market right now. The important thing, I think, as we've learned and try to reinforce all year long, is that we don't really need to make predictions about what we think is going to happen. Our job is to read the tea leaves of what the market's telling us and find the appropriate strategy to apply. And in this case, Jamal, if it's a slow melt up, grind up kind of market, what else is there to do, right? So it's the exact appropriate application here. You and I are taking a look at this problem 2 different ways, but it's the same expression of slowly grinding up.
Absolutely. And again, if you do 5 of these, that's just, a little more than $1,000, right? You can compare that to buying the ES outright, and then you're more directionally sort of tied to that. Whereas like you buy 5 of these, that's $1,000. And again, when the market pulls back, yeah, you're going to lose money on those. But again, you have a longer term, you have until January to really make good on this, right? For the most part, if the market does take off in some way, well, first of all, if it takes off, you're going to 6,200. I mean, that's a fairly big move. If that's not going to happen all in a couple of days. And so even still, you want these eventually to be worth like $3-4 maybe if you start to grind higher, right? You figure what helps you is that the near term is upside. The 620 that's upside in the January 31st expiration. That's never going to be worth more than this January 17th expiration, right? So that's what you got going in your favor. That's the thing. The one thing about this is that looking at it on the curve and the analysis is not really going to give you that much of an idea of how it's going to play out for you. It's the biggest thing is P&L FIO might, it's going to kind of give you an idea, but you really kind of got to, understand the fact that you're the one that you're long further up in the upside and in the January expiration is always going to be worth more than the one that's in the January 31st expiration, right? A lot of times by at least $1. So you got that going for you. But again, this really works in a grind up situation. I've done these a bunch. I do these on earnings, plays, et cetera. And when you get a couple of them on, it really kind of works out well for you.
Jamal, the one thing that's kind of sucking wind in the equity market today, because I consider losses of 0.2% to be really nothing, just like I consider gains to be of 0.2% to be nothing. The Russell, we're seeing a little bit of a steeper loss down by 0.76%, but vol continues to come in. The IVR high for today is lower than it was yesterday, which I think is noteworthy here. We also see that on this 4-hour time frame, we could just be putting in a flag of sorts, just like we have been with the S&P 500. Now, the case is a little bit less compelling, and even though I'm still long here or long deltas here, the breakdown in the chart after filling the gap has been pretty consistent. So, for new entrants who are looking to do something right now, technically you're not really back in the clear until you get back above 2420. If one's looking to operate in the typical tasty way for long delta exposure by selling puts, the Russell is really the only index that gives you something viable to work with in terms of volatility right now, because it's dead in the S&P and in the NQs right now. So you got to pick and choose your fights right now. But I think these are flags, and so I'm going to retain my long deltas, even though I'm not planning on trading tomorrow because I'm going to be traveling, and then next week we start to get into the Fed meeting week, and then what is there the rest of the year, Jamal? And that's it. Then we're really talking about January 10th being the next meaningful day for market news when we get that non-farm payrolls report.
Yeah, and as we sit and look at this chart, I mean, this is actually not this one, I'm sorry, but Russell 2000 and the Dow actually kind of explains our breadth problem, right? When you see sort of the near-term fade in Dow and Russell versus these peaking charts in ES and NQ, that kind of gives you an idea of why we're only sitting at at a 50% rate of stocks above the 50-day moving average for the S&P, or just lower breadth in general. Clearly, those stocks have certain stocks have kind of struggled a little bit in recent times, but to say struggle is even a I don't think an accurate word, honestly, because I mean, again, Russell 2000 is sitting near the highs of the year. It's not too far off those highs, and the same thing with Dow. So just something to keep in mind.
Yeah, the Dow looks a little toppy here. We can't ignore the fact that its largest contributor, UNH, has had its turn in the barrel, to handle this lightly, since events that have transpired in recent memory, Jamal. 521.64. I did have put spreads in here that apparently I got out of too quickly last week, but c'est la vie. Nothing else to do. If this keeps going down, though, that's a problem for the Dow. So we talk about the wonky weighting of that index. And so I don't pay too much attention to it. I'm more interested in the fact that the Russell is struggling so much today. But this, either way, we're talking about the same issue, which is the fact that you have indications on your screen. You don't even need to go to one of the fancy tickers that we have under the indicators tab there, right? You can just see the fact that the small caps are struggling. They're underperforming the mega caps. You can go to QQEW here, equal weighted NASDAQ. This is actually performing quite better today, as is RSP, which is only down by 0.08%. This is just a day of churn. I don't really think we can make much of it.
That's exactly what it is, man. And I like you said, I think we got more of these ahead. But I'll take a day of churn after we've had, ES and NQ basically sitting near highs. I'll take a day of churn, no problem.
I'm happy with churn, particularly because it's coming after I got out of positions when the markets were at highs yesterday, and I got myself more duration. So, hey, we want to pull back for a few days here, but I'm not going to be sweating. I'm not worried about being on the wrong side of the decay curve. Jamal, bonds remain weaker here, naturally, of course, because I got long a few days ago, and since then it's now down 4 straight. Yeah, well, 4 straight days since we got
thought about
here.
it today.
This has me questioning everything again. First off, rationale behind the trades. Volatility was in the tank. IVRs were, flashing negative symbols a few days ago at various points. And given the fact that there's been a negative correlation between bonds and stocks in recent weeks, acting under the premise that if we are no longer in the reflation trade environment and instead focus purely on fiscal policy, then the upside scenario for bonds or notes, in this case ZN, would be recession fears. And if you have recession fears, you're probably going to get weaker stock market returns moving forward. So being long deltas in equities, having some long deltas in bonds felt like a decent counterweight. But it's been 4 days lower now. We had a on the screws CPI report yesterday morning. PPI was a little bit warmer today. But the 10-year note auction yesterday was astoundingly good. The 30-year bond auction today was not good. It's just a hodgepodge of things. Now, Fed cut odds are up to 96%. Right? It's a hodgepodge of things that are conspiring that should, in theory, be good for the bond market for treasuries, and yet it's not. And so that leaves me really grasping for straws right now. I have plenty of time for this position. I'm going to hold on to it still, even though it's sucking wind. There's 71 days to expiration. It's lost 50% of its value as is. So what the hell, Jamal? What's another 50% between friends? But there's so much time that it's the whole point is it's not really, it's there in my pocket to protect the equity side. So if this goes to max loss, I'm going to operate under the assumption that it means the ES, NQ, RTY positions are doing fine.
Yeah, I'm going to wait. I did look at this today, actually, and I was like, ooh, wow, a couple of days in a row here. That usually kind of piques my interest. But I think I'm going to wait, Chris. I'm going to wait. I'm going to get back to kind of fundamentals here for me and something that I talked about probably about a year ago in this time, whereas like I want to wait for the crescendo, right? I want to wait for everybody talking about how low bonds are and how much of a buy these are and, or vice versa. And so I'm going to wait a little bit more for that sentiment to hit these bonds here before I jump in. But I will say these IVRs are fairly low, and seeing this reaction over the last couple of days is really interesting. But I'm gonna wait a little bit longer.
ZB, I'm grateful that I'm operating as ZN rather than ZB because ZB has been taking it harder on the chin than ZN has here in recent sessions. And that little zone that it looked like we were breaking through as that downtrend from the September, October, November swing highs breaks, that's been completely busted. We've returned below that. The uptrend off the lows that we had a few weeks ago, that's been busted. There's just a lot of technical damage coming into play right now, Jamal. So, one of the questions that I think every trader should ask themselves is if I were laying out fresh capital for this position today, would I take that trade right now? And for me, definitively, the answer is no. The technicals look like crap. So why would I want to be long deltas in something where the technicals are so rubbish? The answer is you wouldn't. But I have a specific context here. This is meant to offset equity exposure, perhaps insulate me a little bit as I run up the scoreboard there. So I'm happy to keep this on, but it's not something I would do if I was looking at it in a vacuum in isolation now or probably through the end of the year. You know, you have, I think you have the right approach. I'm just trading something for the sake of trading it.
Yeah, I've been there too. I've totally been there too. But the fact that you have it against other stuff, I mean, that makes sense, right? Like that allows you to keep it on a little bit longer, and it's not a must-win trade. It's against other things. So I like that idea as well.
I don't like the idea, but we're doing it. Metals dinged hard here today, Jamal. Silver scuffed pretty substantially. 3.86%. Holy, return into the range, Jamal. That's not good. No bueno. Our rule of thumb we go over many times is that when you return into a range after breaking out, you typically move to the other side. And along the way, as we break down here in silver today, we see that silver prices lose their uptrend off the lows that we have November and December swing lows so far. Jamal, that's a really ugly chart. Mm-hmm. So all that hand wringing I was doing a few days ago, kicking myself for getting out of my silver positions, and then the market, of course, turned higher. It's like, should I get back in? No, don't chase. Okay, well, maybe I was smart to get out.
It looked like it happened right around 7:30 Central, 8:30 Eastern. So, I mean,
PPI.
It was PPI, clearly, that had an effect on it. You know, I guess I'm not too surprised in a way, but it just looked so good more recently when you just talk about it from a technical standpoint and the way the chart was bouncing. Now, that said, I don't think the uptrend is completely broken yet, I feel. I think we still have an opportunity, but yeah, it sucks. I mean, because we had just gotten really convicted on this trade again.
It's, excuse me.
Don't die on me, Chris.
Got too excited.
Although that would make a great ratings.
It would. PPI this morning, it was expecting at 0.2%, goes up to 0.4. Interestingly enough, the market says this isn't going to affect the Fed's near-term path of cut odds. We're up at 98.1% right now from 97.5. But PPI comes in hot. You also have an ECB that's pointing out that they only cut by 25 basis points where the market was looking for 50 as well. So perhaps some over-leveraged expectations heading into an ECB rate decision this week. But the ECB itself, it did make an interesting note because, you know, looking at being one of those neurotic types who reads every line of every single central bank press release, you may say to yourself, Chris, get a hobby. And I say, yes, I should probably get one as well. I would point out here the ECB says it's no longer, or rather, let me rephrase, it has formally dropped its reference to, quote, keeping policy rates sufficiently restrictive for as long as necessary. And I find that to be a really interesting statement here because it sets up a dynamic in the currency market where we are now looking at a wedge between the Fed and the ECB for the foreseeable future, whereby the Fed is at the end of its rate cut cycle. We're talking about, do we have one left? Do we have two? How many will he give us in the SEP? Whereas the ECB and now the PBOC as well this week are telling us that they're moving away from language that tells the market that they are on moderate footing or restrictive footing, and they're moving towards more dovish policy settings overall. Those aren't changes they make lightly. Those are policy statement changes that stick around for several months, several meetings to kind of act as an anchor to give markets a North Star for which way rates will ultimately go. So on a day like today, what we learned is that the dollar is probably going to have a yield advantage over the euro for a much more significant period of time. And we see that inflation is going bumping up a little bit more in the night. So perhaps, we're going to look at a change in our expectations for real rates moving forward. For me, no exposure in silver. For gold, obviously a little bit of a kicker, but you know what, Jamal? That's exactly what you'd want gold to do. If this were really a breakout and it was really going to pull back, you'd want to see it hold the downtrend from the October and November swing highs, which on our daily time frame, that's exactly what it appears to be doing here today, and back above the 1 week moving average. So you know what? I'm happy to stay long. in this market, having bought the breakout and being back to break even in the GCJ5 position.
Yeah, both of my trades in gold and silver are fairly far out. I mean, my gold trade is 75 days out, and my silver trade is 99 days out. So I'm not, too discouraged by this. And again, I think, yeah, it's fine overall. But again, yeah, it's a little disappointing to see the move post PPI. But I mean, these things are going to happen, right? These are part of the ebb and flows of the trade. So I'm still good. Yeah, long calls in SLV further out, and long call spread in February in gold, 2850, 2900, same as you.
And the thing about using long duration on these trades is that if the market gives us a technical turn the wrong way, there's so much intrinsic value still built into the position that we're going to take it off as a loss, but like it's not a kick to the face. Whereas if these were if these were 1 DTEs, Jamal, you and I would have a serious problem on our hand right now. So where would I get out of my gold position? I see the 1 month moving average sitting right around 2710, and we talk about the heuristic of exiting consolidations only to return into them. If we're below 2710, it means we're also back within the triangle. And if we're back within the triangle, then again, the rule of thumb would be for a move back to the other side, closer to 2600. So would I want to be long calls for a return to all-time highs if the near-term technical path caters to a further drop back? No, of course not. So I would cut bait and I would take the loss in the positions and look to, reemerge maybe closer to 2600, 2625 on the long side. And I think that would be the right way to go about it ultimately. But today, pullback sucks. Much rather be up by 1.76% in gold and higher by 3.92% in silver. I'm sure you would as well. But there's not necessarily the damage done to say that the tenets of the breakouts that we began to saw are necessarily totally offsides.
Who knew expensive eggs would do something to gold like this?
Damn egg prices up 30 something percent year over year. Come on. Jamal, let's turn our attention. Yeah, I suppose. I don't know where people are buying their eggs.
Buy a chicken is what I'm going to have to do.
We have someone here who does that, who's purchased a bunch of chickens. Yeah, Westwater. He has his own chickens. He eats his own eggs. He's completely Granted, he's spending $10,000 a year on chicken feed, but his eggs have never been cheaper. Energy.
It's the principle of the thing. You know what I mean?
Right. Like I feel really good when I grow my tomatoes, and it takes me 3 months to get 10 tomatoes. And it's like, oh, these are fantastic. These taste so good. It's like, yeah, but that was like $90 and 40 hours of your time when I could have just gone to the grocery store and picked up that same exact amount of tomatoes for $3.99. So what are we doing here? CLG5. Yeah, we're rolling forward. $69.80. We're in the February expiry now. Although if you look to February or January, I don't really see that much of a significant difference in terms of pricing. It's about $1. Either way, it's the same technical pattern here, Jamal. Middle of a range, low volatility, nothing doing. Can we move on?
Absolutely. I mean, again, my thesis hasn't changed. I really think that at some point gold's going to be, gold, I always do that. Oil will be somewhere in a lower range, and until it is, I'm not interested.
I think that maybe we're getting, some better information from natural gas. I constantly refresh the NOAA 8 to 14 day temperature outlook. They updated a few times during the week, Sundays, Wednesdays. Yesterday, we got a new update. Instead of seeing above average temperatures for 100% of the country's population, now that's only down to about 35% of the country's population over the next 2 weeks. We're going to have near normal or below average temperatures for about 65% or so of the country's population moving forward as we make our way into the Christmas period. So demand for natural gas probably going to go up. But we're rallying into a level that, for whatever rhyme or reason, I have this downtrend drawn here. It has worked in terms of a line in the sand for the market. Would you be interested in potentially fading this rally in natural gas as we go up into an area where that's fine, because I have no desire. I'm just trying to get a trade idea out of you.
I really wouldn't. But what I do get from this when I look at natural gas is kind of like you said, what's going on weather-wise, and you look at the futures and you look at the near term, you can see there's a lot more backwardation in the near term when you look at DEES at 350. And Jan at 320. And then there's a big drop off basically between Jan and February. You got like a 40-cent difference. And this is kind of the thing you would expect to see for the Widowmaker area, which is March and April. But again, it's just really been non-existent. There's no real big difference between March and April at all. So That's probably the most interesting thing to me is just looking at the futures term structure in this nat gas, but I really have no desire to trade it right now.
Hypothetically, if someone wanted to do this, what would they do here? So we look at a short call vertical because we are running into resistance right now, 47 days out. Let's see here. NGF5, we're looking at what, 365? We can drag you down. Okay, so going 15 cents wide, we probably want to go a little bit more than that. We'll get 10 delta wide. So you have to go 35 cents. It's a 73% probability of profit, Jamal. Not too bad, but you're risking nearly 5 to make 1. Natural gas is not the thing. Natural gas is not the product you want to take that risk in, even if the technicals look good.
Yeah, that's the thing, right? And it does have a mind of its own. I mean, they could easily snap. And again, the way it would go, it wouldn't probably be all in one shot, but it could be like, 50 cents a day for a couple of days, right? Or 40 cents a day. And again, the way that we often trade is that, the first move is like, okay, well, I'm gonna live with this. I'll be fine. It'll probably fade. And if it doesn't, you're in trouble, right? So that's the only reason that makes you a little nervous.
Natural gas is up 9.55% from yesterday's open. So, we talk about a market where you could look at, you could put on a trade and all of a sudden the next morning you're sitting close to max loss. This is the place where that could happen, even if you're, operating around the 30 deltas or 40 deltas. That's just the nature of the beast. I would posit that what's more interesting is that we have a little bit of a triangle forming down here. So perhaps chop continues, but if there is a directional break in natural gas, if it's higher through 365, 370, or ultimately lower below 320 again, I wouldn't fade either of those directional moves right off the bat. And I don't think a 36.6 IVR, Jamal, is enticing enough for natural gas to try to sell a call spread up here. If this was a 96 IVR, different conversation. But at 36.8, we can leave energy and let it stay the boring, chaotic mess that it has been. Jamal,
yeah,
currency markets
makes me a little too nervous. I'm just looking at the chart and seeing times where we've had those big moves. Maybe, like you said, it's moved 9%, so let's call it 10% a day for like 3-4 days. It's possible in natural gas, but you haven't seen it. To be fair, we haven't seen that type of move in a while, at least not in the upside direction, more in the downside, like we saw in November of last year. But yeah, I don't know. In nat gas, something else.
I've had a few good trades in it this year, a few bad ones. It's basically scratch for 2024, which I suppose that's an improvement over recent years of trading nat gas, where it was nothing but hell and a hole in the portfolio. We'll talk about the euro here quickly. We are off the lows here today. We're continuing to weaken a little bit, 105.305 right now in the 60 H5 contract. So we have started to move forward here finally now. Like I mentioned before, the ECB's governing council, equivalent to their FOMC, so to speak, they removed the language about policy being restrictive for as long as necessary moving forward. And it just goes to show that there is an increasing wedge between the Fed and the rest of the world right now, where you have an ECB, a Bank of England, BOC, that are all talking about easing and the need to continue easing. Outside of the Fed, the only central bank that it's offering any sort of clues that it may even move more hawkish would be the BOJ. And do we really think that they're going to hike? No, the timeline for hiking was the majority of Japanese banks were telling us we're probably going to hike by December in the forecast that were updated 2 months ago. And now they're revising them. Well, maybe it's January or probably March for the first BOJ hike. Outside of that, nothing else stands up to the Fed right now, with the Fed telling us we're going to get 1 or 2 more cuts and then the cycle is absolutely finished. So, Jamal, I see the high volatility here across the currency world as something that could potentially be worked with right now, particularly in the British pound as kind of a follow-on trade to the euro weakness. In 6BH5, we see that the uptrend off the lows was lost, and that breaks fairly significantly today. It may have been an inverse head and shoulders pattern here, left shoulder, head, right shoulder, that was coming together, but that's now out of the equation. That's failed. So the next round of dollar strength looks like it's afoot. If it's the euro, if it's the pound, if it's the Canadian dollar, there may be opportunities in doing something like short call spreads around 128 in 6BH4, for example, or H5, for example. We could pull this in, but pretty comfortably, like right wrapped around 128. This is a 53% probability of profit, risking just under 2 to make 1, and buying power is only $350. Actually, I really like this a lot. We're going to put this on here right now.
Isn't that fun when you
but
do
there
that?
are
When you're like looking up and you're talking about something, you're looking at it and you're like, wait a minute, actually, I kind of like this trade. Let's put this on.
Yeah, let's put this on. But the bigger picture is that the dollar right now is still in attack mode. And if we're following any sort of analogy to the map that we followed post 2016 election, you probably have a few more weeks of rally left in us before Trump officially begins to talk down the dollar in his capacity as the president of the United States.
Yeah, I think that's the big story here, right? You can see that how the dollar turned around even after PPI, which is kind of counterintuitive in a way, because you figured like, okay, if inflation is still here, that means we're gonna. Clearly, I shouldn't say it's counterintuitive. Actually, the dollar took it as, oh, okay, we're gonna hold rates higher. But the reason what's counterintuitive to me is that the chances of a 25 basis point rate cut went up higher, and you're seeing across the globe a lot of central banks are starting to cut more rates. But yet here, obviously, the bigger thing that's more important than rates or not is what's going to happen with tariffs, and that's what the dollar is clearly looking at, and that's what's affecting a lot of these other currencies. So I think there's going to be a lot of activity in this space with the currencies over the next several months, as, like you said, as Trump starts to talk more about what we're going to do as far as America.
You have higher yields today. You have a stronger dollar. You have weaker metals. All those things are in agreement. There is a little bit of sluggishness in stocks, which I suppose a stronger dollar. You can only ignore it for so long before investors begin to rebalance their risk preferences thanks to the currency impacts. Do you think of currency as a major issue heading into 2025? I know we had the yen carry trade episode earlier this year that may or may not have sparked what happened in August. Are there any risks like that on your radar that you're thinking about for next year?
I am. I mean, I'm curious about this dollar and again, how strong it's going to be. Only because of recency bias from 2 years ago when we saw what happened. But again, 2 years ago is not 2025 is not 2 years ago, obviously, for a lot of reasons. But it just, you do wonder how it's going to affect stocks, or is it going to be like we saw with the Trump administration previously, which was positively for stocks, or is it going to be a 2022 scenario? I would assume it's going to be the former more than the latter. But that's really what I'm keeping an eye on. How is the dollar? Is it going to continue to rage, and is it going to really affect stocks in a meaningful way? Or is it just going to be more of a currency situation and you can trade other currencies against it in that manner? So maybe, I'm guessing we're going to be able to get some pretty good trades out of it.
Not fiat, but crypto. What do you make of some of the recent moves in this corner of the market this week, where we've been pressing 100K in futures for the past several sessions?
I feel like they're kind of running out of steam a little bit, but not like they're going to fade harder. I'm not calling for a huge correction or anything. You could tell that they're running out of steam. Obviously, there was the big election bump and a lot of strength in this space, but it seems as though it's kind of running out of steam just a little bit. I don't know if it's going to jump to new highs like we saw in November, like big new highs, I should say, 110 or higher. But I think it's taking a breather for the time being.
It looks like, again, another flag here that could be positive contextually, but also flags this could be, a double top. I have no idea. I don't actively trade in and out of this. I think if you're going to be a crypto person, it's just probably just best to buy and hold and not worry about it, because the swings they can be aggressive, and timing the market's exceptionally difficult. As we've learned, drawdowns 50, 60, 70, 85%, not unheard of over the past decade. Either way, though, if this is a gauge for global liquidity, one then can easily square away the conversation for why stocks are doing what they're doing, because there's just a lot of money sloshing around in the system right now.
Yeah.
And where else are you going to put it? Right? I guess you're going to put it into BTC or SPY. Choose your fighter.
A lot of money sloshing around, and it brings to mind how much these ETFs, these Bitcoin ETFs, are using these futures, obviously. So that's another thing to keep in mind that creates a little bit more stability. I don't anticipate. I'm telling you, if we get like a huge correction, like some 30% correction in Bitcoin, it's going to feel like the sky is falling the way people talk about it. If that happens, watch out. And honestly, I'd be willing to be there to buy when that happens, just because. Why not? But again, that's one of those situations where you're starting. If the chorus is really loud around that, it makes for an interesting trade. But for now, it's just kind of settling in. And look, Bitcoin's had a great year, right? A lot has happened. Cryptos in general, it's been a banner year for Bitcoin.
Jamal, as we look to tomorrow's calendar, it's somewhat busy. We have UK GDP in the morning. So for the British pound trade that was just put on, hey, hopefully the UK stays in recession for a second consecutive month. Otherwise, new yuan loans. I suppose I shouldn't say that because our parent company is British. Our new yuan loans figure due out in the morning. China has not been great about releasing these reports on time or the day of. So just put that in asterisk there. It is a very important report. It speaks to the stimulus efforts they're trying to do. How much loan generation has there been? If there's more demand within the economy, then theoretically new yuan loans should be higher. Well, we'll find out if we actually get to see that tomorrow morning. Otherwise, export prices, import prices. Jamal, you want to counterpoint to the inflation coming back narrative? These are both supposed to be in negative contraction territory next month. So maybe take some of the edge off of today's PPI release. Otherwise, as we do at the end of every one of these shows, a brief bit of education. Today we're talking about types of margin. So head over to tastylive.com, top banner, learn, read, enter futures, where you can find this great coursework put together by the fine folks on the Tasty Live research team. Jamal, when we talk about types of margin, there were really two. There's initial margin, which is the amount of capital required in your account to deploy a trade. There's maintenance margin, which is the amount of capital a trader needs to maintain in his or her account to hold a position. And if you don't have enough maintenance margin, then what happens? You get margin called. And you can either top it off or you lose the position entirely. Not fun. Don't do it. Go to tastylive.com, top banner, learn, get a futures, or click the link here on the bottom of the slide to take you there directly so you can learn more about types of margin. And you don't need to hear it from me. Jamal, we're done and dusted. I'm not here tomorrow, so maybe there's a new host. Maybe it's a video on demand. Who knows? There's no overtime today. There's a video on demand for that as well. But there is engineering the trade, Jamal, and I know you're doing that after we get a brief bit from Dr. Jim and from Theory to Practice. So an exciting afternoon here on Tasty Live. Hope everyone sticks around. Final thoughts.
Final thoughts from me. Look, don't deploy too much capital right now. I think it's an environment where things are just going to be kind of low volume, kind of slow. So, make sure your trades are fairly small and just keep it light, because I think there's bigger days ahead coming up in January.
He said it best. For Jamal Chandler, I've been Chris Vecchio. Stick around after a brief break. We have Dr. Jim Schultz coming up with From Theory to Practice, and Jamal's back later this afternoon with Engineering the Trade, so don't miss it.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
Jim Schulten, this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Thursday post-CPI, post-PPI edition of what it is that we are trying to do. I'm pretty sure this is a working definition of what purgatory actually is. So welcome to the show. I'm glad that you guys are here. If you're watching over on the Tasty Live network, then I'll actually bounce on over to YouTube because you can join the conversation, you can join the discussion, you can communicate with your brethren that are also watching the show, and you can troll all of my B- jokes in real time, just like the one that you heard 30 seconds ago. So let's pop in here. Man, what's going on in the old stock market? Man, I don't know. That was maybe more like a C+. That was more like maybe a solid C plus if we're grading on a curve. Even S&P's down 19. Got the risk-free instrument down 98. Also notice the NASDAQ futures, extremely high-risk product. Got the boomers down 189, and then you've got the Russell 2000 futures index down 24. Guys, this is day number 30. I mean, this is it, man. This is day number 3. Like we established on Monday it was day number 1. We established on Tuesday that it was day number 2. And then yesterday, obviously, Arrow messed everything up, right? Just janked everything up that we had going, that we had working for us with this huge rally, this huge whatever. So yesterday does not count. Now, of course, your short positions and your bearish trades may be feeling a whole lot of pain from yesterday, but that's not my fault. That's the market's fault. That's not my fault at all. If you look at, if we look at the SPY here, I mean, there you go. This is it, guys. We talked about all this. This is your classic day 1, day 2, day 3 pattern, right? There's day 1, right? There's day 2, right? There's that day in the middle that erases day 1 and day 2, but that day doesn't count. And here's day number 3. So the bear market continues, right? The bear market lives on. Here we go. We are ready. We're doing it. You got the NASDAQ down maybe a total of 25 basis points from Monday's open, but man, we're doing it. It's happening. This is day number 3. So obviously tomorrow will be day number 4 because Arrow's not here to mess everything up. Like Arrow's not here to kind of, just jank up our momentum. So day number 3, I'm excited. You're excited. And man, we get to enjoy it all here together only on the Tasty Network. So, all right. So what I want to do today, obviously we're going to talk about our SPX butterfly that is set to expire tomorrow that hasn't worked out. It hasn't worked out as planned, as they might say. And so, thankfully we still have a little bit of time left. We'll talk about that. We'll kind of see where we're headed with that guy. We're going to look at a couple other positions in the portfolio. There's not a ton to look at. We're going to look at MSTR. We're going to look at Uber maybe a little bit. And then SPX are going to be the main things. And then we might do a new trade. Like we might do a little Costco action, guys. Did you guys know that Costco has earnings tonight? Like COST. Look at this. Look at this company. I mean, I'm shocked they're still in business. Costco, $9.95 is the stock price of Costco. So I got a bone to pick with Costco. I got a little beef with Costco. I mean, there's all kinds of different, there's different camps, right? People get very excited about their wholesaler, big box, whatever. You got your Costco camp, you got your Sam's Club camp, you got your BJ's camp. And that's pretty much it. I think those are your 3 camps that are going to pretty much encompass the contiguous United States. But Costco, man, we got a piano. Well, it wasn't a real piano. It was like a keyboard piano. So my kids are learning how to play piano. They're actually decent. Like they're actually solid. I mean, it's a little, it's a little rough on the ears, but they got the basic gist of the different songs that they're trying to learn and trying to understand. Okay. Well, they've been using this old rickety keyboard that we borrowed from a friend. And so my wife was like, hey, I want to get like, we don't have to get like a grand piano. We don't have to go all out. Like, we're not raising, Beethoven here, but let's let them, kind of, get used to something that's maybe got some more functionality, whatever. So anyway, we got this keyboard / piano from Costco for like $700. Right? I mean, this thing was not cheap. This thing was very expensive. It came before Thanksgiving, and then we were traveling for the holidays, went to South Carolina, and then Phoenix, and all those kinds of things. And now we're back. We opened it up the other night. The speakers are blown. We opened it up the other night. One of the speakers is not working correctly. And the funniest part is, so you will never meet someone who's more tone deaf than me. Not a single person. I am the most tone deaf person in the world. Now, I only have one good ear. I'm actually deaf in my right ear because I was in a car accident 25 years ago. I've talked about sometimes on the show, but I only have one good ear. It works extremely well, though, but man, it cannot pick up a key. It cannot pick up a major, minor, like whatever deal. Like, I'm like, nah, man. So my kids were playing on the piano with the speaker blown out. Sounds terrible. I'm like, that sounds pretty good. I'm like, man, these kids, their skills have improved in the last 12 hours. I was like, can you hear that? It sounds terrible. I'm like, it actually sounds pretty good to me. And so anyway, the speaker is blown. It's Costco's fault. I'm going to try to take it back on Saturday. Guys, let me know. What is the return process like at Costco? You guys got to help me out. Am I walking into like an Amazon deal where it's like no questions asked? I'm gonna have no issues with this with this whatsoever, or am I walking into like some other type of deal that I'm gonna have to like bring, evidence and proof and video and photos and letters of recommendation and all these things? So let me know, what am I walking into on Saturday when I go take this keyboard piano back? But anyway, I digress. And so Costco at $9.95, $9.96. I mean, I don't know how we can't play this thing to the downside. This is crazy, man. Like, you thought NASDAQ at 22,000 is crazy. You thought EME/S&P is at 6,100 is crazy. Costco at 1,000 is crazy. Costco at 1,000 is absolutely crazy. It's bonkers. Doesn't make any sense. So we're going to play that thing to the downside. But before we do that, let's talk about the current positions. And I see you guys in the chat, by the way. Look at you guys. I see Proto Man's in the house. I see RC's in the house. I see Moody Blues in the house. Anka is in the house. Anka still owes me all kinds of money. So Sergio's in the house, man. Look at you guys. And I see Don's in the house. I'll get to the rest of you guys here in just a couple of minutes. But let's take a look at SPX. So first and foremost, this was a butterfly that we put on. We did this trade on it was Tuesday, I believe, right? Yeah, we did it on 12/10. So this would be Tuesday, 2 days ago. Today is 12/12. And so 12/10 would be 2 days ago. Some quick live calendar math, which is sometimes trickier than it appears. But 12/10, we did this trade 2 days ago. Now, if you've seen the show recently, if you followed the show for really any length of time in 2024 for sure, and you've seen me do expecting more butterflies, like you kind of know the kit and caboodle, like you know the well-worn pathway forward through the forest that I like to follow. I like to do them later in the week. I like to do them Wednesday, Thursday, going into Friday, because I feel like it gives you a better chance to, kind of hit a home run. I feel like it gives you a better chance to kind of wake up on third base and just trot into home and then make a bunch of money if you get the move right. I've been thinking about this though, and I think we're going to make an adjustment. I think we're going to make it just a little bit of something to our general approach with expecting move butterflies, because we did this trade on Tuesday for the Wednesday morning CPI print. It didn't work, obviously. I mean, the market ripped. NASDAQ was up 1,000 points yesterday. EME/S&Ps were up 350 yesterday. The boomers were up 875 yesterday. It was crazy. It was crazy. Not like Costco crazy, but it's pretty crazy. Well, the interesting thing is, though, had we done that trade in like an overnight cycle, and had we done that trade in like a 24-hour deal, like a Thursday and a Friday, whatever, that trade would have been dead to rights. Now, it's barely on life support now, but at least it's still on life support. Like, we still have a day left. And we see there's a little bit of movement in the market. There is a little bit of, downside, pressure kind of picking up again. It's day 3, right? We're just getting started here. And so I'm like, man, this is really interesting. Maybe I shouldn't throw the expected move butterflies, out like baby with the bathwater stuff. Maybe I shouldn't do that so quickly. Maybe I should go ahead and, consider these from time to time, because it's kind of like this. When you do an expected move butterfly on a Wednesday or Thursday going into Friday, what you're trying to do is you're kind of going for the big score. Like, you're going for like a double in the gap. You're going for like, a triple in the triangle. Like, you're not really looking for singles. You're not really looking to just, move the runner over to third base with less than 2 outs. Like, you're not really looking to do those things. You're looking to really make a big splash, right? That's what we typically do with our expected move butterflies, or it's what we've typically done. Well, what's interesting, though, about doing these with more time in the week, which is what happened with SPX, is it gives us, we might not make as much money if we get the move right, but we have more opportunities to win. We have more days in the calendar for this thing to work. And so I actually, whatever happens with SPX today, tomorrow, nobody knows. I mean, I joke about it being day 3, day 4, but nobody really knows. And so we'll see what happens. Maybe we have a winner to manage, maybe we don't, whatever. But I think I'm going to start weaving these in a bit more. I think I'm going to start, looking into these on Monday and Tuesday for the Friday week, understanding that, you do a $10 wide butterfly, or let's say you do a $15 wide butterfly and you pay $3 for it, right? So you have $12 of potential profitability. You do that on a Thursday going into Friday and you get the right move, man, you're taking $4, $5, $6 out of that thing. Like it's going to be a really, really, really nice trade. Okay. You do that same trade on a Monday for like a Monday earnings or a Monday binary event or a Tuesday morning binary event before the market opens, whatever. You get the same move. You're not taking $5 out of that trade. You might get $1.75. You might get $2 out of the trade. So as long as you temper your expectations, it's kind of opened up a new avenue for me to consider this strategy because I really like the expected move butterfly as a way to take directional shots. It essentially gives you a cheap way to take a directional shot, in a stock, in an index for some binary event, whatever. So I really, really like it. And so this will give us more opportunities, I think, to lose money, which we're always on the lookout for those. Like you would think that they're few and far between, but we keep looking. We keep looking and we keep finding them. Like we keep finding them. Right. And so, all right. So I wanted to talk about the SPX. We're not going to do anything today because this thing's still cooking on the back burner. But that's SPX. The next thing I wanted to just briefly mention here is actually MSTR. So MSTR, so the micro strategy, the Bitcoin bros, man, look at these guys up to 101,000. Man, look at these guys. Look at these guys. Man, you're at 101K right now, 101K. Your next tick is 106K, obviously. And then after that, people get excited. You're at 113K. Everybody's ready to go. And then you're at, 64K. That's just the way it goes, right? And again, I don't make the rules, man. Don't hate the messenger. I'm just telling you how it has to be. I'm just telling you how it has to be, right? So there's your next 4 ticks in the Bitcoin world. But the Bitcoin bros, I mean, they really came through for us. I mean, look at this MSTR spread, man. It's down $15 today, and we're still up. We're still up over $1 on the trade. Now, earlier, before the show, I think, not long before the show, Bitcoin, or not Bitcoin, but MSTR was actually up on the day. I think this was green, like right before the show. And I was up significantly more. I was up maybe another 50 cents on the trade. It was marking at maybe 250 or 260. And so I've had several people kind of email me and kind of reach out and say, hey, what are you going to do with the MSTR trade? I was going to take it off when it was marking at 250, but now that it's at 305, 307, I think I'm going to leave it on. Let me leave it on because we're already managing pretty early in terms of the max profit or percentage of max profit that we would typically go for at about 50%. So I'm going to sit tight. I think the Bitcoin bros, like I said, I mean, I just laid it out for you guys. Right? It's all there. It's all there in the charts. It's all there in the quants. It's all there, right? It's 101, 106, 113, 64. Like that's it. Those are basically the loss numbers that were all over all those caves, right? 101, 106, 113, 64. Like Hurley won the lottery. Like we all know how this ends, right? Didn't end up pretty well for Hurley. And it's not going to end up super well for the Bitcoin bros either. And so anyway, 305, 307, 308. I'm going to sit tight and do nothing. So, all right, let's go ahead. And by the way, Lost is the best show to ever be produced. I will hear nothing to the contrary. You will be immediately blocked. I know I joke about this. I joke about this with Yankee stuff. I joke about this with Dolphin stuff, but I'm serious, right? If I hear anything to the contrary, I don't want to hear about Breaking Bad. I don't want to hear about this rigmarole, this garbage. You will be immediately blocked. And I mean permanently blocked, not from my show, from the channel. Like gone. Like you will not exist anymore in our world. And so be very, very careful with your public comments related to Lost. And I don't want to hear about season 4, 5, 6. I know it went off the rails. But even having gone off the rails, it's the best show ever produced. It's not even close. There is no close second. Right? So anyway, I digress. You guys get me fired up. I'm getting myself fired up. This is what happens when you guys ask me about selling puts for income. Start making me talk about Lost. Anyway, let's go ahead and let's go into Costco. I'm all fired up now, man. Let's lose some money in Costco. So let's see. COST. You guys better have hooked me up, by the way, in Costco. I see some people. Okay, I'm excited to read. Even if I don't get to all your comments before the show, I'll read them after the show. The Costco ones, at least, if not all of them. I usually scan them when I'm done. You guys always make me laugh, man. You guys are great. You make me laugh during the show. You make me laugh after the show. And you guys are always coming through with the B- trolls. It's really solid. But if I go into Costco here, I mean, look at this thing, man. I mean, it's all set up for us, right? I mean, we just got done talking about this huge, long, Jimmy Fallon monologue about, let's do Monday expecting butterflies and Tuesday expecting butterflies. We're going to do Thursday expecting butterfly. We go back to the tried and true. We go back to the Betty Crocker chocolate chip recipe. That is the expected move butterfly. Thursday going into Friday. And again, given the fact that Costco is way overstretched in terms of just this, I mean, look at this. Look at this action, man. If we go to a chart, I mean, sure, Costco's down the last couple of days. Oh, that's a daily chart. Give me like a Give me like a weekly chart going back like a few years. Look at this, man. What is this? What are we looking at? Solana? Like, what is this? The Batcoin? This is Costco, people. Costco. I mean, I like Costco, generally speaking. Again, they really missed the mark on this piano thing. But I'm just like, it's Costco, people. I mean, it's discount olive oil, right? This isn't an electric car, right? This isn't like a driverless Waymo. It's olive oil in bulk. That's all it is. That's all it is. Now, I understand it's organic olive oil. It's never been touched by human hands. It's all the stuff the Autumn's making us buy now. Like, I got all that. But still, guys, it's olive oil. And so I think, man, we play this thing to the downside. And we don't really overthink it. I'm thinking, man, what does Amelia have for us today? Yeah, I like it. I like it a lot. So we're gonna shoot for the stars here. We're going 980, 960, 940. Nice little 20-pointer in Costco for $3. Man, look at that thing. That thing is dirt cheap. Very similar to all the products at Costco. Right? Like, you're gonna get a really nice deal on those 6 bottles of olive oil that you're gonna pass them down like they're gonna be passed down for generations. There's no way you're gonna consume all that olive oil. Like, you got to find the space for it. So we got to weave in the storage costs on the olive oil, man. Like, you can barely fit it in your trunk, right? But it's going to be selling for a pretty good price. I don't know, man. 980, 960, 940. Ooh, what if we go even a little wider? I'm feeling really good about this trade. 462 for a 25 point. Let's split the difference. Maybe can we go 22 and a half? We can. Beautiful. So here it is. So this is the trade. This is for my audio. This is for my audio only crowd. If you're watching the show, then you're fully immersed in the experience, which may not necessarily be better for you. But if you're listening, I'm in Costco, COST, 1 day cycle. I'm looking at a 982.50, 960, 937.50, 22.5 point wide butterfly. So we have found a way to weave in some janky strike action, which is nice. $379 is the cost on this butterfly. The expected move for Costco tomorrow goes down to 962.5. So we're right there. We have essentially, kind of just marked off the expected move to the downside. Like, that is what we are shooting for. That is what we are going for. Just a quick little 35 point drop in Costco. It's nothing. Stock's up 7,000 points in the last 18 months. 35 points is nothing. Absolutely nothing. So this is going to be our trade for Costco earnings. And I think this is going to be it, man. 982, 960, 937.5, man. Let's push this guy out. And then I think that's going to be that. Boom. There you go. Fill that 381. Man, filled instantaneously on the Costco trade there. So there you go. There's that. And then the only other thing I wanted to talk about today was, look at this. Man, day 3 picking up some steam, guys. Day 3 picking up a little momentum. Once you get Errol out of the mix, talking about his long only bias, talking about all-time highs, and just all this stuff, it's just kind of, it's just not very feng shui, right? It just kind of ruins the mojo, right? It just kind of steals the juice to the downside, as evidenced by, the 600-point ripper yesterday in the NASDAQ. And so NASDAQ down 100 now. That's interesting. Even S&P's down 21 and 22 now. So you got a little something. Got gold. Look at gold, by the way. There's somebody check on Peter Schiff. That is not good. Gold down 47. What's silver doing? Is silver doing something similar? Got silver down. Silver down $1.28. It's worse. It's worse in the silver pits, guys. And so we've got gold down almost $2. You've got silver down gold down almost 2%. Maybe 1 3/4 or so. You've got silver down almost 4%, so 3.9%. That's a pretty big drop in the world of silver there. Which silver, of course, silver is crypto for boomers. Like, if you're a boomer and you don't want to trade crypto, you're trading some silver. Like, you're in there, man. You're in there slinging some silver, 100%. Like, that's just this is just basic. This is basic trading stuff. And so, all right, so silver not looking good. Costco or gold not looking good. The other one I wanted to mention here, man, guys, look at Tesla. This thing is a monster. This thing is a monster. Up, it's down today, down $5, but that's got to be some kind of misquote or misprint or something. Missed something. because man, this thing is over 400 easily. And so that's pretty crazy stuff. If you go into the chart of Tesla, there's a weekly chart. That's all we really need right now to really assess the damage. Man, this thing was up to 429. Was that today or was that yesterday? If I go in here, yeah, so that was today. It was up to 429 earlier. And so, man, now we're down to 419. But that's crazy that you're down $5 in Tesla and you're down to 419. This thing was 360 like a week ago. That's pretty wild, man. That's pretty crazy. And so our little short call spread fading Elon is not working out so well just yet. But it's early. We have time. We have 36 days to go in this spread. And so we are going to sit tight, and we are just going to have to see what happens and kind of see where the wind blows us. All right, so now what I want to do is, man, let's see. There's really nothing else. Yeah, I mean, Uber, there's not much to talk about with Uber. We've got a long call. This was a diagonal spread. I mean, the rally today is helping, up 82 cents. But still, I mean, you're up 82 cents to 62. There's a long way to go. Long way to go before we're going to be thinking about selling premium in this. There's 36 days left. Hopefully we get a couple of pops in Uber and we're able to sell some calls at better prices. Right now, we looked at this just the other day, but I'll look at it again here just quickly. Like if you look at like even in the January 17th cycle, it's like there's just not great, we're long a 67.5 call, so we're not going to sell a call below that. Right? I'm not going to turn this into a short call spread when it had a bullish bias to begin with. That doesn't really make a lot of sense. I know some traders like to do that. I think you're getting too cute and too fancy in my opinion. And so here I want to maintain the bullishness of the strategy. So I'd be looking to sell something like around here. I mean, look at that premium, guys. There's nothing there. Like, 40 cents, 50 cents, whatever. I got to wait for a little something juicier on the horizon to get me kind of interested in selling that premium. So I'm not going to do anything in Uber. I'm gonna sit tight. So all right, man, where are you guys at? I want to get to you guys because I really want to see. I want to see where you guys are at. I want to see where you guys are at with Costco, and I've got my block button ready for any negative lost comments. And I'm serious about this, man. I'm serious. James, are you ready? Because this is permanent ban. There's no second chances. And I'm saying this now. People have a chance to delete. There is no second chances. It's permanent ban. Like, you're gone. You're done. Like, and your Tasty Trade account may even get refunded to you. And then that's over too. That's not necessarily my call, but I'm going to push hard for it, man. I'm going to push real hard for it. Sorry, let's see where you guys are at. There we go. So Don 721. Hey, Dr. J, what's going on there, Don? During your many years with Tasty, yes, it's going to be 9. It'll be 9 in January, in a couple weeks. Wow, that means it'll be 10. It'll be 10 next year if I make it. I mean, that's like a 35 delta. I've outperformed the entire time because every year it's been like 20 to 35 delta. That's been the range on me making it through the end of the year. And I've continued to, outperform the expectations. We've gone above and beyond the expected move. Now, the expected move for me is usually pretty small. Like the hurdle, like the bar, it's just barely off the ground. But somehow we've been able to kind of just hop over it a couple of years in a row. NASDAQ now down 120. Okay, all right. It does look like day 3. But Don 721 goes on to say, during your many years with Tasty, have you met successful traders that transitioned to become money managers that sell premium? Great question. And I don't know if I've been asked this question before live on the stream. And the answer is yes, I have. I certainly have. And I've met a number of them actually. Email. I mean, obviously live at the shows is probably where I've had most of these conversations. Some have come through email too. I don't know if there's a coincidence there or anything, but I've probably, if I had to put a number on it, I'd say it's between 30 and 50, if I had to guess, over the years, of people who have kind of, they join the Tasty ranks, they join the Tasty universe, they learn the concepts, they're selling volatility, they're focusing on theta, they're taking a different approach, and then they go out and they kind of start up their own firm. They kind of start up their own deal. Now, I know Tom he's not really wanting to go that direction. He wants to equip you with the skills and the tools that you need to do it yourself. And I 100% see where he's coming from. I mean, I'm required to say that. And so I see where he's coming from for sure. But all kidding aside, I do see where he's coming from. And I feel the same way. But at the same time, just thinking about it, and communicating with the individuals that have been in this space, and are doing this and trying to, help other people out and trying to obviously make a nice little business for themselves. It's like, man, you have quite a value proposition to present to investors, to present to people that want to maybe, there are so many people. Look at the market right now. There are people that are just, they are concerned about the bottom falling out. They are concerned about, or at least the bull market stopping. Like Errol said yesterday, musical chairs, the music's going to stop at some point. Now, again, nobody knows when that's going to be. It could be today. It could be, tomorrow. It could be, 6 months from now. It could be 3 years from now, whatever. But the music is going to stop. Now, that doesn't mean it's going to be 1929, and that doesn't mean it's going to be 2008, but it does mean that there's going to be some kind of breather in the market. Well, people are concerned about that, and they're concerned that that breather turns into something bigger, something more. Well, you have quite a value proposition to other people, to investors as a premium seller, where you have other things that you're trading that's not necessarily direction. You're trading time, you're trading volatility. You're focusing on, strategically, as opposed to just, put your eggs in one basket and ride that basket, higher, basically. And so, yes, Don, I have spoken with many, again, 30 to 50, I would say. And a number of them are quite successful. I even spoke with several in Phoenix just a few days ago. And so quite successful. And so there's a number of different ways that you can start out doing that. I'll let you kind of figure that out if you're interested in doing that. But yeah, it can definitely be done. And I say go for it. The only thing I will say, and I do have a little bit of experience with this, it's a very, very, very different world when you manage someone else's money. When you're managing your own money, that's difficult. That's hard for all the reasons that we all know and we're all familiar with. When you start managing someone else's money, it can get a little dicey, right? Especially if, and just to take this out, this is such a great question. I've not really been asked this question before on the show, so this is some good stuff. You have an unbelievable value proposition, right? You can pitch them, you can show them something radically different from what they've been told by every other financial advisor, by every other money manager. All they're doing is they're just buying the market or some version of it, and they're just riding the market. And here's the beautiful thing about just buying the market, gathering assets, and going out golfing, right? You can just hide behind the market. Again, for all my chess fans out there, it's like you got your king, you've castled, you're behind those 3 pawns. You're behind those 3 pawns and the rook to start the game, at least, right? Like, you're safe. Like, you just hide behind there. No one's coming to get you, right? It's the same thing as an asset gatherer, as a financial advisor, as a typical kind of money manager that does what everybody else is doing. You hide behind the market. You come out with a value prop that's radically different. For every gimme, there's a gotcha, man. Right, the gimme is this is radically different. We're going to make some money when other people aren't. We're going to be able to diversify in very unique ways. Okay, great. I love it. Where's the risk? Where's the gotcha? Well, there's going to be some times when everyone else is making money and we're not. There's going to be some times when, everything else is strawberries and sunshine and we're kind of struggling a little bit. And I can say from personal experience, that is very, very difficult. Those are very difficult conversations to have. And so just be ready for that. And it could be hard. So Sergio, hello, Dr. Jim. I'm ready, man. I'm ready for you to be here. Thank you, my friend. I appreciate you so much. The fact that you are here, that is some good stuff. And so Anka's in the house. Good afternoon, Dr. Jim. It's Butterfly Thursday. What do you think about Costco, Anka? You now know exactly what I think about Costco, and I didn't even see you comment before you put that in there. So we're playing to the downside, Anka. Again, this is basic common knowledge stuff. Like, I can smell the smoke in the air. You probably can too, even through the lens. But this is the way we're doing it. We're playing it to the downside, and that's just that's the way it's going to be, Anka. And so good luck on the long out of the money calls that you're obviously going to buy. And so Jim's in the house. Greetings, Dr. Jim. I enjoy your show, man. I appreciate you so much. Thank you so much for being here. I know I say this all the time, but it really is only because of you all that we can do what we do. So thank you guys so much. The fact that there's 500 people watching right now, it's crazy to me. It blows my mind away that we have, so many people watching the network all day long, whether it's my show or the other shows. I'm blown away, man. I'm really blown away. I just appreciate you guys so much. Proto Man says, should I sell puts if I want to own PLTR, which is Palantir, I believe, at a lower price? Yes, absolutely. 100%. Like, that's the way to do it. Like, you go into PLTR, like, here, I'll even give you kind of a starting point. You go into PLTR, which is, Palantir Technologies, $72 stock. You could go in, you've got earnings on February 3rd. You could go in here and you could sell you go into January, 36 days to go. And it's like, typically, where do you sell a put? We usually like to be around 30, 35 delta is a great starting point. So you could go in there and sell the 67.5 put, right? It's a 32 delta. That gives you just a really, really, really good starting point for, beginning your short put analysis, right? I mean, you could sell a higher strike if you want more premium. That's fine too. You could sell a lower strike if you're willing to take less premium, but you want higher probability. Usually if you're selling a put to enter a position, like if that is the end goal, then I actually like selling higher deltas. So I wouldn't go any lower than 30 personally, because you're not really doing it as a probability play. The probability is kind of like a kicker. The probability is kind of like a little extra that's added on top of it. Like, you're okay owning the stock long term. You just kind of want to get in at a better price. You want to get compensated for it, and you get paid along the way if the stock just kind of chops around and you get a couple cycles where you manage it or expires or whatever. And so I would say 30 to 50 delta even when you are establishing a position with a short put on something that you want to own. So that's what I would consider in that situation. So that is PLTR. Let me clear that away. So what's next? NASDAQ down 125. Wow, guys, day 3 is off to a nice little start here with an hour and a half left in the day. And so we have UMSP down 27. Whew, man, this is something. We just got to get Errol. Errol just getting he's got to be out of the momentum, man. He's just messing some things up. So RC's in the house. Says it's Dr. Jim time, and it's RC time. I appreciate you, my friend. RC says, good thing Costco will take it back. Yeah, we'll see. I will let you guys know. The plan is to go. I'm going with my father-in-law on Saturday. We're going to hang out and go have lunch and just spend some time together. We have a great relationship. He's a great guy. This is the Tesla guy. This is the guy that bought Tesla like so many years ago. And like every day he's like, he'll text me or Facebook message me, or he only lives 8 minutes away now. So he'll come by the house and I'll be like, man, did you see Tesla today? I'm like, I did. And it sucks, dude. And he's like, it does not suck. I can assure you of that. And so he's having the last laugh, man. It's pretty, it's cool for him though. Cause he bought it many, many years ago. And so he's been through lots of splits and lots of surges and all kinds of stuff. And so that'll be fun, but I'll let you guys know on Monday how it goes. And so, let's see. Moody Blue says, where do you shop at, if not at Costco? No, we shop at Costco. We shop at Costco, but just like everywhere else where there is a Costco, it's never close. Costco's never close to anyone. It's always at least 20, 30 minutes away, right? And so it's 27 minutes away from us. And so we do Publix for like the day-to-day, like, kind of like operations type stuff. And then Autumn's got stuff coming in from all kinds of places. Like she's got stuff coming in from like Thrive. She's got stuff coming in from like this new organic place that she found. Like she's got water being shipped in right off the Fiji mountains, like not Fiji from the bottle, like Fiji on tap, right? Like she's got this stuff coming in, which makes sense why we don't have any money. It makes sense why the bank account's always at zero. I'm like, hey, we can't keep doing this. She's like, no, now we got these kittens. Kittens got to eat organic. I'm like, okay, listen, like that's where I draw the line. Like we're giving these kittens cardboard and they're going to be fine. They're going to be 100% fine. I can assure you of that. But nah, man, these kittens, you will never meet kittens that are going to eat better than our kittens. Never in a million years will you meet kittens that are going to eat better than our kittens. And it's not my call, by the way. I'd like that to be on record. This is not my call. Proto Man says Sam's Club for the win. And so, yeah, I've never really given Sam's Club a fair shake. I have to be honest. I can't say either way. I've never really been like a Walmart guy for like groceries and stuff. And so I know Sam's Club and Walmart are obviously affiliated. And so I think it's fine. I'm sure the prices are phenomenal. But yeah, I've done Costco and we did BJ's in the Carolinas, which BJ's was really solid. And then Costco, again, it's solid. It's solid. But again, this piano thing has me, I'm a little bit concerned. And so, but we'll see. And so let's see. Anka says, haha, just pinned the time. You mentioned Costco after my comment. Right after your comment. Wow, that was early in the show. And so there you go there, Anka. I appreciate you so much. And so we did a little Costco action. We'll see what happens, of course. And we can all, we can commiserate together tomorrow on the program. So don't miss tomorrow's show because it's going to be fun. Because Costco is absolutely going to rip now. It's written. Like, it's the way it has to be. And so let's see. Lincoln says, Dr. Jim is not a music critic anymore. Was I one before? Was I one in some prior time? Like, reading your comment makes it sound like I assumed some role of music critic at a previous moment in time. I never even pretended to be a music critic, I don't think. And so, but no, I am not a music critic at all. And so again, it's majors, it's minors, it's flats, it's sharps. It's all the same. It's all the same. It's either good or bad. This is 50-50, man. It's just like the Monty Hall problem. It's 50-50, right? It's either good or bad. Like, you don't have to worry about all the rigmarole that's going to get you to the end point of it's either good or bad. Like, it's either good, Nickelback, or it's bad, like the Beatles. Right? Like, again, this is basic stuff, guys. This is basic stuff. I'm going to get the Beatles people, man. The Beatles crowd, the Beatles crowd is crazy. Let me tell you something about the Beatles crowd. Y'all are just crazy. Like, the comments are they're about to light up. See, I'm like 20 or 30 seconds ahead of you, so I know what's coming. Like, I know what's coming in that comment thread. I even just upset half of the production team. Like, I know John's not happy with me. James might not be happy with me either, but it's just true. Right? This is just, again, this is common knowledge, guys. Like, this is basic stuff. But again, man, y'all are about to go crazy on this Beatles stuff. But anyway, it's going to help the YouTube engagement. So I will take it. So Proto Man says Costco up 10% because Dr. Jim mentioned it. No, not only did I mention it, but I played it to the downside. And so, yeah, that gives it another 5% on top of the 10%. So that's a 15% up move, which is guaranteed. RC says it's painless, especially if something is wrong. They don't ask anything. Well, that's good because we're going to go in with this huge box, this huge $700 piano and say, hey, it's, speaker doesn't work, and yeah, I'll be very impressed. I'm very impressed with the Amazon return. Obviously, they don't even ask. Most of the time, they tell you can keep the item too. Like, it's crazy. Home Depot is also very good. Home Depot, I think they understand what they're up against, and they have to be very good to obviously, keep pace with Amazon. Amazon is obviously the king of the hill. Home Depot is very good. Best Buy is very good too. And I was impressed with how they did electronics and computers and laptops. Like, when I was shopping for this laptop, I sent like 6 or 7 of them back because they said you could. They said you got 2 weeks, try it out. If you don't like it, just bring it back. And they actually did do that until I found the one that I really, really liked, which is the one that I have. And so we'll see though. Jim says, any thoughts about a share split in Costco? Yeah, I don't have any thoughts. I don't know. Has it been talked about? Has it been rumored? I mean, it would make sense. A lot of stocks, when they get kind of into that $1,000 to $2,000 range, they kind of want to split to kind of appeal to the masses again. They kind of want to split to be a little bit more attainable to the average investor, the average trader, right? I mean, Amazon did it around 2,000, Google did it around 2,000, Chipotle just did it around 3,000 or whatever it was. And so, I mean, they're kind of getting in that range where it makes sense to maybe consider a split now. That's management's call. I mean, if you look at the literature on stock splits, and not even the literature, but just if you actually trade it or invest in it yourself, that stock splits are traditionally very positive events for the company. And so, I mean, theoretically, there should be no change. Like, theoretically, there should be no difference in the overall market value, of the stock. But practically speaking, it's been a while since I've seen a company split its stock and then the next 3 months later it's not significantly higher. I'm sure it's happened, but it just doesn't happen often, if it happens really ever. And so, I mean, if Costco is looking to make a push from 1,000 to 1,200 or 1,500, I mean, I think a stock split could potentially do that. And so, let's see. Igor says Costco will ask questions, but they are nice. Okay, I'm fine with that. I'm cool with that. They can ask questions. Plus, what's amazing is my father-in-law, who I'm going with, is a contract lawyer. He's retired now, but he was a contract lawyer, and he did it for like 40 years. And so he knows all like the ins and outs of all this stuff. And so I'm going to let him do all the talking, which is amazing for me. And so Scramble Everything says, walking into Costco to return is the biggest event in your lifetime. Be prepared for it to change your life. So do you mean it's going to be similar to the CPI print that we survived yesterday morning, followed up by the PPI print this morning? Like, is it on that level of magnitude in terms of the seriousness of it being a red letter day in my life? That's going to be very interesting. So Kevin Thomas, if you explain the situation, they'll take it no problem. The return policy is pretty good. Yeah, I mean, it's a pretty cut and dry. I mean, we haven't had it very long either. I mean, we haven't held this thing for 2.5 months. I mean, it's been a couple of weeks because we got it before Thanksgiving, and now here we are. And so we finally unpacked it because we were traveling and stuff. So we'll have to see if they'll buy the story. And the good thing is it's actually what happened. Like, I'm not trying to make something up to pull it over on Costco to get a $700 piano for free or whatever. Like, I just want a piano that works. And so let's see. Kevin Thompson. Oh yeah, Kevin Thomas. That's who I just read. Jim says, we never had a return problem at Costco. Also, check supply of gold bars. Yes, I'm going to go pick up a couple of gold bars. In fact, I may just say, listen, you take back the piano, you give me 10 gold bars, we call it even. We'll call it a scratch. We'll call it a wash. Like, you take this piano back, I walk out of here with 10 gold bars, and everybody's happy. Like, no questions asked. Like, we're done, and it's over. And so Tony says Costco will take it back 5 years later. I've heard of that. That can't be the case with electronics, though. There's no way. That wouldn't make any sense. Like, you can't buy a laptop from Costco or like a keyboard piano and take it back 5 years and say, hey, this thing doesn't sound good. Like that or you know, my laptop, my keyboard doesn't work anymore on my laptop. Like, that doesn't really make any sense. Like, you've got to draw the line somewhere. Like, I personally draw the line at organic food for the kittens. Costco's got to draw the line at, like, I don't know, a year on electronics or 6 months on electronics. Right. And so that would be fair to me. I'm not looking for something that's unfair at all. But, you know, it's one thing if you go back to Publix because you bought the wrong toothpaste and it's $5 or $6. And it's like, if they give you a hard time, it's like, well, I don't really care. But when you've got, like, you know, a bigger purchase like this, you know, I just get a little antsy with the return. And so let's see. Clarence says, Dr. Jim, how much you lifting these days, man? Not very much. No, man, I'm in the old man circuit now. Haven't had a workout update lately. That's because you know, we're keeping it low key, man. We're keeping it super low key. I probably will compete next year. We have been making some progress to that end goal. But yeah, we've been keeping it super low key as of late. And that's largely because you guys see the magenta shirt that I'm wearing today? The weights that I use, same color. The weights that I use, that's why I wore the shirt today, because it matched the weights I was using for arm day, right? Because, again, it's Thursday, so arms are acceptable, right? You don't want to be training in arms, you know, Monday, Tuesday, but Thursday, Friday, Saturday, you're good to go. And so that's why they're clearance. But I appreciate you. One man's opinion, Costco returns are legendary, easy peasy, even half-eaten bag of snacks. No, there's no way. That's not true. Now I know you guys are just trying to troll me, because there's no way that you're buying a hot dog at Costco, you're taking 3 bites, and then you're walking over to customer service with the hot dog, and you're like, yeah, I'm going to need my money back. This was not very good. Like, there's no way that's happening. Like, again, where do we draw the line? It's somewhere before that, right? It's somewhere before that. But I'll tell you what, man, if they'll just take back this piano, I'll be pretty happy. But now you guys are trumping this thing up, man. Like, you've really hyped this up. Like, I'm expecting a pleasant experience now. I'm expecting to come out of this feeling better about how I felt going in, which normally on a return, like, you're looking for a wash. You're looking for a scratch. You're not looking for a profit. I'm not looking for green on the screen. I'm looking for unched. That's all I'm looking for, right? And that's how I felt going into my show today. But now you guys kind of got me feeling like, no, I should come out, you know, 10% of max profit, 15% of max profit maybe. So we'll have to wait and see what happens. And so, David Galmore says, opinion, can you return an entire eaten bag of snacks to Costco? I mean, does the customer service person really care? And then one man's opinion says, recently I had a Baldwin lock fail and was hoping for a warranty replacement. I found my 8-year-old order on Amazon, screen captured the order, and contacted the manufacturer. Replacement on its way. Okay. See, now you're mixing and matching. You can't do this, right? You can't do this. It's kind of like when you go to the gym and you have Under Armour shorts on and a Nike shirt. Like, you know, something's off. Like, you gotta be, you know, head to toe. It's gotta all be the same. You can't. We've been talking about Costco returns for the last 25 minutes. One man's opinion was first talking about Costco returns. Now he's talking about Amazon returns. Like, what you just described on Amazon, that's the expectation now. I expect 8-year lock, broken, busted. You know, you contact Amazon customer service and they obviously give you your money back and send you a new lock, and you keep the old lock. They don't care. Like, you get all of it. But Costco, that's what I'm wondering. So Sean Y, I've been hitting the butterflies great the past few weeks. There you go. Usually set them up at about the 30 delta, widen the strikes to around 1,000 risk. Man, there you go. Usually get your one long just in the money. See, that's the key there, Sean. That's awesome. When you widen out the strikes with the butterfly, you're lowering the hurdle that needs to be jumped over for the thing to get in the money. Because again, remember, you want to pin the short strike. That's your maximum profit, of course. But you really just want to climb over that first hurdle, which is that top long strike or bottom long strike, depending on which side of the market you're on. And so by doing that, it sounds like that's what you're able to do. That's awesome. That's great. And again, it's a great way to play direction. It's just a really solid way to take a directional shot. And so let's see. Proto Man's taking it. One Man's Opinions back. Empty Bag might be stretching it. I think the half-eaten bag is definitely stretching it. Worcestershire sauce Costco online order had to bring both bottles in for the refund, even only one busted. Okay, here we go. Now here comes the lost commentary. Y'all are lucky because there's only 30 seconds left in the show. Scott Umfer says season 1 of Lost was one of the greatest seasons of TV ever. There you go, Scott. Scott knows what's up. Somebody put Scott in some kind of special class or something. Give him like a goodie bag or give him something. Send him some tasty swag or something. Send him a Lost shirt. Send him something. That's what I'm talking about. Anka says, yeah, I was so lost. Yeah, see, Anka, I'm not sure what you're talking about there. I think you're talking about the show and you're treading on thin ice. But you could be talking about something else because you might be talking about One Man's Opinion, talking about Costco returns and then Amazon returns. Like, that's a little bit confusing. So I'm going to let that one slide. But One Man's Opinion says Costco does have a time limit on electronics. That makes sense. Marlon, the two big ones for today is Avgo and Costco. Yeah, what is Avgo again? Wow, we're like out of time. That's unbelievable. Avgo, Broadcom. Do they have earnings today? Is that what it is? Okay, that must be what it is. Yeah, Avgo is today. So I'm not going to trade it, obviously, because I don't have time to analyze the position. And so we're not going to do that. But, yeah, we've got Avgo and Costco. And, yeah, I'm going to pass on Avgo. And so let's see here. If I do Sean Y, best show ever, man, I appreciate you. You're talking about Lost. I thought you were talking about this show. No, not this show. Lost, 100%. Yes, correct. Emmanuel, Queen of the Galaxy. Let's see. Skinamax, 1995, hands down best show ever. Yeah, I don't need any of that. But if you're talking about Lost, so you're telling me what the best show ever is, and it's not Lost. So yeah, Sean, I'm probably gonna block you next time, but I guess I'll have to let it slide today. But man, I gotta run, guys. I see you guys. I see Steve Powell's in the house. I see Peter's in the house. I see Paul DeBoer, Josh the banker. Man, look at you guys, man. I appreciate you guys so much. Sam L's in the house, man. I just appreciate you guys. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
What's going on, everybody? ECB is the latest central bank to lower rates. Probably not much of a surprise. They got a lot going on there. We'll talk about all the things they have to think about. PPI came in today, and I tell you what, inflation still exists. It's still a thing, but don't worry, we're going to lower rates. Finally, the landscape of streaming, this is something that I've paid attention to for the last year plus, and it's changing once again. Warner Brothers is doing something similar to what Comcast did a couple of weeks ago. So we'll talk about those 3 things and more. We'll take a look at earnings. Yes, I know. AVGO has earnings. I've been seeing people ask about that name in the chat all day. I'll talk about what I'm looking at. And we'll just look at a couple of different charts here too. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I am your host, Jamal Chandler. I'm just getting caught up with like different things that are going on in the world. For those of you who are in sports, I mean, Bill Belichick is going to the college ranks. I think that's exciting, man. That's one of the more exciting things I've heard about in a while. It's interesting because he was on Pat McAfee's show the other day, And he said something, he said, if I go, which at the time it wasn't official yet, but he said, if I go to the college ranks, you can just bet that team is going to be an NFL-ready team. It's going to be run like an NFL team in some way, shape, or form. And, it's going to be about preparing kids to be getting to the pros. What? When you hear that, any player who hears that, they're going to want to go to Carolina. That's going to be really, really a thing that they're going to have to contend with. And a lot of recruits are probably going to be really interested in going there. As somebody who is, most of you know I'm a Wisconsin fan. I went to Wisconsin, but I'm also a University of Miami fan. I grew up in Miami. Those Miami Hurricanes are in the ACC. That might be a little troublesome for my boys going forward. That might be a little troublesome. He's going to, I'm sure he's going to garner a lot of attention, the ACC there, and it's going to be really interesting. It's pretty cool, too, though. Like, I don't know if you guys know, but apparently his dad was an assistant coach there at Carolina, like in the 50s, and they showed some picture of him as a little kid, like sitting somewhere on the campus. I don't know. That's kind of cool. Like, I'm betting that has a lot to do with him taking the job. There's this, he has this history with the school in some way. And that's pretty cool, man. But it's going to shake up college sports, I think. That is, I'm trying to think of the last time a guy went, first of all, that's never happened. Somebody with his credentials and all of that to go to the college ranks, I don't think that's ever happened, especially in football. But yeah, I mean, when's the last time a well-known cemented NFL coach went to the college ranks? You just don't see it. I don't think it's ever happened. So that's kind of a watershed moment, if you will. It's going to be really kind of fascinating. Yeah, I went from Miami to Wisconsin. That's right, Soren, but not directly. It was a roundabout way. Like, I went from Miami, then I went to the Carolinas. I hit South Carolina first, and then North Carolina, by way of Atlanta. It's kind of hard to explain. I went to Atlanta a lot as a kid. My mom lived there. My parents were divorced, and I went back and forth between Miami and Atlanta. But then we eventually moved to the Carolinas. We moved to North Carolina, South Carolina, North Carolina. Then I went back to Atlanta for college, undergrad, and then I went to Wisconsin for graduate school. And yeah, that's kind of the routine. So I've been a little bit all over. Let's pull up some slides. Let's talk about the day and see what's going on here. ECB, there was a couple of central banks this week that had their meetings. Bank of Canada had a meeting yesterday. They lowered by 50 basis points. Big cut, second big cut in a row. Well, ECB, they lowered rates too. I mean, they feel like inflation is getting to the 2% target, but they're also kind of struggling as an economy. And there's political stuff going on in Germany and France, and they're a little worried about where things are headed. So they decided that they were going to cut rates. I think that's it's the third time in a row that you've seen it. And I'm pretty sure they're probably going to just continue to cut rates. The biggest worry for them, though, is if, honestly, it's the U.S. And I think that's the case for a lot of different countries around the world. If this tariff thing comes into play and Trump starts, terrifying, if you will, it's kind of funny to say, it's going to affect a lot of countries, not just the three biggest partners. I mean, there's Mexico, there's China, and there's Canada. I mean, those are the three biggest partners for the U.S. Of course, they'll be affected and the most, but Europe as well could be affected. So this is, I think they run the risk here. Canada is really fascinating. They just cut so big, considering that there's that relationship, like I said, between the U.S. and Canada, but. ECB, I mean, they do have to think about this a little bit, and I think that's why they did a smaller cut as opposed to bigger. I don't know what the hell Canada's thinking, but I guess we'll see how it all plays out. Nevertheless, you're seeing countries around the world cutting rates. We're up next week. As of right now, 98% chance of a 25 basis point cut from the Fed. We'll see what they do, man. Yeah, PPI increased in November, mostly because of eggs, I guess. Egg prices went up for the better part of the last month. And look, CPI was kind of in line, PPI a little bit higher. So inflation still exists. Yet we're talking about, again, cutting rates come next week, 25 basis points. That's not huge, but still, I think this is one of the things to really watch. Currencies, rates. Oddly enough, going into next year with this potential chance of tariffs and affecting not only the U.S. and other countries and how it's going to offset costs to consumers, et cetera, I think we're going to see some volatility in the currency space and the rate space again. I really do, just because of that. So I think that's going to be one of the trades. Who knows how much we're going to see volatility in equities. But eventually, if you get enough volatility in currencies, it leads to volatility in equities, as we saw during this year, to be honest with you. So that's something to look out for. And then finally, Warner Brothers Discovery, they restructured their business. They got, the linear business with a lot of the old networks. I think there's like all these different things that they own. I don't even remember right now. I could look it up. I think it's like, CNBC and MSNBC and E and all these other things. They're going to spin that out for the cable networks, and then they're going to have just the streaming side. And so you can see where this is going, because Comcast did a similar thing a couple of weeks ago. There's big changes in the streaming space, and they're trying to get the most out of it, especially the side that contains probably sports, which I think there's a side or the on the Warner Brothers side that has sports, and it's usually in the streaming. And of course, sports is becoming big with streaming. I would not be surprised at some point if most of sports ends up on streaming. I mean, you can't even get local games right now, in a lot of different places, like when it comes to NBA, et cetera. Most of them are in streaming nowadays, and MLB is mostly gone to streaming. At some point, NFL is likely going to streaming. You can see what they've done this past year. So they're trying to set it up so that this side is like streaming, and that's where they're going to get tons of money from. The regular cable stuff, I mean, they still do. They just don't as much, right? Because everybody's kind of mostly heading towards streaming. So you can see where this is going, man, and there's a lot of changes happening there underneath. Is it worth doing anything in the stock? I mean, obviously there was a big move because this means they're going to be they're looking at different ways to create more value, if they will. That's what they always say. That's such a corporate thing to say. Well, we're going to create more value. That's what they always do that. Whatever. Stock's moving. I remember I had some of this stock maybe in the last couple of years. But I got tired of waiting on it, because this is kind of the thing that I was waiting on. I kind of got tired of waiting on it. I don't know how interested I am in doing anything. I mean, this would be a leap call situation for me. This is usually how I look at those type of names. Or you could just do outright stock, I guess. 1,200 bones. Oh, actually, it's marginalized, so you could do 600 bones. I don't know. I'm not probably doing anything in the stock. It's more the interesting to me is the story about streaming and where things are headed. So something to keep an eye on when you look at some of these other streaming names in the space. Leftovers. Avatar still holds the box office crown. Let's move to the next slide. Yeah, it is apparent. This comes up because, Inside Out this year, that thing made $1.7 billion. Inside Out 2. I didn't see that one. I kind of liked the first one. I thought it was cute. That was a good idea, right? I mean, you got all these different emotions and some in your head, and they all have like their own personalities. It's kind of like Tasty Network. It's like all these different personalities, right? It's kind of like that. Yeah, that movie made $1.7 billion, man. I would like to do voiceover work for a movie like that. I'm down to do it. Call me up, anybody. I'm down to do some voiceover work for a movie like that. You know how big those checks are? Good God. Avatar came out in 2009. It doesn't seem like it was that long ago, right? $2.92 billion. Avengers Endgame came close to it 10 years later, $2.8 billion. Avatar, once again. James Cameron knows how to make movies, right? 2022, $2.32 billion. Again, James Cameron, 1997. Titanic, $2.26 billion. You know what we need to do? We need to recreate the epic scene with Kate Winslet and Leo, at the bow of the boat. We need to do that with Tom and Tony. I think that would be really good to do. I really do. I think it would be a good thing to do. Matter of fact, you could do it with Tom and Tony. I'm telling you right now, believe it or not, you could do it with Tom and Tony, and then you can also do it with Liz and Jenny, and then you could do it with Mikey and Nikki, and then, you can be like, who did it best? And you can have a little, poll for it. You know what I'm saying? I'm telling you, it'll work. Yeah, that's right. I got ideas there all day long. Star Wars Episode 7, The Force Awakens, that was $2 billion as well. Avengers Infinity War, $2 billion. That's the big number. Nobody's ever crossed 3. I wonder who's going to cross 3 first. You think it's going to be Inside Out 2? Nah. Spider-Man No Way Home 2021, $1.95 billion. I actually did see that one. I think that's the only Tom Holland one I've seen, I think. I can't remember. No, I've seen 2 of them. I think. I kind of like him as Spider-Man. I actually think he works well as Spider-Man. I think he's better than Andrew Garfield. I think he's actually a really good Spider-Man compared to all 3. I think No Way Home, wasn't that the one where all 3 of them were in it? I think that was, actually. I'm trying to remember. I think it was. So yeah, then there's Inside Out too. Will Wicked get up here? Who knows? I do think it's going to be $1 billion, but who knows? Let's move to the next slide. You got to give me some grace here, folks. There's just not too many interesting charts out there nowadays. I mean, when you have a situation of markets sitting near all-time highs, right? And there's really no wall of worry other than tariffs, Trump tariffs, which that's the only thing that people are essentially possibly worried about. And we don't even know when or how that's going to manifest itself. And then you look and you're seeing rates kind of hanging out in the same area, right? 10 years been around 4.3% for the better part of, it's been grinding higher, but I mean, it's not hitting new highs or new lows. It's just kind of wrapped around where it has been. And volatility, again, even on a day like today, we're still looking at a front month VIX of 14.5, which honestly you should be, right? I mean, look, you got to think about it in terms of moves. The VIX, when you look at the rule of 16, for those who don't know, if the VIX is trading 16, that's predicting 1% moves in either direction in the S&P 500. Well, we're not even moving 1%. Maybe we've had a 1% range. I can look and see, actually. Did we have a 1% range today? We've moved, no, we have not. We've moved 24 and a half handles on the ES. And so, that tells you that it's not even a 1% move. So why would VIX be tracking 1%, i.e. 16, if we're not moving 1%? So that kind of let you know. For those who are like, man, why isn't the VIX up more? The market's down 26 points. It's nothing when it's at 6,000, just so you know. So it's fairly a quiet market. And so that's why you can see, implied vol is fairly low. Historical vol is even lower because this is not enough of a move to make the market get excited about it from a vol standpoint in any way. And that's kind of where we are right now. Let's move to the next slide. The challenge right now is to keep things light, not do a whole bunch of different trades. It's vol-wise. You shouldn't be selling a whole bunch of vol right now when VIX is 14. You just shouldn't. You're basically playing directionals. You're scalping probably a little bit, maybe setting up a few trades further down the road, like I have been with some of the calendar calls that I've done, I've talked about, and I'll talk about more when we get to the platform. But that's just kind of the market we're in right now. I mean, I don't think there's any real reason to force any big trades. You certainly shouldn't have many big trades on. I only have about 30% of my buying power being used right now. Not a whole lot. So we just talked about rates. Obviously, they've come down a whole lot in the wake of the election, et cetera. But you've seen a little weirdness in the curve right now. There's weird things going on. As you can see, the near term of the curve has moved around a lot, the front end. When you look at the 1 year and the 2 year, look, so you can see the dark green line is us. Look, obviously, you can see it was higher in the white on November 20th. Then the week after that, it came down a little bit. Then the week after that, on December 4th, it came down some. And then the front end of the curve is 1 year is even a little bit lower now. 2 year is above a week ago, but it's just kind of a funky looking curve, to be honest with you. Overall, from a month ago, the curve is obviously all the way, all parts of the curve are down, all tenors, but it's just kind of weird right now. And the near term is starting to move around a little bit more. I think they're anticipating more cuts, but they don't really exactly know how to act. Because again, you saw how much the near term moved up, and it's like, oh, we're going to have tariffs. This is a bump. And then it pulled back. And so I haven't been interested in trading bonds and rates for this reason. I think there's just too much going on, too much moving around, and too much indecision. I just can't make a heads or tails of a trade here, so I haven't touched it. Let's move to the next slide. Tens and twos remains above. I know they would said once upon a time, once it goes above that line, oh my God, once it goes above flat, that's when the real recession starts. I don't see any signs of a recession right now, but I'm not an economist. I don't know. The biggest way a recession happens, I think, is if you hold rates too high and people are struggling to make costs and pay for things, right? They're trying to work on lowering rates, but is this a signal that we're going to fall into a recession? Hell, I don't know. I just know the 10 and 2 is finally above flat for those of you looking for a long time. If you think it's going to revert, well, then maybe you put the opposite trade on. But me, I'd rather just play bonds outright, treasuries, if you will, ZN and ZB. That's the only way I'm going to play any of this. I'm not doing any spreads. Let's move to the next slide. So we got AVGO, we got Costco, we got Restoration Hardware. There's a few other junk earnings, but these are the only ones that are interesting. Basically, that's it for the rest of the week, folks. And some of these weeks coming up might, well, I shouldn't say that. We got actually somewhat of a busy week next week. Very busy. Retail sales are on Tuesday. Again, that's another look at the consumer, how the consumers are handling things. Oddly enough, we also have GDP, which is another look at consumer because GDP is 2/3 of GDP is consumer spending. So between retail sales and GDP, I think that's a similar type of look, but we got those two. Of course, we got the FOMC rate decision coming up on Wednesday. We'll take a look at the expected moves surrounding that meeting. Then you also got core PCE, which is another look at the inflation, as they always say, the Fed's preferred look of inflation. I bet the Fed goes, no, it isn't. We don't care about that. But PPI actually gives you a lot of the inputs for I think CPI kind of does too for PCE. So I don't know how much this core PCE number is going to matter next Friday, but I do know that December options expiration will be next Friday as well. Number of S&P 500 stocks above the 50-day moving average is only 256, only 51%. There is, as I talked about with Chris Vecchio on Futures Power Hour today, there is a lack of breadth in the market. And you can see there's some names in the Dow and names in the Russell 2000 that have kind of faded some. So something to keep an eye on. Let's move to the platform. Next week is 18th. Yeah. I mean, this is a fairly low number, 10.5%. We usually 52 points in either direction. We usually see a little more volatility than that on the Fed meeting and doesn't look to be forecasting much. But again, these things, this is just given the inputs of what's here. They don't know what Powell's going to say. They don't. This number has no idea what Powell's going to say or do. They have no idea for sure if we're going to cut rates. This thing is pricing in a 25 basis point cut, status quo. Just something to keep in mind. Let's see. Where do we want to go from here? I guess we could go straight to AVGO earnings. Yeah, SPOO's down 26. The sky is falling. Yeah, right, Peter. I know. Strategy and Opportunity thinks it's going to rip into the closer tomorrow morning. Maybe. Maybe it would. What do I think about a double crab trade in AVGO? I don't really trade crabs like that, but I could see why you want to do it. Selling vol. Look, I don't like to sell vol in earnings. I just don't. I actually like to play them for moves. So the one thing I've been trying to get off is my patented trade, a calendar call spread. I'm playing it for like a $20 move. I am. I know that's well above the expected. The expected is 12 and change. It gets you to like 133. But I'm expecting for them to overshoot the forecast. That's just kind of what I do, man, when it comes to earnings. I kind of play them for that for a big move, upside. Things went well. So I'm playing the 200 strike calendar call for AVGO earnings. I'm trying to get them off for 95 cents. They haven't given them to me. They're being real stingy about the price there, but, it happens. That's fine. I'll deal with it for now. March 20 calls in SoFi, maybe something to look into for future profits. That's what Mr. Green says. I have noticed SoFi has had a bit of a bounce, to say the least, in the last several months. And obviously, the expectation is that lower rates are good for SoFi as a company. Maybe it is. Stock share seems to think so. A lot of other people trading the stock seem to think so. This is one of my I have a leap call in SoFi. I don't remember the strike. And again, I don't look at my leap stuff every single day. I just don't. I might have the 5 strike, maybe, I think. That sounds like something I would probably do. I did it when stock was like 7 or 8 or something. I don't know. But that's what I have on in SoFi. What else have I done? Oh, yeah. You know what? I did. Again, I'm really trying not to trade as much. I really am. But I did. What the hell did I do in Tesla? I did something in Tesla. I don't remember doing anything in Tesla. Oh yeah, I forgot about that. Some little cheap out of the money puts just for fun, but I don't expect anything of that. A more meaningful trade is doing more of the calendar calls and ETF. Equity ETFs. So, and I did the 450 strike, considering we've seen a little bit of a fade here and off the highs in the Dow Jones Industrial Average. Is it going towards 433? Maybe. That would be a level of support. Right now, there really is no support. So I decided I would play it for return to all-time highs and selling December at the end, December 31st expiration, end of the year, and getting long January. I wanted to do this and actually get long a little further out. But I tell you what, looking at the 450 strike here, what do you see here, folks? 227 at 6:30. Yeah, that's right. You're reading that correctly. I'm not sure what. Clearly, the weekly's expirations are not very liquid and tradable. And then here it's like $6 and change, and I just didn't want to. I don't want to pay that much. So just to give you an idea of my thought process, I mean, selling these, they're only $5.30. I'm sorry. This is only 90 something cents. And this would be $5 just for this. And I usually like to do a couple of these because that's the way you really benefit out of these. You can find something like what I did is I found this spread that, again, looking at where we are right now, it could return. My long strike is 36 days out. It could return to near-term highs. I would expect it within the next couple of weeks, if not 3 weeks or so. That would be great for this position. And this whole trade cost right now it costs $1.80, and so you figure you do 5 of these, that's a little less than $700, maybe $600, a trade that lasts you at least 30 days. So that's really nice, and I would rather do something like that. And again, I did 5 because that's the level of risk I'm comfortable with. You could do 2 of these, you could do 3 of these. Some people might do 10 of them. It just depends on. But you got to think about it from a premium standpoint. Am I comfortable losing $700? How much is that for my portfolio? In this case, that's a little more than 2.5% of my portfolio. It's a pretty decent trade for the chance to possibly make double out of it, right? It could end up being worth 4 or so. It just depends on the manner in which this thing moves. So if we continue to grind higher and say in 2 weeks, which would be 4 days left on this, we're sitting at 449, right? These probably stay around the same price if this is trading $4.49 with 4 days to go. And these are probably maybe $4, right? $3 to $4 potentially. So that's kind of the thought process around these type of trades. I like it in a market that's continuing to grind higher. Ignore this red here. Obviously, that's just 1 day. But I like it in a market that continues to grind higher, and that's kind of how I feel the market's going to be over the next couple of weeks. We'll see what we'll see what the Fed meeting brings. Could bring some potential volatility. So that's AVGO. What did I say? Restoration Hardware also has earnings. This thing used to be a mover sometimes. Let's see what that's pricing. It's pricing $49. That's 10%. I mean, that's a big move for a $300 name. This is one. I don't know. This can really be volatile earnings from what I remember too. You can see back there in September, it 256 and then opened up at this thing opened up $50+ higher, and I have no doubt it could do that again. I don't know how I would play this one. This is another one that I would probably do a calendar call spread in, but I just don't know how I would do it. Looks like somebody. Volume 151. Looks like somebody probably did a call spread here, I would imagine. I wonder if they sold it. That's an interesting move. But they're looking for upside as well. You can see it. And the reason why it's 151 there, 151 there. They probably did the 420, 450 call spread. I wouldn't be surprised. I don't know. This is a harder one to put into perspective because I don't know the chart as well. Let's see a 5-year chart. Let's go weekly. This thing used to be $700. I guess I kind of forgot that. Restoration Hardware is not cheap. It is not cheap at all. Some of them have stores, like not stores, but some of them have like restaurants. Sometimes you can eat in there. Yeah, they want you to get nice and comfortable before you make a expensive purchase of some type of sofa, I guess. This. Man, look at this chart. Some action has to happen here. This thing could start to break out. If this has a nice earnings play, it is overbought, it looks like, here. But if this has a nice earnings play and it pops, let's just say, this thing pops. Did it pop the other day? Oh, earlier today. No, that's this week. Early in the week, it was a little bit higher, right? Faded some. If this thing were to pop, 50 bones, boy, that could be something. The 450 strike. But that's the problem. Sometimes with these, like, how much does this cost? Let's see. $4.50. $2.60, huh? Oh man, how do I get myself in these situations? I'll do one for $2.50. $2.50. No, $2.50. Don't play with me. Don't change the price on me. $2.50. As a matter of fact, I'll do two. We'll look at that's a total of 500 bones. We'll see how that plays out. So that's what I'm going to try and do there. And then there was one more earnings, right? I don't even know why I'm trading earnings. This is what happens when you get bored. You trade earnings. Costco is another. Costco, I am not going to play. It's not a huge mover on earnings. This is one you probably feel a little more. I would imagine. Again, I'm not an earnings seller, so don't take my word for it. But I would imagine this is when you feel a little bit more comfortable selling. This is somewhat of a quiet name on earnings, and obviously the stock. You talk about continuing to grind higher. That's just what it does. And there's. You can feel kind of comfortable. What the expected move is only $32. That's probably like 3%, right? No, 10. Well, yeah, something like that. A little more than 3%. Yeah, I would imagine you could feel a little comfortable selling something in here, Iron Condor of sorts, or something of that nature. I just feel like this doesn't explode or tank on earnings. Typically, it's kind of muted. So maybe you do that, but feel free. I'm not touching it. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you guys.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
What happens when two titans of trading come together to harness the power of their prowess? You get a massive display of, whatever this is. Oh, thought he had it there. Come on, gents, it's not that hard. Hit the ball with your paddle, mate. Oh, for the love of... Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market, trade ideas, and more delivered right to your inbox. Sign up at tastylive.com/newsletters.
Hello, everybody. Happy Thursday to you. Tim Knight here, and it is time to look at charts together. We've got all the big economic data of the week out of the way. The PPI came out this morning, and it was, let me see, it was running pretty hot. I'm not getting emotional about the PPI. I'm making sure I don't sneeze. So there, it's passed. Anyway, it came in twice as hot as expected. And we've got a nice red day on our hands. We've pretty much undone yesterday's nonsense. So we're just kind of grinding around right now, but it's a good day, a lot of good things happening. And let's go catch up with the charts, see what's cooking out there. And off we go, starting with the spider. We have spent the past 6 or 7 days just kind of grinding it out at more or less the same level. Not very exciting. This has been a record year in a lot of respects, and there's only I think 12, 11 trading days left, some small number. We're almost done. I imagine some people are just kind of hung it up, took their profits, and they're ready to relax. So volume's pretty low and activity's pretty low, but there's a lot of opportunities out there. I'm very excited about the year ahead. The diamonds are down, and they have been going down day after day after day after day after day after day. This is the 6th day in a row of a red bar, having peaked 7 trading days ago. And so definitely a failed bullish breakout in diamond land. The cubes are also down, although nothing dramatic. It's an inside day. Yesterday was the lifetime high. We've given up some of that. But on the whole, the Magnificent Seven, which I believe accounts for 33% of the entire market cap of the S&P 500 now, 33%. 7 out of 500 stocks, a third. Big disproportion there, I would say. They did a yeoman's job yesterday of pushing things higher, but things are a bit sputtery today. And there's not a heck of a lot left this year. There's the Fed thing, which everyone just figures would be another quarter point, meh. But yeah, there's not a lot to move things. EFA, my biggest short position, is doing all right. We're down 0.86%. Some good things happening here. The gap was not violated, which is terrific. We have rebroken, if that's a word, this blue trend line, which goes all the way back to the major October 13, 2022 bottom. And this is looking sweet. I'm delighted with it. This is one of my, I've got 13 positions, only one of which, this one, is just a straight short sale. All the others are long puts. But this is just a very simple short position, and with a stop at 80.01. And even if I get stopped out, it's still a profit, but I'm just definitely hanging on to this and hoping for much, much lower prices on the EFA. EWZ gave me a bad scare yesterday because I've got a bunch of puts on this, and it rallied strong yesterday and after hours, stronger still. Mercifully, it has given up all of yesterday's gains as well as Tuesday's gains. We're pushing back basically to the beginning of the week. We're down almost 3% on this, and it's all about this head and shoulders pattern. This is one of the most well-formed topping patterns I've seen. What's frustrating about this particular position is the options stink. All day long, I mean, the options, I've got March 27 puts, and often the bid ask is literally 50 cents by $5. It's just meaningless. Hardly any volume open interest. It's thin, to say the least. I'm clearly holding out for a lot more intrinsic value on this because the day-to-day trading is just preposterously wide bid ask. An important element of this, which might be to blame for yesterday's scares, PBR, petroleum company down in Brazil. This is the biggest component of EWZ by far. So it doesn't matter. EWZ is looking terrific. That's a great, great pattern. Now, NVIDIA had a big bounce yesterday, but we're down a bit today. This pattern is still in formation. We're about 85% done with it. We need to break below this level here, which is about 128.73. And we're below this broken trend line again, and have been for the past 3 days. And this is key. Completing this pattern is key for any kind of meaningful tech diminishment. This has got to break. If this breaks, SMH breaks, all kinds of other AI-related stuff freak out. I've also noticed, by the way, that the other Mag 7 are not just sitting around with envy at NVIDIA's monopoly in chips. No. Apple, Google, both announced, I think yesterday, major AI chips that they're doing or have done. And so they're not intending, these other companies, for NVIDIA just to have a complete stranglehold on AI chips until the end of time. No, they would like to just take that, vertically integrate and dispatch with NVIDIA's chips. So long-term strategically, I would say that plays into it. Of all the 13 positions I've got, one and only one is even at all green, which is AMD. And that's okay. That's okay. We've got a little prospect for a little bounce here, as long as it doesn't push above that dash red line here. I'm fine with it. And that too, and then this pattern has completed. This is a very pretty pattern. But there is some kind of like, let's buy it when it's on sale kind of mentality going on, because it's been a really poor performer relative to other semiconductors. It's fallen from about 230 down to 130. That, I mean, not many semiconductors have a 50% wipeout from their lifetime highs, but AMD does. So I've been seeing a lot of, hey, look how cheap they are, let's get in, etc. No, it's dreadfully expensive still, and this pattern is complete. The trend line is broken. If this was a double-digit stock in a few months, wouldn't be surprised. Other Mambo big patterns doing nicely. This one I mentioned yesterday, Chemours. I think it was Ken Paxton, the Attorney General of Texas, who launched a lawsuit against the forever chemical companies like DuPont. And CC here is the receptacle for all that nasty stuff. And so their stock freaked out yesterday. Long term, I think this is a terrific topping pattern. Cleveland Cliffs, another favorite here, down over 5% today. Gray Television, I've been mentioned here before, also slipping day by day below its giant top. A little better known here, BHP. This is down almost 2% today, and we are hammering out what I think is going to complete this top here. We had a beautiful reversal here. I think it's happening again. Because it's overseas, this is very, very gappy. But in terms of a long-term trade, that looks like a nice distribution top. And another one we've mentioned from time to time, Neighbors Industries NBR, this one being a fractal, this little fella here being a pint-sized version of this monster. I think it'll follow the same results following that. Bonds are very weak. We've been talking about these trend lines here. The ultimate top for bonds was way back in the salad days of March 2020. They've fallen from 160 down to about 91, just a calamitous drop. And shorter term, doing all kinds of fun things. This symmetric triangle is probably old enough that we can just say goodbye to it, because it's sort of done its duty. So let's just tidy this up a little bit, because we don't need that anymore, cluttering up our brains. So this was support down here, and we went flying higher, peaked back here on the 6th, and have been falling ever since, which of course means interest rates are rising. And in turn, things like home builders, for example, D.R. Horton, are feeling the heat. This has been in this long ascending channel, and this had its own imperfect head and shoulders. I say imperfect because the right shoulder is higher than the left, but it's pretty good. Here's the neckline, fall down from the pattern, retrace. This was the peak. This is the most it could muster, and the bounce back. And then since then, just like that. Another good position, still holding out for long term, is Caterpillar, CAT. And this has been, this peaked itself back on the 6th of last month, around about $418. We're down about, almost 40 on this one, but plenty of room to go, even to the intermediate term supporting trend line for CAT. And then Wingstop, another of those aforementioned 13 positions, down over $5, working again to affirm this topping pattern here, cleanly below the trend line. Long term, you can see how vulnerable this looks. So Wingstop looking real sharp. As far as precious metals goes, they've been really wiggly, and I have not committed to my silver position on here because gold just I'm way too concerned about what gold's up to. This is the gap. This is the key gap. It's got to conquer this gap in order to have its next leg up. I think that if we can fall down to somewhere around this vicinity, somewhere above this channel, that will be a good time to get into precious metals again. And I would say the same thing for silver. Commensurate with that, and it'd be kind of nice if we didn't break this trend line, but it's not required. What's key is to stay above this 27.32 level on SLV. Since we're talking about commodities, just mentioned XOP, the oil and gas exploration ETF, still looking like a monster top on this one. It's a slow mover. This could take months to really finish up, but that definitely looks like a major top, akin to say this one here. In sharp contrast to this, even though it's still energy, our old friend natural gas is obeying its cycle beautifully. We've talked about this cycle dozens of times, and it's rough. It gets jerked to this way and that, but on the whole, because this is a multi-decade cycle, it does the job. And so we've seen NG here pulling higher little by little in fits and starts. So it seems to me that this could well have its own bull market for another good 14 months or so, something like that. Just in passing, I noticed that one of the long, kind of the more speculative long positions we talked about here had a nice pop. Gambling.com, GAMB, up today almost 20%. And it's already had its own success back here earlier. So this was the base, and it's just jumped off of that. So just to wrap things up, just to not to beat NVIDIA to death here, but this is a very key instrument to keep an eye on. And it's not because anything important's coming out with respect to earnings or conference or anything, just from a charting perspective, it's key to keep an eye on this, because if on the one hand, it pushes above this dashed level here, and what is that? What's the price, just so we know? 141.82. If it pushes above that, it kind of wrecks the pattern. And you'll probably hear me talk about NVIDIA a lot less, because that would really spoil the party here. On the other hand, if it doesn't do that, on the contrary, if it falls below 128.73, that's big news. And that'll feed right into the likes of SMH, which itself I've got puts on, March puts, and that would complete this pattern as well. So that's enough patterns for you, I think. That'll be it from me. I'll see you here tomorrow to close the week out. Thanks for coming by. See you on Friday.
If you missed the live show, here's our cherry on top weekly recap.
When I was in Krakow a month ago, I was introduced to, this is cherry vodka. It's not like vodka you get in the States, it's like 80 or 90 proof. We should get a sponsorship of some sort involved with these guys, or at least a co-marketing effort.
It seems a little risque, I'm gonna be honest. I mean, she's got two cherries that are kinda
easy.
Yeah, you're you're uncomfortable considering
the show doesn't have a lot of sex appeal. The network.
You're
in
50% right.
But here's the thing that I don't get about TP. He's got to stop doing the show from a lazy boy. He goes
Usually
lower
you can see right up
and
his
lower.
nostrils.
Like
I want him to go even lower, so it's just all you see is just like
he's in an iron lung. Okay, we want him to be in an iron lung.
It's like it's a bubble boy.
Stas, what comes up next? The opening bell. Don't look so surprised. Sadov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like what has changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not being traders here.
Do not engage.
When I got,
and I got it. We didn't. Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. We since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that at $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me, baby.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. Sadnov, how's your day going today? I got to imagine it's a little bit better than yesterday.
Yeah, it's fine. It's all good. S&P's down, NASDAQ down. Russell's down though. Bonds are down. Yeah, so it's good. It's good.
So no real complaints?
I'd like bonds to be up.
I figured that was going to be the only one that was going to get you.
I'd like the Russell to be up.
That's what I figured. But we got some good movers here today. Even the S&P is down 24, south off 24 and change. NASDAQ down 122. The Russell is the weakest of the group on a percent basis, down just about 30. The Dow's down 193, and volatility is up by 7 cents. You put any weight into this volatility up 7 cents on a $23 move on the E-mini S&Ps?
Zero. It's a dead Thursday.
I agree.
Yeah,
bonds down almost a full point, sad enough. They're just a tick or two off of their lows, 117 and change. Bonds go lower, rates go higher. Do I still have that right, or does it work? Does it work wrong? Because they've been talking about cutting, and it looks like the bonds are saying not right yet.
Not right yet. I think you can buy bonds here. It's a free shot. I bought them a little too early. I thought 118 was going to be 118 and a half is going to be good. 117 is really good. I bought some this morning. Haven't traded them since. I may nibble. Is there a number tomorrow?
Tomorrow we have import price index. No, nothing.
Nothing.
Tomorrow's Friday the 13th, though, Sadnoff. You just better beware.
I am aware. So I'm going to sell a few more puts here. Wow, they bid up the putties. Here, putty. Okay. So now I'm starting to load up my position.
Bond Ivy rank is uptick too from the low teens into around 24.
Yep.
Another one with good Ivy rank that's selling off a little bit is gold, down $50. Finally, after the last couple of days of going straight higher, it's kind of taken back a day or two. Gold flirting with 2,700 to the downside this time.
Yep. Yeah, there was some. You're right. There was some definitely some decent size reversals. The S&P's up 42 yesterday, down 25 today. NASDAQ up 360 yesterday, only down 129 today. Russell down pretty big today. Bonds down big, like you said. Notes down big. Gold down big. All these things that you just mentioned. Silver down big. $1.30 something, I think. Yeah.
Yeah, that's a 4% move in silver, sure.
Bitcoin down 2%. That's nothing. And yeah. And then I thought they had a chance to pull the plug on some of these stocks, but they really didn't. Apple's up, AMD's up, Apple
Tesla's was down yesterday, or basically unchanged. Yeah, but you're right. It's up $1.50 today. Tesla's down today, small, about $7. Almost $8.
After the run it's had, I would almost consider that to be bullish. But some of the stocks that haven't had a downtick, like UAL, finally down a little bit today. MU down. Taiwan Semiconductor. There's a couple. The big loser today was Adobe, but I tried to put a position on in there this afternoon. Markets are not great.
Yeah, Ivy rank's down to 8 now. The stock's down 72. I get your feeling that you want to kind of do something.
I thought the 465 calendar spread would be a decent play, because I don't think there's. I kind of feel like at around wherever it is trading, like 5 something. Thought it was kind of the Jan Feb. I thought it was kind of like a low risk, low reward trade, but I have no idea how to do price discovery, and the markets are too wide.
So enough. Tesla down 7 or 8 today, is leading SPX again in option volume, if you can believe that.
Yeah, that is a very important red flaggish thing for me.
What do you mean? In what content? Sorry.
In what context? It just because, again, if the market's going down and nobody's buying SPX puts, then or trading SPX, then there's no fear. Then it's just a buying opportunity. So, until Tesla gives up the lead, I don't know. I mean, listen, I'm happy that Tesla's trading a lot of volume because it gives us, Tesla and Nvidia, they're just really crazy active underlyings. So it's good for business. But I didn't trade very much Tesla. I only traded some stock and sold it last night, bought it back today. We had a decent day in there. That's it. I'm gonna call it like it is.
I traded it more yesterday than I did today. It's going my way today a little bit. I mean, ever so slightly. I could use another $10, but sure.
I mean, I really need Tesla by DC expiration. I don't know, 375.
Is that all you need?
No, 305 would be good.
All right, that's fair enough.
So I started to get short Tesla after the election because when I say get short, I didn't sell anything naked. I just bought some put spreads in there and sold some call spreads. My first put spread that I bought, which I obviously must have bought it at the money put spread. I bought the 305, 315.
And you still have it on, and you still have it on, and the stock is over 400.
Yeah. No, I bought that. And then when it didn't work, of course, market started to go higher. I sold an out of the money call spread, the 325, 335 call spread, because I figured, well, put spread's not working, but I'm going to sell a call spread here. I still have that on, and that did not work. So I don't feel good about my Tesla positions.
I don't know too many people who do, unless they're just straight out long Tesla for sure.
Yeah.
I mean, or some bullish strategy.
I mean, today was a good day because they killed premium in there, but
I'd be ranked 71. Yeah, it's been lower, but yeah, it's starting to come in a little bit. Agreed.
Yeah. But I felt like for me, let's see, 62 trades, not that many trades, a little bit quiet today. Nothing bad. We have no big losers today, just a scattered bunch of small losers and a couple of big winners. Let's see. Bonds, probably my biggest loser. Bonds.
Yeah, because that's a directional play for you. I know you're short put, so you've got a little bit of gray area there, but short puts is still a bullish strategy.
Yep. No short calls at all, just puts. Yeah. So anyway, S&P options trading more Tesla options than S&P options to me is definitely a little bit of red flaggish. And I mean, there's no sellers. I don't consider this market. It's funny. The sellers will come out and they'll pound silver, right? Sellers will come out and they'll pound gold because these are like typical commodity traders. Bonds, they'll pound bonds. But when it comes to S&Ps, there's no bangers out there. Like, I mean, who said it today? Was it Victor? There was no alternative or something like that?
Yes, it was Victor. No alternative. Yes.
Tina, there is no alternative.
127,000. I'm sorry, 1.2 million even the S&P trading. That's good volume.
For the S&Ps, yeah. So a lot of people traded S&Ps today because they didn't trade SPX options. That's for sure. And looking at my big list of underlyings here, nothing really crazy jumps off the. Yeah, like yesterday, the Qs were up like $10 or down $3 today. So it's not not the exact same thing. Hey, this morning we talked about VIX one day, and this morning it was under 6. It was 584.
Yes.
And this afternoon it's almost $9. So that's a very real thing that we talked about. Just in the mornings, risk off, and in the afternoons, risk back on. That's what makes trading, selling premium and holding it in the 0 days to the end of the day so hard.
Yeah, no, totally agree. Because volatility upticks, and then now you're talking about SPX options here, right? When you say VIX 1 day, you're talking about SPX options, sure.
Yep.
Well, I mean, you know, these options that are, I mean, they trade for $1.50. So I don't know if you know what I mean. That are okay. That are the first strike out of the money. You know, SPX rallies $5, and all of a sudden, that option that has 30 delta has 80 or 100 delta in a minute. So yeah, volatility's got uptake. You answered that question for the email.
No, I understand. I'm just saying that it's kind of crazy. And then earnings tonight. I think the only thing we played
Costco.
was. Oh, I did not play Costco.
Costco and AVGO are the only two.
Okay, so I do have an AVGO position on. We are. Wow, they must have exploded premium in there today.
Let's take a look. Let's see. Stock's down $3.
I think they pumped up premium.
Yeah, a little bit. Yeah, you can see here.
Yeah. I think they pumped a little juice in there today. Because I lost some money there. I only have on a strangle. It's pretty wide. Costco.
Yeah, I mean, you look at the 82.5 straddle or 84 straddle, and it's up by about 60 cents. So yeah, they pumped up a little premium in there.
That's exactly what I lost.
Mm-hmm. And I just moved it $3 because the stock's down $3. I was just going to the at the money.
So the expected move in Costco is $40.
You're not going AVGO? Are you talking about?
I have a position on. I have a wide strangle.
So you're going to keep that on in January?
Yep, not touching it.
Okie dokie. You want to see Costco?
I'm hoping we don't have another Adobe tonight.
I hope you don't either.
Then we have Costco.
Expected move is around $31 overnight, and for the month of January, it's about $58. It's not far off its highs, although it is down $5 today.
What do you think the risk is for a split in there?
I think it's pretty high. This $1,000 area seems to be.
It's like a mental thing. If you're on the board there, oh, $1,000.
Yeah. No, I get it.
Costco. 2 times the expected move would be $120. Stocks trading for just under 1,000, so it would be just under 880. 2 times the expected
Costco,
move.
I don't think Costco has split since 2000, Saab. Not when it was 2-to-1 split.
You could be right. I don't know.
Mm-hmm.
But
well, I'm telling you,
been a good trade.
Prior to that, it was 93. So it's been 24 years since it split.
It was definitely not 93. It was after 93. Because I didn't even know Costco existed in 93.
One Costco share bought prior to October 22nd, 1993 would equal 4 Costco shares today.
Wow. That's a nice trade.
Yes, sir.
Somebody made a lot of money in Costco.
Mm-hmm. What are you looking to do there?
The upside in Costco scares me because of the split risk.
All right, so you asked me what do I think the split risk is. What do you think the split risk is? You think it's pretty high? If we both think it's high, we can't be right.
Exactly. So it must be pretty low. I don't know. Like selling some cheap puts and selling some cheap puts.
And doing nothing else, just selling some cheap puts in January?
Selling some cheap puts in January? I don't know. What else is there?
I mean, if you go $100 out of the money in January, those puts aren't so cheap. The 890 puts are $3 and change.
Oh, I would go over 2 times the expected move.
Oh, I was going with just over the expected move. Okay.
Yeah. The only problem is I don't like when I.
What are you looking at? Those juicy 700 puts
Ooh, those are nice.
for around 25 cents? Is that what you're looking at?
Ooh, those are nice.
Those free money right there.
Ooh, those are nice. 2 times the expected move takes you down to the 880 puts in Jan. I'd like to buy those. And
You want to buy the 880 puts?
And then sell like the 850 puts, like 3 to 1.
Why do you have to go 3 to 1? Why can't you go a little closer to money and just go 2 to 1? You know, size kills.
Yeah, I know.
Okay.
I'm the one that taught you that.
Oh my God. There you go. You got it on. Oh, you did the
I wasn't even
440.
going to tell you. I forgot my ding was on.
445s. You did it one by 3. But cock the stupid spread. Unbelievable. Are you just toying with us now?
It's like free money. That's all.
I got it.
I'm just toying with you. I don't love any of these trades. I did a 1/3 ratio spread. Let's see. Yeah, I actually don't love it.
Mm-hmm.
I think I did it at an absolutely horrible price too. Now that I look at the prices, I wonder why I got filled. Absolutely got picked off totally.
Yeah. That's probably closer to a mid. Oh no, there you go. It's just the Yeah, you probably got picked off for what, about 2 cents, maybe 1. Totally picked off.
Yeah, I thought it was more.
Yeah, you totally got picked off for
maybe 2 cents.
Maybe 2 cents because you're trying to do more now, 2 or 3 cents higher. You really got. Wow, look at you. You really got. That's horrible.
Turns out I didn't get picked off at all. Turns out I can't even do it. I can't even do it a penny better. All right. So much for that. I didn't get picked off. I feel better about myself.
No worries.
All right, let's see what else we got going on here today. I'm going into tomorrow's nothing.
What's your delta theta ratio? Your deltas, you're maintaining your delta.
I'm keeping a short delta. I'm keeping a small theta. I'm keeping a small extrinsic. My position didn't change from today to yesterday. Got the exact same position on. Not really. I'm not pushing anything. I was hoping for a little better down move, but I think that bonds at 117. I think the stock market's going to have a hard time going higher.
Bonds have definitely had two-sided action. No doubt about it. Market has not had two-sided action.
A lot of things have had two-sided action except the stock market.
A lot.
Except
gold, you mentioned silver. Yeah.
Tesla, the stock market, all these tech stocks, no two-sided action at all.
None. Right.
Nope.
Yeah.
Everything.
A little on topic, off topic. What do you think of Zuckerberg trying to mend fences with Trump and donating $1 million? $1 million is nothing to them, but what do you think? It mean anything? Do anything? Matter?
Yeah,
Meta's unchanged, down 50 cents.
Yeah, nothing. He's just a disgusting human, so I don't care.
Zuckerberg? Okay.
Yeah, both of them. So I don't really care. So then I couldn't care less about that stuff. But speaking of changing topics, tomorrow is Fast Market. So tastylive.com/Fast Market. Send us your trade ideas and make sure they're liquid. It should be good. We got 1 week tomorrow to go into triple, 1 week away from triple witching. And we will roll our Friday, we will roll our futures, right?
Yeah. This is
so
it.
S&P futures, NASDAQ futures, Russell futures. I got a bunch of them on. So we got a lot of rolls to do tomorrow. It's some people write us all the time and say, hey, when do I roll my futures? Well, the reality of futures, each future is a little bit different, but index futures always roll 1 week before expiration.
Mm-hmm. Mm-hmm.
So we will be rolling our index futures tomorrow. So that's my S&P futures, Russell futures, and NASDAQ futures. Not the options. We've already rolled those. We're just talking about the futures themselves. I don't think the options. Let me see. Nope, not the options. No, the options were already in Jan. So it's just the futures, which roll from Dece to March. So I'll be rolling ES futures and Russell futures tomorrow.
And you do that with one click. You could do that inside the it's a half a tick. I mean,
a fifth of a
tick. Want to have the position on. There's no better time to do it than then.
1/5 of a tick.
Sorry, 1/5 of a tick. You're right.
So yeah, and so instead of $12.50, it's $2.50. It's a really efficient marketplace. So you probably have to give up 1 or 2 ticks and you're done. Boom, filled. I just rolled some currency positions: yen, British pound, and euro, and those you have to give up a full tick, which kind of sucks. But in the S&Ps and NASDAQ and Russell, it's a fifth of a tick if you use the solver. So don't forget, tomorrow is futures roll day. It happens once a quarter.
Since there's no news or anything coming out, you want to look at an SPX one-day trade? You got volatility upticking a little bit into the close here.
What do you got?
I don't know. We could take a look. SPX one-day expected move is 21 points. Boy, that seems low.
Oh my God, that seems low.
26 now.
They were up 50 yesterday, down 26 today at 21 points. Seems really inside the move.
It does. No news coming out. Let's take a look at the 60, 30, 600. Let's see, that's a 20-ish delta, 18 delta, 8, 9, 7, 11, 15. I don't know. You have, what is that, $5? Yeah, that's a 65% pop. $30 wide, 60.85, 61.15. And then 60-30, 600. $5 up now. Now it's lower. Cost you snooze, you lose, enough.
I'm not losing anything. I'm gonna pass. Bonds down $1. S&P's down 31. You know, it's funny. Yesterday they were up 41 at the end of the day. Today they're down 31, and we didn't make back all the money we lost yesterday. Probably because of the Nasdaq.
I don't like Nasdaq overperforming. You mean?
Yesterday, I don't like that when they're down 10 one day, up 10 the next day, and then you don't make money. I don't like that.
Oh, your P&L's okay today. You're making some money.
Yeah, making some money, but not what we lost yesterday. Yeah, I think Tesla killed us yesterday, actually. So not helping that much today. Taking a look quickly just to see if there's anything else jumping off my screen, because it's still a pretty mixed screen. And I'm going to say no. I am working to sell some NVIDIA calendars. So far, nothing done. I thought I'd get filled on the close in there. Yeah. Nope.
NVIDIA IB rank of 16 now, South enough. NVIDIA's kind of fallen off the bed, off the charts for implied volatility right now.
A lot of stocks are. When they finish this earnings cycle next couple of days, we're going to be hard pressed. I mean, you got Tesla, which is way out there in the stratosphere, and you don't have much else.
No, you don't. Tesla volatility has actually been expanding over the last 5 days, around 3.5% over the last 5 days alone. When you look on here and you just click to show you what's been expanding and what's been contracting, all the stocks that we play, coins down, 5%, SMCI down 3%, Adobe after earnings down 17%, Oracle down 17%. I'm talking about implied volatility. Even GameStop implied volatility, IV rank is 17. So all the stocks that we trade are relatively low on implied volatility, but they'll creep up. Things change.
I can tell you one thing, no question, down 30 today in the S&Ps is not what the street was looking for. No question. After yesterday's move to, we traded 6,100, right? Didn't we yesterday? Yeah, we traded over
6,102 or something like that, right? What's the high? 02. Yep.
Yeah.
6,102.
Yeah. Right back down. So,
we continue to go sideways, kind of like what the bat said we would do, Sosnoff.
Yes. There you go. You're amazing. You're a fortune teller. You should sign up for that California Psychics. You could get extra like $25 an hour.
I'm thinking about it. I'm thinking about it. After my Club Med story, I might have to. When the wife finds out, we're in trouble.
You never told her about the Club Med story?
Beth's trying to take me down. I don't know.
Did you ever tell her about the Club Med story?
I'm going to have to tell her before Friday when they post it, probably. I mean,
well, honestly, she might not recognize you.
No, probably won't for sure. What do you mean, probably? Won't for sure.
What you should do is you should tell her.
Oh my God, look at Nick.
You should tell her. No, Nick, not Nick. You should tell her, look, they found another picture of this guy, the killer. They found a picture of the killer back in like
Luigi. It's Luigi.
Luigi. And show it to her and see what she says.
Oh, man.
You're going to get in trouble.
Sometimes you hurt, Sosno. Sometimes you hurt.
Well.
All right, less than a minute. Say something profound. Even the S&P down 31. They down-ticked into the close yesterday. They down-ticked into the close today. Close all watertight doors?
I mean, pretty much so. This is like a mini crash in the making.
Volatility is unchanged at 1628.
Which is actually higher than I thought it would be. Well, the VIX, yeah. Listen, I'm not going to read anything into today other than good cyclical tape action the last 2 days, outside the expected move both days. Stocks are way too expensive to think this is a down move that should be bought. And if you're going to buy anything here, I'd probably buy the bonds at 117.05 before I'd buy stocks. That's for sure.
Very good. So Boeing's having a good day too, up another $2, $1.80 or so.
Boeing has been on a tear. Do you know that when I was
just a little boy,
when I was in London and we were doing a show,
you're such a poser. This is all because I went to one bougie restaurant. Go ahead.
When we were in London doing the show, Rich and I, every single night, the first equity trade we made was selling puts in Boeing. Where do you think the stock was? This is just 3 weeks ago.
I remember that.
Yeah, you saw all the trades.
I saw the trades. Yeah, of course.
Do you want me to tell you what we're doing? Every single night, we're doing the same thing.
It was down like $145 or something, right? It's like 165.
No, it was 100. It got down to 138. We were selling the 130
45,
puts.
But yeah.
We were selling the 130 puts for like 260, and all we kept doing was selling the 135.5 puts, 130 puts, and in Jan, and that's all we were doing every single day. And people were looking at us like we're crazy. I used the backtesting tool, and I showed how bad the performance was if you sold Boeing puts. I go, listen, eventually we're going to be right. And it was like a week later, the stock is, where's the stock now?
67, 167.
It's rallied $30
almost.
It's rallied $30.
That's what you do, Sosnoff. You lead them to the promised land. Good job out of you. And you know what? Good job out of me, too. We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these programs. Peace.
NASDAQ closes as a new all-time high thanks to Alphabet. It is Wednesday. It's December 11th, 2024, just after 4 p.m. Eastern. I'm Chris Vecchio from New York. Ilya Spivak in San Francisco. Dylan Radigan in Milan as we take you through the rest of this hour. Get ready for the futures market close at the top of the hour. If you're joining us today on the platform, tell us what you're trading on YouTube. Join the conversation over there. If you're on youtube.com, tell us what you think of tastylive.com. See what we're all about. It was a day where the market was waiting for that CPI report. And as we turn to the charts, we see that once that was out of the way, the rally in the NASDAQ began. CPI comes in right on the screws, absolutely no surprises. And there henceforth, the market begins to move up. Now, we have some earnings here after hours. There's a little bit of a pullback right now over the last few minutes. But by and large, it's a good session. NASDAQ up 1.7% here, if not off the high, closer to 2% up. We see the S&P is up by 0.69%, just under 6090. The Russell, a little bit of a laggard, up by 0.38%, and perhaps thanks to the dramatic underperformance by UNH, once again, down by 5.66%. The largest component of the Dow Jones brings down that index, which closes lower by 0.3% or so. But guys, this is a day where the market looked at the inflation data. It saw no problems. It got a further pat on the back when we had the 10-year note auction, which was really, really strong. Stops through higher bid to cover ratio than the previous auction and the 6-month auction average. And stocks just get mostly a green light here. Ilya, the CPI report today, break it down for us. Outside of the eggs category, which were up 30-something% year over year, most categories are in a place that the Fed is probably comfortable enough with to cut rates next week.
I mean, there's no question. And the markets were not questioning, I think, whether the Fed was going to cut or not next week going into this report. As it happens, the numbers come out basically right on the money. I mean, exactly as expected on year headline, exactly as expected on core CPI 3.3 there. And yes, you get a third consecutive month of standstill there. So disinflation now hasn't occurred for 5 months since we went from 3.3 down to 3.2 back at mid-year. We idled there for a while, then we went back up to 3.3 for a while, and we've been sitting there. But unlike what happened at the beginning of the year, when you had, frankly, a more modest stalling, a smaller roadblock to disinflation, and the Fed got all hot and bothered about it and started moaning about the lack of progress, started cutting rate cut expectations. This is May and June. Now the Fed, if you listen to Powell, read the FOMC minutes from November, it's all, hey, data is volatile. You got to look through that. We're on track to 2%. Everything's okay. So if the Fed doesn't care, then the markets can't be expected to care either. The cut in December is very much still on the menu. If we look at what is being baked in currently, we are looking at a 98.6% chance that the 25 basis points come off next week. That's not really a controversial thing. I don't think anybody thought that was going to be any different. If you look at the historical tab there on the CME FedWatch tool that you're showing, and you take off this multitude of lines, but for the 425 to 450 line, or the 400 to 425 line, rather, you can see sort of where the odds are for this situation. I mean, we're at the highest and most convincing setting for this rate cut since back in October. So needless to say, the markets think the move is coming. The larger question for me really was whether this CPI report would be a kind of inflection point for sentiment, where the markets would say, all right, everything's as expected. We're not going to get any kind of juice in this story until the Fed makes its policy announcement and gives us an updated SCP next week. We've seen that there's been a pullback in yields. There's been a pullback in the dollar since basically mid to late November. Maybe there's a similar correction just around speculative interest waning, as we discussed on the show yesterday in stocks. And clearly the answer is no. No waning speculative interest. And probably, and we'll get to this in a moment, the rocket ship that is NASDAQ today helps on that score, because if you look at the other indexes, they are much soggier than what you see here. RTY, the Russell, very much still in a trend lower. The Dow breaking down. The S&P, which kind of is a catch-all basket for all of this stuff, ends up essentially stuck at near the top of its range, but not extending higher. So it's interesting what could have been were the NASDAQ not for its own reasons on a race, but so it is. And clearly, bond markets thought that this was some degree of relief as well. We'll see what that means
what
going
exactly
forward.
is the good news here? That inflation is not as bad?
I don't think there is any good. I don't think there is any good news. I think the important thing is there's no bad news. I don't think that this report changes anything. If we again look at the
which is the good thing is that it's unchanged basically.
Yeah, the good thing is that this did not.
The future expectations are unaltered by this.
This scared no one. I think that's the
inflation is evolving as expected.
Yeah, I think that's really the thing. I don't think this amounted to any kind of news. If you look at what is baked into the markets for next year, we got a little bit of a wiggle in a less dovish direction. So now we're baking in 57 basis points in rate cuts for next year versus it was 62 yesterday, and the lowest recently was December the 6th. That was 67. I mean, these are tinkerings at the margin.
Tinkerings at the margin, Dylan. This week during the pullback in stocks, you were saying that the super glides here and people need not worry. Your insistence, at least in the NASDAQ, rewarded today. Or we do get to close at a new all-time high. Was it a nice little 2-day pullback? Should we be looking bullish now into the FOMC meeting? It seems that people really aren't concerned about inflation. If we
I don't see how you don't own stocks at least between now and the inauguration until there's some crazy tariff thing. I think from here to the inauguration is like crazy town higher. That's what I think.
You see, Google today is
inflation
really
was your only boogeyman. You guys are telling me inflation is not manifesting as a problem. And look at there. Look, I mean, come on, look at this.
I think inflation only manifests as a problem if the markets think the Fed will go and change something about what they're doing in response. And
so you're suggesting that there's risk in the Fed comments next week? Is that what you're saying?
Yeah, I think there is. I think there's risk in the comments. I think there's risk in the SEP. I think the baseline, if you look at the last time they updated the SEP, that was September. They said 100 basis points in cuts next year. The market said 130. The markets have cut that in half, from 130 to 60, essentially. The Fed then has clearance to cut it in half as well, to go from 100 to 50. If they go to, let's say, 25, if they overreact, much like they overreacted in June when they went from 3 cuts to 1, then yeah, you could get spooked.
Google was Google today.
I don't think it's likely either. I think they're going to go to 50 and basically give the markets the equivalent pace of what they're doing. I don't think the comments are going to be controversial. They'll be wait and see, and they're going to wait and back up. And the real question will be, is that enough for speculative fodder to basically say, all clear, on we go? And the answer may well be yes.
I mean, all clear. I mean, if this Google chart of Tesla today is not the all clear, then God help us when they get the all clear. I mean, look at this thing.
Tesla 424 here. Google up as well, 5.52%. It seems to be more of the AI story. For those that weren't watching the news last night, Google put out an announcement that its new quantum chip Willow basically blows out prior expectations for any computational efforts we previously put forth. It was able to solve a computational problem that normal computers would take longer than the entire existence of the universe to date to solve. It solved it.
The Quibbit vibes.
Right. And so
like it.
as now I'm reading up on this, I've put together a little explainer here because I'm trying to learn about. I guess we got to learn about quantum computing now. Take off our geopolitical hats of being experts on Israeli history and Syria.
No problem.
We're going to become experts.
We're on our way to teleportation, boys. It's all about the holy grail is teleportation, and the quantum computer is an essential step on the path.
Okay, so what is quantum computing? Quantum computing is a type of computing that uses principles of quantum mechanics to process information. Unlike classical computers that use bits, which are zeros and ones, quantum computers use qubits. Qubits can represent both zeros and ones simultaneously, thanks to a property called superposition. This allows quantum computers to perform many calculations at once. So Google's Willow chip is a significant advancement in this field. And why does it do this? It performed a benchmark computation under 5 minutes that would take a supercomputer 10 septillion years. That's a 1 followed by 24 zeros for those counting at home in order to complete. That is longer than the life of the universe to date. So this seems to be a material breakthrough. It has absolutely nothing to do with crypto. It's not going to be able to solve Bitcoin's cryptography at any point in the near future. So I just want to put that to bed before we go into there.
Does it say anything about teleportation?
Not yet. Mostly energy, mostly medicine, mostly AI stuff. But it is a significant step forward today. NVIDIA, I don't really see anything dramatic there, up 3%, which we call it not dramatic. But technically, you could make the case that having been at uptrend support off of the August lows with that big bearish bar yesterday, today's inside day and close back above the 1 week moving average is a nice bit of relief that perhaps suggests we're not done yet. But I bring up the stuff about quantum computing here, not tongue in cheek to say we have to become new experts on it, but to just contextualize why Google is up by 5.52 and why it's trading at new all-time highs. Dylan, we were talking last week about reflexivity and bubbles and how they form and how they're justified and how you get drips and drabs of information that substantiate the previous bias that provide new fodder for the bubble to grow even more. I don't think anyone had, at least we've been talking about it this year. We've talked about superconductors a little bit, and that personally excites me a lot. But quantum computing has not been any sort of narrative to drive the market higher in recent weeks and months. So a new narrative heading into 2025 may seem ridiculous, but it's enough for investors to put a 5.52% gain on the board today. And if Google
and if you can be a zero, if a computer can be a zero, can contain data that is both a 0 and a 1 at the same time, then teleportation is possible.
I was wondering, almost worried where you were going with that, but you kept it in the teleportation ring, which I appreciate.
One would reckon if a 0 and 1 can exist at the same time, then I can exist in two places at the same time.
Bingo. I can be in Portola with my friend Ilya at the music festival, and I can be at the bakery in Bedford with my friend Chris simultaneously.
That sounds harrowing, frightening to see you in two places at once.
If I smoke a joint with Ilya in the park in Portola, does that make me want to order an extra muffin at the bakery in Bedford?
No, but it might help you teleport you to the bakery in Bedford.
Might help take you there.
At least mentally.
We have Humboldt's finest here for you, Dylan.
I'm sure. I am confident in that.
Okay, so you talked about Humboldt County. I watched just watching all sorts of random things. A few months ago, I caught this documentary on Bigfoot on Hulu.
Love the topic.
And it's all about how a bunch of farmers up in Humboldt County killed a bunch of day laborers decades ago, and they started spreading rumor. It spread the remains around.
Blamed it on Bigfoot.
And that's where the rumor of Bigfoot comes from. And they interviewed people who were part of the series of murders who were on camera and the garbled voice box and everything. And it was interesting. It was very interesting. Yeah,
well,
how long ago was this?
Last year the documentary came out. Yeah, it was about Humboldt County.
I mean the murders.
70s.
Bigfoot is real, bro. It was not some murder cover-up story. What about these UFOs in Jersey, speaking of odd and unusual occurrences?
I find it really funny that people are reporting that there were drones out, and then, police are checking it out with helicopters, and then people are calling the police on the helicopters as the drones.
That's right. Which goes back to bubble reflexivity.
Which goes
Full
back
circle.
to bubble reflexivity. About you get this Ouroboros of a self-fulfilling narrative, which legitimately here, though, right? You now
propelling
have
Google, propelling all the Bag 7, basically.
Propelling the semiconductors today, which have a pretty bang-up session, 2.45%. The best traded semis, broadly speaking, for the past few months has just been trading around the midpoint of the range from the August high, or rather the July high to the August low. Not that any hay is being made here. But the NASDAQ, continues to show that strength and may have a new toy to play with, a new object of speculative interest moving forward. We are now entering this week before the Fed meeting, however. The Fed meeting is a week from today. And Ilya, you point out, market's now pretty locked in, 95% chance that we get a rate cut next week. The path that follows thereafter, obviously not so certain. But I have to say, today's performance in bonds and notes, not on my bingo card. At 1:01 p.m. Eastern time, in our pocket, we had one of the best Treasury note auctions in months, and we had a CPI report that did not flash to the upside whatsoever. And the reasons that we were trading to the upside, motor vehicle insurance and eggs. So I was looking at bonds and notes saying, oh, maybe today's going to be a good day. Oh, those Fed rate cut odds are moving up. This should be a pretty good day today. And yet here we are closing down at the lows. Recently put on exposure here. We haven't even talked about what the adjustments made in NASDAQ and the S&P today. But before we go back to that, having put on a trade here a few days ago, it's obviously just down 3 days in a row right now. Ilya, if we can't get a rally in treasuries when rate cut odds go up and demand for treasuries at auctions is as strong as it's been in some time, what are we doing here? What's the bull case right now, besides the fact that volatility is cheap and therefore out of the money call options might as well take a flyer?
Tough to say. And those of us that are long a little bit at the long end, as I am, are basically back to even here. And looking at this and going, I need a good reason to stay in this position. If we look at ZB, ZN tells the same story. We're basically at the lows from earlier in the month, from the beginning of the month, so we're essentially at immediate support. If we look at ZB, we're trying to kind of claw our way through that support here. We're basically on the last line of defense. So if you don't hold here, then we're back to higher rates. I think it makes sense, perhaps, that the bonds are doing this today, in part because the NASDAQ story is a growth story, in part because the chips breakthrough that Alphabet talked about is a growth vector. And growth means reflation, means higher rates. So especially at the long end, you get this kind of a pro-growth move in rates where you get more economic activity, you get a hotter economy, you necessarily get a Fed that doesn't have legs to cut in a lasting way. So it makes sense in that sense, but of course that's kind of episodic to today. I think as ever, it's very difficult to extrapolate these things into real economic growth and not market hopium about that growth until you start to see it more concretely on the ground. And that's not to say that you won't, or that the breakthrough is anything less impressive than it is. It's an incredible breakthrough. There's no question. For me, it's not the veracity of the story around quantum computing and AI and everything around the tech boom as we've witnessed it over the past 2-3 years accelerating. All of it is very encouraging and makes perfect sense as a longer-term narrative. The question is, where does the build-out phase hit the usual skids? There is a redistribution, and then the new champions emerge in what is the real deployment of the technology phase. I mean, to be kind of a simpleton about it, we're not talking about MySpace. We're not talking about Friendster. We're barely talking about Facebook. at this point. So that's sort of the essence of what we're talking about here. Nothing disrupted the longer-term telecoms narrative during the pain that was the dot-com bubble burst, but we still had a dot-com bubble burst. And that's the history of these types of things pretty much every single time that I can think of, and certainly every time in kind of semi-modern memory, be it railroads, be it, frankly, the 13 colonies that became the United States and the speculative bubble in their warrants. So the whole thing is very encouraging and will be the future, yes. The real question is, okay, when do you get the washout that then sets the stage for the long
Right,
arc?
but let's talk about bubbles for a second, if you don't mind. I don't disagree with the word you just said, but let us discuss this issue if we might.
Sure.
The thing with bubbles, as we all know, and as you surely know, and we all know,
yes,
is that they can go on for quite some time.
An indeterminate time, not to be guessed by anyone.
And sure, at some point, at some future point, by virtue of the reference to the warrants of the 13 colonies, the railroads, the internet, everything in between, there's some sort of catastrophic decline in value that lies at some abstract point in the future.
Yes.
Which leaves us with two choices. One, we say, damn the torpedoes. We get long the bubble, be it that as it may, and we enjoy the glory of a fine Christmas in the Vecchio household.
And rightly so.
Or we sit around waiting for the eventuality that we know is certain, but we don't know when, and we may in the process forego years of extraordinary performance. And I'm just interested in how you reconcile that.
Again, I totally agree.
I'm sure you do. You're a rational and well-educated and intelligent man. And so understanding these two truths, how can you not at least participate a little in the glory of the bubble?
You have to. The question is about whether you allocate an incremental dollar on a 45-day expiry cycle to NASDAQ at record highs today, or whether you allocate an incremental dollar to shorting NASDAQ at record highs today. And I would do neither. I have no exposure. That's really the question. Am I long, broadly speaking, from a longer term, not a trading perspective, but a holding of equities for the eventual retirement account perspective? Of course, and in size. Of course. The question that we're talking about isn't the longer term narrative. It is the opportunity for tactical trading at a shorter term window. So do you short the NASDAQ here? You have no evidence to do that. You'd be nuts. Do you buy it at record highs, though, given how far we've come?
Yes.
I don't.
So now it gets interesting. Look at Party Boy. He wants more. He wants more.
Well, until it's broken, you don't fix it. And so I get it. I totally get it.
But you're saying an incremental dollar today on the NASDAQ, no thank you, sir.
I'm saying I wouldn't go and buy
Party Boy
it right
saying
now.
give me every incremental dollar you've got. I got a wedding in Boston. I got to spend the money before I leave town. Let's make it happen so I don't have to think about it over the weekend.
I'm like, let me borrow your incremental dollar so I can lever up.
For me to want
Who's
to
got
put
an incremental dollar
on the NASDAQ now, I'd
sorry.
have to believe that in 2-3 weeks' time, it's going to be higher than it is today.
So there's your 45 days.
Now, do I believe that it's going to be higher than it is today in 2-3 weeks' time? I don't.
Really?
I don't believe it's necessarily going to be lower, which is why I'm not short. Otherwise, I'd be short. I am short.
I don't know what you're saying. I don't know.
I don't know what this thing is
going
to
with.
do.
I don't know.
I don't know what this thing is going to do.
Yeah, this thing's crazy.
I'm happy to be short the Russell, which keeps falling.
Mm-hmm.
And it's because the price action has turned. If the price action here turns, then la-di-da.
Mm-hmm.
If it doesn't, then it doesn't. But I look at this and I go,
Boy's gold chart while we're talking. He's trying to foreshadow. Did you see that gold chart he flashed us? He's
and
like
I missed my window
swinging
to
her
buy
hair
it.
around as she walks on the sidewalk. Look at this. He's just showing off his little gold chart. He's like, look at me. Look at me.
Just got to get that dirt off your shoulder.
No, let's hop into the NASDAQ here in the S&P, because yesterday was 21 days to expiration for me for the trades that were put back on back in September, right here when the Fed, right after the Fed gave us our 50 basis point rate cut, we started playing with the reflation narrative. The trades at the time in the NQH5 contract were along the 22,000 calls. Let's see, there's a little bit of activity here today. It was along the 22,000 calls, short the 22,500. That was taken off the board. New position initiated, 51 days to expiration, long the 23K, short the 23,500. So similar structure, 500 points wide. I'm still optimistic on NQ. I'm still optimistic on ES, where today, if we go over to the ESH5 contract, likewise, that was at 20 days to expiration. So that was taken off the board. The long 6,000, short 6,200 call spread worked out very well. But I have mentioned that I'm getting a little bit less aggressive on stocks up here. And the way that you do that when you're looking at these call spreads is to change the width of the strikes from one another. And so instead of going 200 points wide here in ES again, I'm only going 50 points wide this time. So long the 63, short the 63.50, out 51 days. The volatility remains low, momentum remains positive. Stocks continue to go up. And this may be day 6 of an ascending triangle breakout in the NASDAQ that took many, many months, about 5.5 months to form. So to say that it's over here just because we set new all-time highs, I don't think is a reason to get off the train. And then I'm also reminded of, when's the best place to buy stocks? Is it, if you're looking for a predictor of forward returns over the next month, is it 5% from an all-time high? Is it 10% from an all-time high? Is it at the all-time high? The single best thing that you can do if you're expecting stock returns is to buy the day that new all-time highs are hit. Period, end story. So for me, it's going to stay long. Just restructuring the trades in a different manner to take some cream off the top.
I believe that we should rename the show "The Future of the Incremental Dollar," because anybody can talk about what they're doing with what they've got, and it's working, and I own this, and you own that, and we all own something, and some of it's good, and some of it's bad. But if you're watching this show, the question I even ask myself in being a panelist on this show is, and I love the way Ilya framed it, is, what am I doing with my incremental dollar today? And then my greatest frustration with financial discussion is a bunch of yeehaws talking about what they own, what they like, what they think, what they got, what they don't got.
Blah, blah, blah.
And the one thing I love about this program or this platform, and I love about both of you and being honored to be your co-panelist, is the opportunity to talk about the future of the incremental dollar.
Incremental dollars get reinvested.
And I like that you, Becky, are like, give me, if you're not going to spend your incremental dollars, to send them right over here to the bakery in Bedford, and I will look after them.
Yeah, we should tell Tazza that they're getting a nice little bump on today's show. You know, Dylan, when I think about the structuring of these trades, why continue to roll them up? In this case, long the 23, short the 23,500. Max loss is $1,500 against a potential max profit of $8,500. We're talking about another 1,000 points in the NASDAQ over the next 51 days. I think we can squeeze that out still. And the winner of the previous position is much bigger than the max loss here. It's almost double, right? Not quite double, but it's up there. And so worst comes to worst, if I call a scratch between these two, one's right, one's wrong, I'm still going to walk away a net winner between the two at the end of it all. And if it happens to work out, this is a pretty good risk to reward ratio, better than 5 to 1 right now. But this is a market that it's showing that it's worth taking the risk. When volatility is low, momentum's positive. If we stay on that track, if we just find the right tool from the toolkit, as we've done for most of this year, we've been rewarded by taking that kind of risk. So I think it's worth rolling the dice. Just get more time on your side. I wish I had more duration, quite frankly, for the NASDAQ. The liquidity further out wasn't fantastic today. I was looking at the strikes out in the 72 days to expiration, and you could just see, long the 23 open interest rate now trading volume, it's just not there. So I had to go to the shorter duration. I think what I will do is, as liquidity comes into the 72-day expiration contract, that February 21st expiry, I may end up rolling out to there in the next few sessions once we get down to like 45 or 40 days to DTE, only to provide myself more time. But I didn't see the liquidity there that I wanted to structure it as perfectly as I had hoped to. So those are all on the follow page now, by the way, folks. I did see someone in the chat say earlier, Chris hasn't been putting his trades in the follow page. Well, because I haven't been trading the S&P and the NASDAQ since I put these positions on in September. I just had to sit around and wait for them. So there's nothing really else to do. But that's my trading style. I like to take those views that are longer term, let the macro glacier move, and I'm a garbage scalper, so you don't follow me into the pits if I'm saying we're doing this just for today.
How about this for a madman's contrarian, even though I'm not sure I have conviction myself? Why not buy up some puts when volatility is all the way in and you're on record highs, and buy them tight, buy them right underneath there, right up in there, low vol, because whatever happens, there's going to Ilya's point, at some point between here and there, you're going to get a little blowback somewhere, somehow, the Fed, something, and volatility is so cheap. Why not buy some puts, call it at the money on highs?
The only thing I would really think of, given how the markets tended to give its true reaction to the Fed meeting the day after, like we saw that in September, right? I would think that if you wanted to structure a trade in that manner, and this actually is something on my mind right now, because at 8 days to expiration, taking a flyer on maybe the market pulls back into the swing area where we were like in mid-November, right? This cracks and it gets down to 5,900 or so.
And volatility is so low, you can get in there,
Right. Looking at we could take a bigger swing here than we would like to. Let's go out to 50. For $200, 18% of probability of profit, you could get a 10-to-1 bit of downside protection that we see a reversal here. Yes, on the other side of a Fed meeting, and that's
how many days out are you on that?
8 to next Thursday expiration.
So you're saying just buy at the money puts on the Fed meeting and just on a 10-to-1 insurance policy?
Not at the money. I would go out of the money if you're looking for some convexity here. But if you wanted to structure this, as an at the money trade right now.
No, I defer to you. I mean, what do you think, Ilya?
You could still get better than you could still get better, than 1-to-1 if you're even straddling, or at least bracketing the at the money strike right now.
I mean, I think it makes sense if you have long exposure that you're hedging to basically cover yourself. If you're like me and you don't have any exposure to things that are on the long side, and instead you're essentially looking to take pot shots at the rally and basically find a turning point if there is one. And I've taken a few good ones this year along the way higher. There's been some notable pullbacks, and those have been very lucrative. And when those happen, I lean in. And when when I start a position and it doesn't go my way, as we were just talking about on last call with NASDAQ, I run quickly to keep my losses very small. So the idea that I'm operating under isn't to be right a lot. It's to lose very little when I'm wrong and to make more by hopefully a significant margin when I'm right. So I'm looking at the setup that Chris has here, and I say, okay, well, if you're long, then you probably want to buy some protection going into the Fed announcement, even if they don't say anything that moves the needle on the outlook, because it'll be some kind of a speculative release valve. And if you're up on stocks into it, you might come down out of it just as speculation becomes reality, and that tactical exposure is unwound, especially with the year end so close by. So even if the Fed does nothing untoward and the market still looks relatively buoyant going in, you might get a pullback just around people shuffling papers from column A to column B. So I think that's sensible. If you're like me and you're looking for kind of swings within whatever the larger narrative is, then you don't do that. You wait and you take a directional short when that presents itself. In the Russell, it has. In the Dow, if you're interested in participating in Granddad's favorite index, you've taken out the support on a range. I don't have any exposure there, full disclosure, but that's an actionable something. In ES, you don't have anything there. I've taken a little bit of a put vertical in SPY, basically at the ES high, which held basically around the tactical idea that NASDAQ's rallying, nothing else is. Let's see if what's going on here is a one-off Alphabet announcement and things readjust into the end of the week. But it's a flyer. It's very risk defined, and if it goes wrong, it comes off the board in a hurry. So I'm thinking about it directionally, and I'm thinking about, do I want to be short something for the next 2-3 weeks?
It's the holiday season, and you want to short the markets.
It's right up my alley.
Shame on you.
Real
Shame
Grinch.
On you.
A real Grinch, Elliot.
If we could get a sell-off for Hanukkah, I would appreciate it. 8 days. Can I get 8 days?
Back to Moscow. You keep it up.
No, that's the Santa Claus rally window. Hanukkah falls during the Santa Claus rally window this year.
Call you in.
It does.
Yeah, we have oil to burn in the last week of Christmas this year.
Can I get 8 crazy nights?
No.
Listen, this thing,
permission
if you don't think
denied.
the stock market's going high between December, whatever today is, 11th, and December 31st. You got 20 days, okay? I don't know how many days is the market open, Vecchio. Probably of those 20 days, probably like 14 days or something between the holidays and whatever, 13 days. The stock market's going to go cuckoo bananas in the next 12 or 13 trading days. Put it in the money in the bank. Money in the bank. I'm with Vecchio. Give me some incremental dollars. I'll buy it at the open.
Yeah, listen, like I rolled forward again into the positions in NQ and ES. I just structured the trades in a manner where it was taking down the amount of exposure and the max loss that would occur here. Because I have reasons to think that first quarter may be bad, but I'm not going to pretend that I know more than the collective wisdom of the market. And the collective wisdom of the market right now is that everything is fine for the time being, and we continue to rally. And we aren't even in the good seasonal part of the month yet. That's the second half of December.
What are you worried about, Donald Trump or something?
I haven't been worried about Trump or Harris being president this entire year. It's inconsequential because the bottom line is the markets look at the deficit spending, and that's going to continue for the next few months. They're talking about a continuing extension, a continuing resolution to extend the government spending up until a new budget can be curated under the Trump administration. So the Fed is going to keep doing Fed things, and the federal government will keep doing federal government things for at least the next 3.5 months before we really have any significant changes in law. And, gridlock has been great for the stock market, Dylan. The House majority will be, 217?
Where's the gridlock? You got
in the House. In the House. Because with all the appointments that have gone on right now, and those seats will be filled. Like Matt Gaetz' seat is going to be filled by a Republican. It's a safe Republican district. But until those seats are filled, you're going to have a 217 to 215 Republican majority in the House. That's one Republican who votes with Democrats and is a tied vote on anything. And we saw how contentious a lot of the budgets were over the last 2 years, where if you had 1 or 2 or 3 people decide to defect and vote against something, against the Republican majority, then the Democrats had enough to block the legislation. So I have a hard time thinking that the first budget out of the gate that the Republicans produce, you're going to get a clean vote where the entire party falls in line without at least a period of public, I don't want to say squabbling, but negotiations. Okay, so then realistically, are we going to get the implementation of a new budget in March right away? Not one that's super destructive. That's going to take some time. The Doge Commission is going to take some time to work through, potentially into 2026. So I don't see any change here.
The Doge Commission is never going to happen. The Doge Commission is just it's just a pleasure. It's like a titillation. It's a toy.
I mean, it'll happen in the sense that they'll meet and they'll talk about stuff, and the news will talk about it. But good luck passing it.
In terms of implementation,
I sort of think of the Doge Commission. This just occurred to me. I can't believe I've only had this thought now. I should have thought about this earlier. The Doge Commission is sort of like the Green New Deal. It isn't actually a policy. It's not even a set of policies. It's a kind of effervescent idea in the ether somewhere.
But what it is it's content.
Yes. It's content. That's right.
It's a content narrative that can be propelled into the social media and media.
Are you for the Green New Deal or are you against it? What is it? Are you for the Doge Commission or against it? What is that? I don't know.
Shouldn't all Americans be behind like we should get rid of administrative waste out of the system? Yes. Okay. So Doge Commission, tell us what that waste is. We're wasting $900 billion a year. Oh my gosh, that's a lot of money. Well, $600 billion of that is actually interest expense on the federal debt already. So like we can't get rid of that. You're gonna have to gut things, and we've talked previously how because it's a non-statutory authority, everything that the Doge Commission recommends is going to have to go through Congress. And
then they're just going to blame the Democrats and run on the Democrats refuse the Doge Commission. It's a political prop.
It's always it's going to be a political prop. The point is that the near-term path for policy is probably set. So,
what about the tariffs? Come on, the tariff. I think there'll be tariffs. There's got to be tariffs.
Yeah, there's going to be tariffs. Trump's made that clear. But moving away from equities here for a quick moment, low inflation, gold has cleared the hurdle. 2748 was the high that we had here on November 25th. That was the bearish outside engulfing bar high that marked a dramatic turn in the metals market. Obviously, since then, we've heard that China's resumed its gold buying. Guys, while the GCG5 position that I've had on is no longer at max loss, now trading at a healthy 50 cents as opposed to zero. The GCJ5 position that was put on yesterday when gold started breaking out is doing a little bit better. For those that missed yesterday's Futures Power Hour or the not J6, we're not out there. GCJ5 right now, that's long the 2850, short the 2900 call spread, 76 days to expiration, looking for a return basically back to the highs that we had at the end of October, beginning November. It appears to me that this looks like to be we talk about the indecision in the market over the past few weeks, head and shoulders or bullish continuation in the form of symmetrical triangle. It looked like symmetrical triangle won out. So we're now back on bullish momentum trade stance, looking for a market to move back to the highs. And I find the most encouraging thing to be about this, the volatility is coming back. I love to see that. The last few weeks during correction time, volatility was coming off the board. Now that gold is breaking out, volatility is breaking its downtrend. Not that we do technical analysis on vol, but the change in characteristic for volatility, how it's moving in the rhythm of the market, tells me that the bulls have the baton again. So talking about trades carrying through the holidays, being long gold is now something I am fully comfortable with, just as I was in September and October.
No, I like
anytime this year. Yeah,
I like it here. I was moaning and groaning about not putting it on yesterday, and by the time I came to it today, it was at that high and barely pushed through. So now I'm going to have to look at it tomorrow and see if I can get that put on. I don't want to do it through GC or even through MGC because they're just not small enough for the kind of risk management I want to do. So I'm going to have to do it through GLD, but that means I have to wait for the U.S. cash equity open tomorrow. So that'll be what it is, and it'll probably look like a call vertical. We'll see, but it does look like we're going back to the highs. Just looking at the positioning here, about the only fly in the ointment here is that sort of head and shoulders looking thing near the top. It's kind of a cockeyed head and shoulders and evening star candlestick pattern at the head. The underside of whatever that range was, the neckline, that's where we're at. So we're basically right at resistance. Maybe there's a nice reaction pullback from that over a day or two, and that gives me a buying opportunity because I'm certainly not looking to short it.
Dylan, quick note of interest here from the chat. Frank points out that he's never seen a Bigfoot body, nor has anyone been recovered. So you can teleport that over to him when you have a moment to use Google's new Willow supercomputer.
My man. Listen, I'm right on that. Tell him I'm right. I appreciate the interest. I've noted, and I'm telling him I'm right on that. I'm right on that. And in the world of UFOs, teleportation, and Bigfoot, I will also accommodate my opinion of gold, which is equally mysterious. I have no idea why gold prices the way it does or why it moves the way it does, and I will never trade it as long as I live. As a result, as a result, I'm more confident in Bigfoot than I am in gold.
All right.
So don't ask me. Whatever you're going to ask me about gold, don't bother. But I'll be happy to talk about oil or silver or Bigfoot or AI or Quibbits. But
Let's
gold,
go over to
God
oil.
help us all.
Let's go over to oil then. Up 2.46% today. You know, back
Piece
in the middle of the range.
East, short it. I'm long piece in the Middle East. Okay, I'm short oil. I'm short green tech. I'm long euro. I'm long piece in the Middle East. I'm long piece in Ukraine. I'm long piece in Eastern Europe. I believe oil is setting up for peace, and we should prosper as a result of its increasing decline, whether it's in the inputs of industrial economies or in the price of the commodity itself.
So you're saying
speaking speaking of incremental dollars, the long euro idea, that's an incremental dollars.
Yeah, there are going to be a variety of incremental dollars over here in this particular Milan household, getting long incremental euros and short incremental barrels of crude oil in dollar-denominated currencies as a function of my expectation of world peace.
I like it. I'm long. So being on both sides of the dollar has actually been very lucrative this week. The euro hasn't fallen very much, and so having the long side there has been not very painful, frankly. Having the long side of the pound has been even less painful. It's stalled a little bit, but it hasn't actually gone down in any kind of meaningful way. But then having the long side of the greenback against the Aussie, that's worked pretty okay as well. The RBA started squawking about maybe rate cuts preliminarily. I'm getting a little bit antsy now that we're testing these lows that you've got there on the screen, Chris. But I am pretty happy with how it's worked out so far. I'm hoping the ECB gives the euro a nice kick higher, and that will sort of complete the good vibes.
Yeah, we have an ECB meeting coming up tomorrow morning. Bank of Canada met today. They did what was largely expected of them. I got to say, Ilya, the euro and the pound, both, they're kind of looking a little wobbly here right now. You know, talk about this inverse head and shoulders pattern that may have been forming on short-term time frames here in 6E or euro-dollar spot rate, depending upon what you trade. And we see here that the uptrend instead from the swing lows that we have November, December is ultimately lost. It's a similar technical setup to what we're seeing.
You're right at the bottom of the range, though.
Yeah, and the pound hasn't given it up yet, right? There was this swing area that we jump into starting in mid-November. We clearly run into resistance just for the sake of clarity and removing some of this stuff. We can see here left shoulder, head, right shoulder, and we're kind of pinned against the neckline. We haven't lost the uptrend here quite yet. But then the yen, more like the euro, uptrend off the November swing low, starting to break. The dollar is not at
that's
it right
yields.
now, is the point, right?
Well, and that's yields, right? The yen is a creature of yields. That is U.S. yields. And the story in yields, I mean, we just talked about bonds near the top of the show. Yields are up. No surprise then that the yen is down. But again, look at where it is. Former resistance turned support from November. It's sitting right there. Look at the euro. It's sitting on the bottom of its range. It's not breaking down. It's been oscillating in this range for quite a while. So
quite a while. But that euro's, if you're going to buy the euro, I'd buy it now. I'll tell you that. 2025, mark my words.
I mean, I'm not getting out of my
year of the euro.
I'm not getting out of my short here.
Your euro short or your dollar euro?
No, short dollars, long.
You're with me. You're with me. You're with me.
Yeah, I'm long euro here. And mind you, I am very bearish euro longer term.
Well, yeah, it's a doomed currency. It's a contrived.
Yeah, I mean, very bearish. But as a tactical idea, I mean, I've been bearish. Chris, have you ever known me not to be structurally bearish euro in the decades that you and I have
the
worked
whole economy,
together?
demographically, who are these people kidding? But 2025, year of the euro. Did you see the Giorgia Meloni headline in Politico, Vecchio? Did you catch that? The Italians have taken over.
I gotta read that.
Did you see that, Ilya?
I didn't. What they say?
She's been declared the most powerful individual human in all of Europe.
I mean, that makes sense.
That's like being named the best basketball player on the AAU under 17 team.
Hey, Europe's throwing insults from the Bedford Bakery, huh? Listen, Europe's a real place.
You mentioned Italian. Those are my people. I can say those things about my people.
Yeah, okay. Well, then why don't you come over here and say it to our face?
Okay. I'll boopity bop my way over there and we'll have some words.
Let's get that quantum computing going. I want to be able to get a croissant in Bedford or in Milan at my choosing and with the same time spent on travel. That's what I want.
Teleportation, bro. Teleportation.
Take me there.
It's all about the quibits.
Let's talk about a potential dollar path here, though, because I saw a really interesting chart yesterday. I believe we shared it here, or we shared it on Futures Power Hour. I forget. But it's from Steve Dunze, who's over at Pictet Asset Management over in Japan. And it's the dollar index rebased to election day 2016 to 17, which is your light blue line here, versus how the dollar's been traveling thus far in 2024 heading into 2025. You can see here that both of these election days line up on this left dotted line. And that looks like a pretty
lower is a stronger dollar. Am I reading that correctly?
Lower would be a
weaker dollar.
Higher, stronger dollar. But look at the rhythm here of these two lines, right around the 2016 election day and the 2014 election day.
I always become very suspicious of things.
As am I.
I mean, what do we even look at? I'm not with Ilya.
People start to trace things with crayons, and I go.
Once you start drawing lines on lines, I mean, I can go to kindergarten and get this done.
That's true. I'll consider that slanderous. Not quite the level of slander of asking me where I was in New York City the day that the UNH executive was killed, but it might be up there.
Sorry about that. I'm sorry about that. I love you. It's only with love. It's really with great affection and respect. I do apologize.
Yeah, a guy who I play a baseball game with here says, just checking in to say, I hope you enjoy your new on-base percentage toy, talking about Juan Soto, and glad to see it wasn't you gunning down healthcare CEOs in your free time. So,
listen, you had a great familiarity.
I've got to do something about this.
Well, when you said it wasn't a silencer, it was a suppressor. Like when you started offering subtle details of the nature of the weaponry on the day of the event, brings up questions.
I'm a millennial man who plays Call of Duty. Forgive me, Dylan. I mean, what else do you want me to say?
You seem to know it was not a silencer.
Listen,
if GoldenEye has taught us nothing.
Yeah, please. Right. Yeah, the only thing GoldenEye tells you is that you can't be. Never mind.
You're trying to say something of consequence.
I'm trying to say that overtime is out of time for this Wednesday, December 11th, 2024. We'll be back tomorrow, same time, same place. I won't. I'm in Boston for a wedding, so good luck the rest of this trading week. For Ilya Spivak and for Dylan Radigan, I've been Chris Vecchio. Stick around after the break. We'll be back with more Tasty Live with Macro Money and Ilya Spivak. See you soon.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
First, Tasty Live united finance and entertainment, then probabilities and research. And now, we're uniting the symposium with the blockchain with this unique virtual event. 6 option strategies every trader needs to know, featuring legendary trader Tom Sosnoff and other Tasty Live traders. You can watch the presentations live or anytime you like, since the digital collectible is yours to own when you register. To learn more and register for free, go to tastylive.com/events.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it. Join the club, genius.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We're gonna go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. Is just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you?
Didn't.
Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlines are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trained 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1 over 365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, being mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The Scott Sheridan Studios, Mr. Scott Sheridan.
My title is CEO. I've been here from the beginning. It's been a great ride. So I studied finance and economics in college. After I graduated, I wrote this thing that was a trigger when it would tell me when to buy some calls. Literally did it, made money, and I was hooked. Okay. And I said, what is this?
Right.
I wound up going down, becoming a runner.
And then from there, wound up getting a seat, learning how to trade. The big piece is the interaction, the collaboration. And I love listening to just the chatter. People say to me, how do you hear that? I said, because that's my job. We do have, in my mind, the greatest customer service in the industry. Primary reason for me to be on the desk, besides I do chat and do take phone calls from customers, but I'm right next to the risk team, and that for me is the most important. I take the approach of leading by example. On that note, I'm gonna go to my side. It's better to be good than lucky, because luck factors out, but in this case, I was better to be lucky than good.
How do you reach your goals of becoming a full-time trader?
I think the best way to do it is he has to start thinking in terms of what's a fair objective return-wise. You know, if you're actively trading and you're going for some number and you have $200,000, I mean, saying that, hey, I'm going to make $35,000 on this, which is an 18% return, is not an insane number. It's not ridiculous. It's 2 or 3 times a passive return, and it's 4 times a risk-free return. It's completely normal. So that's where I'd start, and then you try to build up from there.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Has China done enough to reassure the markets with yet another promise of stimulus? That's what we're going to be focusing on today on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. It's been a busy week of data from China, lots of news to pour through and lots of ways to look at what is developing in the world's second largest economy. But perhaps the biggest news that we got at the beginning of the week was another bit of supporting information from the Politburo, which is a 24-member committee at the core of China's leadership, including President Xi Jinping, that seemed to offer another little ray of hope about policy stimulus. Now, the first bit comes from the monetary side of the equation. We can see here there's a helpful graphic from Bloomberg that has put together how China signals its policy intent. So we can see here that from 2011 to 2024, the sort of official moniker for this was a prudent, quote unquote, monetary policy. And what this announcement from the Politburo suggested was that in 2025, we will transition to moderately loose monetary policy. Now, of course, that is sounding much more downbeat and much more modest than what is actually implied because, of course, the last time things were moderately loose was the GFC and the Great Recession. So the markets ostensibly looked at this and said, well, they're really going to turn the spigots on now. They're going to shower this market with money. But history does not quite suggest that the markets would find favor with that assessment. So here's another helpful chart from Bloomberg showing what moderately loose has meant. And we can see here dramatic rate cutting against the backdrop of the global financial crisis. So as we get into this moderately loose period, there's a sharp cutting of rates, and then rates remain low until we basically get into the prudent phase. But of course, that has not stopped China from aggressively easing in this phase. And indeed, you can see here, really from the start of COVID, of course, but from right here in 2022, most aggressively, China starts to cut rates. And of course, we've witnessed ongoing escalation in this sense. There has been ever more monetary stimulus that has been unveiled last year and quite a few times, as a matter of fact, this year. September was the last big splash, and we've since had more and more and more. We've lowered interest rates. We've lowered the reserve requirements for banks, which, of course, free up, or at least are meant to free up more capital that can go toward investment and spending. And we've seen a whole host of other measures, from shoring up the housing market to outright buying stocks, and thereby creating a level of, or attempting to create a level of upswell in consumer confidence to get people to spend, to get businesses to invest. So there has already been a tremendous amount of monetary stimulus. And the response has plainly underwhelmed. What we find is that when we look at how lending has worked in China, this is the Bloomberg Credit Impulse Index here, and what this measures is the share of new loans in GDP and overall economic growth, in other words. And we can see here that since the beginning of the year, essentially, this index has actually declined. Moreover, it is now, this level index, at the lowest levels we've seen since back in 2018. And the size of these declines is eye-watering, to say the least. The most recent numbers from October give us a 14.5% decline year on year, which was the fastest drop since February of 2022. And interestingly, of course, this is where in 2022, the beginning of it, where the rate cuts really start going. In other words, we don't really have much to show for this stimulus. In fact, things appear to be going exactly the wrong way. Now, what markets seem to again find a little bit enticing in this Politburo announcement was, again, a dangling of some kind of fiscal rethink. The statement from the Politburo saying that officials are looking to be more proactive with fiscal policy next year, which, of course, has been a major source of consternation for market watchers that have looked at China and said, well, obviously this monetary stimulus isn't working. What needs to happen is there needs to be a fiscal effort to actually create demand. And that, of course, has been the core issue in China, an absence of demand. In fact, if we look at this chart that we like to revisit periodically, this is China's GDP growth, nominal versus real, and then the spread between the two. What we find in the past 6 quarters now, so a year and a half, we've had real GDP running faster than nominal GDP. Now, let's unpack this arithmetic. Nominal GDP is the sum of the value of all the goods and services that are produced in the economy. But when you measure their value, there's obviously an element of inflation there as well, which can make the sum appear bigger than the core value of the underlying output. And so real GDP seeks to take out the inflation component, the price movement component, to get just at that. So nominal minus inflation is real, which means if real is running above nominal, then the inflation coefficient is negative. We're subtracting a negative number from nominal GDP, is the implication here. And that's this spread, which you can see is now in negative territory. But consider what this means. Economy-wide price growth is negative. That essentially means the whole of the world's second largest economy has been relegated to the discount bin. When there is demand, that demand tends to push prices higher as that demand chases the supply of goods. That demand competes on price for who will get the goods or services. And that gives you positive inflation, which comes hand in hand with demand and with economic growth, more baseline. What we're witnessing here is the opposite. There is no demand, or at the very least, it is incredibly anemic. And so things are being discounted to try to stoke that demand. An economy that's stuck in a deflationary spiral is essentially signaling that it badly needs for someone to be a source of demand of last resort. And of course, when we saw the same thing during the COVID lockdowns in the West, say the US or Europe, there were vast government outlays to get things moving while there wasn't that demand from the private side of the ledger. This has been something that China has vigorously resisted doing, even as it's promised tinkering at the margin fiscal measures like easing the credit position of municipal governments to perhaps let them spend more, lowering the ratios on down payments for housing to, again, try to induce people into markets. But what we end up with still is the apparent lack of uptake. As a matter of fact, a survey from the PBOC, China's central bank, showed that when asked what urban depositors would do with incremental money, they chose saving by a factor of close to 60%. Moreover, bank deposits are at record highs, which essentially means that all of this monetary easing, all of this provision of cheap money, cheap credit inducements is not creating demand. It's not creating loan growth. People are simply just stockpiling the money because ostensibly there is no confidence for demand and for risk appetite to rebuild. So what happened when China seemed to kind of tease more fiscal stimulus this year? Well, back in September, this was, of course, music to the market's ears. They soared almost 40% in China. This is the ASHR ETF that follows China's benchmark CSI 300 index. Those are the top 300 names listed in Shanghai and Shenzhen, essentially China's version of the S&P 500, a kind of catch-all equity index. Rapid expansion here, obviously, the first time China seemed to float this idea out there. And when it turned out that the measures that were on offer were going to be underwhelming, when we found that what the government actually had when it was talking about these things was a plan to buy up idle land and commercial properties, a plan, as we just mentioned, to shore up municipal finances. All this, again, started to look like inducements for everybody else to spend, but for the central government in Beijing. And once it became clear that a big fiscal package apparently wasn't coming, this move shed half of its advance very quickly. This big decline happens over just a week at the start of October, and then we settle in this narrow range. This was this week's announcement. So there was a bit of optimism, and that quickly faded, and we find ourselves anchored in the same area where we've been. In other words, the markets are looking at this, and they're simply not giving Chinese officialdom the benefit of the doubt until, frankly, they put up or shut up. Economic data coming out of China was also disappointing this week. We started the week with inflation data and had a set of trade numbers that came out later in the week. Here's the inflation data. It ended up being disappointing. We had a set of CPI numbers that gave us inflation of 0.2% year on year. That's the weakest in 5 months, whereas economists were looking for a 0.5% rise, which would have been an increase on the prior month. And of course, wholesale inflation, the PPI component, continues to be below zero, so continues to be in deflation territory. In other words, there is very little demand in this economy, and when it comes to the consumer side of things, we're basically at standstill. On the trade side of things, it was even less encouraging. Exports grew less than expected, 6.7% year on year against expectations of 8.5%. So that pop in exports that we saw in the prior month in October, widely attributed to importers primarily from the U.S., but other markets as well, trying to front run what might be aggressive tariffs from the incoming Trump administration, trying to get their Chinese imports in before those things pick up the price of imports from China for U.S. importers, because, of course, it is U.S. importers and indeed importers elsewhere, but certainly not China, that pays these tariffs. One country can't compel a sovereign other one to pay a tax. And so what we end up with when we have a rise in tariffs is essentially a consumption tax on importers from whatever country is hit with tariffs. But these are domestic firms that have to pay it. And there was a big over 12% year-on-year jump in exports in October that widely was attributed to people trying to front run those tariffs. What we have now has been essentially export growth that's been cut in half in terms of its speed, and needless to say, a disappointing outcome in its own right. But it was imports that really shocked the system. They were expected to rise 0.3%. Instead, they fell, and they fell hard, down 3.9% year on year, and an acceleration, an escalation, as a matter of fact, after a 2.3% decline in October. Again, stressing this idea that demand, especially on the consumer side of things, is woefully weak. It's not just Chinese markets domestically that got the memo here with this anemic response here. We can see China-sensitive assets, a similar response was there. So here's copper. China is the world's largest importer of it, and it is looked at as a proxy for China's business cycle. We can see it popped at the beginning of the week, but has since gone nowhere. As a matter of fact, has made a bid to erase pretty much half of this initial move. The Australian dollar has fared worse. It popped higher again at the beginning of the week, much as copper did, and has since given up all of those gains. And now looks like it's going to close down on the week fractionally. Although, of course, we still have a day left, so we'll see. But clearly, whatever pop there was to have from this Chinese news did not assist and did not hold. And, of course, to some extent, a slightly less hawkish RBA helped on that front when they announced policy this week. But were China's news impressive enough to overwhelm that? It might have, and very clearly it didn't. So, perhaps the only impact that we really saw stick with markets and get market confidence this week was a move in gold. And it's because we got foreign exchange reserve data out of China over the weekend showing that for the first time since April here, China has resumed accumulating gold reserves. Now, we can see here that from 2022 through 2023 and going into the beginning of this year, China accumulated a massive amount of gold. And that, of course, helped to give us periods where gold would ostensibly decouple from macro dynamics and ignore, say, rising yields and a rising US dollar at the beginning of this year. Because through this period right here, China was still aggressively accumulating. After this pause, this bit stands out and, of course, suggests that given how long the previous run looked, given sort of the 18 months of accumulation that was there before the pause, that perhaps another long cycle is underway. And that certainly gave gold a bit of a lift here. It's correcting slightly if we look at today's price action, but the overall break here out of this consolidation and this narrow range clearly inspired and following along because, of course, yields are again higher this week, as is the US dollar for the most part. That should be kryptonite for gold, but nevertheless, it is on pace for healthy gains this week. So perhaps the markets will eventually benchmark the full stock of Chinese negativity from economic data and lackluster stimulus efforts, or perhaps officials will finally step up. But as it stands, the only confident thing that the markets find as far as Chinese policy is concerned is their attempt to buy more gold for their reserves. As for the reviving of the economy and everything related to all of that, markets don't seem to put much into those efforts until they see something actually materialize. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour, Mondays and Fridays, though we'll be off tomorrow. I'm also on with Victor Jones for the Price of Truth on Wednesday. Back with him and Tom on Sundays for First Call at the open of global markets in Asia. And the futures open in the U.S. Writing for the News and Insights portion of tastylive.com and opining on the platform formerly known as Twitter, as well as now on Blue Sky at Ilya Spivak. Thanks very much for joining. Macro Money's back next week.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
What's going on, everybody, and welcome back to the Bad Trader. I almost said stream, the Bad Trader Show. Today's Thursday, just a day after trying to digest the CPI data with that massive rally we saw yesterday, Julia. But anyways, thanks for joining us, guys. And Julia, how are we doing today?
Dude, I'm doing okay. I'm not doing too shabby on this very, very, very cold day in Chicago. And somebody in my apartment's making a grilled cheese, and it's driving me crazy. But otherwise, I think I'm doing okay. How's everything going with you?
You don't like a grilled cheese and some tomato soup or what?
No, I want a grilled cheese right now, which is a problem.
Okay.
They're taunting me. That's right.
I got you. Yeah, no. Yesterday, I mean, I'm doing well. No grilled cheese. I don't really smell anything, but I am a little hungry. But a grilled cheese does sound kind of good. I could use some carbs, but I mean, yesterday was just a massive day, Julia. What are your thoughts? I mean, 400 something points on NASDAQ. And,
I needed that badly. I needed that. There was a huge rally in VST, which I put on a put spread right before it crashed 7%. It's had a really monster rally throughout this year. So I thought, you know what, why not? It's had very strong, consistent performance and then proceeded to sell off, but then recovered a bit yesterday, which I was very thankful for. Today we're a bit red, but finally made some money back on my gold trade. Gold has had quite the rally up until today. Finally, a little bit of a correction, which, yeah, I needed. But yesterday was green. Felt pretty good. We got Bob over in chat. Awesome to see you. Thank you for joining us. But otherwise, yeah, it's just been, sometimes you just got to hold tight. Sometimes you just got to, trust the probabilities and hope for the best.
Yeah, which can be some very difficult to do sometimes.
It can be.
Yeah, no doubt. Leaning on those probabilities. But Before we do get into it, you said it's cold in Chicago right now. Has it snowed any at all yet, or is that more so like January, February time, or what is it looking like out there right now?
It snowed once, but didn't really stick.
Okay.
So
some slush. That's the worst. The slush. It's like, if it's gonna snow, please snow.
It slushed and then it iced. I think it's in here. Let's see. I use Celsius. It's -9 Celsius, which is like 10 Fahrenheit or something. 16 Fahrenheit. It's going to hit a low of 5. But with the wind, it feels like 11, which is great. So I've been a little low energy today, but that's just me.
No, I got you.
But otherwise, otherwise it's been, pretty, I mean, there's been an awful lot going on in the market. Hey, Kat, what's up? Okay, sorry, there she goes. Otherwise, there's been enough going on in the market to certainly man, she's just on something else. Let me get this. Hi, buddy, what's up?
Yeah, what are your thoughts on NQ, Kitty? Like, what are your, I don't know if she was hitting the buy button, him, she, he, she, but no, it looks like we're day after CPI. We're kind of digesting the news a little bit. I mean, we sold off just a little bit from the highs of CPI yesterday. I'm really curious just to see how we're going to finish off the week. I was taking a look at the volatility index, and the little bit of the sell-off we got in the beginning of the week didn't seem to have the index budge any and all to the upside. So it seems like it's that natural, or kind of as expected, I guess you could say, kind of volatility into December, but. I don't know what it's going to take to see a little bit of a spike in volatility, but it seems any of the down moves hasn't really made it budge at all. So I don't think right now.
And the Bears had 2 good days, and now we're back here. Yeah.
2 good days. What do you expect? I mean, all-time highs again. And yeah, I guess that's just been the story over the last few weeks. The all-time highs, and some of our trivia is going to actually be themed to around all-time highs. So not really Christmas themed, but kind of stand to rally themed. So we'll get into
rally
that
themed.
Yeah.
So. We had a very big move in Warner Brothers today. That was up 15%. But when you're trading at $12.50, that's not really saying much. You kind of deal with penny problems at that point, penny stock problems. But this one's been interesting because this one has just gotten so beat down, honestly, since 2023. And like we're actually a little green on the year from what I can see. This was one of the worst performers in the S&P, and then it has since recovered, which is nice. And today certainly helped that out an awful lot. As well to the downside. Adobe just completely donked, but I don't really feel bad for them. I don't feel bad for them so much.
Well, what do you got against Adobe?
I mean, from my understanding, might have used like part of the terms and service for some of their design softwares, or that you kind of have to let them use the stuff that you create for their AI training models in order to even use it.
Really?
That's my understanding, which I'm not in love with that. But they said AI. They've said AI many times. This one's been as well, like a bit of especially maybe in early, just like in early 2024, just having a rough year as well. But yeah, I don't feel as bad for it as I probably should. And then let's see what else is going on here.
Got Oracle.
But what else are you watching in the market? Anything interesting?
Not really. I mean, just been keeping an eye on MSTR. I feel like, whenever we hop on stream, Luis brings up MSTR. So I'm like, all right, we're watching it. We're seeing how it's going to play out. But MSTR, the indices, kind of same story with the indices, checking out volatility, and just a little bit more focused on the indices lately, actually. MSTR, I think, was the last underlying outside of the indices that I was really focused on. But other than that, just really focused on things like QQQ, SPY, those kind of things. MSTR is just one that is just leaving me on a cliffhanger. I feel like there's a little bit more, I don't know what the term to use is, but digesting on MSTR to go. And I've just been watching from a distance. So I think crypto has been really the talk of the town over the last 4 to 8 weeks. That's another reason why I've been really watching MSTR. So really just interested in those products that have some exposure to crypto. That's been top of mind for me, at least. Yeah.
Yeah, we were talking about that earlier today, and I think like for me, so I got my IBIT shares, my IBIT shares,
right.
Because like I'm bullish on crypto in sort of the long term. I don't really want like an expiration date on that assumption. And in the long term, short term, I'm expecting some price volatility. Bitcoin's been hovering around like 100K, kind of teetering. But in the long term, just kind of wanted some skin in the game. That's kind of my way of doing it. And I'm like, if I want leverage Bitcoin exposure, there's kind of other ways to get it as opposed to MSTR, because you're dealing with like other risks on top of that kind of inherently come with management. So For me, it's just kind of like not my preferred trading vehicle, although it's I believe, about to get added to the NASDAQ. So that's great. But yeah, certainly been one to watch. Down another 20 points today. And oh my God, Broadcom just reported. And somebody asked me about this today on stream about like, what are your directional assumptions around Broadcom? And I said, well, I'd be like kind of bullish just because a lot of the concerns around chips, around AI, kind of more recent, I guess, when it comes to, these antitrust concerns around NVIDIA, that was put forth by China, as well as some of like the more aggressive trade policies about raw materials that would affect like the semiconductor sector, specifically between that type of trade between, like China and the United States. Hi, babe. Oh, there we go. And I'm like, but you know what? That wouldn't affect their entire quarterly performance. So be kind of bullish. And of course, now it's up 30 points. And it's never when you actually have a trade on. It's never when you actually have skin in the game. Doesn't ever work out like that. But absolutely just shot. Oh my God, it's way over 200 right now. Okay, Broadcom.
And it looks like it's still moving at the moment. A lot of volatility in there. Oh
yeah. So that is a stonk if I've ever seen one, but I guess we got some time sort of before the open. And then Costco also reported this looks like a moderate donk.
I don't know. What did they do to their hot dogs? Yeah, what did they do?
They raised the price of their hot dogs. It's over. But that being said, Costco has just been like a beast this year. This has been just absolutely, especially since like October, November, just like on fire. So a little bit of a pullback is it's like it doesn't seem to be hurting it that much. It's also like not the biggest drop in the world.
I got you. What's the when's the next earnings for Costco?
They just reported today. I kind of was expecting more of a move compared to what we're seeing right now. It's down a couple bucks. But that's not really much. They reported, and then Surdizzle, thank you. I think the decision for MSTR joining the NASDAQ is tomorrow. I thought it was a done deal, so thank you for the correction. It sounds like it's not official yet. But the first thing I think of is like SMCI. It's like, it's up 1,000% this year. Let's have it join the S&P, and then immediately just sold right off. So in terms of like introducing some volatility to the indices, y'all. But what are you gonna do?
I mean, I wouldn't mind, personally for the sake of my account, I wouldn't mind if we have a type of a sell the news kind of event whenever that decision's officially made tomorrow, just because I do have some call spreads that I sold on the indices. So a little bit more of a down move would make me feel a little bit more comfortable. They're out of the money right now, but it's a little too close for comfort. So, I mean, I wouldn't mind a little bit of a sell the news event, at least temporarily for the next couple of days, for myself at least.
Yeah, I wouldn't mind that at all either. And I don't think anybody would be surprised if that happens. But that being said, we had some big movers, but overall in the market, like not a ton going on. Little tiny bit of a reversal, but like a 0.5% move in the S&P. That is like it's like well within a standard deviation. Standard deviation for SPY historical returns is like 1.1%, something like that. Qs it's a bit higher. Russell down a little bit as well, and gold down, and bonds were down, which is like that's kind of a weird day.
No, it is. What's funny? I know we were talking about quantum. We were talking about quantum computing a little bit more recently lately, and everything on my Twitter feed. I don't know if it's picking up what I'm saying over here, but I've been getting a lot more information on quantum computing. So even just the conversation on that topic seems to be getting a lot more popular and relevant. Little sidebar, but that's one thing I wanted to bring up too.
I can't wait.
I know you can. I know somehow you're pushing the quantum computing stuff on my feed, Julie. I know it's you.
Well, I just I just don't want to hear about it, because we're decades away from it being, I think, really practically relevant. It's still in like very preliminary research phases, but there's still like huge amounts of capital from like major tech companies that are trying to drive hype around something that's still very, very premature. And so when it gets on that hype train, a lot of the discussions become like annoying a little bit. I think it's important for everybody to be excited about it, but that's not always the context that it's presented, especially when it's like really hyped up as one of these topics. So you can just kind of see like, I don't say misinformation, but like, incorrect descriptions of it kind of propagate compared to when it comes from academia, which has its own other communication challenges, but that's beside the point.
Yeah.
But anyway, what are you going to do? So I guess quantum computing, ooh, that's going to be the new, well, that is kind of what like ML was, like machine learning and AI was for a long time. It was like treated as this like very promising skeleton key to a lot of problems. And we're seeing like now that it can be applied to a ton of problems and can kind of like improve our ability to solve problems, not with like 100%, accuracy, but it's still, better than some of our existing methods. But it's certainly not a skeleton key that you can throw everything at. It's still like, you need a certain degree of nuance and literacy to be able to know, just like the internet, like, right?
Yeah.
There's internet literacy that you need to build. The same with AI, say like quantum computing, like talking about it. That's a whole other thing.
Oh,
But
that's great comparisons. It helps us kind of build a little bit more context about the state of what it might be in right now. So
yeah, it's kind of this. I mean, I was very, very small during the early internet days, but I anticipate that a lot of the concerns around AI are very much echoed. They echo the concerns around people adopting the internet and the World Wide Web and this like endless supply of information kind of at your fingertips. And like, right, there's a certain degree of literacy that you need to be able to use the tool effectively, and to not get like scammed or hurt or, learn how to take in all that information. So likewise, there's a certain degree of literacy, I think, that comes with AI, using AI tools effectively. We as traders maybe have seen some examples of illiteracy even just since ChatGPT came out.
100%.
But we're here to learn. And that's what it's all for, isn't it?
But it kind of seems like a space right now just because there's going to be a massive barrier for entry in terms of even whenever does quantum computing becomes more so relevant within society and solving issues. It seems like there's going to be a pretty big barrier just because that type of technology seems like it's going to be extremely expensive. So maybe right now it's also in a state of like a lot of speculation investing, maybe a lot of
100%
venture fund, a lot of speculation for at least trying to get a piece of the pie without actually having the real thing. But we'll see what happens.
Yeah, it still seems like pretty preemptive. And like quantum like technology becomes like quantum computing technology, quantum communication technology, once that becomes like commercially viable, like there's, in terms of priorities, like there's a lot of, I think, change that are existing. Yeah, like security infrastructure needs to have in order to be not vulnerable to those types of attacks. So that's going to be, do you remember the Pope drip?
Can you remind me?
Did you ever see that? It was a picture of the Pope wearing this like blinged out necklace and this big puffy coat. And I thought it was real. And then it turned out to be AI. You remember we talked about that?
The literal Pope drip. Yeah, I remember exactly.
The Pope drip. That was like a scare, right? That was like, for me at least, I think for a lot of people, I didn't know it was AI generated. Found out it was AI generated. And that was like a scare, like, oh, we really got to get our shit together figuring out how to regulate this and how to use this properly. So I believe that to be the same when it comes to like quantum computing technology and all that kind of stuff. Like there's going to there's going to be some kind of like, oh, this is really a real thing now. We have to get our shit together sort of event.
That's a really good point. And even with quantum computing, maybe that'll make a little bit more of an argument with why, blockchain could be relevant. Because I know, especially with the new age of AI and being able to tell what's real and what's fake, I know the blockchain is something that's going to be like a public ledger that can help us identify what's real, what's not real, what's legitimate, what's not legitimate. So maybe with even quantum computing and the coming of AI, maybe it'll make more of a case for why something like blockchain could be useful.
Yeah, I think so too, actually. And I'm not like super involved in the space, obviously, but to me, intuitively, that just seems like a great application for blockchain because you have like this publicly available, like mathematically verifiable trace of where something came from. So if you're concerned about deepfakes or, like fake information or any of that kind of stuff, and there are like reputable news sources where you can trust the information coming from, that's potentially a way to create like an algorithmically verifiable trace to certain types of information. That being said, if the information kind of branches off in a ton of different directions, it doesn't necessarily mean that what you're seeing now is like false if it didn't come from one of those news sources, but at least gives potentially people the ability to point to something and say like, I can actually track down where this came from, and it's got a timestamp, and that's kind of like etched into this big shared thing that we all agree upon. And to me, that seems like, I think, one of the coolest applications for blockchain technology. I think that'd be cool.
Good point.
So what are you going to do? I think I know what we're going to do, actually. You want to hop into some trivia?
Yeah, let's do it. I know we got some slides before that if you want to get into some of these updates as well.
Let's do it. Are you able to see that okay?
Yeah, perfect.
Hell to the yeah. Okay, so first things first, we do have an app. We made some sick updates this week. We added market cap distribution. We added events to your portfolio page and some accessibility updates. If you want to go find it, you find it in the App Store and the Google Play Store. It is a fun community on there. And then as well, if you want to come throw your trivia answers into a chat, you can find us on Tasty Live's YouTube channel at Tasty Live Show. And if you want to follow us on Twitter, we're at Bat Trader App. It's pretty cool information that Luis finds to put up on there. So super, super duper cool. So all-time highs. That's the
Yeah,
topic?
the themes. Yeah, all-time highs. All-time highs. That's what we'll get into today. We have a couple trivia questions.
yeah.
So cool.
Let's do it.
All right. What percentage of the time does false breakouts occur at all-time highs in the NASDAQ composite? We got 4 options. We have A, 10%, B, 20, C, 30, D, 40, and then I'm gonna just throw in an E, all of the above. Which one are we thinking, chat? I know we've spoke about this almost very similar question. It's almost just flipped upside down now, but I thought I would present it this way.
Okay, so for all the uneducated swine out there who, just so that I know what a breakout is, like you're talking about, I'm going to try to use my technical analysis. I think I've been around Luis enough. So something's trading in a channel and then it pops and then continues.
It doesn't even have to look like, it doesn't have to look like anything. All that it would be meaning is making another all-time high, whether that's a channel, whether that's whatever it looks like, just all-time high.
So what you're saying is that like a false breakout would be like the NASDAQ hits all-time highs, but then that all-time high doesn't continue. It just kind of sells back off.
Right.
Oh, okay. Gotcha. So basically once we're at all-time highs, how often does it reverse?
Right.
Yeah. Okay. There we go. Ooh. Oh, you know what? I actually know this one. I think approximately.
You see how I'm saying it's kind of flipped upside down from how we would usually propose the question.
Well, because I calculated this a while back, given that we're at all-time highs today, what's the probability that we're going to continue to hit all-time highs for tomorrow?
Right.
And I know, so there's a complementary probability of that. So I think I do actually know this one.
Yeah, 100%.
Hell yeah.
What are we thinking, chat?
Okay. All right, chat. What are we thinking? It looks like absolute beginner says A. Big Deal Donut said E. Not even an answer. I think you got that
All
one.
the above is E. Yeah.
All the above is E. Yeah. That's a good question. Okay, so everybody go ahead, take a second to throw your answers over in chat. I'm going to go ahead and give mine because I do remember these probabilities. Is it C? Is it 30%? Because I remember 70% is the complimentary one.
Exactly.
There you go.
Yeah. So C answers 30%. Fun fact, false breakouts occur often during low volatility or in highly speculative markets. And speculation tends to rise, especially at all-time highs, because we've never traded at those prices before. But yeah, it is I really tried to just flip what we usually talk about upside down. So the inverse, like you kind of said, would be 30% rather than the likelihood of putting in another all-time high, which would be 70%.
There you go. Yeah. See, pretty cool, actually. I dig this. And we're learning a little bit about some of the jargon, breakout jargon today. Super cool. Nobody in chat got it right, but 30% is actually maybe it's a bit higher than chat thought. They thought it was 10%.
I did hear 10%.
Is the most common answer. Yeah, there you go. Yeah. Okay, what's the next one we got?
Awesome. So why are all-time highs considered areas of price discovery? I know this is a little different than what we usually get into, but we do talk a lot about
technical analysis.
Ooh, no technical analysis.
This is not technical.
No, auction. It's technically under the eyes of auction market theory and where buyers and sellers will typically find value. So we talk a lot about it. We talk a lot about it on stream. I know it says, I only use the terms resistance levels because it's just the common term that I think most people will recognize. But that's why we also have like resistance in there as well. But just kind of wanted to throw that in there. We talk a lot about it on stream, but why are all-time highs considered areas of price discovery? We have A, there's no historical resistance at these levels. B, traders rely on historical support levels. C, market participants avoid trading these levels. And D, volume is always lower at these levels. What do you think it might be, chat?
According to the auction price theory.
Auction market, yeah.
Auction market price, auction market theory. Why are all-time highs considered areas of price discovery? All right, chat, what do we think? It looks like there's a lot of A's. We got A's.
Okay.
Seems to be the most common answer. Again, there's no historical resistance at these levels. That kind of makes sense. Traders rely on historical support levels, not resistance. So I'm thinking of, but they're.
I guess so. The real term, The real term would be value areas. I just wanted to use resistance because it's a more it's a more common phrase used that people could pick up on. I don't want to use
That makes
terms that
sense.
people are
Okay.
like, what does that mean? Yeah.
And then we got a whole bunch of people, metaphysics magic, that's awesome. Bunch of people saying A as well. I'm kind of inclined to agree because I don't know why you would avoid trading at these levels or why there would be lower volume levels. I feel like volume would be pretty consistent.
We also have option E, you know.
But there is also option E, which is none of the above. Okay, well, you know what? I've learned my lesson once or twice to go against chat, and I'm not going to do it. Is the answer A?
You're trading the statistics of chat. Yeah, the answer is A. There's no historical resistance level. Really, it would the correct term would be value areas because price typically likes to seek value, and whenever that is happening, we usually coin that price discovery. But price discovery allows the market to test new areas of demand supply without predefined barriers. Supply and demand, same thing as value. Again, I just thought I'd use terms that are a little bit more popular and recognizable.
Hell yeah. Super cool, man. Well, chat got it right. Good job, everybody. Y'all know your support resistance market theory, auction market theory. Hell yeah. That was a fun one.
Cool.
I think that's the end of our trivia, right?
Yeah, that'll be it for today. You know, I was like, let me just throw in some couple all-time highs. I know we did Santa Rally. You know, we've done Thanksgiving thing.
Yeah.
And hopefully this is the top. You know, famous last words, but we'll see what we get heading into the end of the year. So.
I dig it. Yeah, no, I feel like I'm learning a lot from these trivias these days. Do you want to try to do a tradle?
We got 3 minutes. We could get a hole in one.
I think we can get a 3-minute tradle in.
Even a birdie or maybe an eagle. We'll see what we get.
I know golf terms. I did golf.
I almost forgot what the second one was.
I forgot what all of those were, but I did do golf. So let's try to get through this. We got 3 minutes. If anybody in chat has never played with us before, we like to play this game called Tradle, which is very similar to Wordle. We're basically given the export distribution of a country, and we have to guess which country it is. So this country, for example, has $206 million in exports. Recreational boats makes up a whole lot of it. We got some refined petroleum, diamonds, asphalt mixtures. And so basically we're going to give a guess, and then it's going to tell us basically how close we are to the target country and what direction the target country's in. So do you know anybody that makes an awful lot of recreational boats? I assume they're on the coast.
206 million in exports.
It's a little small, yeah. It's a little small, hard liquor, magnesium. Okay, so we got, and diamonds too, 5% diamonds.
That's a decent chunk. Okay.
That's a decent chunk of the diamonds.
Asphalt mixtures, refined petroleum, diamonds. Okay.
South Africa does a lot of diamonds. They're on the coast, but I feel like they'd be bigger than 206 million, right?
Yeah, this is really small. I would think as well. But it's not a bad start to give us at least a reference point.
Well, I would say it's like maybe not a great start because everything else is going to be really far away from it. But why not? Let's just do South Africa. South Africa. Okay, so we're nowhere near the target country. South Africa. Well, we got a point on the board. So we're 46% of the way there. The target country is 10,000 kilometers to the northeast, and it's to the northeast. So that's what that little arrow means right there. Metaphysics Magic said Morocco. Does Morocco do gold? I think they might actually do gold.
Morocco would have been a better guess than South Africa, to be honest.
I feel like Morocco does. They also don't they do phosphorus or something or sulfur, something like that.
Do they do sulfur? I don't like the smell of sulfur.
Hard liquor in there as well. So I don't know if we got Jamaica, we got Venezuela, Maldives. I think so. I'm trying South Africa. So it's either on the northeastern side of Africa, or it's all the way up in North America. So it could be like Iceland or something, especially with the refined petroleum. It could be like Greenland, Iceland. It could be like Norway, actually, but I feel like Norway would be a lot bigger. What do you think, E?
I'm Jamaican, so,
Italy?
Italy's Italy's pretty small, but I feel like the exports is not that small.
I'd expect it to be bigger, and I'd also expect maybe like leather or more like textiles, that kind of stuff. Russian Federation countries. It could be one of the Russian Federation countries. Now I'm trying to remember my geography. We had Morocco's a good guess. I think Morocco could be interesting because that's up there in like northern Africa.
Yeah, that's
Want
a
to
better
try?
guess than
Well, it
Jamaica.
could also be Jamaica. We can try. I mean, do you want to do Jamaica? How
I
much
mean, we
do
could
they do
try it.
diamonds?
I've never known Jamaica would have been about 5.5% diamond. That's the only thing that's throwing me off.
Oh my God, we're actually really close. Okay.
Okay.
Jamaica was a great guess. We got
Yeah.
closer. So now we're 93% of the way there. And we're 1,300 kilometers away. And it's like pretty much straight east.
To the west. Oh, east.
To the
yeah.
east. Sorry, I
East,
mixed
yeah,
up
my bad.
east and west earlier. It's supposed to be the northwest. I'm sorry about that.
Gotcha.
Yes. Recreational boats. Could it be like I'm trying to remember what Jamaica is. Could it be like the Dominican Republic or something?
Oh, that's right there.
It's right there, right?
I forget which side it's on, but I believe it's right there.
Because
I mean, I'm pretty. Yeah.
That was a very good guess, though. People in chat. Do you want to try the Dominican Republic?
Yeah, let's do it.
Diamonds are only in a few areas of the world. That's right, Donna. So I'm like, there's got to be like I don't know the. I'm also
The
trying to remember.
diamonds are throwing me off really bad.
Right?
Yeah.
Let's try that. Oh, we're really close.
What in the world? What's that?
Haiti?
What's that? Let's do it. Let's just start. Let's start.
Try
in there.
Haiti?
Yeah.
Let's do it. Damn. Okay, never mind.
Oh my gosh, that's still a good guess.
I always get mixed up which side the Dominican Republic's on versus Haiti. Okay, what is like right next to the Dominican Republic and Haiti? Crap. Is it Cuba? Could it be Cuba?
Cuba's right there.
You want to try Cuba?
Let's do it.
Puerto Rico? Haiti or Cuba? Let's try Cuba
I
and
say
then
Cuba first. Yeah, let's do Cuba.
once you get to like 95+% of the way there, it's a complete crapshoot. Okay, it is not Cuba.
Oh my goodness. Okay.
Well, we got one more guess.
Ooh. We
We
got
got-
a strikeout.
Puerto Rico. I think they split up U.S. territories with like U.S. continental states. So let's do. You know what? We're just gonna do Puerto Rico.
Okay, let's send it.
There's a good. Wait, can I spell today?
Ooh,
Thank
there
you,
we go.
Jesus. Wait,
What?
British-
What were you thinking? What
it's
was
the
it?
British Virgin Islands is the correct answer.
Oh,
which I here's the thing though. We got 99% of the way there. I don't think we could have gotten any closer without
Honestly,
getting it right.
if we didn't do South Africa first and we did Jamaica or something, I feel like we would have said Virgin Islands at least for the last one. I don't know, but we got.
I don't know
close.
if I would have said Virgin Islands. I wouldn't have thought of it.
Yeah.
But I guess with 200 million in exports, like that makes sense. But whoever said Puerto Rico, I think German said it the first, I believe. So I think I think that's pretty good. I don't think
Yeah, I
that's
mean,
too bad.
56% recreational boats. I mean,
Yeah.
I don't know
Like this-
why we did South Africa first with 56% recreational boats. But
I
anyways,
think
that
it
was a
was
fun
the
one.
diamonds. Like, there's not a lot of
Yeah.
places that produce diamonds. So
Yeah,
now we
that's
know.
true.
I guess U.S. Virgin Islands do some diamonds.
That's true.
That was
That's true.
boneless. That's for sure. Big deal donuts. I said England. Does that count? I mean, actually, well, you know what? I think that's the perfect place to leave it. We're a little bit over. But that was a fun one. We had a whole lot of chat participation, guys. So thank you so much for giving us some great ideas. I think we did pretty good, pretty well, all things considered.
I mean, 90% besides for one, but yeah, it was a fun. It was a fun one.
99% of the way there is pretty good. E, is there anything that you want to leave on before we get out of here?
No, that'll be it. That was fun. Thanks for taking the time to hang out with us, and that'll be it for me.
Yep. Had a great time, everybody in chat. Thank you for joining us. We're going to catch you guys next Tuesday. Can't wait to try the trade till then. So everybody, good luck trading. Be careful out there. And may the rest of your week be green. Peace.
Peace.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to tastytrade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha. Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
I do this every time I'm here.
I just want to know what.
Every time I'm
what did
here,
he say
we gotta
he
go
wanted
down
to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this. Like, oh God. It's hot as hell in here. I'm like sweating. Like, it smells.
Yeah, it is Thursday, December 12th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth with your host, Victor Jones. It's a little show where we like to explore the incentives that govern our world. It is Thursday, people, so I am rocking solo. So shout out to everybody watching on tastylive.com. Shout out to all you savages watching on Tasty Trade desktop and mobile applications. But if you want to be part of the conversation, the screen names and the running chat, all that stuff that they're situating somewhere along your screens. There's only one place to do it, and that's on Tasty Live YouTube channel. So head on over there, type in Tasty Live, find the live, and jump in. And start typing in random-ass characters. Tell us whether you made money, you lost money. If Broadcom's little pop of 13% is good for you. If you had a binary position on, tell us whether you think, tell us what you think about the quantum computing breakthroughs that we've seen in error rates over the last week. Tell us what you think about that. Tell us anything. The point is to be as active in the chat as possible so we spoof the Google algorithm into putting this show and this stream in front of as many people as possible. Speaking of the people, we should say what's up to the people. Shout out to everybody in the chat. No idea where this thing starts, so I will just say what's up. Lone, Big Deal, Dave S., Absolute Beginner, Donna, I see you as well, Metaphysics, Paul McAvoy, German, and so many more. I want to say what's up to all of you. Quantum computing equals trash. Oh, that's so funny. I didn't get. I don't want to do it. I don't really get what the new breakthrough was. I watched a video like a month ago of a woman that I follow, a scientist who like explains. I don't call them complicated, but quasi-complicated developments that are happening in science. And she explained Google's breakthrough and error rate back then. So I don't actually know what was news. I don't know. Some part of me is just some big cynic that says whenever this AI hype train slows down, they just throw some red meat at the wolves to keep you chomping at the bit, buying up anything smoking. More on that later. Gold $50 drop today, was a little surprise. Bought that dip via GLDM. We'll talk about that. Look at you, CT, longtime lurker, first time to comment. Love the show. I love you. And I mean that. That's not some, I'm not just giving out some pleasantry. I mean, I'm looking at you, CT, and if I could play some slow R&B jam right now and tell you just how much I love you, I would. But I'm contractually obligated to say meaningful things about the market. So I guess more on that later. Let's talk what happened in the market today. My babies, the NASDAQ cash was down 2/3 of 1%. Dow Jones down 0.5%. Russell down 1 1/3, and the S&P down 0.5%. But even in red, it seems like they continue. Even a red day doesn't feel like a red day anymore. You feel me? Do you understand what I'm saying? I guess it depends on how leveraged you were to the downside, but we just flirted with 21,820 in the NASDAQ. The valuation gap between U.S. markets and the rest of the world, the MSCI rest of the world index, has never been higher. Valuations have never been higher. And I know they tell me all the time, Victor, you're a trader. You shouldn't be talking about or worrying about valuations as much as you do, because that matters in the long term. What's that quote? In the short term, the markets are a voting machine, and in the long term, they're a weighing machine. In the short term, it's all about supply and demand. How many people want shares versus how many people are selling them. And if there's an imbalance there, price goes up. Doesn't matter what your fair value is on an asset. It's supply and demand in the short term. And I get that. But at some point, who is the incremental buyer? And typically that's why you see a two-sided action in a marketplace, because you need to go find a position, find a value, find a price where you have a new incremental buyer. And I guess the passive bid from all your 401ks, as long as nobody's getting laid off or it's happening slowly, and I get the claims ticked up today, more on that in a bit. But as long as you guys are all contributing through your 401ks, that passive bid in the market is a monster of an MFer. And that's, I think, what anyone like me, who's crazy enough to try to fade this little window between now and expiration in December, when everybody's all bulled up on Santa Claus rally and seasonal trends. I don't know. I got something in my claw, and I just had to go try to fade this thing. And now I'm coming in here every day a little bit angry, and you can tell why. But if they could roll this, thing 3 to 5%, I'd be a very happy man going into. I guess it's not Turkey Day, the holiday, Christmas, Kwanzaa, Hanukkah, whatever you celebrate. E-mini S&P 60.63, so off those 60.85 numbers that we just saw a few days ago. 21.7 in the NASDAQ futures, my babies. 44.3 in the Dow, Grandpa's favorite index, and the Russell down 23.60. And the movement here, if I may say so myself, Cato Prime saying sell the NQ. Famous last words, my man. I like it. You want to come stand over here with me? I feel like I'm in the movie Braveheart. I've got blue paint all over my face, and I'm just saying, hold. They're charging at me full speed, and I'm just, hold. That's how I feel right now. Am I scared? A little bit. Do I think it's going to work out? I'm not as confident as when I showed up to the battlefield. I'm not going to lie to you. But I do think sometimes this game is about pot odds. And do I have some aspect of my account that's always long only? Sure. And the trader in me would love to see the pot odds of a left. I keep saying this, but this low volatility regime seems to me that you've got a right distributed distribution curve. What that effectively means, without using fancy words to name that type of distribution curve, is that you have a higher probability of a grind higher, a higher probability of higher prices, but the expected value of that distribution curve doesn't change, and it's offset to account for that higher probability of higher prices with a fatter left tail. And I think that's sort of the environment that we're in. VIX at super low. I don't want to say super low, right? I guess, in my personal opinion, VIX low at 1392. Not much the market is worried about going into the tail end of this month. Perhaps, they'll start worrying about taxes, stuff like that in the first quarter. But from the market's perspective, regardless of geopolitical tensions, regardless of a lame duck president, regardless of a new administration who seems to want a little bit of smoke when it comes to bilateral, multilateral trade negotiations, all of that seems to be taken in stride because of the growth narrative that's we're painting. We're painting the growth narrative, the extension of the Trump tax cuts, the lower corporate tax rates, the intention of keeping GDP growing at 3% instead of the long-term trend at 2%. All of that seems to be priced in, but the question becomes, at what point is the good news priced in to its full extent? At what point does an incremental dollar already have the positivity of the next 9 to 12 months already priced in? And maybe we're nowhere close. I have no idea. At 6,100, maybe we're nowhere close. A lot of the street thinks that 6,600, they're basically all bunched in their 2025 estimates between 6,600 and about 7,000, somewhere between there. So it's a 400-point range. So let's call the average about 6,800, 6,850. Do you want to know what Vol's telling you? Do the math. Take that 13 VIX, apply it to the 6,100 or 66. You're going to get somewhere in the ballpark of 6,650. So you don't really need all those fancy 2025 outlooks to try to figure out what a reasonable expectation of upside is going to be. The only problem with all those fancy reports is nobody gives you a reasonable expectation of downside risk, and Vol does that because it is a two-way mechanism. Live by the vol, die by the vol, my friends. 1392, far below the long-term average in volatility, somewhere at 17 or 18, if I'm not mistaken. 2 years, I think it was 2 years ago, I could not understand, Vince K, what's going on, Paul McAvoy, and if housing picks up next month. Yeah, mortgage rates tick down. I think I saw them at 6.6%, something of that nature, and the sentiment, the buyer sentiment, is starting to roll over as well, starting to look a little bit more positive. So those two things could happen, man. And if those two things happen, you get people buying washing machines again. You get people buying, carpet, getting people in the house, working on the house. That's a big part of, driving purchases in the economy. We've been missing that as the housing market's been locked. It's possible, but some part of me continues to see, some part of me wonders, when we saw a higher inflation rate, what was that, yesterday? All the days blend together. We saw a higher PPI this morning, 3%. Okay, we saw a higher PPI, not by a little, but by a lot. Let me pull this up for you guys, just in case you didn't see it. I'm sure you did, but just in case you did not. Vol underestimates the downside, in my humble opinion, because once it starts to slide, Vol explodes. Kind of. I don't disagree, but skew is built into the market post 1987 for that exact reason. But I would say vol in general tends to be a little bit overstated. I do see what you're saying, though. I do see what you're saying. Anyways, the PPI actual on a month-over-month basis, 0.4% was the actual versus the expected at 0.3%. Year over year, Big damn deal. 3% versus the 2.6% expected, and the prior number was 2.2%. So there is no more hiding from the reacceleration of inflation. The only question is, how high does this go? How long does it take producers to pass these price inputs? PPI is seen as a little bit more of a leading indicator versus CPI, which is a lagging indicator. PPI indicating what producers are paying, which likely means what they are going to pass down onto the consumer later. If they had to pay a higher price in the purchasing of their products, the likely next step is to pass those things down to the consumer, which means the expectation is later on a higher CPI that these costs are passed down. But even on the core, 0.2% came in at a consensus, but on a year-over-year basis, 3.4 versus 3.2%. My thought process coming into this week, sometimes I just think the opposite of what is easy will happen. Sometimes that works out. Sometimes it's more simple. So in my mind, and I even read a couple of reports that warmer inflation data will take yields higher. And I thought that's not nuanced enough. This is, I'm explaining to you why I'm wrong. I felt smart at the time, but I'm explaining to you why I was wrong. I thought coming into this week, a warmer than expected inflation print would result in two things. I thought it would result in a slightly higher front end of the yield curve. In other words, I thought the 2-year would stay high and maybe even lift a little bit. What is that really saying? What that's saying is that if we got warmer inflation prints this month, what was the effect is that the market would take out some of the Fed's ability to cut, their expectations for the Fed to cut in the short term. And the 2-year tends to be this representation, this market representation of Fed expectations. So if the short end floats higher, what they're effectively telling you is over the next 2 years, within the next 2 years, there's a lower expectation that the Fed would move rates lower. After CPI, in a way, we saw that. I'm going to show you why that is. We were something at like 88% of a cut this week. We've moved up to 96, 97%. So they cemented the December cut, but that's not the entirety of the story. What's also true is coming into this week, we had about 3 additional cuts priced in to 2025. There was one in March, there was one in June, and then effectively there was one between October and December. But that one was a lower probability and the timing was less clear. And what had happened after CPI, they took out the probabilities, or they took down the probabilities of that third cut. And today, with the higher PPI, they threw it out. They threw it out completely. So your probabilities of 2025, the amount of cuts that have been priced in at this point is basically 2. And that sort of makes sense. Where are we in terms of Fed funds rate target? We're at 450 to 475. Take out 2 cuts, and you are 4 to 4.25. What is your 2-year? Your 2-year is currently 4.165. It's literally in the middle of that range, between 4 and 4.25. I could go look at SOFR futures or Fed funds futures, all that stuff, but as a nice back of the napkin for us traders, you can just look at the 2-year and go, the market took out a lot of those cuts and is expecting over the next couple of years a range between 4 and 4.25. So that's kind of what I would be expecting for next week, which is the 18th. The Federal Reserve will put out their expectations for what they're going to do in 2025. But I kind of think the work's already been done for you. And I think that's what happened in the marketplace today. But what I thought, because the market has done so much work to raise the short term, that perhaps that may be giving more confidence to the long end of the market. And maybe you would see a little bit of buying in the long end, and maybe you would even see an inverted yield curve. But the market's not ready to do that. And the market is dragging the long end of the curve up with it. So we are, the market is not looking like it wants to invert in any way, shape, or form. So ZB has sold off of that 120 level into 117, into this digestion range here. It's sold off deeply into it. So it looks like the yield curve is going to stay positive. It wants to stay positive. It's going to stay positive. The difference between the 10 and the 2 coming into the day was about 14 basis points. So the 10-year, which should happen over time, your longer tenor should be trading with higher yield because there's more risk that something happens over a 10-year period to the payback of your money versus 2 years. You loan somebody money, things can happen within 2 years where they don't pay it back or the money's not worth as much. 10 years, there's a higher probability something goes wrong, so typically you demand more risk for those longer dated maturities. I know most of you know that stuff, but just in case. So you're seeing the 10 years trading with only 14 basis points more built in, but it is positive nonetheless, and it doesn't seem to want to reinvert, which means you sort of got to respect the 2-year here. I try to get cute and think we might see a reinversion. It doesn't seem like the market wants to do that. It seems like the market wants to keep yields positive. And if that's the case, the long-term trend between the 2 and the 10-year is 100 basis points. I saw Ophir Gottlieb post something on this today. The long-term difference between the 2-year and the 10-year is about 100 basis points. So if the 2-year right now is trading at 4.165, the long-term averages would say the 10-year should be somewhere in the neighborhood of 5%. That you should see an additional 100 basis points for the yield of that 10-year. And I've maintained that I do think that is in the cards. I think the path of least resistance for 2025 is a 5% yield. But I did think that they would, I thought bonds would do a little bit more work to the upside here. But I guess we're in this range. And I'm going to trade the range unless it's violated, right? You trade between 115.5 to 118.5 was this established range. We did a little peekaboo above the range. The question is whether we'll establish a higher low or a lower low here. I'd still like to play for the higher low. For some reason, I think it's not going to be that easy. Bonds don't move in a straight line. But the market may make a fool out of me here. It may, we may be trading at 114 in the next 2 weeks, and I'll say, well, I didn't get that one right. But we'll see what happens here. And you can see that this kind of range that it was trading in, we saw that back in mid-year as well. The same exact range between 115 and let's call it 120. We're doing something similar now. And I'm going to play that range. We'll see what happens. Paul McAvoy says, me too, play it higher. That's what I'm doing, my friend. I could totally be wrong. And again, it's a weird sort of thing because I'm playing the counter trend. I'm playing a long bond position, even though I think over a 12-month period, I think the steepener works. I think we steepen, and I think that 10-year probably is at 5% as we steepen. Let's see what some of you guys are saying. I'll stop. Let's read the chat for a second, react to the chat, and then we'll get going. We got a ton of topics today. The 10-year 3-month is almost positive. That's right, absolute beginner. And my man who did all of the work, this is the thing about all these signals, right? So they come up with the SOM rule. The SOM rule's violated. They get Claudia Somm to come on television, tell everybody it's different this time. I believe our good friend, I'm blanking on the name, the person who came up with the 10-year 3-month rule as being the most important of the yield curve inversions to look at, I think is also being paraded around saying the same thing. I think I read in an article. It's different this time. Everybody, it's different this time. Daniel Marquardt, overvaluation is concentrated to select stocks, but not to the broader index. Daniel, I would agree with that. But here's the problem. Not with that thinking, because I have that same type of thinking. I would agree with you 100%. You take out 7 stocks, you go, what's the value of the market? And you get something that's like sort of a normal valuation range. It's not low. I think it's like 18. So right now we're trading, I think, at a 22 or 23 forward multiple. You take out those 7 stocks or whatever, I think you're in the ballpark of like 18, 19, which is in the 5-year, 10-year average. It's a little bit warm, but it's like, it's not crazy. I hear you, but the problem with that is, so my trade construction is to buy the rest. So what I'm trying to do is be long the market, short concentration. In a way, that's how I've structured my portfolio. And if what you were saying is true, what could happen at some point is a normalization. And what could happen is either those concentrated, overvalued, or expensive stocks in terms of valuation come down and meet the rest of the market, or those cheap stocks by valuation come up and meet those other concentrated names. But that's not happening right now, right? That broadening of the rally to an extent is not happening at the index level. It may be happening, you're getting like these big spikes in stocks, Broadcom today moving up by 10, 13, 15% in the extended hours. You can look at it here. But, ended the day at 180. Now we're 207. So you're getting these massive reactions on stocks, big pops. But at the index level, you're not seeing the other indices catch up to the extent with where the NASDAQ value is. And that's where all those concentrated positions are most represented. So I think you're right. I also agree. But what's the saying? Markets can stay irrational longer than we can stay solvent. And I'm not necessarily saying that stocks are expensive. At the beginning of a cycle, I've said this before, I said this to Chris, at the beginning of a cycle, you get high valuations, and then an economy grows into its valuations typically. They might be a little overextended, but what the market is doing is trying to forecast or discount out into the next 9 to 12 months. And in the next 9 to 12 months, the market has a very high expectations for earnings growth. And now they're expensive, but if you see the market grow into that earnings multiple, you'll see the price can go up, but its value can come down. That's why you can't put all the eggs in one valuation basket. Anyways, my point is, Daniel, I totally agree with the point of view I have a position on that would benefit from the normalization of price and value between the concentrated stocks and those that are not concentrated. Just taking some time. If I've constructed it correctly. That's always, perhaps I've constructed the trade incorrectly. It's not the easiest thing to put on. I guess I made it complicated. It is easy to put on if you use simple instruments. Sterling Ruffin says, you want to see vol spike, let the Fed wake up next week and do the right thing, not cut rates into this higher inflation environment. Sterling, why are we the only people who are reasonable? Why are we the only? That seems like the most reasonable thing anyone could say, which is on a 3% PPI, right? On 2.6, 2.7% year over year consumer inflation levels. We're cutting into that. I don't get why the public is not furious. I don't get why they're not furious. Because unemployment's still going up. Jobs claims today, it's still going up. People are still not, this isn't a great, environment for job hunters. And that's keeping a lid on wage suppression. I don't know why people are not pissed. Maybe there's enough people that go, well, if they cut rates enough, maybe I can get a house. Yeah, maybe you can, and it'll be 20% more expensive when you can get into it. Congratulations, you played yourself. Jobless claims, 242,000 is the actual versus the consensus at 220,000. And 220 is kind of where we've been at. If you can see it here, the 4-week moving average, 218,000. So the expectation was just a status quo number. And you can see there's a pretty big jump between that status quo number, which also moved up the 4-week moving average. Stuff not great, but it's a weird thing. Here's the weird thing. If companies are figuring out how to do more with less, if a lot of the consumptive power has moved up from the bottom 50% to the top 50%, if that top portion of the economy is accounting for 80% of the spending in the economy, then maybe losing jobs is not going to have a down, as negative an impact on the economy as one might normally expect, given the concentration of wealth. That's a weird thing to say. And so as you see unemployment tick up, what you're really seeing is corporate efficiency and margins, corporate profitability move higher, and not necessarily consumptive power of the economy going down or offsetting that equally. That's the weird thing to say. But somebody must say it. It seems like that's how the market is pricing this. But unemployment rate at what? Where did we end last week? I think we ticked up to 4.2%, if I'm not mistaken. Fed's initial expectations for 2024 was 4.4%. Inflation at 2.6, 2.3 headline and 2.6 core, with a Fed funds rate at 4.4%, which is about where we are, right? We're 440 to 475. They probably got one less cut off than they thought, but we're going to end up doing it in a week, which I cannot believe. Jack Murphy Live says most people won't short. I think that's true, and that's probably a good thing, Jack. I think shorting, shorting tends to be something people think about as binary. And I think when I thought about shorting as binary, usually it was a losing proposition for me because it's really, really hard to time. When I started thinking about shorting as just a basis trade, like I want to be net long these instruments and I want to be net short these instruments, and really what I'm looking for is either the market can go up, but my longs are going to do better than my shorts, or market can go down and my shorts are going to do better than my longs. I'm looking for a basis convergence. When I started thinking about shorting that way, I started to have a higher probability of success. And most of the time I keep net long deltas. And so that sort of increased the probability of success for me. And I started thinking about shorting in a more nuanced way. But yeah, I do think if you do this long enough and you're not, why not be I wouldn't be afraid of the two directions in the market. Just depends on your activity level. Cato Prime says, markets are nuts. Markets are nuts. Housing, credit, debt, wage growth is telling a different story. I'm with you, Cato. But here's the thing, man. I also know that this late part of the cycle, which I believe we're in, it can be the dumbest. It can be whatever you think is crazy, multiply it by 2. And that's why this part of the cycle becomes really hard to fade, because you get fart coin going up and now it's worth $560 million, which is worth more than 1 out of 3 publicly listed companies. That's the kind of stupidness you're in. And the Fed is cutting into that. So I'd be careful. I agree with you. It seems a little nuts. But sometimes, like in 2022, I think what was hard for people to realize is we were in an environment, we were leaving an environment and we were going into a new one. We were going into a new environment with higher cost of capital. And that changes the game on how everything had worked, right? Your Ubers are not going to be subsidized with cheap money anymore. The prices were going to go up. Your food deliveries, restaurants, your small business labor costs in your small businesses, all of this stuff was about to change. And the market saw it and was discounting it, but people couldn't see that future. There's a part of me that goes, the market is nuts today, but what about the next 9 months? Am I potentially not able to see that the market is projecting? What is different about that world? And because I always take it back, there were so many people that could see what that new world was back in 2022. They couldn't imagine a cost of capital and what that would do to asset prices, what that would do to certain businesses and industries, what that would do to labor costs. But I wonder if we're in the reverse of that right now. I don't think so. When people are saying that the business cycle is over, to me, I'm like, all right, all right, you guys have lost it. But there's some part of us as risk managers that have to remain humble to the idea that we may be on the wrong side of a two-sided market. And I'm always humble to Mr. Market. So we talked about bond position. I have nothing on. I don't have the steepener on yet, though I'm guessing at 119, hindsight's 2020, but the best time to put this on was when we ticked at 120. The steepener would have been the best thing to put on. I think the difference between the 2s and the 10s was only 2 basis points back then. Now it's like 15. We've already widened up. That trade would be a 13 basis point winner. Again, hindsight's 2020. I'm still playing the long side of bonds. If I get lucky, I'll look to exit that long bond position. I don't know, maybe 122-ish levels, scale down, and then put on the steepener. But I don't know if I'll get that second chance. We shall see, my babies. For a second, I talked about this morning. I talked about it a little bit over the last couple of days. I want to bring it up now. I want to get your guys' opinion. Speaking of concentrated, the day after Ryan sells his fork coin at Rockets, he was long. Of course he was. All right, let me read a few more. You have to outbid BlackRock. Good luck with that. You're talking about houses, I'm guessing. VJ, is your portfolio at a high watermark? No, it was going into last week. So I think the middle part of last week was a high watermark. And but I've given back some in the last couple of days. But I also have more variance on. So I have basically what that means. I have more futures options on right now, and when I do this, I get bigger swings in my P&L. So there's a way that I'll have on long stocks, and I'll hedge out some of that risk with short futures, and that's basically has very little variance to it. But then whenever I think I know something, who asked that question? Oh, Jack Murphy. Whenever I think I know something, then I'll put on a little bit more directional exposure, and the portfolio will have a lot more variance. So I hit it last week and pulled back over the last, 6 trading sessions? That's the way it happens for me. I'm going to hit a high watermark usually when the market's contracting on everybody else. They're going to hit it as markets are hitting new highs. People in general are lulled into complacency by the holidays and their fear of missing out on the next NVIDIA rally. What do you think? Is the quantum supercomputer from Google, is that the NVIDIA killer? This has been a zero-sum game, this whole AI narrative. It's like NVIDIA's getting all of the capital expenditure from businesses through one way or another. All that spend was effectively going to really one company. Maybe Taiwan Semiconductor by extension and a handful of others, but the lion's share of that capital expenditure was going to one place. How many of you Googled septillion this week? I don't know. Is that a math joke? I don't think it is. But my point is, this thing could, just for anyone that doesn't get the horrible reference, it's not even a funny joke. This thing can do problem solving in 5 minutes that would take linear computing septillion of years. And so you gotta, the joke, if you have to explain, it's not funny. I'm gonna move on. But I agree, they're lulled into complacency. But this is the thing, as I said before, the last leg of the move, the late cycle move, is the most beta. That's where a lot of the beta comes from. It gets so dumb. Are we already in that territory, or can it get even dumber than where we are right now? Especially if you have a Fed that thinks we're at neutral. I don't know that they think we're at neutral so much as they think that the long end of the bond market's going to do their work for them. I don't know. I don't know what the hell. It's, are we just inflating our way out of the debt and trying to hold, like trying to pretend it's not happening as long as possible so we don't get to go to silly, what does Raoul Paul call this? Raoul Paul calls this the banana zone. I think he's got this video out there. He's had a series of videos. He's done his third one, I think, the Everything Code, I think it's what it's called. And he has, between now and 2030, is called the banana zone, where everything just goes dumb to the upside. I don't know. Institutional money can short because they can hold through squeezes. Maybe. I think retail can, depending on the sizing of the position. But I don't think people want to size shorts small enough. People see that potential of that left tail move, and they want to be the next microbrewery, so they put on positions with massive leverage that pay out these nice convex P&L graphs, and then the market just grinds higher, and you're paying out theta to the market. At best, you're paying out theta. If not, you're in some futures position where you got to keep putting up money to hold it on, and you can't. At Victor sounds like a Pokemon or a lizard. Do I? Jesus. I don't buy the hype, and I personally never have. I don't either, but I'm a cynical person by nature. Thoughts on Ripple? I don't have any. Meaning I don't have any thoughts. I also don't own any XRP. And I don't currently own any ETH. I did, and then I sold it on a rip. Every time I talk to Ryan Grace, though, he talks me into its long-term value, its long-term network value. But I have money in Bitcoin, and that's about it. Cactus Leo, NFT. This is the last one that I'm gonna really get to work here. NFT pictures of rocks and monkeys selling for millions of dollars was pretty dumb. So anything is possible. Exactly, Cactus. It was so funny. Because as we do here, any trader, you guys all have rational, reasonable positions. Why? Because the market's beaten the binary thinking out of us. As soon as you start thinking in one way trains, the market will punish you, and then eventually you get to this world where you see the world through a distribution. Anything can happen, and you approach it with reason, with caution, and with respect. So when the whole NFT craze was going on, people asked me what I thought about it, and I said, well, is a painting worth more when you convert it to dollars? Is it worth more because it's been priced in yen versus being priced in dollars? Somebody would say, well, no, obviously post conversion it should be the same. Yeah, okay. Is it worth more if I pay with cashier's checks? The answer is no, it should be the same. Maybe there's some inconvenience fee. It's like, what the hell is this? Traveler's checks is what I used actually. And so the answer is no. So what that shows is the currency unit shouldn't technically affect the value of an art piece, nor should its method of transacting. If I wired you the money, if I paid you in cash, if I paid you with a check, if I paid you with ACH, if I paid you with a theoretical equivalent of diamonds, there's a conversion rate, and there's probably going to be a spread. There's friction on the transaction, but generally speaking, it doesn't change the value of the instrument. So my issue with that whole dumb NFT craze was nobody was judging the art, the value of the art. everyone was thinking that the scarcity was the thing that matters most. Well, if I blow my nose in a tissue and I put it on a piece of paper, that's scarce. That's a one of one. How much is that worth? How much is that scarcity worth to you? And you start thinking about it like that. You go, well, not very much. Yeah. And that's the way I thought about a lot of those drawings back in the day. That none of them were worth the value that they were selling for. None of them. The art itself. And I'm not even an art person, but if I could look at a dope piece of art, I would say, okay, I get it. I'm not going to pay it, but I get it. Almost none of that stuff, in my personal opinion, was dope. And it was really just an expression of digital wealth. It was like wearing a Rolex or something like that. I don't know. I don't know where you are in your wealth journey, but the more I had, the less I cared about showing it to people. And I find I was a bank teller at like 18. And here's what I found working at a bank. The people who walk in and look like they got it, being on the other side, 9 times out of 10, they don't got it. The people that walk in smelling like mothballs, they got it. And they have it because they're not trying to keep up with the Joneses and prove it to everybody, because who the hell cares? A t-shirt's a t-shirt, shoe is a shoe, an avatar is an avatar. And that was my opinion then. That's probably still my opinion. I don't know if that's the type of answer you were looking for and asking about XRP and then asking about NFTs, but that's how I think about that stuff. If I can upload a free avatar, is there any chance in hell I'm going to spend $200,000 to put up an avatar and try to impress you? No, thank you. I'm good on my own. I can think of plenty of other things to do with that money. /GC 2704. Somebody brought this up earlier. Down $50, which isn't the worst day. You know, that death candle's $100 in gold. That's why I buy my clothes at Costco. Amen. They have something called cotton on here. I just care about the materials. It took me so damn long. Okay, you got me off of this topic again. It took me so long to care about the materials that I was buying more than the brand. And when I made that transition, I felt like such a fool. You know what I mean? For my entire life to be looking for the thing on the shirt, the thing on the pants, the thing on the shoe, and not caring as much about what's actually in the materials. And then I come to find out I've been wearing stuff made out of oil, you know, these types of like non-natural fibers on my body this whole time, and paying somebody God knows how much. Anyways, Jack Murphy says all digital assets are a scam. Are you including Bitcoin in that, Jack Murphy? Are you including Bitcoin in that? I'm curious. But my point is, a $50 day in gold is nasty work, but it's not the worst work. At this level, about $100 to $150 day is like your painful drawdown. I've mentioned this before, but I did some work on gold, and your good day, your outlier move to the upside is like 2%. Your outlier move to the downside is 5%. But gold was an ugly day today. Silver was an ugly day. I think down 3%, something like this. Sleepy Mocha says. Actually, you guys like this topic. Hold on, let me see what you guys are saying. The man I work with, that's why I wear black t-shirts every day. It's not because I think it's cool. That's because I live in a hot climate. And if I sweat, I don't want people to see it. And I care about getting as close to 100% cotton as possible. Natural fibers. The man I work for is worth 9 figures, and he wears Wrangler jeans and a company shirt everywhere he goes. Amen. Amen. That's what I'm trying to teach my kids. Early, so they don't get caught up in that crazy thinking. I can't trade gold. It has bludgeoned me time and time again. Sterling, I've been in that position. In 2021, 2022, I stopped. I think in 2021, I swore I would never trade paper gold again. I went and I bought a bunch of physical gold. As you guys may know, I bought a bunch of physical gold, a safe, and a gun. And I'm like, I don't get how this moves on a day-to-day basis, but this thing should go up. So I'm going to buy the physical gold, so I can't be liquid with this thing, and it forces me to hold it. Not liquid gold, physical gold. Ended up working out. I started distributing some around 2,400. I need that mothball money. You guys are too funny. But yeah, I think gold after 2,400 became a little bit difficult because it's just creeping higher. You know, there's not really much of a two-way market, and it's not like we just like early in the year from March to April when we went stupid to the upside. So you could have some long upside call exposure, and you could get paid really quickly, and then you could take some of that money, take it out of the market, and then roll them into out of the money calls, further out of the money calls, and just keep printing. It's not like that environment. It's grinding up higher. You're not necessarily getting paid on upside call deltas, on out of the money anyway. You got to be like at the money or in the money. So yeah, I have a little bit of long gold exposure right now via calls. And I've said this before, I'll say it again. I think the more interesting play for me are the miners. I think given the fact that gold's still at all-time highs, given the fact that China was a net buyer again for the first time since May, for the first time since the May report, I think there's a big divergence between where miners are priced and where the metals are priced. The stocks could be right and the metals could be wrong, or vice versa, but I like the divergence here. You could play it the other way. You could go in and short gold, saying that the miners are right, or projections of the next 12-month revenue. But I kind of like buying the miners here, and I have been this week. I don't know if, again, I like to say this because when I'm in these types of positions, this is not I think it's going to pay anytime soon. I just like the value of the entry, and the miners, I've increased the position size or decreased the position size, but I have not closed out of these minor positions. Lone says, Victor and I love our gold. That's right. But I diversified too. It was gold, it was silver, it was nickel, it was platinum. I want to say that was it. Yeah, so I spread it around a little bit. But mostly gold. Silver a little cheaper here today. I'm adding to the silver position here. So 30 is held. If it breaks 30, then I'm in trouble. But on this backing off of 33, this rejection of 33, I don't know. Is this a little mini head and shoulders here? Should I be scared of that? Are you guys scared of that type of stuff? See if I can keep drawing this. You guys seeing what I'm seeing here? Somebody play the Jeopardy music here. Do 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 do. I'm sorry. Once I started, I had to finish. I didn't think it was going to take this long. But my point is, are you seeing what I'm seeing here? It's probably, what would a measured move of 30 to 35 be? So that's 25. That's 25 if that head and shoulders violates. My thing is, I looked at some statistics on stuff like head and shoulders. There's no edge in it. It's like there's no edge in a lot of these chart patterns. So it's great to call them out. You sound smart to somebody new. It gives you some content to talk about. But when you actually look at the percentage of these things paying out, am I crazy? Has anyone else looked at this stuff? I thought I looked at this at one point in time, or looked at a study on common chart patterns, and the payout was near 50-50. There was no statistical edge. So I stopped talking about it. But Head and Shoulders is so easy to pick out. You've got to put it on there. Grumpy Mike's trying to get me canceled, walking me into a topic. The Time magazine named their felon of the year. What an embarrassment. I don't know, man. I get how some people feel that way. Here's my thing. Here's what I would say, Grumpy Mike. And I don't want to get in a big political discussion here, nor do I want to encourage one in the chat. Here's my thing. I think we're at a pivotal moment in American history, and regardless of who the president is and how you feel about that person and how we've been conditioned over the last several presidencies to feel very binary as a society, and if you feel this way, you're right, and if you feel this way, you're wrong, and you're evil, and you're dumb, or you're uneducated. I think the more we as a society, regardless of how you feel about the other political side, the more we throw that stuff away, just don't even let that stuff into our minds, that binary thinking and that emotional response to that stuff, as hard as it is, the better off we're going to be. I think the stronger we're going to be, the better solutions we're going to be. If we stop hating whoever's in office, regardless of the side of the aisle, we start looking for common ground, start looking to negotiate and do deals with each other, we'll be on better footing, regardless. But I'm so tired of it. I'm so tired of this. It's like, if you believe this, you're right. If you believe this, you're wrong. And people fighting people over their political opinions. Isn't that boring to everybody else by now? Like those articles and that type of media format, how's that still paying out? People want 3-hour nuanced conversations. I believe. That's what I want. I want 3-hour conversations. I want one person from one side of a discussion. I want another person from another side of the discussion. I want a great moderator who has thought-provoking, interesting questions. And I want two sides of that debate to be respectful and civil, but passionate about expressing their ideas and unafraid to challenge the other individual. That's what I want. And whether I get that through politics or I get that through podcasts because we can't get it in the political spectrum, I don't care where I get it. But I've got a thirst and a hunger for knowledge on sort of unsolvable problems, things that are not binary with some eternal truth. And I think other people do too. I think other people recognize that some of these wedge issues are wedge issues on purpose. And let me hear your side. Let me hear the trade-offs. Let me hear the other side. Let me hear the trade-offs. And let's try to make a logical, reasonable decision, a conclusion. Isn't that where we are now? I don't want to be angry. Anyways, so that concludes your PBS. I don't know. I'll abandon that joke. I couldn't even finish it. FXI 3151 by 3154. Basically a whole bunch of nothing today. I said this a little bit in my segment with Tony earlier today. Tony and Tom, excuse me. And hear me out. I talked about the catalyst for the China trade. Oh, I don't know if you guys can hear my son singing in the background, but I apologize. Not much I can do about it. He's right outside my office door. But the catalyst here, where the Politburo meets mid-year, usually they're not talking about economics. This year they did, so you got that massive jump in September as they signaled, we see a problem, we're going to address a problem. They've given some numbers, but not a ton of specifics, and the numbers they have given, the market has perceived as this isn't enough. Good, not enough. Some people that I read, smart people that I read, have said that they don't want to fire the bazooka unless they understand where the U.S. political system was going to be, so that they would wait for more specifics until after the election. We saw that. First part of December, we saw an announcement from the Politburo. We got a nice 10% spike in FXI, which has come out of the market for the most part over the next two sessions. Now, what's the next catalyst? The next catalyst, you're usually going to, just like in our system between February and June, you're going to get the first budget from the new administration. Around March of next year, you're going to get the details of China's stimulus plans. So the likelihood you keep getting these flirtatious, sexy little like lines with no real teeth, no real bite to them, probably high. But sometime between now and next March, you're going to get specifics. And that becomes a binary event once we get to March. Why do I say that? Because at that point, either their plans are going to be perceived as enough by the marketplace, or let me call it satisfactory by the marketplace, or more than satisfactory, or unsatisfactory. If unsatisfactory, then perhaps some of the optimism that has been priced into these markets gets priced out once you have the details. Hey, we're gonna put tons of stimulus in the market. We're gonna do this. We're gonna do that. Then you get the details, the size, the timing, and there's the possibility that binary event of the moving from the unknown to the known takes value out of these underlying securities. But there's also the possibility that they meet or exceed expectations. So I think between now and March, do I know what happens between any of these instruments? Absolutely not. I do not know. But I do know that in March, we're going to get another one of these catalysts. And we saw the September catalyst. We just saw the December catalyst. And in March, we're likely going to get another one. And the question becomes, for anyone that wants to take on this trade, which side of that trade do you want to be on? Do you want to trade that binary event risk or not? For me, it's yes. I don't know that we're done here. I think at some point, the back and forth between China and the U.S. seems like it's going to escalate. Even what did the NATO chief today said? Let me read you the direct quote. If this doesn't make you nervous, I don't know what will. But they'll say anything. Directly from the NATO chief here, everybody. NATO chief, we will need a lot more than 2% of GDP for defense. We are not ready for what is coming in 4 to 5 years. It is time to shift to a wartime mindset. A lot of the projections I've seen for an escalating conflict with China are on a 4 to 5 year time horizon. So I think the possibility that tit for tat starts to warm up here, and what does that mean for FXI? What does that mean for U.S. listed Chinese equities and the ability for U.S. investors to get exposure? What does that mean for listing or delisting over the next 4 or 5 years? What are those are those projections any good? Is that something you sort of have to say because you see the other side increasing their military spend? I don't know. All I know is that these things are still cheap relative to their U.S. counterparts, and there's a catalyst in March, and I still want to be long, and I will be long, and we'll see what happens in March. I have much smaller position size going into September. This massive move of like 25% over a 2-week period was enough to cash out some of that. I think 60% of the position, but I'm still going to stay long into March. And then we'll figure out what we do after that. And I know everyone says how bad their economy is, but I don't think I'm playing an economic recovery. So there's some part of me that doesn't think I'm playing an economic recovery here. That could be a kicker. Some part of me thinks I'm playing, this is sort of a currency play. That this is how much liquidity are they going to put into the market. Plus they have capital controls, so the liquidity they put into the market doesn't necessarily go out to the rest of the world like our liquidity. Their liquidity is more targeted to them, stays there in that Chinese circular economy. And in that world, if they have a rising liquidity environment, I think that's all I'm playing here. And so as much as people hawk about how bad the economy is and how bad, that they could be in their next GFC moment here and that their real estate market's cratering, that people are nervous about the future, that they're taking pay cuts. I get all of that. I think the worse it becomes, what are they going to let it do? Are they going to let it implode on itself, or is there eventually a stimulated response or a devaluation of the yuan? Probably. So I think that's what I'm playing here. All right, let's see what you guys are saying real quick. Let's see. My opinion of him. Let's see what you guys are saying. I just want to have the ability to debate again. Amen to that. My opinion of him was formed back in the Central Park 5 days. Not going to change now. Yeah, I get that. I definitely get that. That was not a cool move at all. Let's see Vic Jr. I would, but the door's locked, I think. If it's not, he'll come in. I'm basically in the same boat, Mike. Trump makes a lot of people irrationally angry. I don't know if it's irrational. I think some of it's well-founded. But I just think, it's that old saying, being angry at someone else. If he never knows you're angry, does it ever hurt anybody else but yourself? In this particular case, does being mad at the president ever hurt anyone else but yourself? You know what I mean? It's just like, why? If you don't want to be angry, make the choice. Make the choice. It's very difficult to have rational discussion when his entire way of operating is to act as a sort of angry troll. Yeah, I get that. I get that. Here's the other side. The other side is, regardless if the person in that seat is eloquent and delivers the words the right way that offends the least amount of people. If that person has bad policy, is that better than having a bull in a china shop who has policy that may positively impact communities, economic policies? Is that better? I don't know. Sometimes I go back and forth. I want both, right? I didn't have the choice for both this time around. At least I felt. And so when push comes to shove, what do you vote for? The representative, the figurehead, the look, or is it the policy? When push comes to shove, I don't know. He used the most divisive language I've heard come from any president. I will say that. I agree with that. There can't be a return to some sort of rationality. This is the last one I'll do. There's return to rationality, someone like that at the very top. I do, of course, appreciate Victor being a bit of a contrarian voice. He has a way of getting you to think a little bit more about it. I appreciate that. It's a hard little line to dance on because I'm trying not to piss people off, but I'm trying to just do the Confucius thing where you just ask questions. And by asking a question, it creates an open space for somebody to think about a side of the discussion that perhaps they haven't thought about in the past. Doesn't mean you're wrong or the other side's right. It just means there's a ton of room for understanding of people's points of view. In other words, here's what I mean. The person is less important than the 75 million who supported that person. So let's try to understand the 71 million, try to understand the 75 million, and the 75 try to understand the 71. To me, that's more important. That's the most important thing. But we're being sort of tricked into thinking we got to stay in our own echo chambers and not to listen to the other side. And so there's never any understanding. There's never any negotiation. There's never any pressure on our political representation to make deals that would make progress on the biggest problems facing the American people. And by doing that, we give them a free pass. If we never listen to each other, we give our representation a free pass not to do any work. And so I think that's why the last Congress passed the least amount of bills of any in history, something like this. Let me not say that because I don't know that offhand. I thought that's what I read, but it's been a while, so. Yeah, my point is like, let's stop giving these people a free pass, regardless of who they are. Let's inform ourselves on the issues. Let's listen to each other. Let's find common ground, and then let's force or put pressure on our politicians to implement the solution that we've agreed upon. That's what elected representation is supposed to be. Not I show up 4 years, push a lever, and hope for the best. All right, let's keep cruising. I don't know why I always do that. I always fall into that trap. Bitcoin 100,000, just floating at this level. I kind of love everything about that. Going back and forth over and under 100,000. I'm not going to reopen this can. I don't think there's much to say. I think the only interesting play on Bitcoin in the short term is IBIT options. I think these things are not that bad. 20 cents wide at the money for such a volatile asset. Look at the open interest. I'm looking at January here with 36 days to expiration. Tons of open interest. Not only that, you're seeing open interest up and down the chain, which means you have pretty decently priced vol. So when you look at 67 vol, you can have pretty good confidence in those numbers given the participation you're seeing up and down the chain. You've got real decent pricing. So I'm pleasantly surprised with this stuff. And I think, if we're just going to play on both sides of 100,000 here, I know this is recency bias. Just because we crossed 100,000 didn't go anywhere for the last week doesn't mean that's where we're staying. My point, though, is the winner of the last week and a half, 2 weeks of Bitcoin are the new vol sellers. This is something we couldn't do up until a month or so ago. We've now got 67 vol priced into IBIT with 20 cent. I know it's wide, but it's not horrible. So I think that's the real winner here until we decide whether or not to break higher from 100,000 to 115. Then you're in trouble a little bit. Maybe a Jade Lizard makes a little bit of sense, right? Sell that downside put, sell a crawl spread to the upside to harvest some of this volatility premium, but you don't want to get caught naked short Bitcoin on a move to the upside. Maybe that makes a little bit of sense here. What say the audience? What say the people? Just like it did at 70K, it'll jump to 125K in a few weeks. Kyle, that was my thing, but I didn't think we'd pause at 100,000. I thought the more interesting outcome would be to run past all of those sells and sell stops at 100, get people chasing. I thought we'd be at 115 in a blink of an eye. And then you get people chasing. Then I thought we'd retest 100. So this has already been a path that I did not expect. I don't mind saying that. I don't got to be right on everything or anything. But I got to be honest. So 56.92, I like the idea of probably selling vol here. I like a Jade Lizard. Am I crazy? Absolute Beginner says I'm long the 65.69 call spread 1-3 expiry lotto ticket. That's not as much of a lottery ticket as you would think, Absolute Beginner. What I'm saying by that is look at the chain. You think 65.69 is a lottery ticket. Look at what people are betting. I mean, even buying the asset and selling these 72 calls for $1, decreasing your basis by $1. I mean, there's some really, really interesting stuff you can start doing with IBIT. And I love doing this. I was trading on a local U.S. platform that was bought out by FTX. Now I'm forgetting their name. But they offered Bitcoin options. They were illiquid, and they weren't centralized. They weren't on a centralized exchange, but they were good enough. And this was one of the things that I loved, that I could sell deep out of the money calls against my Bitcoin and harvest additional yield, because gold has that reverse skew. So all the vol is pumped into the calls. Same thing in Bitcoin. You get a reverse skew. You get a ton of that upside call demand because people are trying to play those lottery tickets, as you just said. And if you own the underlying asset, you can harvest that premium against it, and you can go super dumb out of the money. 72 to reduce your basis on a 57 buy. Why not? Crazy is subjective. That is also true, my good friends. Anyways, I spent enough time there. When it comes to Bitcoin, that's what I think is interesting. I'd move over to IBIT versus trading the underlying here. I'm still long the underlying, and that's just opportunity cost as it goes nowhere. I was hoping we'd get a move above 110, somewhere into the 115 level, before I started to give some of that back up. I think below 88, I start to rethink my position and probably lock in the profits that I have. Where did I want to go? Oh, the next are outside of the U.S. So we talked about earlier concentration risk within the United States. I'm starting to look at and deploy some money towards stuff outside the U.S. I told you before, what's on my shopping list. Stuff like Europe is on my shopping list, but I don't think they've done enough damage to Europe yet. If you look at a long enough time frame, it's still trading near its highs. So I don't love it here. VGK is what I'm using here to express the position. There are several others. I think this one has the most assets under management. But if I go, let's say, so I'm waiting on this one. That's not really interesting. EWY, I talked about this with Tom earlier. This is the South Korea ETF. I think with all the craziness that they just tried to pull over there with martial law, trying to keep power and avoid impeachment, deep discount priced in. It went from 65 to 55, given this political turmoil. It could get cheaper, but I think this thing is trading at pretty significant lows. And so I'm going to take a little stab. Good Lord. Now you can hear my daughter as well. It's morning time, people. EWY, and then here's the other one, EWW. So EWW is the Mexico ETF. It's trading mid-range over the last 20 years, but on a shorter-term time frame, let's call it over the last 10 years, it's trading near lows, off its high of 75, down to 51. I'm going to start. I started to accumulate a small position. I am curious, as sort of the question I will leave you with. If you were going to look for investment opportunities outside the United States, I've talked about a few, FXI, EWW being longer term, higher conviction plays. Shorter term would be EWY at South Korea on a reversion, and looking at Europe, but I don't think they're there yet. What would be areas you would look at to deploy risk? I'm curious. What say you, chat? Leave a couple of those ideas in here. With that, my good friends, we are going to call it. Let's give you a quick look at these. Year-to-date, country performance. I just wanted to show this really quickly. So the United States up, you can see here, 28%. That's the spiders. And you can see everything else. Argentina up 70%. Why? Because their inflation rate was like 300%. They're printing money like hotcakes. But yeah, Argentina up 70%. But other than that, no one's really outperforming the U.S. Israel up 33% as well. But those are the two exceptions. And beyond that, you've got China up 18%, China, Taiwan. India's performed but hasn't outperformed, up 14%. Japan up 10.5%. So even Japan is cooled. Australia, Hong Kong, this stuff, in Mexico down 24% for the year. So when you look at like the concentration of performance here, if we are going to see a broadening out of the rally, you could play that in the U.S., which theoretically would be Russell. And if it's outside the U.S., you take your pick. But I'm curious, what do you guys like if you were to make a bet outside the U.S.? With that, everybody, that's going to do it for The Price of Truth this week. We'll be back next Monday on only on Tasty Live. If you want to follow me on Twitter, you're more than welcome, or X, formerly Twitter, at Victor Jones. The Owen Jones is 0 because I like to be difficult. I'm closing out the week leaning short NASDAQ, long small caps, individuals, not the Russell, leaning into energy and nuclear, which are discounting, by the way. If you wanted to be part of that nuclear trade, they're getting cheaper by the day. And long China, getting longer outside of the U.S., and I'm staying short the concentrated bubblicious part of the NASDAQ. That's how I'm going out this week. I will see you back here next week. Same time, same place, same great network, only on Tasty Live. Hit the like button, everybody. Peace.
A very good morning, everybody, and welcome to the show on Thursday, 12th of December, with myself and my colleague. That's right, he slept